I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open and we may be off to a pretty decent start just on the back of two sentences from the US president saying, I think that they have stopped killing protesters in Iran. So just that idea that he may back off has got everyone heaving a sigh of relief.
Yeah, including what the announcement on the embassy is from a reporter or editor in NDTV, what he's picked up about people staying there for now, the new diktat going through there.
Yeah, geopolitics looks good. I think a small civic election, but an important one because it's Mumbai, and it seems that
we got inked. You got inked?
Oh yes,
we got inked. I wonder if all of you did. Okay.
I'm in Pune, so
Alex
yeah.
is in Pune, so not that there's no civic sense, but definitely we got inked. I hope all of you all went and voted because no point complaining about everything under the sun.
Exactly.
If you don't vote.
Exactly.
You can still complain. Now we can still complain, but at least we have the ink to show for it.
Yeah, so that the election outcome seems to be something that the market favors. It's a small one, but it's Mumbai, therefore it's important. And a lot of commentary around how the India-EU trade deal is round the corner before Jan 26th. And that's an important one too. So on the right side of the bed for a lot of things.
Yeah, I wonder about this little debate, and you had Nitin Kamath put this out yesterday saying that Indian stock exchanges, should they really be shut for a Mumbai municipal election? And he said that the fact that our exchanges which have international linkages are shut down for a local election shows poor planning and a serious lack of appreciation for second order effects. Now, to that point, Samir Arora had a response saying, so if it does not matter to anyone, who does it matter to? I hope you will say the same thing when markets are open on Feb 1st Sunday. Why do we want market open just because there is budget if they have international linkages? So, an interesting debate coming in there.
I'm on Team Samir's right on this.
Or why is it that people don't raise a voice when the markets are open? One of the 3 markets or one of the 5 markets to be open on
Jan 1st Jan.
On 1st Jan, yeah.
Not so much from an international linkage perspective, but I was just wondering from you have investors now in every pin code in India, and they all lost a day of trade because Mumbai had a local municipal corporation election. So I'm wondering about that.
But finally, the argument is that it is a financial capital of the country. You have banks, you have other institutions, you have mutual funds,
None
you
of
have
them
functionaries.
You have the two
None
exchanges.
of them shut.
And the two exchanges.
None of them shut at all for everyone
activity
outside
gets
that pin
impacted.
code. Well, tell us what you think. That's quite the debate. But much more on the show today. I'm going to start off though with what the global cues look like. And, you had a good day of trade as far as the US markets are concerned. They've closed with gains after strong results from TSMC. And banks have also done well. Morgan Stanley, Goldman Sachs all had good numbers coming out. So pull up the key indices there and you saw the Dow pop nearly 300 points, NASDAQ 0.25% up, and the S&P 500 also 0.25% up. Of course, the star was TSMC, that's Taiwan Semiconductor Manufacturing Companies, posted a 35% increase in profits in the fourth quarter. The stock zoomed over 5%. Bond yields, meanwhile, moved higher as jobless claims came in at 198,000. That's lower than the expected number. So the 10-year was at 4.16%. Oil prices, meanwhile, dropped sharply as Trump seems to pull back from the attack on Iran. He made a comment saying that, he's got it from good sources that they're no longer killing the protesters. Brent dropped below the $64 mark as a result of some of those comments. So some relief there as far as crude is concerned. You've seen the same on gold and silver actually all come off their highs. As far as Asia is concerned, Taiwan is the big story. And, this is a trend you're seeing more and more. So the US and Taiwan has reached a trade deal for tariffs at 15%. And TSMC, the company we spoke about earlier, Taiwan Semiconductors, has agreed to invest $250 billion in US as part of that deal. So more and more you have large corporations folded into diplomatic conversations between two nations and a trade deal. I found this astonishing. You saw that with NVIDIA earlier, now with TSMC. Obviously, these are very valuable companies making things that no one really else is. So, Nikkei down about 0.5%, everything else up in the green. Santosh Rao, yes, sir.
Just the small addition, the other thing that happened, that China and Canada having the energy pact as well. Yeah. So that if US is kind of flirting on the Chinese side of the continent, China is doing the same now.
Yeah, I think that Carney, Canada is going to be a big pain point for Trump more than anything else. So
of his own doing.
Of his own doing. Santosh Rao joining in this morning. He's head of research partner at Manhattan Ventures. We're speaking with Suresh K. Goyal as well, former ambassador, to get a sense of the geopolitics of it. But Santosh, I'm going to come to you first, just on what we're seeing in the US markets. As much as Trump's daily comments and actions hit the headlines, sometimes for all the wrong reasons, the fact is fundamentally the US markets are roaring. The numbers are good. The quarterly numbers are good. Jobless claims are low.
Absolutely. I think the fundamentals of the economy are good. The macro data is pretty good. So I think the big thing is the consumer is still resilient. The economy is still good. GDP is on a nominal basis is 8% and expected to be pretty good going into 2026. Then you have this big liquidity flush coming into with all the tax refunds expected. And the banks have kicked it off with good numbers and good forecasts. So net, I think the outlook is very good, barring the volatility because of the Fed chair and all the things, the mashup between the two, Fed chair and the presidency. I think other than that, the fundamentals are pretty good. So if if things stay steady, I think we'll have a good year.
Good, yeah. We've got Suresh Goyal, former ambassador, joining in as well. Mr. Goyal, the intention of speaking to you today is to put some of these things that we're seeing globally in 2026 in context. The latest, of course, is that conflagration in Iran. How do you view the latest update, though? Because it seems like there has been a bit of a de-escalation, at least in rhetoric. So would you say that the worst is behind us at this point?
No, I don't think that anybody can say anything with great certainty here. We have seen earlier also in the many cases that Trump goes low on propaganda, on the rhetoric, and suddenly boom, and there is an attack on Venezuela, or there is a demand again. Remember Greenland? There was quiet for some time, and we thought that he has quieted on the demand for Greenland, and suddenly it is going up. No, one cannot say with any certainty that Iran episode is over. We don't know as yet, really.
Interesting. Okay. So the repercussions, Ambassador Goel, for the Iran episode, if indeed it is looking like it's coming off, does it signal a bit of a gloves off scenario? And also, I mean, for India, the implications, considering that India and the EU are very close to a trade deal as well.
Yes. As far as trade is concerned, I don't think there is going to be a huge impact, as it is just around $1.3 billion, $1.7 billion trade, a very, very small part of the Indian overall thing. It is not trade really. It is the investments in Iran. It is the connectivity North-South corridor, which is going to impact on our not just trade, but at a political strategic level. We were looking at Chabahar as a counter to Gwadar and connecting to North, to the Central Asian thing. All that is going to be impacted if conflagration really takes place and Iran goes up in flames. So that is what we are looking at really. Second thing, if that happens, the whole Middle Eastern situation is up for a six really. We will need to see how Saudi Arabia plays it up. Please do remember that there is a whole lot of competition between Iran and Saudi Arabia. And if Iran goes down or goes up, whichever way you look at it, Saudi Arabia, Oman, Qatar, what is going to happen in Yemen? All that will be a very difficult scenario to really predict.
Mr. Goel, one more question to you, and then of course we'll go to Santosh on the markets. But and these are hypotheticals, and I understand that. But if there is a change in the regime, which has been incredibly resilient in the past, we've seen this take place years ago, but they've managed to hold on. If there is a change in regime, what does that mean from our perspective here in India? Because we've always maintained a central approach. We don't veer either in one direction or the other.
What is expected is that any change in the regime is not going to be external. I think USA rhetoric going low does mean, and he has said yesterday that he does not look at former Crown Prince of Iran as an alternative to run the government here. So who is he looking at, the US president? My sense is that there could be a change from within. And if that happens, the people will change. There will be a kind of less of the Islamic connotations, liberal government, but nonetheless, the same people really from the same party. So let us see how it goes. If that happens, I think we are okay. But if there is a complete change, like what happened in Bangladesh or what happened in Venezuela, then it's going to be a bit of a uncertainty for us.
Santosh, just very quickly, from the Indian markets perspective, there seems to be, while fundamentals are positive for US markets like we spoke about, are you seeing maybe not the same picture as far as Indian markets are concerned? Of course, budget coming up will be one big trigger, but this US trade deal hanging fire is causing some concerns?
Absolutely. I think even if you look at the headlines, I think the Indian market, Indian economy is still pretty good. Like GDP, I think is 6-7%. So I think that's fastest growing in the world, I think. So that's not the issue. I think it's the optics and it's the sentiment. We don't know what's coming up. We need this dust to settle. And I think that's why money is not flowing in, the FDI and all that. So I think all that, people know that in the end, we need to go there. It's a huge market. It's a huge consumer market. So ultimately it will. But at this point, the headline is not good. The optics is not good. And there are other places that the money can flow to at this point till India, the whole picture settles down and we get some steady state in terms of the news flow and also the economy. Economy is growing, but I think we need to get that that previous momentum back, that flow, that momentum that India had. We need to get into that zone again, as opposed to this slight disruption and sort of confusion as to where this thing is going.
Often the conversation is about animal spirits at this time of the year. Santosh, thanks so much for taking the time. Mr. Goyal, thanks so much for giving us perspective. Important to have you this morning. Let's talk about what happened in trade a day before yesterday. And volatility really continued as Sensex expiry played out one day early. You had the benchmark Nifty 50 that traded in a relatively narrower range than you had seen in the past few sessions. It was a sub 200 point range, and it was a second day of narrow declines for the benchmark. You had the benchmark that ended off the low point though, very close to that 25,700 mark, which has proved to be a pretty important level to watch out for. We closed below that point though. What were the drags? You had HDFC Bank, you had ICICI Bank that weighed on the benchmark, both of them contributing nearly 75 points on the downside. But if you think about it and you look at the banking picture as a whole, then you had the Nifty Bank that ended flat. Why is that? It's because PSU banks counteracted the impact of the private banks, and that index, the PSU Bank Index, rose over 2%, one of the big bright spots in trade on Wednesday. The Nifty Bank therefore ended unchanged, but it wasn't the PSU Bank Index that was the biggest bright spot. It was actually the metal index that shone brightest, and that was led by a number of counters including Hind Copper, which rose quite considerably, Vedanta, Nalco, but you also had Tata Steel, which was the top gainer on the benchmark Nifty 50. The broader markets recovered sharply from the day's low and ended positive, and you had market breadth that was largely even. And if you actually look at the last several trading sessions, and I'm talking about not just this week, you go into last week also, you've seen a similar scenario play out. 8 gainers, 9 losers, that kind of situation.
Yeah, and if there were 2 consecutive days last week wherein the broader markets did well, now we have 2 consecutive sessions wherein broader markets have not.
Yeah.
So it's literally a blow hot, blow cold scenario, and you can see that for the Nifty as well. If you frankly look at the trade setup, the Nifty is in that blow hot, blow cold scenario. Up one day, down the next, up 2 days, down for the next 2, and very tightly wedged between call writers and put writers levels as well. So very difficult to trade the Nifty, and I think it's very, very important and maybe better to be stock or sector specific. Imagine not trading the Nifty for the last 1 month, but trading the metal index for the last 1 month. And that's where you would have made your pound of flesh, not quite on the Nifty, and that probably trend seems to be the case, even though you would argue that a lot of people will feel that around these levels, maybe 100, 250 points lower on the Nifty, it's in a good buying zone, but maybe avoid the Nifty for the time being and look at stocks and sector specifics. Also, I think keep in mind, viewers, that today I would presume that a lot of active Nifty traders would take a step back simply because this weekend or post-market hours see 3 big heavyweights coming out with results in addition to some others. So Reliance, HDFC, ICICI Bank. So you want to keep the trades tempered, because those 3, if they go on one side or the other, might have a bearing on how the Nifty starts off on Monday morning. Metal index looking very strong as Alex enumerated, but the silver downtick might have an impact maybe on Hind Zinc or maybe some of the others. So that is to be kept an eye out for. Keep an eye out for OMCs because of the crude downtick as well. That's a sharp pullback that has happened on crude oil prices, and that may have an impact on OMCs. And since we talk about sectors, I mean, this group stocks form a sector into themselves, right? And standard disclaimer, the Adani Group owns NDTV and you're watching NDTV Profit. But guys, this Moody's upgrading of the outlook, even though the ratings haven't changed, but for Adani Port and SEZ, AEML, ATSOL, all of these might have some bearing on how the 10 stocks within that group move, right? They are a sector unto themselves, if you will. Large market caps out there, and could be very interesting to see how the movements happen on these 3 names in particular, but the entire group in general.
Yeah, and particularly important, just to add on to that point, because of the kind of spending that they will do on capex over the course of the next several years to 2030, and debt raising as at the core of it. So if they're able to raise at tighter levels, then it's positive.
Yeah, so many stocks actually in focus. Newspaper reports this morning that the other telecom players are coming and saying that we want the Vodafone deal as well. So watch out for some of those. I think some of those Kavach stocks should be be in focus. The smaller ones like Cornex, etc., getting a big bite of the pie, while the larger ones like HBL, being left out. So a lot of news that you need to focus on. I think earnings is on top of that list. Reliance Industries will be out today, but post-market hours. Wipro, TechM, L&T Finance, Polycab, Federal Bank. Of course, a score of them additionally to this, but I'm just talking about the ones which we are keeping a closer track on today through the day and after market hours. This Bernstein note on the India strategy by Venugopal Gare I thought was quite interesting. He says India's current equity landscape underscores heightened volatility and absence of a clear directional momentum in most stocks. Investment themes in such markets shift from a sector or action-led one to a more of an ideological one. Portfolios dominated by two thought processes, what could see a revival near term and what have picked up recently that has still got headroom to grow. He's also adding a cash component. I thought this was interesting that Bernstein is adding a cash component to limit their equity exposure till they've identified more opportunities. They've added Titan, ICICI Bank, IT Index and cash to the portfolio. They have removed Jubilant Food and PB Fintech from their portfolio. Their model portfolio now has NTPC, L&T, Avenue Supermarts, Titan, PFC, HDFC Bank, ICICI Bank, IndusInd, Home First Finance, Nuvama Wealth and M&M for Bernstein India. Now, as far as the markets are concerned, 25,600, that's the number, the strong support for the Nifty. And for 2 consecutive days, the Nifty has bounced from this level. Traders are returning to a earnings-heavy environment and a global rotation trade that has seen some volatility in the US as well. Just want to talk about the comments yesterday from the Commerce Secretary on the trade deal. He's saying that discussions have never broken down and there was a virtual meeting between Piyush Goyal, our Commerce Minister, and USTR greed that has taken place. Pending issues are being talked about. Deal very near, but can't put a deadline. It will happen when both sides are ready. So nothing remarkably different that the Commerce Secretary has said, but at least gives a signal that those stocks are on. There's no breakdown of talks, and that's important as well. Support levels for the Nifty, 25,600 to 25,500. Resistance at 25,900 to 26,000. The Nifty has been stuck in that range now for several sessions. So you need a break on either side to look at what's going to happen for the rest of January. As far as the Bank Nifty is concerned, better momentum than the Nifty because of the PSU banks. Key resistance levels 60,000 to 60,100. Sustaining above this mark, that 60,100 could trigger a short covering rally towards 60,600 and 61,000. Key support at 59,200 to 59,300. So those are some of the levels you should look out for. But let me go across to Puneet now for the setup this morning on the derivative side.
Well, thank you so much for that, and good morning to all three of you. Another session where we are expecting only a lot of stock-specific action on news and quarterly earnings to dominate the news flow. And as it has been over the last few weeks, it's a good change that we're getting into now. Hopefully, the next level of trigger on the Nifty 50 comes from there. So, largely now, Nifty futures, of course, the implied open in the green for today, but Nifty futures have taken support yet again at 25,700. That got broken over the last couple of days yet again. So, hopefully, we can build on to that, while the Nifty Bank will be in focus, starting Saturday with earnings of heavyweights, HDFC Bank and ICICI Bank. So we continue to monitor that. When you look at the FI cash position, that's also been consistent selling, while DIs have been supportive of the market, and roughly about 400 crores of short position on the Nifty futures built by foreign investors. Because of that, the index long, which has been quite depressed at this point of time, yet again sub 8%, the lowest level it has been over the last 3 months, and has been consistently weak, while the OI put call ratio is bang in line at 1, a very, very neutral position. We've seen the expiry yesterday as well, so maybe something starts to build into this week, but there'll be something to monitor. Finally, in terms of stocks, Kotak Mahindra Bank saw that split on the 14th, and hence it shows a massive short build-up because of the change in current market price amongst others. So expect that to settle. While Union Bank was a positive surprise for the markets, maybe the PSU Bank rally resumes because the quarterly update was quite weak, but lower provisions have boosted the profit. While amongst others, Swiggy, which has been consistent in Analyst, again a short build-up, but open interest has reduced, and very, very limited change in terms of the open interest losers because of the limited change in open interest of just 1 to 2%. So we'll see if anything on builds on. So largely a market very, very stock specific. but individual names continue to dominate the news flow.
Okay, individual names it is. I'm going to start with Infosys. Good numbers and good guidance, actually, more than good numbers. So that's a thumbs up. That should set maybe the rest also in good stead today as far as IT stocks are concerned. So numbers were in line with estimates. Profit misses were there, down 10%, but that's because of the one-time impact of new labor codes, which have dragged profits by about 1,300 odd crores. Don't think that'll be seen as a negative majorly, because that's now everyone's problem, right? So you've seen all companies report the same issue. Their quarter-on-quarter constant currency growth was at 0.6% versus 2.2 in quarter two. The company has upgraded its FY26 revenue guidance to 3 to 3.5%. That's the range, versus 2 to 3%. The large deal TCV, that's total contract value, is up 56% quarter on quarter at $4.8 billion. Attrition is down 200 basis points at 12.3 versus 14.3% for Q2. Now, if you look at the Q3 consolidated numbers, just to add to that, EBIT was up 1.34%, 9,479 crores is the number. Margins are down 18 basis points to 20.84%. So that was slightly below estimates, and that's because the net profit was also down. Adjusted profit is up 2.8%. A whole bunch of notes on Infosys, but I'm just picking up what Morgan Stanley is saying. They've maintained an equal weight and hiked the target price to 1,760. They say it's a good quality beat. Commentary is suggesting improved discretionary spending in select verticals. The midpoint of FY26 revenue guidance implies that it's going to be the strongest Q4 in the last 4 years. So that I thought was noteworthy. Guidance upgrade is showing greater confidence in Q4 as well. Now, the strong net headcount addition with lower utilization also implies good visibility. So they've lifted their revenue growth guidance as well, as far as Morgan Stanley is concerned. And they say Infosys' trading discount to HCL Tech, which is about minus 7% right now, could close. Watch out for that stock today. In fact, let's hear what Infosys MD and CEO Salil Parekh said.
We believe we are uniquely positioned to capture market share across these value pools and emerge as the leading AI value creator for global enterprises. We will share a comprehensive view of our approach at an Investor Day later this quarter. With a strong performance in this quarter, we have revised our revenue growth guidance for the financial year. The new revenue growth guidance for this financial year is 3% to 3.5% growth in constant currency. Our operating margin guidance for the financial year remains the same at 20 to 22%.
Okay, Vari is the second one I'm looking at. This is Vari Renewable Technologies. A good set of numbers. We're giving it a thumbs up. Highest revenue, EBITDA and PAT growth led by strong execution. They've maintained EBITDA margins as guided at 18 to 19%. So that has been good because they've stuck to their guidance. Unexecuted order book is at 2.92 GWP. That's the gigawatt peak. They've expanded into BESS, that's battery storage systems and data centers. And they've approved CAPEX for setting up 120 MWP solar power park as well. Core numbers on your screen. Revenue is up 136% at 851 crores. EBITDA is up 121% at 159 crores. Margins have dipped slightly, 18.7% versus 20%, and net profit is up 125%. So the numbers, at least optically, astonishingly good. You will hear from the management ahead on NDTV Profit. Watch out for that conversation. Watch out for the stock. Meesho is the third one I'm looking at, and this is a Morgan Stanley note again. They've initiated an equal weight with a target price of 169. And they say this is e-commerce at scale and speed. They believe the company faces limited competition in the value commerce space it operates in. I thought this was astonishing, considering that this is a space where every company is facing the heat and intense competition if you look at quick commerce, etc. But in value commerce, they're saying they face limited competition. They expect that the company will be one of the fastest growing companies within India's goods retailing spaces. They forecast net merchandise value, CAGR, that's the growth of net merchandise value at 26% between FY26 and 28. So Meesho, actually quite a few brokerages today talking about Meesho.
Interesting, very interesting. I'm going to start with IT as well and LTTS. It depends on your frame of mind and how far into the future you want to look for a rating on this, because if you look slightly nearer term, then it certainly is not the best set of numbers. So let's talk about that. It's a mixed set of numbers. The margin expanded over 120 basis points. Apparently the company is being selective on projects, and that has resulted in a slow top line growth. In fact, the constant currency growth was below estimates because of that operational restructuring. Efficiency improvement has led to margin expansion that I've already spoken about, and the PAT is down as much as 8%. They've also seen an impact, a one-time impact of the labor code or the new labor code to the extent of about 35 crore rupees. But this is the fifth quarter in a row of around 200 million plus deal total contract value wins, and this is a positive certainly. Attrition and headcount have also been stable, and the company plans to add more employees in the second quarter of FY27. So bear that in mind. In terms of segments that have performed, their mobility segment has actually seen a turnaround, and the management is seeming confident that the ramp up will take place going forward. But let's face it, the revenue downtick of about 2% does not look good on the screen, and neither does the downtick of 8% on the PAT number. So let's see how the stock reacts in trade today. Zydus Life is the second stock on my list. This is a clear positive. It's gotten a final approval from the US FDA for a drug called Eltrombopag. And this is effectively a generic version of an existing drug, Promacta. The drug is used for the treatment of low platelet count in specific blood disorders. It stimulates the bone marrow cells to produce more platelets. It is set to be manufactured at the SEZ in Ahmedabad, and it had an annual sales of $1.26 billion in the US as of November 2025. So it's a pretty important one. You should watch out for this one as well in trade, but it might well be that the third stock on my list sees the biggest gains just purely by way of the size of the order they have received. Kernex Microsystems, a pretty small company, received an order for supply and installation of onboard Kavach locomotive equipment worth 2,465.7 crore rupees, and that order is set to be executed within 12 months from the date of the purchase order. But take a look at the market capitalization of the company. It stands at less than the order value at 2,128.28 crore rupees, and the free float is obviously even lower. The stock reacted positively day before, up as much as 13%, and the market cap that I'm talking about is despite that 13% increase. So you can imagine what could potentially happen in trade today.
Yeah, recurring feature, right? Small companies with low market cap winning much larger orders. Last week was all about it as well. So pretty interesting. Okay, very quickly, and we know Moshe Khatri is just waiting. So I'll take a minute and quickly enumerate my three stocks. 361 Wealth Asset Management. What it has said and what brokers are saying is more important than just the results. So core business, they say, is already at 44.5 to 45% cost to income. They aspire it to increase by another 100 basis points next year. They say that ET Money and HNI is to reach break-even next year, further supporting the cost-to-income ratio improvement, and 20 to 24% AUM growth, 60 to 18% revenue growth, 22 to 24% profit after tax growth in the medium term are the targets. Now, this has got Citi believing in the business model. They say that the re-rating potential is high. They maintained a buy. They have hiked the target price to 1,700 from 1,615. Look at that. The current price is 1,150. We'll talk to Parag Thakkar about this. He loves this business. The Citi says it's an all-round performance, flows and carry remarkably strong, and productivity benefits to play out gradually. On the flip side is Cipla, and I'm using this because of not the results but the news flow. Morgan Stanley is maintaining underweight. They've cut the target price. Why have they done this? This is because Lanreotide supply disruption is the other headwind. So now everybody's heard about Revlimid, right? Everybody knows about generic Revlimid and the phase out will impact earnings. Now for Cipla, there is another headwind, and Morgan Stanley says that both these put together are likely to result in a weak quarter four. Nobody likes that, a weak quarter four when you're into quarter four. So very likely Cipla might have a bit of an issue, just a couple of percentages maybe earnings estimates, but we'll watch out for that. And India One Intermesh, very quickly, the last one, Nalanda India Equity Fund, Pulak Prasad's fund, has bought in additional 1.6% stake, 11.18 lakh shares. The company trades at 23 times PE, ROC upwards of 30%. People know about this, but the fact that Nalanda held about 5%, if I'm not wrong, and has added another couple of percentage points, if I'm not wrong, means that it's a stock that could be in focus. Okay, so these are the top 3 on our list, and remember there's a clutch of other names. We'll get to all of them, but first, let's get in the first of our guests on the show today on the equity side. Moshe Khatri, he's the MD of Equity Research, IT Services and Payments at Wedbush Securities, with us on the show. Moshe, firstly, thank you for waiting patiently while we were just enumerating the 9 stocks that we typically do as anchors. But the first on the list undoubtedly was Infosys for us. What did you make of the results? More importantly, what did you make of the commentary given by the company?
Let me just start by correcting what you said. I'm actually MD in investment banking, not research. But
apologies,
in general,
apologies.
No worries. What we have seen in general is that, considering the fact that this is a seasonally weak quarter for the group, every single company reported better than expected bookings. At least one of those companies raised guidance for fiscal 26, which is a bit unusual. I'm talking about Infosys, of course. And then if you take out one-time kind of items, margins actually look better than expected. So net, I would say that the group probably is outperforming relative to expectations. And remember, we've had 2 very tough years for the group in terms of growth rates that have slowed down. We've had a lot of concerns about the potential impact of Gen AI on both revenue growth and margins. And at this point, it seems that we may be heading towards some sort of an inflection point, looking at calendar 26 and fiscal 27 for the sector.
Moshe, morning. I'm asking whether you can extrapolate that and talk about the rest of the space, right? So Infi, the revenue guidance increase as well, certainly likely to be seen positively by the street. But you had LTTS that reported a mixed set of numbers. They say that they're going to be more selective in the deals that they're picking up. And so as a result of which the top line is slower than anticipated. What about the rest of the space that you've seen so far? Are you more positive than not with the numbers you've seen?
I would say that what we are seeing in general from the tier 1 and tier 2 vendors that are based in India is that these companies are aggressively changing their models to adapt to this new Gen AI environment. What you will be seeing, in my view, you'll see a decoupling between headcount and revenue growth. You'll see more focus on performance-based contracts. And then on top of that, looking at next year, we are hearing that discretionary spending is going to look a bit better. And then on top of that, I think in general, we'll probably see margins looking better. And a lot of that is a function of productivity improvements and the fact that the model is going to change, as I said, with a more focus on performance-based contracts.
Okay. Moshe, now you've seen the 3 biggies come out with results. We've had some of the smaller names, and companies are taking interesting twists and turns. LTTS, for example, has decided they are pruning back on some of the offerings in order to set the margins straight and long-term growth. Infosys is doing something. HCL Tech is sounding a fairly confident picture too. And there is a Morgan Stanley note today which says that IT budgets are being scaled down. Are you of the construct which believes that the bad times have turned or could be turning, or do you believe this picture is still sketchy?
When I was in India a couple of weeks ago, the feedback that I was getting is that calendar 26 and fiscal 27 could be an inflection point for the sector. Inflection point in terms of growth accelerating. That's number one. And then some vendors are also telling me that they're in a position to go back to customers and raise bill rates. And this is something we haven't heard for some time. So these are all, in my view, are positive indicators for demand trends looking into the next 6-12 months.
Hi, Tamanna here. And interesting to know you were in India. Next time you're here, please come say hi to us. We'd love to have you in studio as well. So extending that invitation out there. When you're looking at the entire landscape, are you liking the heavyweights, the large cap IT companies more over the next, say, 4 to 6 quarters, or do you think that the mid cap ones are looking more interesting? And what are your favorites here, if any, that you could name?
Yep. So a couple of things here. The areas that have really been growing nicely in IT services or tech-enabled services include companies that focus on product development, companies that focus on ER&D, companies with a healthcare focus, or companies that focus on energy tech. And these are companies that have done well during the past few years. What's interesting is that the companies, if you look at some of the US-based traded companies, there may be a few that are actually trading close to their year highs. Huron, for example, is probably one of those companies that's trading close to its year high. They're growing about 10% a year. And again, their model is very much related to what we do in Gen AI. Same thing with EXL that does a lot of work in data. The large cap names are doing a great job on adopting. And I think the way we see it, growth should go above 5-6%, I would say 6 to 12 months from now. So we should see that scaling of Gen AI projects driving growth. And in their case, we're also going to see a lot of the large contracts on the cost takeout space really kind of, I would say, translating into revenue growth to converting into revenue growth. So that part of the business, in our view, will see top line growth accelerate. The smaller cap names, these are companies that focus more on digital or data or maybe even Gen AI. These are the companies where we'll probably be able to show you better growth, north of 10%. In India, for example, Fractal will probably go public. This is a company that should be able to get you 20-30% growth, top line growth. They're focused primarily on Gen AI. So you really, if you look at the space, you have to categorize these companies by what they focus on and how large their revenue base is. But you should see, anywhere from 6 to 10% growth for the larger cap names, and then smaller cap should actually do better than that.
Moshe, thanks so much for joining in and for that perspective, invaluable for us this morning. Thanks so much.
Thanks, guys.
All right, we have to slip in a very quick break. We'll be back on the other side to talk to Parag Bhai as well as Kush. I wonder if there's going to be any table thumping today. You'll find out if you stay tuned.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The first India news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough
to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos. This budget, India speaks.
Back with India Market Open right here on NDTV Profit. Let's get in our expert panel in on the conversation. Parag Thakkar, Kush Bora with their thoughts on the markets, on the slew of results. Well, a BMC result as well that is about to come in and likely going to impact all our lives for the positive, I hope. I think we'll do an analysis of which companies benefit or which don't once the result is out.
I think the fact that we have had an election after 9 years is nothing can be better than that.
Yeah, but Tamanna, I just hope there's a dear friend who is now a very big social media influencer called Vishal Bhargav on real estate, who put out a reel saying that voters have lost hope. On whoever comes, there is no expectation. I hope wo na hoye bas.
Should not happen.
Should not. But markets and slew of results. I must say, and Parag Thakkar, if I can start with you this time, that the earnings season is turning out to be a lot better than what the fears might have been about quarter 3, right?
Yes, absolutely.
What have you made of the results thus far?
Yeah. So basically, see, TCS was better than expected. HCL Tech was actually better than estimates if you account for the software, which is seasonally positive. Infosys is far better. Commentary is far better. Deal wins $4.8 billion. Our guidance upgraded. So we are seeing a good
margin improvement.
Yeah, ICICI Pro AMC, excellent result, and Naren sir's extension of as executive director for 2 years. HDFC AMC, good result. ICICI Pro Life, I don't see any negative. HDFC Life, I don't see any big negative. So I think result season has been decent. And let's see now tomorrow ICICI Bank, HDFC Bank, today Reliance.
What is the table thumping result?
So table thumping, definitely I would say this will be Infosys.
Really?
Yeah.
So let's thump the table. No?
Yeah, sure. I'll thump the
Okay,
table.
there you have it.
So Infosys, ICICI Pro AMC.
No, but Infosys, why table thumping? They did show a loss because of the labor code.
Like labor code thing, I'll just ignore it. Yeah, it's for everyone. It's for everyone. So why should we worry about it? Let's focus on what company can do.
Yeah. So what have you liked?
Deal wins were very good. Even if you leave aside that one large deal, which was $1.5 to $1.6 billion, deal wins were good. Commentary was very good. Q4, if you see the implied midpoint growth is highest in 4 years. So that means the confidence is improving. Guidance has been upgraded from 2 to 3 to now 3 to 3.5. Plus they have said that discretionary spending has picked up in BFSI and energy and utilities. So at least there is some pickup in some discretionary spending also. And what more you want? This company does buyback, it gives you full money as a... So although the EPS growth will be 8%, so that's why I it's a combination of Infosys and ICICI Bank kind of thing works best. Here the growth is less, but you get the full cash flow which company makes into your hand. Because it's a free cash flow. This quarter, Infosys made $915 million free cash flow, right? 8,500 crores. So I would say that, and ICICI Bank on the other hand will not give you dividend, but it will grow at 15%. with the best quality management.
So Moshe was talking about an inflection point for some of these IT companies, and that productivity gains, etc., are going to bolster margins heading into FY27 as well. That only reinforces this point, doesn't it?
So if margins improve, it will be a bonus. I feel first revenue should pick up, and this entire worry around deflation due to AI should go away. Okay. That itself will re-rate the sector.
You know, guys, I just so much, and we'll get in Kush Bora, and we'll also get in Kush comments from you in a moment. Also get in the stocks to watch. But one is IT, the second is capital markets. I mean, look at what Grow is doing with that 61% margins and, you know, State Street partnership. Then the ICICI Pru and HDFC AMC results, 361 commentary, cost to, I mean, that pocket is also doing very well. So we'll talk about all of this, viewers. But, you know, it's 8:45, and, you know, people wait to hear what Sumit Sarkar is gathering from the dealing rooms. So without much ado, let's go across to him to try and figure out what is it that he's picking up today, the last day of the week, from his dealing room sources. Sumit, good morning. What is on the agenda?
Well, firstly, steel stocks would continue to remain in focus. Tata Steel, JSW Steel, JSPL. The chatter on the street is that there has been yet another price hike which has been taken of around 700 to 1,000 rupees per ton, and this is separate from the price hike that was taken earlier post the 12% imposition of the safeguard duty. So another price hike coming in could be beneficial. For Eicher Motors, there are sell flows on institutional desk. Both foreign and domestic institutions have been selling the shares here, and dealers are indicating that valuations and slower growth going forward is one of the key concerns that has been highlighted here. For stocks like L&T, ITC and Inox Wind, all these counters were under pressure, but what dealers are now indicating is that the selling pressure in these names are largely over. So these stocks could bounce from the current levels if market continues to remain supportive. And a host of stocks that we had indicated earlier have come out to be true. Firstly, on January 14th, we did indicate that cement companies could remain in focus on the back of price hike, and today Motilal Oswal has come out with this note where they are confirming that there has been a price hike on the street. MRPL on January 14th, we did indicate that there are buy flows on the back of strong Q3 numbers. A little later post that, the company did report a strong set of numbers. And for Infosys also, we did indicate that there could be a guidance upgrade that could come in, and Infosys has actually upgraded its guidance for FY26. Then on Jan 12th, we did indicate about Waaree Renewables, strong set of numbers coming in. And December 17th is when we did indicate that Restaurant Brands Asia would remain in focus because there's a chance that Everstone might sell its stake, and a promoter of a listed pharma company might be interested in buying this. And today the company has come out with this announcement where on January 28th, they will consider fundraise. So keep an eye out for this board meeting. Most likely the stake sale announcement could come in there.
The stake sale announcement could come in there. So look out for Restaurant Brands. Thank you for that, Sumit. All the khabar you need to get your morning started and all the levels you need to get your morning started from Kush. Kush, you've come in full Friday mood, I can see, which is good. Let mix one of us on the table.
So, while I don't entirely agree with what Nitin Kamath said, एक चीज है, Thursday को छुट्टी मत रखो यार. Then the Friday effect is like, dampened. Thoda dampen ho jata hai.
You seem in Friday mood.
Yeah, I am. I was talking about Parag bhai, so much passion as if it's a Monday morning.
But फिर आप
Thank God for that.
Thank God for that. I totally agree.
तो फिर आप FM को भी मैसेज देंगे कि संडे को बजट नहीं रखना.
हाँ.
Moving on to no, but seriously, now moving on to Nifty and Bank Nifty. If you are an index trader, Nifty and Bank Nifty, I think you are in for another holiday. The reason I say that is because आज जो भी होना है, gap up होना है, थोड़ा sustain करेगा यहाँ वहाँ. I think it's a good idea to just stay out, and the reason for that is because we have a very heavy earnings, weekend, if I can call it that, because Reliance will also be posting numbers post market. So Reliance, HDFC, and ICICI, these three will be posting numbers post market. HDFC and ICICI tomorrow. So you don't want to go too heavy, on positions when such an event is lined up. But as far as purely the levels go, Nifty is held up above the 100-day moving average, also respecting the 25,500 support zone, which is a very good sign. The put base also there, very healthy, 0.8 PCR. If there is any kind of pullback, you will have support there. Nifty is also close to the lower end of the Bollinger Bands. All in all, I'm saying is that on the lower side, there is support, and we've seen the market respect that and rebound from those levels. So I still remain constructive. The recent lows around 25,475, 25,500 should be respected on the Nifty, and on the way up, up once these events are out of the way. I think 25,800, 26,000 very much on the cards. I still prefer Bank Nifty, but once the HDFC and ICICI results are out. So all in all, remain constructive more on Bank Nifty than Nifty, but suggest to take positions on Monday once the events are out.
And top picks this morning?
Going with both the long calls, one Parag Bhai will be very happy is a cement pick, Dalmia Bharat. My filters were showing a lot of names from the cement pack, as Parag Bhai had rightly predicted about a week or 10 days ago. I've picked Dalmia Bharat in particular, good price action, good volume action, 200-day moving average being taken out. On the upside, you've got 22.30, 22.85 as targets, 21.20 as your stop loss. Hindalco is a continuation trade. Remember, we discussed this on Wednesday with the first target of 955. That's been hit. That's where the stock closed. Now you could continue to hold or build a fresh for 970 and 985. The initiation price of 940, that becomes your trailing stop loss.
You know, since Thursday was a holiday, you should actually be giving us one more set of picks to make up for it. but we'll go now to Alex, who has what else is on the profit watch list.
Yeah, absolutely. And quite a few to talk about, Tamanna. Let's talk about the list, right? Right on top of the list, you have this Moody's outlook improvement for Adani Ports and certain other Adani entities as well that should be a positive for the company. Certainly is. Whether the stock reacts is another question. IndiaMart Intermesh, there is a purchase by Nalanda Fund that might have a bearing on the stock. Prestige Estates and Godrej Properties, there is a quarterly update. Pre-sales improvement of 39% for Prestige and collections improving by 28% for Godrej Properties, both positive developments. Global Spirits could be in focus on account of the new draft in Uttar Pradesh of the excise policy. Zydus, I already spoke about this. There is a drug that deals with blood platelets and encourages that growth. They've gotten US FDA approval for this. $1.26 billion of annual sales in the US is certainly a positive. Kernex Micro has gotten a significant order. Remember, this is larger than the market cap of the company. So that's something to bear in mind. Dr. Reddy's Laboratory has launched an ophthalmic drug. And you will likely see telecom companies also, according to a news report, seek AGR relief after what Vodafone Idea has received. Beyond that, you have Transrail and Zentech that have gotten significant orders, 527 crore rupees for Transrail, and JSW Energy has signed a pact with Toshiba. So all of these stocks in focus. Kush, the question therefore is, would you focus on Kernex? Do you have enough data? Because the stock was up, 13% even on Wednesday. And because of the size and the free float, one would assume that it's going to be in focus today as well.
So, Alex, this did pop up on my radar also a while back. It's just that it was too high, too fast. The volatility was just too much, and you've seen that, the stocks had, even in mid-December, the stocks had a good run, 5 to 10 sessions of good moves, and then it just gives way. So while I would definitely still keep this on my radar, I wouldn't initiate this as a call because, as I said, the stock has a tendency of moving higher very fast and then just going sideways to negative and consolidating for some time. So the dip is where you want to buy. So I wouldn't really buy now. Even if the stock opens higher, close to the 1300 mark, maybe even higher, I would actually buy close to the support zones of about 1195, 1200 thereabouts. So buy this on declines. The medium term trend is starting to look attractive, but far too volatile.
Now, on the other end of the spectrum is HBL, which actually has not got a Kavach order and has put that notification out as well. So let's look at that on the charts as well.
Again, nothing to write home about. There was a good move that's been given into. Wednesday did see, an uptick in the stock, but I would say there are immediate resistances. The 900 mark also happens to be the convergence of the 50-day and the 20-day moving average, which itself will be a resistance. Also, technically, that level has proven to be a bit of a resistance, where the stock doesn't really cross. Not too far from that level, but I would suggest a wait and watch approach on declines. I think 850 to 865, that's a good level where you could consider accumulating this stock, not at the moment.
Okay, so that is of course about the Kavach scheme. I'm wondering if you're going to see maybe metals see a bit of volatility today. Parag, by any take on the whole metals pack? I mean, I think silver prices have come off, so you'll see some softness in your favorites that have been moving around this time, Hinzik, etc. But on steel, etc., do you think that
just
this is
to
the time?
clarify, I had told that silver, I have sold my own. It is not, it was not a table thumping sell call or something like that. and it has rallied from there.
You got a lot of flack for that on social media. I don't know why.
That I don't track, but
I love it.
So I would say that, see, I am passionate about this. I will speak my mind and my heart out.
And which we appreciate.
So
you have to track the companies. Don't bother tracking what people are saying. That's
that's what. So I am saying that see, all this geopolitical tension leading to rise in silver and various other metal prices, that drives me crazy. You know that one day you hear Iran from US, and so silver prices go up by 5% and 10%. I think this is all euphoria. This will settle down at some point. I don't know for when, but it will settle down.
So, question, with this kind of aggressive fluctuation and volatility in silver prices, just from the perspective of earnings, nothing else, right? It says that there is a sensitivity to EBITDA. Obviously, there is for Hin Zinc.
100%.
But is it a 1:1 correlation, or would you say that with the kind of volatility that we're seeing right now, you may not see the entire impact of a price increase play through?
So that depends on what call Hindustan Zinc as a management takes, right? That they want to capitalize on this up move and hedge it.
Sure.
Hedge their production out, like what Hindalco keeps doing in aluminium, or they want to also continue to ride. So I don't know the company's policy yet. But as I've said always, that I would urge government to start looking at OFS of Hindustan Zinc and Hindustan Copper. They will get good amount of money when everything is in euphoric mood.
Yeah, another segment to watch out for today is what's happening with liquor stocks. So the UP Excise Department has talked about a new policy where they're going to encourage establishment of distilleries. So Globus Spirits, Radico Khaitan should be on your radar. Also look at perhaps what has been happening with, I think there's a good note on United Spirits today with an upgrade. So all of these may be on your radar today. But an important corporate development that we want to focus on the Tata Group. This could pave the way for the next gen succession plan at the conglomerate. Nisha Poddar joining in with all the details.
Yes, thanks for that. Tomorrow is going to be an important and a crucial Tata Trusts board meeting. Now we know that the two important trusts that are there, that is SDTT and SRTT, they both meet occasionally every month and take important decisions. They are the controlling stakeholders of Tata Sons with 66% stake. We do gather from sources that Nivel Tata, son of Noel Tata, is set to be inducted on one of the important trusts. This is Sir Ratan Tata Trust. Remember, in the last Tata Trust board meeting, he was inducted in SDTT. So now with this particular induction on Jan 17th, the induction of Nivel Tata as the next gen in the decision-making roles of Tata Trusts, where both SDTT, SRTT are the decision makers as the controlling majority stakeholders of Tata Sons, then his succession really gets complete when it comes to the decision making roles. So we do gather that this particular appointment is on the anvil at Tata Trust meeting, and an important development for the next gen of Tata legacy being taken forward after Ratan Tata. Remember, Noel Tata took over, and Noel Tata's son getting inducted in two of the prominent Tata Trusts is going to be an important development. Now, this is just the first step. The next few steps are also likely to be when he makes it to Tata Sons board, and then as executive roles in various companies under Tata Sons as a conglomerate. These are the two next steps to be watched out for going forward, to really emphatically make a position for him at the Tata Group. But induction in both the trusts as a decision-making role, and remember, Tata Trusts have nominees on the board of Tata Sons whom decide on behalf of the controlling majority and put out their views on Tata Sons. So an important role there by Nivel Tata, rising and being groomed for the succession as Tata legacy.
Got it. Nisha, thanks so much for bringing us those details, and certainly one to track heading into the weekend as well. Let's get you an update on the brokerage side on Grow, and we already highlighted that it was a good set of numbers and positive developments for the company as a whole, but there's a buy rating from Citi with a target of 95 rather. What are they saying? That was a solid Q3, and the market share gains are seen across segments. They're also seeing momentum in the margin trading facility business. A gradual realization of revenues from new segment is seen. They're seeing a pickup in client activity level in the broking business as well. Market share gains are being sustained across categories. They're seeing a scale up of wealth and product diversification, which continues, and they're also retaining a constructive stance on the company. Jefferies is weighed in as well. They've got a buy rating with a hike in the target price to 195 from 190 earlier. They say that new ventures are ramping up faster than expected. Commodities and MTF, which is margin trading facility, are ahead of expectations. The OPEX growth was slower at 14% year on year on account of operating leverage, and they're saying that new businesses are set to be a key contributor to the future growth. Their product velocity model is similar to Robinhood, if you're familiar with that platform. They estimate that the new business could contribute as much as 22% to FY28 revenues, and the 26 to 28 EPS increases by 1 to 4%, factoring in higher commodity market share as well. Of course, I'm pretty sure that you don't have enough data on this one, Kush, but on the capital market plays, Parag bhai, you've mentioned that you are very selective in this space. But what did you think of Grow?
Well, this company is doing well, of course, no doubt. And it's a profitable company. So I like profitable companies, first of all. Market cap is 1 lakh crore. It is too much for a broking. But nowadays, people have so much of money and entire Gen Z generation is trading on mobile. So you can expect higher market. So I don't have any reservations against Grow for sure, because they are making good profits. It's a good technology platform for entire capital market space. So but I would prefer, Grow's market cap is around 1,01,000 crore. ICICI Pru AMC is 1,35,000 crore.
Sure.
It's a much more proven model with annuity income.
So that is the thing. It's astonishing. It's as if Grow, if it's entered this race, it's zoomed past in market cap and more. Because I think there is something about the accessibility of their product, which the street is pricing in at this point, which is not there in the other players.
So basically good profits, I would say, definitely. I'm not just buying because I want enough history of the promoters and companies to buy the stock. So I would go with, in capital market, as I said, ICICI Pru AMC, HDFC AMC, 361 Wealth, those kind of companies.
361. What did you make of the updates?
Good update. And plus, see, all these businesses have annuity income, right? So your profits will not go down. The problem with brokers is that when the financial activity, stock market activity dries down, the profits will fall.
There's more stickiness, for example, for an ICICI Pru, right?
SIPs will keep coming. Your operating costs are not going up. So you have a huge operating leverage in AMC business.
What about a 361 WAM, another company which has had some pretty good results? If you've seen some strong brokerage notes on it this morning as well, stock already 4.5% up. This is just the first 2 minutes of the pre-open session, so keep that in mind. But a view over here?
No, sir, I'm constructive on this particular space, AMCs and wealth managers.
Okay, so it's just the brokerage.
Within the capital market things, I like these two spaces.
Okay.
Because of their annuity nature of earnings.
Okay, so that makes sense. What about you on 361 WAM?
Very constructive. In fact, 361 WAM was one of our weekly picks, has been doing well. Some volatility with markets here and there, but a very beautiful rising trendline support on this one. Mild resistances around the 1200 zone, 1200 to 1215 zone rather. Opening suggests that it could open at the 1200 mark. Just wait for it to cross that 1215 level, and then you could see it zoom higher to 1260 and those levels as well. So very constructive on 360 for sure.
We were talking about HBL engines and this whole Kavach deal a little earlier. Look at HBL engines, about 10.5% down right now in the first 3 minutes of trade. Eternal also hurting. But the star of the morning is Infosys. Look at Infosys, look at TCS, look at some of those counters and what they're doing. Infosys about 4% up. If you don't,
the AGR had indicated that would take place.
The ADR did,
ADR,
so if you own Infosys right now, what are you doing, Kush?
Oh, you should hold. You should hold. The reason being, there was resistance. It's been taken out. In fact, if my memory serves me right, I think the ADR was about 7%. In the green combined. Both the days combined. So I think there's a good idea that there's a good possibility that the stock could actually head higher also. I would start booking profits once it comes close to the 1685, 1700 zones. If I had a trading position, right now I would hold it with a trailing stop loss.
Wow. No, I'm just just scintillating to see the kind of price movements into select names today. LTTS, I wonder, because of the restructuring, if you will, that they have thought of, is it reacting negatively? Yes, it is, about 1.29% lower. And, you know, I mean, just so many businesses out there looking so solid after the Q3 numbers and the announcements that they've given. Kernex Micro will be another stock in focus by the way, viewers. Keep that in mind. A very large order win for a company which doesn't have as large a market cap, but because it had rallied a bit, maybe a bit off right now.
Even a couple of ticks back, it was 20% up, so it could well change on the dime, right?
Okay, yeah, let's wait and watch how it goes. Okay, but it's 9:05. That time of the show when we get to the big brokerage call for the day, Nomura has initiated a buy on United Spirits. Sharad Johnson with details on the rationale. Sharad, interesting you chose this one because the liquor stocks seem to have gone completely out of fancy.
Well, that's correct, Neeraj. And interestingly, on a Friday, they have released this report. Nomura on United Spirits, they have initiated a buy rating, target price of 1,650 rupees per share. They are bullish, especially on the developing upcycle which could be coming in for the company. There are strong legs to ride the premiumization theme going ahead, and there is a sizable headroom for growth in the medium term for this segment. Also, there has been recent easing of regulations which augurs well for the company, and an innovation-led portfolio is something which the broking house is bullish on. Apart from that, more regulatory tailwinds are there as compared to the headwinds, and the valuations also, if you look at it, it's below the 10-year average, also providing comfort. One more thing addition I would like to give is that Uttar Pradesh excise duty policy is about to start, and even Global Spirits and Radico Khaitan would be in focus, as much more focus is coming on a positive way for the distilleries as well. So positive news flows are coming for the liquor related stocks.
All right, so let's thanks so much, Sharad, for that, and let's see whether the stock is active this Friday. Let's talk about technical levels with Osho Krishnan, who's joining us today as well, Chief Manager Technical and Derivative Research at Angel One. Osho, good morning, and thanks so much as always for taking the time. Would you say that we're likely to break out of the range that we've been in for the last several trading sessions for the benchmark, or more of the same in your opinion?
Very good morning, Alex, and firstly, thank you for inviting me at the show. Well, yes, no doubt we are witnessing a kind of a range-bound movement in the benchmark index, especially technically it is hovering between the 50 and 100 exponential moving average. So I'm expecting that in today's trading session, no doubt some volatility should be there in the index, but overall, I'm not very much optimistic or even pessimistic at present levels. There might be a pullback for the day, but I'm not expecting that it will breach the zone of 25,900 or 25,850 on a decisive manner, because again, being a very truncated day, I'm not expecting that before the weekend, the market will be witnessing a kind of a momentum from here onwards. But overall, I'm having a bullish approach for the day, and I'm expecting that approximately 25,850 could be tested for the day, and accordingly one should take positions also. On the lower end, 25,650, 25,600 is the initial support levels for index, and any dip towards the zone of 650, 600 can be seen as buying opportunity, and one should stay light on the positions once Nifty moves towards the zone of 25,850 for that.
Okay, all right. What about individual stocks, Osho? What are you liking this morning?
I have two buy recommendations. First one is PNB. Punjab National Bank has seen a very strong momentum in the last trading session. It has given a very volume-based breakout in the last session. So I'm expecting that momentum should be continued in the counter. So one should try to accumulate positions around the zone of 127, 126 kind of levels with a stop loss of 122, and the target is expected around 136. The other counter is Eternal. No doubt the counter is showcasing a kind of a bleak start for the day, but I'm expecting that the technical setup is quite robust. There has been a reversal in the counter, so one may look for buying opportunity in Eternal also. 288 should be the stop loss. On the higher end, first target is 310, followed by 350.
Interesting. I'm going to get Kush's view on Eternal because it started off soft on charts. Are you seeing that strength coming in, Kush?
ऑर्डर ही करना है तो ऐप में जाके इटर्नल का स्टॉक ऑर्डर कर लो.
कौन से ऐप में जाके?
अब वो तो मैं नहीं recommend कर सकता ना कि जो भी broking आप कर रहे हो उसमें. But that's the idea. If you want to order something, order the stock right now. This is a very good risk-reward ratio.
Really?
I have been maintaining that.
So you're saying, so instead of ordering food on Eternal, go and order the stock.
Precisely. जैसे I have been saying, PVR का stock, sorry Parag bhai, but PVR का stock लेने की बजाय picture जाके देख लो ज़्यादा constructive होगा. That is my view. Has been for a while.
Parag bhai will not mind. But I want to hear his view on Eternal. Now you should not mind.
Never do.
So my view is that within the pack, Eternal is good.
Okay.
Within the pack, Eternal is good. Now, they at least make EBITDA level profits. And now that there is some, I would say force from all the ecosystem that they have to make higher profits, 10 million deliveries under. So I would say that within the pack, Eternal is okay. And as I said, I'm starting to look at DMart slightly more positively.
Yeah, it's in the model portfolio for Bernstein as well. What did you make of all the glowing brokerage notes on Meesho's today?
Meesho, I have not studied it yet. But let's see, I think. The other thing which I would like to highlight is that PVC prices have again gone up. By rupees 2 per kg. So now they have gone up by 7-8 rupees per kg. So this Astral Supreme thing, I think, should gather pace in my view.
Okay, I do want to ask about Cipla because it's having a little bit of a bleak start and understandably so. Neeraj pointed this out in the trade setup. The Lanreotide supply disruption is having a bearing, and Morgan Stanley pointed out that it could have an impact on earnings to the extent of 2% for FY26, 1% for FY27. It's another bad news in a spate of bad news, Parag bhai. What do you make of Cipla at this moment?
So basically, this was an important product. So I think the knee-jerk reaction will be there. Luckily, we don't have it in the portfolio, but I would like to keep close watch on it. And see, Umang Vohra also resigned. So there is no big incentive to become a contra buyer over here.
And for Cipla, I think a lot of things. One, that Umang Vohra has gone out. Two, that we know that Q4 is going to be weak.
Yeah.
So there is no near-term trigger per se. And three, there is always this whole talk, right, of maybe the promoter piece out there for a change at some point of time. So bear that in mind. But I think the bucket that is doing really well is this entire capital market / exchange play. 361, Angel One, UTI AMC, MCX, that cohort of stocks is doing extremely well. So keep that at the back of your mind. And we know the names that Parag Thakkar is betting on. By the way, keep in mind there is a very good brokerage note or a sales note that is coming on Grow as well, in terms of how it is revving up and flexing its muscles to show that it's a big daddy of this space. But Kush Bohra, the reason why I want to bring this to your table is that because a lot of these stocks are doing well, which is the first amongst the equals? Which one would you trade from these names?
So I have very clear preferences when it comes to this space. In fact, today I'll suggest a candidate to book profits. Even when some of these are doing well, and that is MCX. So Alex, you'll recall some of the stocks that we discussed on Wednesday were MCX, Union Bank and Hindalco. Stellar move. So even while Nifty wasn't doing much, the stock specific action was fab. So MCX slightly overheated or at least getting there. If you don't want to book profits, hold it with a trailing stop loss. But other than that, 361 BAM, that's the one that we've already discussed. Wait for 1200, 1215, that zone to be taken out and you'll see further momentum, so continue to hold. And BSE, that's the stock that I'm still very constructive on. Mild resistances around the 2900 mark, but again, the near-term trajectory, the volume action fairly encouraging. So you could take your pick between 360 and BSE.
Wow. And then, of course, watch out for Hindustan Zinc and Vedanta. Both of them should come up on your screen. In Zinc, we're taking a bit of a soft spot. No, not quite move. Vedanta, I mean, it's at 675. Interesting that moves there. And the oil marketing companies are the last set of stocks. Because of a crude price downtick, do we have some movements there? I think it'll be interesting to see that. Kush, any thoughts on the OMCs?
No, not really. I mean, I don't really suggest them from a trade perspective, as constructively as some of the others. I don't see those rallies lasting a bit. Even now, if you see some of these stocks are very close to the resistance levels. So I would wait and watch on some of these names. Maybe a book profit on oil and ONGC, by the way, or you could hold them with the trailing stop loss, but not the OMCs.
Okay. By the way, Kernex is at 11% is where it's settled. And seemingly the broader market's also sanguine at this point. I'm just wondering from the broader markets whether there are any indications of what could be beyond what we've already indicated, buzzing on the upside. IndiaMart seems to be likely to have a good day, and we told you why. 4.5% higher, Zentek on an order win, and something like a Nuvoco Vista. Do you like Zentek and IndiaMart though?
You know, it could be a turnaround story, a very good one at that. So IndiaMart on a turnaround story, perhaps. Zentek also very similar setup.
Okay, one stock you would buy, 10 seconds.
Oh, I'd stick to Hindalco. I'd stick to the metal names that are doing well.
Okay, so Hindalco is Kush Bora's top pick. We'll get into other top idea from other guests as well in just moments from now. But the markets are ready to kickstart trade today. It's the Friday, a day after a holiday for the Indian markets, when the global markets have consolidated well. Let's see if we have green on the screen this morning. Yes, mild green on the screen, about 0.2% actually. IT, banks are flat, mid caps is okay. IT should come up on your screen post Infosys. 1.72%, I think this is courtesy Infosys. We'll get that in a moment. Just the small cap index, very quickly. Just see the broader end of the spectrum. Okay, flattish. Let's get the heat map and see what's on the green side. Okay, here comes Infosys 3.6% higher. What a blockbuster reaction to a very good set of numbers, and more importantly, the commentary around a lot of things, including growth, including AI and other factors. Wipro taking a leaf from there, 1.7%. Tech Mahindra 1.7%, Shriram Finance on that brokerage upgrade about 1.28%, Mahindra and Mahindra up about 1%. I think a lot of bookings for the new vehicle, and that is what has led to that. Grasim, Nestle, NTPC, Adani Enterprises, by the way, 0.7% higher as well. And we'll get in some of the Adani Group stocks going. I don't see Adani Ports in the top 15, but we'll watch out for that. Even Stevens, almost even Stevens between the reds and the greens. Cipla cracks 4.23%. Eternal 3%. I'll be interested in asking Kush Bora if this makes it even more attractive, or does he want to cut his losses if he went into the trade, by the way. HDFC Life, no great commentary coming out from there, and maybe which is why I think the stock is down 2.5%. ONGC on expected lines 1.18% lower because crude prices have come off. Bharti Airtel, Sun Pharma, BL are the others. But frankly, as much as you look at Cipla and Eternal on the downside and HDFC Life on the downside, the winners of the morning are the IT stocks, with Infi leading the way, but the other two not too far behind.
I think everyone who was saying a few weeks ago or even a few months ago that it's time for a contrarian view on IT is being proven correct today. Let's pull up the Nifty contributors very quickly, and because you're seeing the Nifty gains sort of getting a bit muted as well, despite the kind of boost you've seen in IT stocks. RIL pulling up the index to some extent, but it's Eternal which is weighing down. Eternal and Bharti Airtel both weighing down along with Cipla and ICICI Bank. I want to pull up the small cap and the mid cap very quickly. Let's see if the broader markets are showing a better movement. Well, not really. If you look at the entire picture, it's quite muted. It's positive but muted. Small cap 250 completely flat. The sectoral heat map will give you a better picture, and of course the Nifty IT is going to dominate over there. There you have it, about 2% up. Nifty Realty also not doing too badly. PSU banks are doing fine today, but on the losing side, this is largely Cipla, about over 0.5% down on the Nifty Pharma and Nifty Healthcare, more green than red. At least that is one thing that is positive right now. Let me just take a look at specific stocks, because that's where all the action is going to be, and we've been talking about various news flows or news reasons that you will see stocks move. Let's look at HBL Engine and Kernex Micro. One got an order, one didn't get an order. The contrast couldn't be more stark. The large company which didn't get an order from the railway authorities is about 13% down right now. The smaller company which did get a massive order is about 7.5% up. Nomura has initiated a buy. It was our big brokerage call. Let's pull up United Spirits for you and see what's happening there with the stock about 0.5% up. A lot of positive brokerage views this morning on Grow, 361 WAM, Misho about 0.5% down. Look at 361 WAM. Also, the numbers were good, and that's one of the reasons. Grow 3% up right now. Going on with results impact, Vari Renewable and Angel One. Let's pull up some of those counters. Angel One about 6% up. We've been talking about some of these brokerages, and Angel One definitely popping there. We'll get a view on Vari Renewable, not Energies. So we need to pull up the right stock. So we'll get a view from a technical analyst as well on Angel One in a bit. IndiaMart is the other one that we're looking at. And, Nalanda Investments has increased its stake in the company, about 6.5% up there on that stock as well. Let's look at Zentech, 404 crore order from the Defense Ministry. Zentech has been having a bit of a lean period as far as the stock price is concerned, 7% up now. So if you look beyond the headline indices, you can spot some winners this morning.
Oh, certainly, you said it. And a few of the stocks that we discussed this morning because of significant updates also buzzing, right? In the EMC space in particular, the newest kid on the block, if we can call it that, ICICI Pro AMC, though it's the largest in terms of active equity management, is up about 3.2%. And the reason was what Parag Bhai mentioned, which is Naren getting an extension of 2 years. This was a bit of an overhang, and the management had to field some uncomfortable questions even during the listing process. But certainly the street seems to be viewing this positively. HDFC AMC also doing particularly well this morning. But I want to go to Osho Krishnan on Eternal, because this was his call this morning, and Kush has also said it's positive. It's come off the low point of the day already. So Osho, would you double down on what you were saying earlier, because it started down 3%?
No doubt it has started on a bleak note, but that was a kind of an opportunity for the short-term or intraday traders, because from the lower end, the counter have also started gaining some traction from 3% down. Now it is 1.7% down. So I'm expecting that overall there might be a initial signal of turnaround in the counter. So one may look for buying opportunity. No doubt today might be some kind of volatility that can be seen in this counter. But overall, I am expecting that once it reaches the zone of 298 on a decisive manner, there can be a strong momentum coming in this counter in a short-term perspective. So one may look for buying opportunity. Again, 288 should be their apt stop loss for day traders.
I want to get in a comment from Kush Bora on Astral, because Parag Thakkar spoke about it rightly. PVC prices have gone up, and Astral, by the way, is no longer at 1430, 1435. It is at 1485. It's rallied a bit already. But Kush Bora likes stocks which are in momentum, right? That's what technical experts do. I wonder if Astral, Supreme, Prince, all of those are in that sweet spot where you would want to trade them, Kush.
Absolutely, Neeraj. In fact, what I'm starting to see? I'm starting to see a very similar pattern in some of these names. Metals were one. Now we can say IT was second, where in fact auto also to some degree, where you saw that rally in December, late December, then some cool off early January, and then these stocks are starting to move up. Astral, Supreme, both of them squarely fall into that category, and very similar patterns. Like I said, a move up, mild consolidation and profit booking on very low volumes, key support levels respected, and then they're moving higher. So as far as Astral goes, yes, the second leg of rally has started. The stock took support at the 200-day moving average. Now there's a rebound. I think this is in for next leg of up move, which will take it past the recent swing high of about 1500. I think 1545, even 1590, very much on the cards. Supreme also very interestingly placed. It's less volatile. So if you want to choose a less volatile stock, then Supreme is a stock to go to, by the way. On the way up, you've got 3660. The recent swing high as your target. Once that is taken out, I'll not be surprised to see 3775 also, because that's the next leg of resistance. So both of these very, very nicely placed, and they've had a share of profit booking. So I think the selling, the weaker hands are out of the stock now. You could consider them for a positional long bet.
As much as we've spoken about the AMCs and the capital market plays being in focus today, really the bright spot and the winner of the morning has to be IT. Take a look at the constituents, pull those up on the screen if you will, because 7 out of 10 on the Nifty IT are trading with gains of over 2%. And Infosys leading the pack quite considerably, up about 4% or thereabouts. Infi second, very close behind, 4% higher. But what stellar gains. So Parag Bhai, of course, I know that you have a few favorites, Coforge among them, but would you widen the list at all, given what you've seen in the earnings so far?
So that is clearly evident. See, for example, Infosys said that they are seeing a discretionary spending pickup in BFSI. Emphasis is mostly BFSI. So as you rightly said, emphasis is up 4%. Sure. Right? So that is what market is reading into. That wherever we have seen good commentary from Infosys and TCS and HCL Tech, like all of them have maintained that BFSI is seeing a good traction. And if you see the results of Goldman Sachs and Morgan Stanley, and they are all making new highs in US also. So it's a good, I would say, connecting the dot kind of thing. So anything which is related to BFSI in terms of in IT should do well.
Okay. And on the charts, just to complete that point, would you build on any of these gains?
I would actually build on Coforge. If everything's going so well with the kind of hammering that the stock's taken, all the more reason for this stock to move back to those previous levels from where it took a knock, and those happen to be about 1800, 1820 to about 1880 zone. So still a very, very favorable risk reward ratio. So while yes, you could play momentum in something like an Infosys, by the way, that is also breaking out right now. It's consolidated for the last 8-10 sessions. But if you want a good risk reward ratio, why not still go for Coforge?
Why not still go for Coforge? And Parag Thakkar's only bet in IT is Coforge. He's nodding his head as well. Keep an eye out for that stock. Please do your own due diligence, by the way. For all the recommendations that come in either from Osho, Kush or Parag Thakkar, please do your own due diligence. Okay, shifting to just very quickly a stock in focus, and that's Cipla. Right, that double setback as we spoke about. Varsha tracks the space closely. Johnson right now for why Cipla is down 3%. Varsha.
Well, thank you so much for that. The reason that why supply is down almost 3-4% is its arm, which is in US, has paused a production of lanreotide. Now they expect resupply to resume in H1 FY27, and this drug, if you see, treats hormonal and certain types of cancer. Now why supply is in focus and why have paused the production of one of their key drug, because Form 483 was being issued to company's partner, that is Pharmathen, which is based in Greece. Now this company, which is a partner of Cipla, had got a Form 483 at one of its unit. 9 observations were noted, which includes poor aseptic practices, and there were some data integrity concerns as well. Now why there's an impact of Cipla? Because if you see, the lanreotide is Cipla's biggest US drug, and if Pharmathen is facing these issues, this will impact the sales of their biggest US selling drug, and hence they have because of that Form 483 observation, they have paused the production, and the sales will also be delayed considering this impact. So overall this is a very big negative, and hence we are seeing the pressure in the stock.
Okay, all right, Varsha, thanks so much for putting that into perspective. We've already spoken to Parag Bhai about this, so let me go to Osho. Osho, would you steer clear, and if you have a position in Cipla, then what would you do? It's negative news flow, of course, that is once again impacting the stock. But would you book your losses at this moment if you have them? Osho, for you on Cipla.
Cipla currently it is at a very, very crucial juncture because it is having a breakdown below the zone of 1360. So I'm expecting that at current levels, I won't advise to exit from the counter. It is at a very crucial juncture, but one should definitely keep a stop loss of 1360. If it breaches below 1360, then on technical front, we might see a very strong breakdown. The double top breakdown can be seen in the counter. So it is at a juncture at present. So if someone is already holding position, it will be advisable to keep holding it because the risk reward is quite favorable from a bullish point of view. But if it breaches the zone of 1360 on a decisive manner, then from there onwards, it might see further correction. But overall, I will stay quite on the positive side for the counter at current levels. 1360 will be the final stop.
All right. So we've more or less got even Stevens on the Nifty 50, 25 gainers, 25 losers. HDFC Life now one of the top losers on the benchmark. How do you trade this? And it wasn't the worst set of numbers actually, no?
Yeah, so I think the fall can be a good contra opportunity. Yeah, in HDFC Life. Yeah.
Okay. So what are you expecting heading into FY27 for HDFC Life?
So I think the growth will bounce back. But GST cut has been there, so there will be growth in retail protection, which is a high margin business. So I would say that this is a good opportunity. Of course, they have, I think, indicated that there was a competition in the banca insurance space, but I think it will pick up in my view. So it's a good contra play.
Okay, Kush, does the chart also support that? No, you would wait for further downside.
No. On the contrary, 725 is a good support zone for this one. So while the stock is currently below that, I would wait and see if on a closing basis the stock respects that support level. If it does, then it becomes a very interesting range play or even a favorable risk reward kind of a play. But right now I would wait and watch, because that 725 support zone on the opening has been broken on fairly decent volumes. So wait for a close above that 725 mark. If that happens, then you can consider, not now.
Okay. All right. So now, interestingly, there's quite a bit that has been happening in the renewable space. There's been new announcements with regard to creation of battery energy storage systems. There's been new capacities that are created. There is a lot in terms of the photovoltaic cells manufacturing that is taking place. But Waaree Renewable in focus, up about 2.7% on the back of earnings, certainly something that we need to focus more on. In fact, we've got Neeraj speaking with the management of Waaree Renewable, and let's find out what they have to say.
Mr. Sharma, the CFO of the company, joins in right now to talk about the numbers and the outlook ahead. Mr. Sharma, great having you. Thank you so much for taking the time out. Put the quarter into perspective. Is this something that you had penciled in, or was there an issue or two pending which the numbers could have been better?
So, good morning. Thank you very much for having us on show. The number, if you see that on a quarterly basis, that we have done significantly improved all the time on a quarter-on-quarter basis. And if you see then for the 9 months also, we have improved our revenue by 98%. The EBITDA margin was also improved significantly over the 9 period. It was 16.46%. For the 9 months, it is 19.48%. To answer this, for this particular quarter, it is more or less in the line in our expectations. It can be a little, if you need to see the overall for the 9 months, there may be some slightly dip in between quarters.
No, but Mr. Sharma, I mean, you guided for what, 15%, right? When you started of the year, you've done 19%. So I believe you guided to an 18 to 19% band for the foreseeable future. Are we to presume that 2026 for FY27 and the last quarter of FY26, the EBITDA margins would be between 18 to 19%?
So, as of now, we are guiding always around 15%. Our EBITDA margin, we are guiding around 15%.
But you're clocking 19%. So this is a big beat.
So all between all these, the operational efficiency, cost optimization, tight budgeting controls, and financial discipline, these are the 4 key factors which plays significant role throughout this project execution actually. And we are able to execute large scale of the project, and we are really in the right sector at the right time. So if you see the overall growth for the sector, also this country has installed 30 gigawatt in the last 9 months. Sir.
Got it. Okay. So you will tell me that you will guide to 15% but hope to do better. I think that's what your answer will be. So I'm moving on from there. About the order book, it's a healthy order book. What is the execution timeline for the same? Part 1 of my question is that. Part 2 is there an expected or anticipated order inflow, let's say in the first 6 months of 2026?
Yeah, definitely. We are looking forward because we are already chasing around 29 gigawatt of order pipeline, and that includes a tender around 5 to 6 gigawatt, then other opportunity like within the country and overseas also. We are a lot of inquiries and a lot of this order are moving in the discussion with the customer. So if you see that this for the 9 months also, we have done significantly order book, and going forward also there is a lot of space, or there are a lot of orders likely to come. That is what we expect going forward.
So what's the execution timeline for the existing order book? I believe the existing order book is what, 2.92 GWP?
Yeah, that's right. So it will be executed over next 12 to 15 months.
Over the next 12 to 15 months. Okay. In which case, Mr. Sharma, maybe it's too soon to ask about FY27, but broadly, what is the kind of revenue growth guidance that you can share with us on the back of what you've done in the first 9 months and quarter 3, which is very solid, and what happens next?
So if you see from last few years or maybe quarter on quarter basis also, we have done from 876 to we reached to 1597 in the last year. Now we are 2,230 approximately for the 9 months. So there's one quarter is still pending, and going forward also that we expect that we should be doing good in coming years also.
But is there a number to that good?
Definitely with the unexecuted order book which we have as of now, plus the order which we are expecting throughout the year, we should be doing good.
So this good could be similar to what you've done in quarter 3?
It should be whatever we are doing should be there. We should be maintaining this kind of pace going forward.
I hear you. But you're not putting out an official guidance as of now, right?
Yeah, that's true, because we are not giving any kind of official guidance. Better we do better than what we say is actually.
Okay. So this is the good part. Mr. Sharma, what about the tough part, about receivables? The growth is good. Are receivables looking strong? Are there payment delays? Any issues there?
No, we are closely watching and keeping track on all our receivables, and that was also like most of them we are expecting that some advance, then the milestone payment base which we are receiving from the customer. So we are closely monitoring, and there should not be any delay in terms of actually receiving this receivables. So we are tight in that situation where we are keep financial discipline. Otherwise, I will not move forwards.
Okay. Okay, but no stress as of now. I presume that's the word.
Yeah, that's true. There is no stress.
No stress as of now. Battery energy storage system plans. I'd just like to get there. Now, you announced a large one. I believe the fundraise that was done was also a part of Waaree Renewable Tech, or is it a separate company, or is it a subsidiary?
It is the group initiative actually. The manufacturing is announced by the Waaree as a group. They've announced it.
Okay.
So whatever the opportunity in terms of, because this battery is also required for the grid stability and nighttime power, etc. So wherever this is to be installed along with the solar, we have opportunity to do the EPC business of that.
Okay. Okay. And but it's a large plan, right? So two questions out here. One, what is the kind of ordering activity that could come in for your company, Waaree Renewable, over the course of the next 2 years from the internal plans, part one. Part two of my question, the China rebate news that came out, how big of a deterrent or a margin impact is that on the best plans?
So what we understand that this, whatever the solar power generation required, it is supported by the BESS. Maybe we are getting lot of inquiries for 1 hour, 2 hour of BESS along with our solar. So we have opportunity to do the turnkey contract as well as pure EPC of BESS. So as far as this Waaree Renewable Technology is concerned, we expect that this is one of the area which will open up for our EPC executions. So we are delighted to have this kind of work as well going forward.
Okay, fine. But again, you don't have ready numbers at hand about what the expectation of ordering in from this is, do you?
Yeah, that because there are a lot of inquiry. We are executing one of the best projects also. So there are a lot of tenders also there.
But Mr. Sharma, sorry, only from the group initiatives I'm saying, is there an estimate of what the ordering could be? Only from the group initiatives? Waaree Group initiatives?
Waaree Group initiative is difficult to comment from this. So okay. Definitely, but as far as this BESS is concerned, we see good opportunity that this will also open one of the area for our execution, actually, revenue stream.
Does the China rebate announcement impact your BESS segment operations in any fashion? How?
I don't think so, actually. It will impact.
For you, it's a pass-through, is it?
Yeah. So we have, it's depend upon, actually, as of now, we don't have that kind of order. If we enter into any kind of turnkey order where this battery is also part of our supply, so we'll estimate and convey the cost or to the developer, and with our margin we will take that order. And just to tell one more thing, whenever there is a supply, maybe in terms of modular battery, we immediately hedge our position, like we immediately books order and convey to the customer.
Okay, Vari Renewable there, coming off actually that stock from its highs, but results were decent, pretty decent, coming off its highs right now, still about 2.5% up. Zentech is a star of the morning in that sense. 440 crore order is what is boosting that stock. India Mart after the big investment coming in, as is Angel One because of good results. So you have enough companies that are buzzing, stocks that are buzzing because of their results. Speaking about results, another company that has posted earnings is L&T Tech, and Jasmeet joining in to take that conversation forward.
Well, right, yes, thank you for that. If you look at the overall results for LTT, yes, we have seen that the company has had a mixed set of numbers, though the deal wins have come really good in this particular quarter. The profit sees an impact of 8% coming on the back of that one-time employee cost. Apart from that, the overall sustainability segment has led the growth for the company. In terms of geographical split, we see that the overall Europe geography is something to watch out for going forward, and Indian geography is a slight downtick in this particular quarter. While we have also joined by Mr. Chadda today, I would like to start off by welcoming you on the show and would like to ask you, how do you see the recent deal wins ramping up and how do you see them materialize going forward?
Look, we're fairly pleased with what we've been able to do. We've been able to grow 10.2% year on year, as well as profits are slightly up. And fifth consecutive quarter when we've been able to close these deals of 200 million TCV. In the last few quarters, the deals that we have closed have been in the sustainability sector, and therefore you see that the sustainability sector has grown 11% plus year on year. Margins have improved. Mobility has actually turned around slightly. So there's a very slow growth, small growth in mobility as well. Margins have improved. And tech, we've been selective in the kind of business that we pick up and we execute because we are looking at our portfolio for the next 5 years. And therefore, you see that it's grown year on year. And in fact, the margins have improved. So this quarter has been a quarter of pivoting on profitable growth rather than growth alone.
Well, got that view. I would like to also understand, has the selective project approach, which has led to the slower overall top line growth, but the margin expansion for the company?
Yes, sir. And the margin expansion, if you look at it, the gross margins are up 200 bips. The EBIT margin is up 120 bips. This has come ahead and ahead above what people were expecting. And as you look forward, you will see the margin trajectory continuing to accelerate and growth coming. And there are businesses that we are deprioritizing as we move forward. And that's what you will see. In fact, if I can take a minute and talk about it, look, LTTS is a technology company. We see the next 5 years and we see a huge potential for us in terms of upside in AI. In fact, we are now rebranding and saying that we are not focusing on AI alone. We are focusing on EI, which is engineering intelligence. Engineering intelligence stands for physical, industrial, and digital AI, all that together, and frugal AI with that. So as I look at the company and I look at the future and we are redoing our stack in the EI stack, I do see some of the business that could potentially get commoditized. We are dropping that business. And therefore, you're seeing the improvement in margins, but you're seeing a slower growth in the tech area. And that's because we're being selective in the kind of work that we're picking up.
Well, engineering intelligence, that sounds interesting. I would like to understand which areas do you see the overall deal ramping up when it comes to the engineering intelligence as a whole?
So if you look at the deals going ahead, I do see in Q4, we've got a very strong pipeline. In fact, pipeline is up for us 20% year on year. And we are expecting that we will be able to grow further in the sustainability sector. We will grow further in the mobility sector. If I look at tech, we will grow in tech, but we will drop some more business potentially. So you will potentially see LTTS come out of the year growing definitely ahead of peers. And as we look at next year, think about us as an EI first company and India's first EI company as we move forward.
Okay, got that. Now moving on to the overall OEM space. So we have seen a lot of macro uncertainties coming in the OEM space over the last few quarters. I would like to understand how is it impacting the overall business?
I do see the OEMs ramping up. In fact, what's happening is that we are gaining market share. We are able to win ahead of competition because of we've got more than 200 patents, right? We've got a number of widgets that we have got in-house. We've got enormous amount of software expertise that we are building over the last 6-9 months that we have built. We believe all this is helping us in gaining market share, improving foothold, etc. And the OEM spend is changing, and we believe that we are in the right place at this stage to take advantage of that, provide value to our customers, and grow further.
OEM space is changing. Got that views. Well, I would like to understand the margin sees a very healthy uptick in this particular quarter. I would like to understand what sustainable margin range you expect in the near term going forward.
Look, we would like to operate in the 16.5% plus EBIT range. And by the time we get to Q4 FY27, we will definitely and surely be in that 16.5% EBIT range. That's our aspiration. We do expect growth in top line in FY27, and the year has to play out, but we are fairly comfortable at this stage to be cautiously optimistic about FY27.
Well, 2 out of 3 segments have gained in this quarter, but the tech segment being the major one, we see the downtake. It's down about 10% in this particular quarter. So I would like to understand what are the reasons behind the overall tech downtake in the Q3 of the company.
Sure. So see, mobility has turned around. You can see a slight amount of growth there, improvement of margins slightly. If you look at sustainability, you sure-footed growth and improvement in margins. When it comes to tech, it's because, if I take out the part that we were, that we have stopped doing, we've actually grown much higher in tech. See, given where we are in the market and where our client confidence, as well as the fact that we are right there about 9 months, 10 months ahead of competition and peer group on technology, we can make that choice. We can afford to make that choice to be a little selective. And that's what you see in the results. And that's how you can see the margins improve.
Okay, got that. We have seen for other tech players, the Indian market actually seeing an uptick. But for something like an LTTS, we see weakness in this particular market. So how do you see the overall Indian geography turning up for the company going forward?
So there are certain parts of our India business, along with certain parts of business that we've had in the Middle East and Europe, that we have discontinued because those businesses do not fit with our overall strategy. And that's how we've been able to improve our margins as well. And as I look forward, we'll be selective in the Indian geo and in line with our strategy. Look, our strategy is to be an EI first company. When you look at an EI first company, you're looking at physical, digital, as well as industrial AI coming all together. If I look at what we have done in the past, we had tied up with NVIDIA on the Omniverse platform. We have done further work in that area. We've been able to develop solutions that we've already deployed in the field in physical AI. We're working on frugal AI with some of our clients in automotive, in industrial, in rail, in medical. I believe all this will bode well for us, and AI ramp up is a once in a lifetime opportunity that we believe will give a tailwind to the LTTS EI strategy.
Okay, understood that view. But we see that profits are down about 8% on the back of the new labor code. I'm hoping that's a one-time charge. I would also like to understand how do you see the overall impact on the profit going forward because of the new labor codes?
Look, there was a one-time impact that we have taken. We've already filed that with the exchanges. There was a very small amount that we had. Look, we sort of kind of had thought about this as something that was coming, and we've been moving in that direction deliberately in the last 5 years. And therefore, the impact that we've had is fairly minimal. We have taken that into account, and we have provisioned for it. And as you move forward, you can continue to expect the margins to expand. And whatever we had to take as an impact, we have taken it already.
Well, got that view. Thank you so much, Mr. Chadha, for joining us today. We see a good set of numbers coming in, mixed numbers coming for the company, but the management remains constructive going forward. So all in all, right now, the picture remains mixed. The stock is on about 5% odd. Just wait and watch how does the overall deal win ramp up for the management going ahead.
Yeah. So good interview, Jasmeet. But I think Infosys has taken the limelight and spotlight completely on the tech pack this morning, not so much for L&T Tech.
Right, I agree on that. If you look at the overall IT pack is buzzing today, the mid caps, the small caps, all on the same momentum of the Infosys has taken the rally in the hit. But it's a wait and watch on Wipro and Tech Mahindra coming out today. For Tech Mahindra, actually the margin guidance of reaching 15% by FY27 seems a little tough, but still wait and watch of how the overall commentary turns out for Tech Mahindra and Wipro as well.
Okay, so commentary becomes key. Thanks so much for that, Jasmeet.
Most certainly. Okay, so that's the IT view and clearly the sector of the day today. But as we said, a bucket of stocks which also deserve mention is the Adani Group stocks. Moody's ratings upgraded the credit rating. Actually, the outlook, not necessarily just the rating, but the outlook of three key Adani portfolio entities in the Adani Port Special Economic Zone, Adani Transmission Step 1 and Adani Electricity. The ratings have been upgraded with the group citing improved liquidity and robust financial profiles. Mahima is here with the details of the same. Mahima.
Right, so Neeraj, basically, as you rightly mentioned, three of Adani Group of companies is where the ratings has been upgraded by Moody's, and the rating has been upgraded from negative to stable for Adani Ports, Adani Transmission, as well as Adani Electricity Mumbai. Now, the rationale for each of these has also been mentioned. For Adani Ports, they're saying that there's robust financial profile which is supported by discretionary nature of its planned capital spending for growth and funding access going forward. For Adani Transmission, the rating is largely based on its parent company, that is Adani Energy Solutions, where they're saying that Adani Energy Solutions has a diversified portfolio of regulated transmission and distribution assets which underpins its stable operating performance, and they expect Adani Energy Solutions to implement timely countermeasures to preserve key credit metrics, with funding from operations to net debt remaining marginally above that 7.5% tolerance threshold. For Adani Electricity Mumbai, they said that there's predictable cash flow from its regulated electricity distribution business in Mumbai, alongside an improving financial profile following recent deleveraging. And for the entire company, cash flow from operations pre-working capital to debt will remain in the range of 10.5 to 11.5% over the next 1 to 2 years is what they're expecting. And these are the reasons as to why they've upgraded all of these three counters.
Okay, thank you so much for that, my important story there. Now, as we get around listening to your voice on what you want for budget, 1st Feb is the big day. We've been traveling across the length and breadth of the country. We will be getting you voices from all states and union territories of India. Our coverage is not going to be limited to just the top cities. And we want to understand what the real economy wants from the budget. Our team went to Indore, a region that sits at the heart of India's soya ecosystem. From farmers to processors, the soya industry has been navigating price swings, export challenges, and rising input costs. So what are soya producers hoping the finance minister will deliver this time? Take a look at this report.
Welcome to NDTV Profit's Budget Exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry, and to give us more perspective, we are joined by Shrey Mittal. He's the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It contains maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory, we are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soybean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना रेलेवेंट है और भारत का प्रोटीन क्या सोया है?
Yes, definitely. You can say it contains maximum number of protein. After the COVID corona, we can say everyone conscious about their health conscious.
Right.
So basically सब जनों को ये लगने लग गया कि हमको हमारी हेल्थ कॉन्शियस पे रहना है, हम कैसे अपनी डाइट को प्रोटीन को इंटेक फुल करें.
द सोया प्रोटीन इज द ओजी प्रोटीन्स. हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. तो राइट नाउ द जनरेशन, व्हाट डू दे नीड टू नो अबाउट द सोया?
दिस आर नेचुरल काइंड ऑफ प्रोटीन. वी कैन से प्रोटीन पाउडर्स भी आता है, न्यूट्रिशन पाउडर भी आता है, पर उसमें कहीं ना कहीं अडल्ट्रेशन रहता है, मिक्सिंग रहती है. ये जो है ये नेचुरल प्रोटीन अपन इसको बोल सकते हैं. ये डायरेक्ट फार्मर से आता है. मैं आपको लेके चलता हूँ अपने नेक्स्ट पार्ट में जहाँ अपना रॉ मटेरियल इंटेक हो रहा है.
And Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
This is a raw material of soybean. तो उसी का ये हस्क है. जब हम रॉ मटेरियल वहाँ देखेंगे, वहाँ से हम ओपन करते हैं तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं उसको हम यहाँ पर स्टोर करते हैं. तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्परेरी स्टोर करके हम रखते हैं इसको यहाँ पर.
All right. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there been a lot of support coming in the agriculture space. तो आपको क्या चेंजेस देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश की सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट है ही सही, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं. आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री की सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं.
We saw the two processes there. What is this process?
This is we can say soya refine, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन जो कि हम देखते हैं मध्य प्रदेश, राजस्थान, सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है. यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है.
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
Okay, so basically ये ऐसा है कि US गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल्क केक है वो इंडिया में इंपोर्ट हो. बस वो अपना हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है, वो होता है नॉन GMO. उनका आता है GMO. नॉन GMO इज नॉन जेनेटिकल मॉडिफिकेशन. उनका केमिकल मॉडिफाइड रहता है. अगर वो इंडिया में आता है तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी. प्लस जो हमारे लोकल प्लेयर्स है उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा. रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये इसका ये लगता है. तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको.
एंड श्रेय, बट द वेरी इंपॉर्टेंट थिंग इज बजट एक्सपेक्टेशंस. बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज अ इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए. हमारा आज भी एक्सपोर्ट जो है बहुत कम है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनकी प्राइस कॉम्पीट नहीं कर पाते. डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना.
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें, वर्ल्ड वाइड देखें, तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज हो रही है डे बाय डे. तो उसके लिए एक मात्र एक सोर्स हमारे पास ये सोयाबीन ही है, जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है. तो वो तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे. प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है. इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखते हैं.
Thank you very much, Shrey, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
It's not just the soya industry. I know Sharad has done a piece where he's had the poha and gone to the Sarafa Bazaar and done all of the foodie stuff as well.
Yeah,
did you do that in Gujarat? You had some interesting experiences.
Yeah, so I taken Gurmeet Chadda with us, right? And we did a solar field to try and figure out what rooftop solar and solar industry in general would want from the budget. So it was pretty exciting. And then we went to an OSAT facility, which simply put, semiconductor packaging, a semiconductor packaging facility for Keynes Semicon. along with the designer firm Sensemi, which is supplying to Keynes as well. So I think two very interesting conversations, very different in some sense, but both futuristic tech-enabled conversations, and what would they want from the budget. So yeah, we've gotten some really good voices.
Yeah.
Not mainstream cities, but still doing the right things.
Absolutely, that's where the business is growing, and that's where the opportunity is growing across Bharat. All right, very short break, and you must catch all of our on-ground budget coverage across all our platforms with NDTV Profit. But on the other side, we're speaking with Puneet Chhatwal, MD and CEO IHCL. We also have Vineet Samre, DSP Mutual Fund, with us on the show.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry.
Welcome back. You're watching India Market Open. All right, IHCL in focus. It's set to acquire a 51% stake in Bridge Hospitality, bringing the boutique luxury Bridge brand into its portfolio as it accelerates expansion in the experiential leisure segment. This deal follows IHCL's recent controlling stakes in Ank Hotels and Pride Hospitality, significantly strengthening its mid-scale and leisure segments. To understand more about it, I'm joined by Puneet Chhatwal, MD and CEO at IHCL. Very good morning to you, Mr. Chhatwal, and thank you so much for this conversation with us. Let's start by understanding why Bridge Hotels, why this controlling stake, what's the strategy there?
Good morning. Thank you for having me. I think this is a natural consequence of the partnership that we had formed with ANC and Pride. And we had the Bridge portfolio already on our distribution platform. And given the way the mid-market is expected to grow in India because of the rising middle class, as well as the disposable income connected to it, which we've all seen with the rise in domestic tourism, I think it helps us to take a leading position both on the mid-market segment in leisure, in business, as well as in upscale segment through the Bridge brand.
What is the kind of addition to the top line you're seeing, Mr. Chatwal, as a result of this acquisition and the other two that you mentioned as well?
You see, at the moment, we have done the acquisition, which will be complemented with asset management efforts. So the Bridge acquisition should give an addition next year itself of 100 crore on the top line. Currently, the portfolio performs at an EBITDA margin of around 38%. We expect that with the operational synergies to go up to 40%. And I think given our distribution network, given the synergies in similar markets that we have, we should be able to drive higher value both at a brand level as well as at a revenue level. I can give you an example. In a city of Banaras, where we have the Taj Nadesar Palace, we are doubling the Taj Ganges inventory, adding another 100 rooms, should come online by the next 10 days or 15 days. Now we have the Bridge Rama. A few days ago, we announced the opening of Avantika, also on the Ganges, also on the Ghats. Then we have the Tree of Life, and we have a Gateway and a Ginger under development. So how we go into the depth of each of the important top upcoming micro markets in India has been a part of our strategy, and covering and addressing all customers in all segments is playing out very well for us.
Puneet, good morning. Neeraj here. I just wonder if this will become the template wherein large behemoths like your group will get enough opportunities to acquire either vertical specific or region specific brands at a good IRR price for you to expand while incurring lower costs.
Absolutely right. I don't know how you got insight into it, but maybe because you've been following us closely, Neeraj. I think important for us was to get our strategy right, number one. Number two was the capital structure needed for it. Then eliminating debt, building a good cash position, and then as and when good opportunities come up for inorganic growth, to deploy that cash cleverly so that you are not actually diluting the current margins or the growth in the top line.
And would it be fair to assume, I mean, because these acquisitions, per se, when I look at the numbers relative to your size, are not very large. So is this a string of pearl strategy, and do you believe that there is more in the offing over the course of the next 12 months, 2026, for example?
Yes, for sure. I think it's a very interesting question. The one we did earlier with the ANC and Pride was to convert 90% of that portfolio, or 85 to 90, whatever the number would be at the end of this calendar year or the next financial year, to Ginger brand. That would have given, or that will give, Ginger a scale of 200 plus operational hotel in a 250 hotels portfolio. So we took 20 years to maybe get to our first 50. And then within 1 year, we just scale up. So scaling up a brand in this kind of segment is fundamental to the long-term success of the brand. And some of that may not add so much to the top line or bottom line, and some will. Then you try to use asset management initiatives to reposition that product within the same market. Then add, our F&B offerings like Cumin. Take the F&B offerings that the partners have done, and then you synergize to get the brand on a very fast track growth, so that 250 plus then goes on to become 500 or 700 in the next 5 to 10 years.
What is the kind of fundraise that will be required, if at all, for this kind of growth that we're talking about? I know the name of the game is asset light, but nevertheless, is there any fundraise on the anvil?
Not at the moment. We are sitting on a very healthy cash reserve. So I don't think we would need any kind of fundraise. We are still doing capital heavy growth also. We just opened 2 hotels in Ekta Nagar, which have been built with our own 100% investment without debt. We are doing a lot of other projects in Ranchi, the Taj, or in the Northeast. We'll be doing Kaziranga. With our own capital. We are building the 2 islands in Lakshadweep. We are opening in a hybrid model the Taj in Frankfurt in a couple of months from now. So I think the combination is the key. Finding the right sweet spot between the capital heavy and capital light. We've been guiding the market on that. We started with 50-50. Today we are at 35-65, 35 being capital heavy.
And that continues in that vein as well?
That continues in that way, because I do believe in order to build strong brands, you have to do some kind of brand enhancing and flagship hotels. And we have often spoken about it on your channel. Look at what Ginger Mumbai Airport has done for the Ginger brand.
Yeah. Just wondering if the expansion plans now include a global footprint as well. Are we back at that place right now? Or the focus will be domestic?
Back at that place. So, Tamanna, on the 21st of December, we signed a very large 300-room hotel in Cairo, which will be a flagship Taj. So we'll keep doing selective Taj development in key gateway locations across the globe. And Cairo is a great addition for us in that part of the world. We opened last week the Taj Paro in Bhutan, which will be followed in the next week with Taj in Phobjikha in Bhutan. So I think having that dominance in the Indian subcontinent and selective presence in international markets with a capital light model or a hybrid is the way forward. We are definitely not going into some kind of acquisition of single assets like we had done 20-25 years ago. That's not a part of our strategy.
Puneet, I'm just taking a leaf out of that. I'm tempted to ask you, you've now maintained that post-COVID, the sector has moved from being cyclical to structural. Does this structural nature of the India business give the group and you the ability to reimagine a really large global Taj brand over the course of the next 10-15 years? I mean, we have the Marriotts, we have IHCs, we have various other brands. None of them are from India. Is your brand set to become this over the next 10 years, wherein you will not be just in gateway locations, but in multiple other locations?
Thank you, Neeraj, for that question, because it's a very interesting take. Till 7-8 years ago, from a valuation perspective, we did not feature even in the top 100. And I would say it would be fair to say we did not even feature in the top 150. But since the last 2 years, we have been consistently being rated between number 4 to number 7 from the real true hospitality companies, if we take out the casino-driven companies. And I think it would be fair to assume that if we continue in a very disciplined way, like we have done in the last several years, in communicating our strategy and walking the talk with that follow-ups, despite all the headwinds that come, there is no reason why we should not get into and become stable at the number 1 to 5 position in the world. 1 or 2 from a valuation point of view maybe unrealistic. But I think if we get to stabilization between 3 to 5, it would be a very big step. And as you said, 10 years down the road, or 50, if we could go further up, why not?
Just, since we have you in the middle of January in this conversation, what is the outlook for 2026 that you're seeing, the kind of appetite you're seeing for luxury and the expansion plans?
Our guidance has always been depending on what your base level is. So like for Bridge, the average yield is around 27,000 rupees. So you cannot have 20% growth on very high levels. So I think a double-digit growth on the top line remains very realistic for 2026, 27, and maybe even 28, as far as we can see it based on our like-for-like and not like-for-like growth. And that double digit with the right amount of flow through and conversion should keep adding to attractive EBITDA and PAT and free cash flow growth. So all in all, I've always sounded optimistic, the same as today. More I cannot say because we're in the silent period, but the sector outlook for hospitality remains positive as demand continues to outpace supply despite all possible headwinds one could have had, from an airline accident to Operation Sindoor to the flooding to the landslides that we have witnessed in the first 9 months of this financial year.
Thank you so much for that, and good luck for the rest of the year. Puneet Chatwal there speaking about what the year is looking like, and of course complete controlling stake in Bridge Hotels as well. That's talk about 0.5% up right now. But let's turn the conversation to a slightly longer term view. Vineet Sambre with us this morning at on Talking Point. He's head equities at DSP Mutual Fund. Vineet, always great to have you on the show. Are you feeling optimistic about the quarter with what we've seen so far? I mean, the blockbuster IT results have helped, isn't it?
Yeah, so in general, I'm optimistic always as a part of equity in the long term. But starting, I think this quarter, it started on a good note, considering the kind of headwinds as a country we are facing, and also IT sector, which has been in this constant debate whether we will be able to sort of participate in the AI boom which is taking place, and the global geopolitical shifts which are taking place. So on that base, when we are looking at the numbers and maybe the management commentaries which are sounding incrementally more positive, and on more importantly on one of the large segments which impacts most of the IT sector, which is the BFSI, there at least the confidence seems to be coming back. So we are not back on a very high growth kind of format, but having seen the sector underperform last 1 year, stocks not gone anywhere, and incremental, let's say, confidence of recovery, that should bode well for the sector is what I feel.
Okay, Vineet, I'm going to ask you to pause just for a second because we have this conversation with Union Bank. They've posted a 9% year-on-year rise in the third quarter to 5,017 crores. Steady asset quality came in, and we had a conversation with Ashish Pandey, the MD and CEO. Just listen in.
If we take the RAM, it is sequentially quarter to quarter, it is 4.1%, which is very robust. Now, coming to the corporate book, you must be seeing there is a good, the increase in the corporate book in the last quarter. Now, let me share with you some of the insights. We had actually 20,000 crore of IBPC, actually 23,000, but one is maturing in the month of January. So around 20,000 we have shed it off, which was at the lower yield in this quarter. Point number one. Point number two, we had around 10,000 crore of short-term loans, which we have converted to long-term loans. Now, if you take, the around 30,000 crore and you add it to the growth which we have shown, because it is, reshuffle between the corporate book itself. So I think with that, you will be seeing the double digit. So I believe that the growth which we have shown quarter to quarter, and I believe it is sustainable, and we'll be going forward in similar lines only. Still in the corporate book, we have around 24,000 crore of undisbursed, which is going to take place in the current quarter.
And you will hear the whole conversation a bit later on the channel as well. But we are in a very interesting conversation with Vineet Sambre. Although he's given just one answer, every conversation with Vineet is interesting. Now, Vineet, it seems, and good morning, this is Neeraj here. It seems that it's futile to look at the benchmark indices because they'll do what they do. You got to focus on pockets in order to make money in this market, whether you're a fund or whether you're an individual investor, right? Is that going to be the nature of the game in 2026 as well? And will the leads on the cap table change?
So good morning, Neeraj. So I think in general, equities has always been a selective game, and more so in the current context when we are actually, passing through so much of uncertainty. And there is a very sharp rotation which we keep witnessing depending upon which sectors actually comes out and performs. So I would definitely go by this view that it's not going to be a broad-based kind of economic growth revival and hence lifting all the boats, but I think it's going to be pretty selective. And the only one maybe slightly positive aspect is that the FY25 and a large part of FY26 has actually seen a low base in some form or fashion as far as the earnings growth is concerned. So there are, let's say from the base itself, I think the companies should benefit if they are able to maybe show small inflection that can actually show up meaningfully in terms of the earnings growth, let's say in FY27. So I think that can be one aspect to what you just mentioned. But overall, I still feel that markets likely to remain selective as we see the visibility as of now. Turning on the cap tables, I still feel that 35% of the index is basically explained by way of the banking sector at large. And banking has seen a lot of headwinds last 1 year. So I think coming out from the low base, that sector should ideally perform well. And we saw the outperformance last year. I believe that should sustain going forward. And hence, from that perspective, banking should do well is our view as well. What can change maybe is the IT sector where there has been underperformance for the last 1 year. And hopefully, if the reversal takes place and some confidence comes back, IT is a large sector. IT accounts for a decent chunk of the profitability, I think to the tune of 9 or 10% of the index. So I mean that turning around can lead to maybe some allocation, going there.
And I know we started with IT, but we want to dwell on that because that IT index is now up 3%, viewers, and it's leading. The banks are also up, but IT is leading the indices to the day's high right now. Very strong move in the first 1 hour of trade for our market. So really strong show. Now, Vineet, we had a global consultant this morning on the channel who said that his visit to India led him to believe that FY27 or 2026 could be an inflection year. That's the feedback that he got from companies. And the numbers and the commentary thus far are not looking that bad. So I know you started off with IT, but I'm tempted to ask you, would you be equal weight or overweight IT at the current juncture with a 12-month view?
Actually, we are already overweight IT as far as most of our funds are concerned. And this was not from any specific insights as to things will start turning around, but more from the angle that the margin of safety is much better. The valuations are undemanding given the fact that last 1 year we've not done well. And I mean that setup is good because if on that setup, if the companies do surprise positively, that can have a, like you saw, a decent impact. So I mean that was the whole thought process of having overweight stance on the IT sector.
All right, we'll have to leave it at that, Vineet, but we hope to have you back soon and have a deeper conversation, especially in and around budget and what can be expected. Vineet Samre there, always optimistic. I love that first line. That's how you should be if you're investing in equity at your core. That is, I think, a basic requirement. Thank you so much, Vineet Samre there. Okay, so over the next week or so, you are going to see a lot of visuals and reports from icy, snowy Davos, and as the world prepares for the annual meeting of the World Economic Forum from January 19 to 23rd, we bring you this story, this report on why this matters. This is something that I've wondered over the years. What is the big deal about Davos? What is the big deal about the WEF meeting there, and why it is that gathering of business leaders and voices from across the globe that the world listens to? This is Davos, a picturesque Swiss ski town. which for 1 week every January becomes the epicenter of global power and ideas. Nestled in the Swiss Alps, nearly 150 kilometers from capital Zurich, Davos is Europe's highest town, and every year since 1971 has played host to the World Economic Forum's annual meeting. But why Davos? Why a quiet ski town for such a crucial conversation? Precisely for its isolation and security. It's also the place that inspired German writer and Nobel laureate Thomas Mann's classic novel, The Magic Mountain, a novel about introspection and transformation in a secluded mountain setting, a fitting parallel to WEF's mission of rethinking the world's future. And what exactly happens at these annual meetings? Well, it brings together leaders from business, politics, academia, and civil society. So think presidents, prime ministers, Fortune 500 CEOs, Nobel laureates, thought leaders, journalists, and even cultural influencers, all converging in Davos. This year, the event is taking place from the 19th of January to the 23rd of January under the theme, A Spirit of Dialogue. Nearly 3,000 participants from close to 130 countries are expected, with US President Donald Trump among the headliners. And this is not just talk. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And the timing couldn't be more critical. Trade tensions continue. Markets are volatile. Wars continue to reshape alliances. Add to that the unpredictability of Trump's moves, and Davos becomes more than just a high-profile networking summit. It arrives at a critical inflection point for the world. As the world's most influential leaders gather in Davos, the stakes couldn't be higher. It isn't just about speeches and photo ops. It's where ideas collide, alliances form, and blueprints for the future take shape. And we will be on ground, bringing you insights from global investors, market veterans, and corporate titans. So keep tuning in to NDTV Profit as I decode the decisions that will echo far beyond these mountains.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie, and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened?
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vacharani and with me is Puneet Javeri. Puneet, I think before we go on to the queries for the day, we've got a very interesting conversation that we've have for you today. Union Bank, of course, posted a 9-year year-on-year rise in terms of where the third quarter profit stands to around that 5,000 odd crores, supported by a steady asset quality improvement. We did speak to the management, Ashish Pandey, about the outlook and how this asset quality improvement stands going ahead. Listening to what he had to say.
Ashish ji, have you seen the CASA deposits? That has risen very sharply in the month of December, the quarter I'm talking about. What contributed to this?
Yeah, I think, it is a very key point as of today. And on the deposit, we had a very specific strategy within the senior management. And certainly it was, conveyed down to the branch level. So specifically, if you take the deposit around 40 to 45,000 crores, which was on the high cost, which we have shed it off. Now, coming to the CASA, it was 15,000 crore of increase in the quarter. And if we take the retail term deposit, which was our focus area, which we have grown by 9,100 crore. We had taken, some product we have launched during this quarter. We had some specific structure we have created in our bank, along with some 1,600 people and with a separate department. And we had some MOU with various corporates, various private as well as PSU, corporations and all, and we could accrue good salary accounts. So I believe this is only as an example I am sharing with you a few, but we had a very specific strategy, very specific pockets for increasing the CASA, and we are of the firm belief that going forward you will be seeing the growth in the CASA, even the ratio as well as in the absolute terms.
All right, and Ashish ji, there are different segments, the retail, MSME and corporate. Which of these segments would be the primary drivers going ahead?
I think the ramp, typically we are growing very well since beginning. The more of the issue was, on the corporate side, but then corporate side is fully in track, and the figures which we have already shown, I think it is well placed for the next quarters and other further also. But coming to the ramp, you are very actually very specifically you have asked. So like retail, agriculture and MSME. Now we have made certain schemes in all the three, and certainly it has to be activation of our branches, and we have subsidiary which is UBI Securities Limited. So that is actually also helping us in building the retail portfolio. They are our the marketing arm for the bank. So I think the retail and MSME, we are going with a cluster approach on various specific areas which are very good, and there is hardly the NPS in those regions, and we are going competitively, which is in the market scenario. So I think that is on agriculture. You must be seeing around 108 profit we have booked in SBLC, which shows on the small and marginal farmers and others we have grown better in this last quarter.
Yes, Ashish ji, apart from that, what is the projected impact from the ECL norms, which is being implemented from April 1st on the ongoing credit cost, given the estimated transition impact would be roughly 4,200 crores?
Yeah, I think we have worked upon, and we do have a software in place, and we regular intervals we calculate and see our position, keeping in view the draft guidelines. So the overall, the requirement as well as the provisions which we have made across our loan book, the gap is hardly 4,300 to 4,500 crores range, and which is in much comfortable. This is actually I am talking about on the migration side. On the dynamic, regular basis, certainly the other part also you must be observing from our investor presentation that the SMA position above 5 crore is hardly 4,285. The slippages ratio has decreased, and also the credit cost. So I think that is not a much issue, and there is already a guideline for phasing it out for the 5 years. I believe that is sufficient, but the gap itself is not very high for us.
All right, and Ashish ji, what's the sustainability when it comes to the NIMs? Are you expecting the compression going ahead?
See, two scenarios I will say. The one is, the present scenario, because the economy is behaving very well, the GDP growth is coming very well, and there is a low inflation, so all conducive environment. So in case, there is a further rate cut, because our MCLR book is 48% and the repo and T-bill linked benchmark, it is around 52%. Now, there was a rate cut if you take from December 24 onwards. After that, in the current financial year, there is a 1.25 basis point rate cut, which has already been transmitted to the customers.
Well, that was Union Bank. Quarter 3 update was weak for the company, but definitely a strong set of numbers. Another one that we are focusing on is Anaraati Shares and Brokers. Now, they did come out with their quarterly result. Again, a very strong performance by the company. It was an interesting one, and let's go across, because stocks also doing decently well, 1.8% right now. But we're joined by Pradeep Gupta. He's the chairman and managing director at Anaraati Shares and Stock Brokers. Thanks so much, sir, for firstly joining in and giving us time here at NDTV Profit. It was a strong run rate. Will you be able to maintain the growth that you've seen in the past?
If you really look at it, the way we have presented and the way the company is progressing, I think we will be able to achieve the run rate which is already being set by the company, and probably we will be able to improvise, because by and large, January, February, March is always a better quarter from a distribution revenue income, which is part of our non-broking businesses. So I believe, yes, I think we will be able to achieve the run rate at which this company is showing the performances.
I'm also being joined by Hira Dadia from, of course, the research desk as well, who's joining into this conversation. Hira, take it away.
Thank you for that, Puneet. In fact, Pradeep, thank you for speaking to us as well. Now, we spoke about the Q3 numbers. Now, if you're talking about the PAT margin, 14.9 to 15.3% is the kind of range. How confident are you in terms of achieving and sustaining the long-term target of 30 to 33%? And what are the primary drivers for the significant margin expansion from here on?
Yeah, I think almost 3 quarters have already gone. And if you really look at the numbers, quarter on quarter basis, we have grown by 22% in revenue term and almost about 74%, 72% growth in PAT terms. In terms of numbers, if I speak about, I think we have achieved about 248 crore in revenue for this quarter and a PAT of about 38 crore. And if I look at it 9 months per se for the whole financial year, we have already achieved about 88 to 89 crore PAT this year. So I think, with the same run rate can be maintained, and we will be able to achieve, good amount of growth, which we are aspiring to do. By and large, we have been talking that we will be able to achieve about 20 to 25% growth in top line and about 25% to 30% growth in bottom line. And we are aspiring to reach to that level and maintain that level this year, this financial year or also.
So Pradeep, don't you think you're really maintaining a very conservative 20 to 25% annual revenue growth guidance for the long term, taking the current trajectory into consideration? Are you being conservative?
Yeah, one must look at the overall business module of this company, and by and large broking company. And in broking, your dependency in broking is coming from market conditions. And if you really look at market conditions, on quarter basis, on cash market, that is where we are playing a bigger role. Hardly 3% kind of a growth had happened. Now, until unless that market sentiments and market thinking or market turnovers are not going to expand and increase, the growth in broking number is not going to be sustainable. Whatever growth we are seeing and we will see is going to happen by way of inducting new customer base and trying to see that our customer constantly, work towards their investments. Now, non-broking is something and which includes our margin trading funding as well as the distribution, which includes all the investment products. That's where we are literally focusing and trying to bring good amount of growth. So that is where we have our control, and that's the reason, if you really know, we have been talking that our whole motive is 60-40 kind of a ratio between broking and non-broking to 50-50 kind of a ratio between broking and non-broking by achieving overall 20% kind of a targeted revenue growth. And PAT line growth will automatically come since our distribution or a non-broking revenue, which is still expanding and growing at about 35 to 40% level. So that's how this whole work is happening and is going to happen in future also.
Okay, Pradeep, what's the timeline for achieving the desired mix between broking and non-broking?
So I think our motive was by 27 we will be able to achieve these 50-50 kind of a revenue mix. Though if you really look at it, we have already reached to 55, 45 or 50, 54, 46 kind of a revenue mix. But over a period of time, it has to be a sustainable growth in both the product basket as well as revenue mix. And then we should aspire to see by 27, we should be definitely see a 50-50, full-fledged 50-50 kind of a revenue mix.
And lastly, how do your recent strong client acquisition numbers align with your long-term AUM per relationship manager targets?
So in terms of, if you really look at in this quarter itself, we have already achieved an AUM of about 8,370 crore. Now that results into we are aspiring to reach to somewhere around 9,500 to 10,000 crore in terms of AUM, which directly contributes our non-broking side distribution income, right? And next year again, we are going to have certain amount of target on AUM side rather than client acquisition side, because it's a relationship management business. That's where we are trying to penetrate and trying to increase our footprint in terms of number of RMs. We are trying to increase our footprint in terms of branches. So if you really look at it, by December 25, we have already reached to about 97 branches, which were in quarter 2, which is in September, we were somewhere around 92 branches. So about 5 branches have opened up. Now, obviously, in this kind of a business, setting up branches, bringing RM, and those RM started generating revenue will take a little bit time. So there is a gap of about 6 to 9 months. So over 6 to 9 months, these branches and these RMs will started becoming more productive and will started contributing towards AUM, will started contributing towards revenue. So whole endeavor is constantly looking at location, increase our footprint by way of RMs, increase our footprint by way of branches, increase our footprint by way of business partners, and try to drive the businesses through them.
Okay, thank you, Pradeep. You know, this was interesting to see because it seems that you're being conservative, but the outlook going ahead in this kind of an environment is going to be absolutely crucial. But thank you for joining us on NDTV Profit. Puneet, over to you, because, you know, in spite of this difficult environment, when you talk about stock markets as well, the stock not doing that bad and the numbers not being that bad as well.
Well, most certainly, and thanks so much for that, Hiral. But let me go across and take forward a quick view from our guest as well at this point of time on Anaraati. We of course have Kush Bohra here in the studios, and of course Sameer Dalal also joining in. Sameer, very good morning, and thanks so much for joining in today. Any quick view that you have on Anaraati shares and stock brokers to start with?
Yeah, so I was very happy to hear what he said. The fact that you can't rely on broking revenues as a constant stream, because right now the markets are volatile, which is getting you the turnover, right? People are trading, people are active, and that allows you to earn, the transactional fee. But what happens when the markets become sideways, or what we've seen in the last 5-6 days, where we saw sharp correction, barring today, of course. Obviously what happens is people start panicking, volumes start dipping. And if that continues for a prolonged period, then obviously that side of the revenue takes a hit. So what we also like to see was the fact that he's focusing more on the wealth management side, which is the mutual fund distribution, the MTF book. All of those are more steady stream revenues, so they will take an uptick. But you also got to remember that, again, people are investing in mutual funds and doing all of these investments right now because markets are generating returns. We believe in the next 1 to 2 years, you're going to see a big market correction. I don't know when and why, but you are going to see a correction. And that time, what you're going to see is some amount of money flow out and some amount of skepticism coming towards investments, which is always seen in the history. So from that point of view, I think buying these stocks at these points when markets are exuberant is a bad idea. Long-term, great. Short-term, I think, avoidable.
Right, so that's the view coming in on Anaraati stock, of course. But viewers, as we've promised you, we'll at least have Kush Bohra once in a week in the studio, and we have him today with us in the studio. Kush, I'll take up the first question, which is from Suman, who's writing us from Kolkata. Asking about Manappuram Finance. She's got around 80 odd shares at an average price of 238. Wants to know if she can stay invested or book profits. I mean, these counters have also been, the ancillary counters because of the gold rally, which have seen a good up move. But do you think it's time to book profits?
First up, a very good morning, guys. And despite it being a Friday, following a Thursday holiday, it's still a good morning because the markets are doing, fabulously today. As far as the query goes, Manappuram is a very clear hold. Very interesting to see the lower levels at which she's bought at, and also the fact that she's held on through the thick and thin, through the volatility that the stock has seen. I don't see any reason right now for you to go out and sell. It's a good idea to hold it with a trailing stop loss. So keep that around the 295-300 zone. If that is breached, you might want to take some money off the table, but other than that, continue holding on. There was some volatility, but on the whole, the medium-term trend is intact. And from a near-term perspective, I think 322 and about 331 are fair targets on Manappuram, so hold.
Got the view, Kosh, and viewers, of course, you can start sending in your queries, and some of you already have. You can also call us, talk to us directly, and share your stock query as well. But the next one, again, an interesting one. Sanjay from Bengaluru is asking this question, and that's for you, Samir. His question is, what are the expectations today from Reliance as it's expected to report its quarterly results today? Can we accept some upside momentum, and what will you be watching out for from this quarterly results? Samir, over to you.
Okay, so 2 points, right? First, let's talk about what we are expecting from the numbers, and then we'll talk about our view on the stock. So the first thing, we believe the OTC business will continue to do well, oils to chemicals business, for the simple reason that, all through October, November, they work procuring some amount of Russian oil, which was at lower prices, which allows them to earn the higher spreads. So that will continue, but it will be sequentially a little lower because for the December month, they may not have been able to get that same quantity, which of course affects the profitability a bit. But going forward, we still believe the refining and the petchem business will do well. Chemicals will be a little slow, but we think we are at the bottom of that, so that will pick up going forward. But this quarter, chemicals might be a little subdued. Geo will continue to do extremely well. We think that is going to be the key driver, and the listing is going to play out, and that will decide the stock fate. And when it comes to retail unfortunately has been a bit disappointing, but given the fact that we were in the December quarter where you had a lot of festivities, weddings, and all of that, maybe if retail sees a slight bit of an uptick, I think that could be a added on stock benefit. Now, coming to the stock price expectation, although we remain positive long-term Reliance, in the short term, I think there is a little bit of pain for the simple reason that if they're not able to get that Russian crude and get those higher spreads and the profitability does not grow, then the question comes is, why is the stock, which is a largely commodity heavy profitable business, trading at 27, 28 times earnings? So that way we feel in the near term, the stock will be range bound, but longer term, we are very, very positive on Reliance. We think the listing of Geo, eventually the listing of the retail business will all unlock value. Geo will go this year, retail maybe 2 years down the road. And we think over the next 2 to 3 years, the stock will do very well.
Okay, all right. So that's the view coming in on Reliance. The next question that we have is from Vishwanatha Reddy, who's writing us from Andhra Pradesh. He's got around 305 shares of Vedanta at the levels of 104 since 2017. He wants to know if he can sell or hold now, considering the price has touched almost its all-time high. He's sitting on profits of around 1.7 lakh rupees. Kosh, what should he do?
Oh, you should continue to hold. I mean, there is a good, strong momentum in the stock. While it is overheated, given the kind of time horizon that he has, there's a good idea, there's a good possibility that, even in the similar time frame from here on, the stock will continue to run up. Of course, there will be volatility. So unless he needs those funds for some reason, or he has a better alternative in terms of, selling those shares and parking it somewhere else, investing it somewhere else, I think you should continue to hold. As is the case always, I do suggest a trailing stop loss. In this case, it is at 615.
Got the view. Kosh, next caller coming in from Mumbai, and this is Rajan dialing in for a stock query. Rajan, welcome to Ask Profit, and thanks so much for dialing in. Very good morning to you. What's your query?
Very good morning, and since this being a first call in the new year, I am happy New Year to you and your team.
Wish you the same, Rajan.
I have five Dixon Technologies purchased a year back at 17,989.
Okay.
I am a long-term investor for 3 years.
Okay.
So I understand from the news item that there is some problem with the Motorola, with which they get a good revenue, Dixon Technology. So should I hold for another 2 years, or I would like to switch it over to Anaraati? Can you please advise?
Fair point, Rajan, and I hope you caught the conversation today, at least at the start of the show, on Anaraati shares and stock broking. But Samir, let me come to you, and Rajan's highlighting a very pertinent point, Samir, that there has been some challenges on Motorola losing some market share, inherently impacting Dixon. Also, some expectation that the input costs are going to be very high because of higher memory prices. What would you suggest Rajan to do? Because he's bought it at 17,989 and he can hold for the next 2 years. What would you recommend?
So I would actually ask him to average some if he can. And my simple reason is that, look, after such a sharp correction that has happened, valuations now on a trailing basis are 33 and a forward basis about 28. We think that is reasonable for a company that is a high growth company. Yes, the Motorola order, Motorola sales may be a little damp, but you got to realize this is not a single product company. This has got multiple products. We've had a very tough year when it comes to ACs, to various other white goods, and we believe the growth turnaround that is going to come, Make in India play is still on, and Dixon is going to be the largest beneficiary. So after the sharp correction, now I think it makes sense. At 17,000, it was a definite avoid for me.
Okay. All right. So that's you coming in on Dixon Tech. But viewers, it's time for our first rapid fire round of Ask Profit. Kosh and Samir, you both know the drill. Try to keep your answers as short as possible. The first one is from Anuj, who's writing us from Noida. He's got 59 shares of Phenolix Cable bought at the levels of 1100. Wants to know if he can buy more at the current rate. Kosh, would you recommend that?
Yes, he can consider, but I would suggest a stop loss at 715.
The next one is Nalco. Our viewer Raja has actually bought it at 198. He's owning 230 shares. Kush, what would you recommend?
I would suggest a partial book profit and continue to hold the rest with a stop loss at 335.
Okay, Coforge bought at the levels of 1650. 150 shares is what Ranveer is holding. He wants to know if this is the right time to make an exit. Samir, would you recommend an exit for Coforge right now?
If he's a long-term player, no. Why would you want to exit it at this point? I mean, they just made the acquisition and everything. I think it will do well over time.
The next one's PNB and Lavish from Indore is actually holding shares at 131 rupees. Kush, should he continue to do that for the next 6 months?
Continue to hold, keep a stop loss at 125.
Okay, CAMS bought at the levels of 729. 75 shares is what Sunil has bought. What should be the short-term target and stop loss for this one? Kush, your view?
It's a hold, stop loss at 700, targets 745 and about 760.
Next one is HBL Engineering, and it's been the Kavach story has been in focus since the last couple of days, and Ram is asking if it's a good time to enter. Samir, would you recommend that trade?
Valuation's a bit expensive. It's a great company, but I mean, valuation is expensive, so wait a bit.
Okay, the next question that we have is on Sectoral Technologies. Anu from Guntur, he's holding 18 shares at the levels of 5757. Wants to know the technical view on this one. Kush, your view?
Sorry, I didn't catch the stock. Which
Sectoral Technologies. SCHILCHAR.
You don't discuss about this too often.
Yeah, I can't load the charts.
No worries,
I'll have to skip it.
I'll take the next one from Murli, who's got Bata since 2019 at an average price of 1523. Wants a fundamental view on this one. Samir, your view?
Yeah, I've been in pain as well. Look, eventually we believe the shoes business, I mean the entire retail business is going to see an uptick. Bata at 2,000 stores has a great reach, great brand, that premiumization happening with Hush Puppies. So for me, it's a hold on. I think the stock can bounce back and come back up. So maybe buy a little more and average a bit or so.
Okay, all right. So that's you coming in on Bata. But with that, we're completely out of time for this, of course, edition of Rapid Fire Round. Viewers, time to slip into a very, very short break, but we'll be right back answering all your queries for the next half an hour on the other side of the show.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and
we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky.
Welcome back. You're watching Ask Profit, and if you haven't already, do send in your stock queries. You can also call us, and both the numbers are flashing on the top of the screen, and solve your stock related queries. The next one is coming in from Sai Karthik. He's also a regular viewer from Dallas, Texas, and his question is on Reliance Power. He's holding almost 10,000 shares of this counter at 37.84 rupees per share. Let's pull up the counter. It's now almost at sub 32 levels, and his question largely is if it's a good time to average right now for the next 3 to 6 months, Kush. So what would you recommend this particular trade for Sai?
if Sai is such a regular viewer, I think he already knows my answer, so I might as well skip it, right? No, but on a serious note, I don't recommend averaging for a good reason. Even now, for Reliance Power, I wouldn't recommend averaging. Even now, if you see the stock has been in a downturn, the recoveries have fizzled around the 20-day moving average. Volumes also haven't really thinned down as much on the downside. So massive downturn, very limited scope of revival, at least on the volume and the price action front. So I would suggest wait up on that averaging.
Okay, all right. So that's the view coming in on Reliance Power. The next question that we have is from Mohit, who's writing us from Ludhiana, asking about Fortis Healthcare. He's got around 350 odd shares at the levels of 270. Sitting on profits of over 2 lakh rupees right now, and wants to know that from a 2-year perspective whether he can continue to hold or not. Sameer, your view?
Yeah, so we continue to remain very positive on this space, but valuations are expensive. In 2 years, I think the stock is not going to give you great returns. I think you're going to get CAGRs in single digit. Book some profit if you can. Find something with better valuations, not necessarily in the hospitality space itself, hospital space, but in some other sector, especially consumption. I think there you can probably get higher returns over the next 2-year period. So for me, it's a sell.
Got the view, Sameer. But the next question that's coming in is on HDB Financial. And Satya actually from Bengaluru has bought into this at 786. So very close to the current market price. He's asking if we should hold or sell. Sameer, the recent results actually came a couple of days ago with decent performance given that quarter 2 was very weak. Any view that you have on this counter?
Yeah, so, what is there is the provisions were a little high even this time around, 200 basis points credit cost, something that the street didn't like. I think they wanted to go under close to maybe 1.2, 1.3%, which I think was also what the management had said will be the long-term targets. So till we see that, I think the stock will move sideways. But over a long term, I still believe the finance and NBFC space is good. We remain very positive on it. HDB comes from a stable promoter group. So, their corporate governance is good. Their credit underwriting will be good. So this is a stock one can hold on to for the next 3 to 5 years. I think there will be money to be made on it, and good money.
View coming in on HDB Financial Services. For viewers who are tuning in, you can also give us a call on the number that will be flashing on your screen up there. That's the WhatsApp number where you can type your queries and send it to us. But you can also give us a call and ask your queries. It'll be always helpful to call us up and go ahead and ask your queries. But the next question that we have is from Bala Subramaniam, who's writing us from Bengaluru, asking about Trent. He's holding 10 shares, bought in September 2024 at the levels of 7,600. Sitting on a loss of over 36,000 rupees right now, wants to know if he can dispose it off and move to some other counter or not. Kush, I'll come to you on this one because, from 7,600 to now, in that 3,900 odd range, should he be shifting his position and book losses?
So, look, I wouldn't suggest shifting or booking losses right now, just yet. And the reason for that is that the stock is in a downturn, correct? But I think it's coming very close to those support levels. So while a V-shaped recovery might not really be on the cards, and you might not see your prices in another 6 months, or so. But if you see the fall, the pace of the fall is starting to decline now. There is a wedge formation, a downwards sloping wedge formation. The stock is taking support at that 3,900 level, consistently. So I would suggest wait up. If you have, if you have a slightly longer horizon, maybe 12 months or out, then I think there's a good chance that the loss that you're seeing right now would be considerably lesser. So just for now, I would suggest a hold. But if it breaks that 3,700 mark, 3,650, 3,700 mark, then I think even this fall or that support will get fizzled out, and then it could head further low.
That's the view coming in on Trent. But the next question that we are getting in is on a very interesting one from Murthy from Hyderabad. And his question is largely on the metal stocks. He has a portfolio of 12 lakh rupees. He's missed this rally. He's asking any 2 stocks that, Sameer, you could recommend from the medium term that still could give him decent returns of 12 to 13% is what his question is. What would you say?
When you say medium term, 12 to 13%, I would hope his medium term is 2 years. But unfortunately in commodities, you got to exit at the right time. So for me, if you want to make an investment, why do you want to make it in a sector that has already moved up so much? Now, I'll just give you a simple example of momentum trading, momentum investing that people like to do. Trend bought at 7,900, your previous question. today you're sitting on a 50% loss, right? So find sectors, do some contrarian investing where valuations are attractive. For me, I would not recommend him to do for a 2-year investment any of the commodity plays at this point of time. I think they've all fully run up. I think they're fully priced. I would avoid it. Find something else to invest in.
Okay, all right. So that's the coming in with regards to where some of these commodities are concerned. But the next question is from Gurinder, who's asking about Suzlon, and she's asking whether it makes sense to make an entry right now and whether that will be a profitable trade or not. Kush, I'll come to you on this one. What are the charts suggesting?
So there is definitely a case for entering into Suzlon right now. The stock's corrected quite a bit, and not just because I don't say that the time there is a case for an entry because the stock's seeing a run up. It's just because the fall that you're seeing is starting to halt. There are positive divergences on the daily setup that are starting to come up. So from an aggressive trade perspective with a very small quantity, I would suggest you could consider Suzlon. Keep a strict stop loss at 45 though.
Got the view, Kush. The next one that's coming in, and Samir, I'll come to you on this one. Largely coming in from what you said earlier, some contrarian questions. So I've got one for you. This is from Subhash from Muscat, Oman. So he's writing to us from Oman. Thanks so much, Subhash. Question on NDC. He's holding shares at 200 rupees per share and almost 500 shares. He's sitting at a loss. Would you recommend him to average out right now, continue to hold, Samir?
So absolutely continue to hold. Look, the order book continues to remain strong, 78,000 crore order book. The reason the stock has fallen is a little bit of executional delays in Q2, which the management said will catch up by Q3 and Q4. So as that happens, I think the stock will start to see a rebound. Secondly, we are in Q4 where order flows are usually very strong. So if we expect we see some good order flows, that would also be a trigger to pull the stock up. So for me, it's a hold. And if you start seeing some momentum on the positive side, valuations are quite attractive at 12 times earnings.
Okay, all right. So that's the view coming in on NCC. We've got our next caller. Ramana is calling us from Hyderabad. Ramana, hi. A very good morning to you. How can we help you today?
Yeah, good morning, madam. This side is Ramana Sai.
Yeah,
I'm holding Pravi.
Okay.
Specialty chemicals. Bought at 2,800. At present I'm sitting in loss actually.
Okay.
Should I have to hold it or should I have to exit at this level?
Okay. Ramana, when you bought this, did you see the charts for the counter or did you see the fundamentals?
Yes.
You saw the charts?
While at the time of buying that, the promoter selling is happened actually. So I thought it's a good opportunity considering all that P&L statement, everything I've seen, the stock is performing good. So I thought to give a buy actually.
Okay. All right, Ramana. Got your question. I'll take this up with Samir. Then Samir, previous spec chem, any view?
No view. I'll go to my backstop. Push, please help.
I'm around. I think it's a good idea to continue holding on to this. Not too far from your buy price. The selling seems to be over largely. There is a retracement of 38.2% at 2640, which has come in as a support. So I would suggest a hold. Keep a slight deep stop loss at 2525, factoring for the volatility. But on the whole, this is a good stock. Medium-term structure is still positive. Continue to hold with a stop loss at 2525.
All right. Okay. So that's the view coming on previous spec chem. But viewers, time to slip into a very, very short break. But we'll be right back answering your queries on the other side. So do stay tuned.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground, and our paths to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew.
Welcome back to Ask Profit. Let's go across to the next query. It's on Supreme Industries, and Ajay from Bengaluru is actually asking this question for the short term. On the charts, Kush, has something changed? What would you recommend?
It seems like it has. The 3200 support zone has been tested for the second time in the last year or so, and the stock is now rebounding from there. So you could safely say that the base formation is there. Also, the volumes in the last few sessions have been very interesting on the upside. So I would suggest it's a good trade from a very healthy risk-reward ratio perspective, but a positional trade, not a very quick momentum one. So you could consider Supreme Industries. Keep your stop losses at the 3350 mark, and on the way up 3750 and perhaps even 4000 are your targets to watch out for. But like I said, positional bet.
Okay, positional bet on Supreme Industries is what Kush's view is. But the next one is also for you, Kush, and this is on Chambal Fertilizers. Ajay from Bengaluru wants to know about what is the short-term targets looking like on this particular counter.
If you don't have a position, I would say avoid, because the recovery has fizzled out. Right now the stock's not doing much. A stock not participating rather in markets going up is not a very healthy sign. There could have been the budget push, the agri push, but that seems to be missing right now. Plus a couple of resistance points around the 450 mark. So I would suggest an avoid on Chambal at the moment.
The next one's Polycab, and our viewer actually, Ravi is actually sitting on a loss of 50,000 rupees since he's bought it at 7,900. Samir, should he continue to hold this counter? Any expectations that you might have from this quarter?
So not from the quarter, we don't decide a stock fate, but valuations are rich. He's bought it again, unfortunately, in momentum on the way up at the highest point. There is going to be increased competition in this space. We know the Aditya Birla Group is getting in. We know the Adani Group, which is your parent, is going to be getting into the wire space. It is going to increase competition. So valuations will not be able to sustain at these higher levels. I will say book your losses and find something else to invest in.
Okay, all right. So that's the view coming in on Polycab. The next one is from Srinivasan, who's asking about Cohen's Life Sciences. If you can make an entry right now from a long-term perspective. Samir, any view?
Well, after the MD has left, the stock has only been drifting downwards, and I'm not understanding why the stop is not happening. Look, at the end of the day, they do have the APIs that they manufacture, which they're selling abroad, which is a very profitable business. I guess we got to wait for this quarter results before making a judgment call. Again, let me specify that we do have some investments in this, unfortunately, but yes, we need to see what comes out in this quarter numbers and what the guidance is. But otherwise, on valuations, on everything, on the business opportunity, it looks very attractive.
Got the view. Samir, the next question, it's a caller from Bengaluru. Amit has a stock query for us. Amit, very good morning. Welcome to Ask Profit. What's your query?
Happy morning to all the experts. I wanted to ask about Infosys. I hold 500 shares at the price of 1,500.
Okay.
I wanted to know, is it a good time to exit the market, or should I hold on for more longer?
Got it, Amit. Amit, how much is Infosys actually for portfolio? Because it's a sizable quantity of 500 shares that you hold. Is it a meaningful part of your portfolio as well?
It's almost 20% of my portfolio.
20%, got it. And can you hold it slightly for the long term so I can get Sameer's view also on this one?
I wanted to know the outlook as well, because I have been holding it for about a year right now.
A year, got it. Sameer, on Infosys, the guidance being raised was a key positive for the stock today. Would you recommend Amit to continue to hold firstly the counter, and it's also 20% of his portfolio, so any view on that?
Having 20% of a portfolio is a bit high. Maximum I would ever go to is 10, but yeah, I mean, that's fine. Second, I'm not a buyer of Infosys. In fact, I would recommend a sell. I'll tell you why. We've been saying for a while that the IT industry is going to go through very painful consolidation for the simple reason that, guidance increasing from 2.5 to 3 to 3 to 3.5 on the top line doesn't really change anything significantly. The growth rates are still very low. The AI dust settles and we know how Indian IT is going to play in that, I think growth is going to remain low. These are good cash flow companies. So if you're comfortable having 7 to 8% return with a maybe 4-5% dividend, so anywhere between 6 to 10% return, stay holding in IT, but I don't invest in equity for a 10% return. So for me, the risk reward doesn't pay off. I would avoid it.
Okay, all right. So that's the view coming on Infosys. The next one is from Srikumar Nair, who's writing us from Kerala. He's bought 100 shares of Geo Finance at the levels of 368 in June 2024, sitting on loss of over 22%. And I think a lot of people have this query. A lot of people are holding this stock in their portfolio and wants to know as to when will be the time when it will turn positive for them. Kush, do you think charts are constructive enough?
Not from a very near-term perspective, let me be frank, right? This was always a long-term story. There's still some pain in the stock because right now also if you see the volumes on the way down are very, still respectable. So I would suggest that, you could continue to hold. There is a retracement of about 38.2% which come close to the 280 marks. So the stock could try and find support at those levels. If that is broken, then the next immediate support comes in at 265. My suggestion, continue holding on to this one if you have, a 12-month or longer kind of a time horizon.
Got the view, Kush. Another caller now from Amchi, Mumbai itself, and Nishad has a stock query for us. Nishad, good morning. What's your query?
Yeah, I wanted to know about SW Solar. I'm holding 50 shares at 228. So can I add more? Is it good for long term? Means I was seeing that the FIIs and DIIs are reducing their stake.
Right.
So should I keep holding it and add more?
Well, Nishad, I don't know if you are a regular viewer. I hope you are. But let me go across to Sameer for Sterling and Wilson Solar because, Sameer, a lot of questions on this whenever you're on the show. What would you recommend Nishad to do? Should he continue to hold average buy right now, buying the dip? What would you recommend?
Well, it's at 220, so he's not very far from his price. The results came in yesterday. In fact, I was on the conference call just before I started the conversation. In fact, I was listening into it just till you started asking me questions. Look, at the end of the day, we believe the growth story remains intact. They've already received one large order from Adani Green. They've got an open contract with them for setting up additional. The Reliance order is set to come in. The pain is all out of the system. Growth for the next 5 years is going to be phenomenal. For me, this is a stock which is going to be something that will be maybe 2x, 3x, 4x. So stay invested. Whenever you think you have additional liquidity, you can always add on some more. But from your purchase price, it's not that different.
Okay, all right. So that's the view coming on Sterling and Wilson. Question, Samir. Time for our second rapid fire round. Try to keep your answers as short as possible. The next question is from Satyan. He's bought Artemis and he says that it also looks attractive, but he wants to know if he can shift from Max Health to this one or not for the next 12 to 24 months. Samir, your view?
So I don't have coverage on Artemis, but Max Health, I think one can hold from a 2-year perspective.
Afcons bought at 465. Samir, should he continue to hold?
Yeah, I think wait for another quarter. The stock is down a lot, and then we'll take a call on whether to average. But at the moment, it's a hold.
Apollo Hospitals is the next one. Bharat has bought at the levels of 1100. Should he hold it or sell it? Kush, your view?
1100 was it?
1100.
Yeah, fantastic. I think you should continue to hold. Positional stop loss at about 6,000, 6,200.
Anthem Biosciences, Kush bought at 698 from Naveen. Should he continue to hold?
You can hold. The stock's not doing all that great, but keep a strict stop loss at 605.
Okay, ITC, what is the right entry point? Seems oversold. Does it make sense to make an entry right now? Kush, would you recommend that?
Yeah, deeply oversold. I would suggest an entry into it in a staggered manner at the current levels. Keep accumulating from here up until about 310.
Zen Technologies bought at 1879. Samir, a new order win today. Should he Malli continue to hold?
No view on Zen, sorry.
Okay, Crompton Greaves is the next one. Mithun wants to know from a 6 months perspective, can you continue to hold this one or not? Kush, your view?
Yes, you should continue to hold Crompton. Positional stop at 240.
BSC, Kush bought at 2,700 for the short term by a viewer. What would you recommend?
Definitely hold. Have been very constructive on this one. Keep your buying price as your trailing stop loss. Targets of about 2,900, very close to the current level, and 3,000 plus.
Yeah, RVNL and SJVN are the next two counters. Ram has been holding this, but sitting on loss of 23% approximately. Wants to know if he can book his losses or wait till budget. Samir, what would you recommend?
I think wait another month. We might see some positives coming in from the government.
Raj Ratan Global Wires, Kush, viewer, actually Rani, who is a regular viewer, has bought it at 335 and she's asking if she should continue to hold.
Yes, you should. The stock has given a breakout above the 500 mark. So you should continue to hold. Keep your stop losses just under that, maybe 495.
HCL Tech is the next one. Angad wants to know if this is the right time to make an entry into this counter. Kush, your view?
No. Wait up. Beyond 1700, you could consider. That's the resistance mark, not now.
Electra Green Tech, Samir, Kirtan has bought at 1494. It's an expensive stock. Any view on that or the space?
Very expensive stock, but you look, the opportunity for growth of the electrification of buses keep increasing. They've got a large from the buses, from the city buses, from the intra-city buses.
Right.
So there is hope, but wait a bit. Let's see more order flow coming in, but valuations are very expensive.
All right, the next one is RFC. Renu has bought at the price of 145, currently trading at 122. Should she exit or accumulate? Kush, your view?
Just from a budget trade perspective, continue to hold, keep a stop loss at 117.
All right, so that's the view coming in on RFC. But with that, we're completely out of time on this edition of Ask Profit. Samir and Kush, thank you so much for taking out the time and, of course, helping us with all those queries. Viewers, if you've missed your query in this show, you can again tune in at 2 o'clock to go ahead and ask all your stock-related queries. But with that, as I said, completely out of time in this edition of Ask Profit. Stay tuned. Know your company on the other side.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie, and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets old industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Now let's start the show, but before that we play a lot of guesswork with you to identify which company we are getting at KYC today. Also, let's give in the hints before you guess the company. It's a solar cell manufacturer. A lot of larger names have come up in the last 2 to 3 years. I'm just giving you one more hint on that, and it's one of them. The second one is they are beneficiary of China's cutting of the export incentives. Recently, there was a news flow also on this, and a lot of these power related companies were rallying on the trade. Also, the third hint would be that the earnings is coming on January 22nd. Now, just to put it in perspective, in our KYC show, because of the SEBI's non-disclosure rules, and it's a silent period, we will not be asking the management about the overall numbers, but we will ask something on the industry as well. But remember to track this stock. In some days, the earnings will also be coming in. Also, the company, let's make it the big reveal for the company, and that one is going to be especially the solar related company, and technical charts have also suggested that last 2 to 3 trading sessions, the deliveries have also going up. That means some value buying is happening. The company in focus is Premier Energies. That's what we are talking about, and we'll discuss more details about it. But let's just understand why we are actually getting this company in KYC. Of course, the numbers won't be discussed, but we'll discuss the industry dynamics. The first one is, what are the benefits coming in the China cutting in export rebates? Is the tide going to turn for the industry? That's one of the main questions to be asked. The second one, we are asking why Premier Energy is there in our show, is that the industry perspective would be there. Which side are the global solar prices going? Is it the going up or is it going down? Is going to be a consolidation? A lot of questions are there, and a lot of viewers on KYC keep writing to me, and we will be getting these answers from the management. The second question is the raw material dependency on China. Will this come down, or will we still depend on China and our industry will suffer? That's a very big question to be asked. A lot of stakeholders ask us. That's what we'll be asking. Also, the fourth one, why we want to call Premier Energies, is what are the supply chain constraints? Have they improved, or is there still a problem or not? That's what we'll be asking. And also, the last one being is that the expansion plans. So there is a US market, there's a non-US market. Are the Indian solar companies looking at other places? Just because there's a lot of tariff issues which are coming with US market, clarity has not come in, just to put that in perspective. So the non-US markets, what would be the expansion plans? And on the show, we'll have Vinay Rustagi. He's the Chief Business Officer of Premier Energies, where he'll talk about the business growth opportunities which is there in the industry, as well as largely we can say for the company as a whole. But let's understand more about this company. And solar industries is a very technical aspect, it's having it. But let's just break it down what the company actually does. Company manufactures solar cells and solar modules as well. EPC and operation maintenance solutions, it's there. It's India's one of the first large players on this segment. There is the EPC segment and this operation and maintenance segment. And largely, you will say that company has made a first mover advantage when it comes to manufacturing these cells. Also going ahead, apart from this, is that the company is having a healthy domestic leg order book, and I'll give you the breakup also of what this entire domestic order book stands for. But going ahead, the total order book, look at that number, that's around 1,33,000 crore almost orders coming in the month of September. Of course, these numbers will be on the higher side when we get the December update coming in. So order book visibility is very strong. We can have a like 5 to 7 year as per what the street analysts and industry experts told me. And the sell orders, they form roughly 59% of the order book value. So that is considerable. See, almost you can say 60% of that is coming in. So that's the order book visibility. But the module orders, that's roughly around 40%. And then of course the minor segments are also there which would be in focus. Remember, the company also has operations and maintenance in their business. Right now 100% domestic orders book exposure is there, but a lot of its peers already have business abroad as well, and that's why they're getting impacted more. And of course, we'll talk about that. That's especially Wari I'm talking about. And out here, we talk about it, 99% of revenue just comes from domestic. So indirectly, company is insulated as of now, and whatever global issues are happening from US markets, it seems like Premier Energies is insulated. So it's working in their favor, call it luck or call it business placement, whatever it is. The Mission 2028, that's what the company is talking about. Just look at that. This is an important portion to look at. What's the future going ahead? And they are trying for an integrated clean tech platform. and we'll get into more details of this. This is a 10 gigawatt of integrated capacity coming across the value chain, and I talk about it includes all the segments where the company is operating. Full backward integration from ingots to module, and whenever this backward integration happens of a solar company, you get your margins benefit also, and also economies of scale picks up. That means the industry has not peaked yet, and as and when the demand of solar panels increase in India, we might see these numbers going up and up. But yes, industry will definitely give cycles to it. With the allied businesses, they are expected to contribute 25% of the revenue. And when I speak about the allied business, remember there is always an incremental margins chance in these businesses as well. This can also include your operation maintenance, asset management control services, etc. So this is a very important point. This is the Mission 2028. And of course, see, the result comes in higher margins and scale. So all of these features actually come in from Mission 2028. So we have, I think, 3 more years until the company comes with their numbers. But of course, during that time, we'll have a significant changes in the financials of the company. China recently cancelled the export VAT on the solar products, and this will be applicable on April 1st. To put in perspective, this benefits the company. And this export VAT rebate on the battery products would be cut to 6%. So there's an impact happening, and the Chinese exports, they are set to become more expensive. That means the pricing which was coming from China to India, it's not that attractive anymore. That means what happens is the domestic players, that's where they start gaining in. And the scope is much wider than the solar and the batteries. So you can imagine this is just not the company itself, but the entire ecosystem which is getting benefit, and 250 plus products are there across chemical, battery and electronics. Just to give that you perspective that this is just not there for solar industry, but for other industries as well, especially the agrochemical segment. This includes the battery raw materials, industrial and the specialty chemical as well. So this is the important export VAT cut which is important, and China, remember, dominates this segment. So whenever we talk about the solar industry, China always comes up because of the cheaper products which are being imported in India, and now that pricing might benefit the Indian players. And remember, they supply most of the raw materials to the world. So the moment Indian solar players start reducing their dependence on that, it will start benefiting these companies. And remember, if these become less competitive, the domestic people start winning. And that is why I have focused my analysis on premier energies. Global prices, that's where they're expected to go up, and maybe it helps a lot for the Indian industry. And the 3 beneficiaries are there, and I'll be giving a detailed peer analysis also between them. There is Premier Energies, Vari Energies and Vikram Solar to focus on. But let's understand more apart from these beneficiaries, how we are going to give the ratings to the company, and let's just pull out how the ratings will be coming in. And remember, in KYC we have 8 rating schedules which come in. Of course, it includes income statement, balance sheet, cash flow, return ratio. But apart from that, also you include other key ratings also. This includes your street holding and shareholding. But income statement, that's the first one I'd like to point out, and the company has done really well. Just let's look at the revenue, how it's going up. The top line has been significant. Last 3 years CAGR is 106%. That's a big amount. But even the EBITDA numbers, that's also been very strong. That's around 290% of the 3 year CAGR coming in. I was just looking at how the numbers are panning out. Numbers are also decent. It's turned profitable in the last 2 years. You see 289 crore, and then almost a 4 to 5x jump at 1240 crore rupees. Of course, we'll be checking the H1 numbers also. If you could just show the H1 numbers where the movement is there. Sequentially, there is a kind of a lumpiness, but year-on-year basis, look at this number. This has been really strong. 20%, 47% and 71% growth in the PAT numbers. Of course, concerns are there on the industry and the pricing front and China impact, but net, the margin front is good. It's above the 31% mark. Can that sustain over the 30% mark? That's the question. But yes, Q3 numbers are coming in some days, so we'll understand how the entire thing plays out. But net, as of now, it's a very strong thumbs up when I talk about the income statement. Also, apart from the income statement, let's talk about how the balance sheet is panning out. That's the second parameter where we judge the company. Largely, the book values have gone up a bit, but the borrowing, that has come down actually from 1900 odd crore rupees, it's down to 1500 crores. It's even Stevens if you compare the debt equity ratio. The cash balance is very strong, 1343 odd crore rupees. That means working capital, or if any expansion comes in this asset heavy business, then the balance sheet will be decent enough. But net, I will be giving this a neutral rating. So we have spoken about 2 rating parameters going ahead. The third one is the cash flow segment. How's the cash flows coming up? Remember, this is a high gestation business model, but the promoters, especially, we need to understand how much is the government and the private players payment schedule, and that is what determines the liquidity ratios also. Our net cash flow from operations and PAT has significantly gone up from FY23 to FY25, a very strong momentum, and cash flow to PAT conversion is also more than 100%. This is a very decent number coming in if you just compare that as a solar player. Net cash flows also have improved. In FY25 it's around 546 odd crore rupees. That means the payment issues are definitely not there. The working capital ratio seems good. So for that cash flow segment, I have given a strong thumbs up. Apart from the cash flow segment, we'll talk about the return on ratios. Generally, you need around 15% to be happy as an investor. ROC, ROE numbers 15 to 20, itna to banna chahiye. Isme dekho, FY21 to FY23, it had been single digit as it was expanding. But now FY24, it has sustained that 25% mark, going past the 41% mark. Let's just show apart from the ROC, ROE numbers what it is. And largely the ROE numbers will also be mirroring these numbers. So the return ratios as of now is a very, very strong thumbs up when it comes to Premier Energies. Also, from the return ratios, let's point out to other important ratios, and that one is of course the shareholding. Shareholding is very much important when you judge a company, especially to check the institutional holding of the company. So I've taken FIs and DIs. Have a look. March 2025 it was 3% and now it has been increased. It's just 4%. Remember, this is just a small data set because it was recently listed. If you're a long-term investor, you'll understand. DI is also, it's gone up from 9% to 13%. No stress, even if, you know, the retail portion has gone, the institutional ownership has gone up despite the stock taking some correction as well, and that's a very healthy sign going ahead. That means the institutions are betting on the stock to go up going ahead, and a lot of inflection points are there in this industry as well as the company, and that is why, although the shareholding pattern, I have given a strong thumbs up. Let's see what the street cred is. Street cred is nothing but the stock price movement which has happened, and let's look at it in the last 1 month. There is a significant correction coming in. Stock is down 20%, but let's see other momentums also, other times also. In the last 6 months, stock is down 30%. That's where the concern comes. If you have newly entered after the listing, it's year-to-date basis. That's just January month, 11% down. Also, 36% down in the last 1 year. So, of course, concerns are definitely there. And because of that, no major returns have come in. I have given this a strong thumbs down. But also, apart from this, let's look at how the valuations against peers work. And there are 3 peers who would be in focus. Remember, most of the peers have seen a correction from their peak levels. Vari Energies, that's around 28 times the peak number was there. And now the 12-month forward P is at 17 times. Premier Energy, we talk about, it went up to 53 times, and see the significant correction coming in. So the valuations of these players, be it the industry or the company, have turned very attractive. And the technical charts, if you study them, you'll understand some bounce is definitely happening from the cuts which they had seen. So maybe for a short-term basis, as analysts talk to me, they say there is good chances for all 3 of them. But even if the valuations as a long-term investor, if you see, it is very attractive to its peak levels and also to its peers level. So it's a very strong thumbs up when it comes to the valuations. Apart from valuations, let's see the outlook, especially the 2028 vision outlook which was there. Now they have created an integrated clean tech platform. That's what they'll be focusing at. A 10 gigawatt integrated capacity would be there across the value chain. The third one is a full backward integration setup coming in, and when that comes in, margins and your scale, that also goes up. So that will be something to look at. The allied business, they are expected to contribute 25% of the revenue in the future. So these are the important missions, you know, which the company is looking like. But let's just give you a total perspective about how things move. For this outlook, of course, I have given a neutral rating, but let's just revise all the ratings in our KYC show, what we are actually giving the company. Income statement has been really strong. The 3-year CAGR numbers, the H1 numbers, and I'm thinking the Q3 numbers will also be bumper. That's what my analysis suggests. Balance sheet, it looks largely neutral. It's decent. Cash numbers are also there. Cash flows has been very good. The cash flow to conversion, that number, if you look at with the PAT, that has significantly improved. So I'd given a strong thumbs up for it. Return ratios, they are going past the 35% mark, and that's very, very healthy. Can it sustain going ahead, or will there be industry lumpiness? That's what next 1 or 2 years will show you in the numbers. Shareholding very good because of institutionals adding up, be it FIs and DIs, both of them have been putting their stake up. That's more healthy rather than having more distribution in the retail segment. And that is where the smart money, the silent money starts coming in. Over the last 3-4 sessions, we are seeing that. Street cred, nothing there for the investors who have been holding it for the last 6 months, 1 year, 1 month. So big concern definitely is there. But because of these corrections, the valuations have become very attractive, be it the industry or be it the company's valuations from its peak valuations, it has been very good. Outlook, I would give neutral because this industry, the whole noise which was there about the solar growth and industry, it was very good 2 years ago. But now, of course, there's a lot of pushes and pulls in this industry. So just to be on the safe side, a cautiously optimistic approach, I would be giving the outlook a neutral listing. So the total KYC rating, despite having concerns, one of the highest I have given in our show because of the future and how much entry levels is attractive. I've given 6 out of 10 out of 8 in the KYC setup. So this is the entire setup where we will be focusing on and giving the views. But now the management is there, and we will be talking with the management. Mr. Rustagi would be there, and he's the PGDM from Ahmedabad and already been associated with the company, and also he has done an MBA from London Business School. So that's pretty interesting. And Vinay Rustagi will be joining in, but my colleague Varsha Channani actually caught up with him to understand this business of the China rebate, what's the benefit coming like, how the global price is looking, and of course industry specific questions. Do listen in.
So, I can't unfortunately comment too much in the respect of Premier Energies because we have our results due next week. And we are in a silent period, but I can comment on the general industry impact. Now, I think to understand the impact of phase out of export subsidies, we need to look at the larger picture here, which is that China has been trying to dominate the global manufacturing scene in solar, batteries, and some of the other products for more than a decade now. They have created a lot of overcapacity. And they have artificially basically kept prices low to make sure that manufacturing does not really take off in other countries. Now there's a huge financial cost to this because the government has been subsidizing the local manufacturers who are all basically making losses. And what has now happened is that the scale of the problem has become so big and the financial burden so unsustainable that the government is now trying to phase out these subsidies. And at the same time, the local manufacturers in China who have been making losses for the past few years are also now under pressure to increase prices. So the impact of this overall is going to be that the cost of products from China is going to go up, which means that there will be more parity between prices at which Chinese products are available and the Indian products are available. So I think from a manufacturing point of view, it is a good news because we can now compete more evenly with China, both in the domestic market in India, as well as in other markets around the world.
Got that point. So basically the global, solar module prices may rise and the Indian manufacturers will actually benefit from this. Also, sir, can Indian cell and modules makers replace China at scale or there will be some supply constraints?
So I think the reality of the situation is that we are still dependent on China. Because a lot of the upstream material, whether it is polysilicon, ingots and wafers, and even some of the basic technology does come from China. So we are dependent on them for at least some more time. The good news is that the government in India has laid out a map for making the Indian solar sector self-sufficient. And as a result of that, companies like ourselves, we are investing very heavily in backward integration. And the intent is to reduce the Chinese dependence over a period of time.
Right. Also, sir, what is the opportunities for Premier Energies to aggressively expand into non-US markets?
So again, I will answer that from an industry point of view. So there are more and more countries around the world, not just India and US, which are basically saying that we need to reduce our reliance on China. We need to diversify our sourcing base. So there are more opportunities which are emerging in places like Europe, South Africa, Middle East, and even Latin America. So I think there are increasingly more opportunities which the industry is quite keenly observing and trying to examine.
Understood. Sir, so I would ask from an industry point of view in this way, so will the removal of these subsidies help Indian players win export orders, especially from US, Europe and Middle East?
So definitely, like I said, the impact of the subsidy removal is that the disadvantage that we used to have in India against Chinese exports has basically shrunk quite heavily. Now, there is still, I must admit that the Chinese cost of production is lower than India's cost of production. So they still have an advantage. But with measures like duties and a significant focus to shift their supply chain away from China, now we believe that we can compete in other countries alongside China.
Right. And so then what policy support, is still needed from government to fully capitalize on the China's export pullback?
So, like I said, the government in India has already laid out a map for making India self-sufficient in this space. What is the further policy support needed? I would say that we need to develop a domestic technology base. And there are some discussions going on with between the government and the industry to improve our R&D capability. Second is to develop India's machining and tooling capability so that all the machines that we import from China right now for making ingots, wafers, cells and modules can be made in India to actually make India truly self-sufficient. And third, in the initial stages, while the scale is very, very small, I think some kind of incentive support is still required for the sector because all these stages of production are extremely capital intensive. There is a concern in the investing community about the viability of these businesses. So I think any incentive support to fund a part of the capex for the upstream stages would also be extremely useful.
Right. And so there are concerns that, please correct me if I'm wrong, this announcement will have a negative impact on battery energy storage system segment. Just wanted to have your views on the same.
So again, I think the impact is going to be very similar to that in the solar space in that the impact is positive for the local manufacturers. Even we are getting into battery manufacturing. And the result of these changes in China is that our products, made in India products are getting more competitive. So on the manufacturers, it is going to be positive. On the consumers, which are basically ultimately using the batteries to store power, for them the cost will go up in the short run. But again, the beauty of the solar and the storage sector together is that prices already are at such low levels that even if the costs go up a little bit, solar plus storage and even wind, I would say, remains the most attractive source of power in comparison to whether it is thermal, hydro or nuclear. So even if costs go up a little bit, I don't believe the attractiveness of renewables will go away. Renewables will continue to be the cheapest and the most attractive source of power.
Right. And so, given that April 2026 is the deadline for the rebate withdrawal, do you plan, or for that matter, will the industry plan to front load imports of, critical Chinese raw materials to, lock in the lower cost?
See, I think, the timeline is very, very short. We only have, about 3 odd months. And these are extremely expensive items. And usually both the customers as well as the manufacturers like us, we try to import material only as and when needed, depending on project timelines. So it is not always possible to front load imports in anticipation of higher prices. So I think we may see a little bit of an impact, but I don't see any major move to import very significant volumes ahead of this deadline.
All right, thanks a lot, Varsha, for asking the queries to Vinay. And interestingly, the management is very bullish on the industry and new areas of business as well. Maybe some values are emerging for this counter. So that's all, folks, for KYC. Stay tuned to NDTV Profit.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The first Indian news channel at the World Economic Forum at Davos.
It's shaping up to be a good Friday for Dalal Street. Nifty hovers near 25,800. Sensex jumps over 500 points. Broader markets mirror the benchmarks. IT and PSU banks lead the gains today. Pharma and media on the back foot. Inline set of Q3 for Infosys as management raises its FY26 revenue growth guidance to 3 to 3.5% in constant currency terms. Brokerage's verdict remain mixed, but today all eyes will be on Reliance Industries, and the company is expected to deliver steady set of numbers this quarter. Tale of two triggers for covered stocks. Kernex Micro sourced more than 11% after getting an order worth over 2,000 crore rupees. HBL Engineering slides after losing out on Kavach tender order. India Mart soars more than 7% after Nalanda Capital picks 1.8% stake. High return ratios and good profit CAGR key tailwinds for the company. Early trends show the BJP Shiv Sena alliance consolidating its lead across Mumbai municipal wards, staying ahead in more than 50 wards as results trickle in from the counting centres. The alliance is also leading in overall Maharashtra municipal polls today. NSE CEO Ashish Chauhan says application for IPO has been accepted in principle and expects it to be in public after 6 to 8 months of receiving the NOC from the SEBI. However, adds that IPO timeline is dependent on regulators and third parties and not on the internal control. In a big setback for Tiger Global, Supreme Court rules against the company in a taxation claim relating to Flipkart stake sale. Sets aside the Delhi High Court's judgment that had exempted the company from capital gains tax. What's the larger implication of the verdict on other foreign investments and investors? Find out from the tax expert on the show. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take it straight to the markets, and it is a sea of green today as we look at the market. In fact, taking a look at some of the areas also, Nifty 50 at the current moment is gaining over 100 points. It's a change and a gain of closer to 0.5% and comfortable above 25,770 levels at the current moment, closer to 25,800 levels or so. So that's like a good news coming in, considering that this particular week had started on a weaker note, and this stabilizing factor from Wednesday straight to today is definitely something to really take heart from. IT sector, that is the one which has come around in a big fashion after it had sold off and after its recent correction. Now that the IT sector had come to a better valuation, this particular sector has been trending well, and not just that, it's also the big results that are coming in. In fact, Infosys is the stock of the day, that heavyweight from the IT pack, with raising its guidance because of the big deal wins, has really given a euphoric sentiment to the entire sector. Remember, IT sector kicks off the earnings season, and with a mixed bag, Infosys is the kicker coming in for this particular space. When we look at the other sectors as well, in the overall market, PSU banks, real estate, which was weak on Wednesday straight, has turned around as well. Nifty Bank, these are the sectors which are doing well. While on the downside, it is Nifty Pharma, media, as well as the consumption and energy spaces, which are on the downtick. In terms of some of the stock-specific action, HDFC Bank, SBI are the key ones which are really contributing to also Nifty 50, and Reliance Industries is the big boy with results upcoming today. Ahead of the results, this particular stock is in the green, so keep an eye out on Reliance Industries as a big result for the trading day on Monday. All right, straight to the top story on Markets at 12. In a big setback for Supreme Court, which has ruled that the company, that is Tiger Global, is liable to pay tax on the Flipkart deal. from 2018 vintage deal. Now, Tiger Global, remember, had used India-Mauritius tax treaty to really claim these exemptions after it sold its stake in Flipkart to Walmart. Let's go across to Shrimi Chaudhary for what really transpired in the court and what it means when it comes to the Supreme Court verdict on this large taxation case. Shrimi.
Well, in a major setback for one of the top US investment firm, Tiger Global, the Supreme Court on Thursday ruled that the US firm must pay capital gains tax in India on its 2018 sale of Flipkart shares to Walmart, overturning a favorable order passed earlier by Delhi High Court in 2024. Now, the case relates to Tiger Global's Mauritius-based entities, which had sold part of their Flipkart stake, estimated at around $1.6 billion during the Walmart's $16 billion acquisition of the Indian e-commerce company. Now, Tiger had argued that the gains were exempted from the direct taxation under the India-Mauritius tax treaty and that it held a valid tax residency certificate, which should have been enough to claim treaty benefit. Now, Supreme Court on Thursday actually disagreed with such argument and in fact citing the tax department view, saying that the Mauritius entities lacked real commercial substance and were set up largely to avoid taxes. Now, the court also said that the merely having a tax residency certificate is not sufficient if the overall tax structure appear to be having a conduit arrangement. Now, it also emphasized that the tax authorities are entitled to look at the real intent and the economic reality behind such transaction rather than just the legal form. And by doing so, of course, it has set aside the Delhi High Court ruling, which had earlier actually accepted the Tiger Global's treaty claim. Now, the decision effectively revives a large demand running into thousands of crores, reported to be around, of course, 14,500 crore, though the final payable amount will depend on the detailed assessment by the Income Tax Department based on the Supreme Court order. But more broadly, the ruling sends a strong signal to foreign investors that India is willing to apply a substance over form test in such cross-border deals, even for investment made before the tax treaties were amended, which also means that tax department can reassess or reopen several such deals based on the similar arguments.
All right. Thank you so much, Shrimi, for putting all that into perspective. We have with us Ajay Roti, a tax expert and founder and CEO of Tax Compass, joining us with all the details on how this will really impact a larger part. What is the larger consequence of this particular verdict coming in? Ajay, first of all, the main ethos, the main point which the Supreme Court verdict has really put forth and basis on which the Delhi High Court's judgment has been overturned by Supreme Court in the Tiger Global case.
So, Nisha, the heart of the issue is really whether a tax residency certificate issued by a foreign country is sufficient proof for you to be eligible for a treaty benefit. Now, India has treaties with various countries. The rates under a treaty are beneficial rates. So with Mauritius, capital gains is not taxable in India. It's taxable only in Mauritius. With Singapore, dividend is taxable at a lower rate. With US, so on. Now, the fundamental requirement for you to be eligible for those rates is to prove that you are a resident of that country. Hitherto, companies were just filing the tax residency certificate to state that I have a tax residency certificate from Mauritius, therefore you please treat me as a Mauritian company. The question before the Supreme Court was whether a tax residency certificate is sufficient, because the revenue has always been telling that's not enough. You need to establish that you are entitled to those treaty benefits. You are actually resident in that country. You have a substance in that country. The Supreme Court has today or last evening said that a tax residency certificate by itself is not a conclusive proof. Even if you produce a tax residency certificate, the Income Tax Department in India can examine whether you have a substance in that country or not. And in the specific facts of Tiger Global, they have said that they do not have substance and therefore they will not be entitled to the 0% rate under the Mauritius Treaty.
So the main heart of this issue is that somewhere that Supreme Court must have insinuated that the TRC, tax residency certificate, could be used for hiding behind that by the foreign investors for tax exemption. That's the root cause and main point that is really coming out here. And therefore, only TRC is not just the ticket to tax exemption. It can be reviewed on a case-to-case basis by our revenue as well as tax department. That matter being said. Now, Ajay, what does this really mean for the foreign investors in India currently, FDI and FII coming in? Because of the larger implication of this particular case, is there going to be a sullen sentiment and more uncertainty? What's your view on that?
So I don't think this is going to impact anybody coming in today, or trades which are happening now, or exits which are happening now. And I'll tell you the reason is India had given up the right to tax capital gains in only certain countries, treaties with certain countries. Mauritius is one, Singapore was another. Now, in a lot of these, we have actually renegotiated the treaty. The Mauritius treaty, the famous capital gains exemption, was renegotiated. And from 1st April 2017, if there are fresh investments coming, of course, there was a 2-year window where 50% tax rate was applicable. But leaving that aside, investments after 1/4/17 are anyway not entitled to the 0% rate, whether you have a TRC or not, because it's now taxable in India. Therefore, foreign investors who are coming in now or come in after 2017, or trades which have happened in this period and exits are happening now, purchases which have happened in the last 5-6 years, exits happening now, were anyway taxable. So this ruling does not impact them. This ruling does not impact all the foreign investors. It does impact the legacy trades, the legacy exits and transactions which have happened before 17.
Right. So before 17, current transactions are not impacted by this. We want to lay that out. Now, what are the other cases now, Ajay, where this scrutiny can come about by way of the precedence of the Supreme Court verdict?
So, the grandfathering or the zero rate is available, like I said, for all investments before 2017. So if any exits happen, there will be a greater scrutiny. But there are some cases, Nisha. The Flipkart exit itself was not only Tiger Global. There were other investors who exited. eBay exited, for example. A lot of these are at different stages of litigation. The Tiger Global ruling always had an impact on those. So there are a few cases relating to the same Flipkart exit where there could be potential tax demands or those litigation which had relied on the earlier favorable Tiger Global ruling at Delhi High Court will now get revived. There are a couple of other transactions which I am aware of. There's one of the General Atlantic group companies which had invested in NSE shares and exited, and there was a tribunal ruling which relied on the TRC to say that they ought not to be liable to tax in India. So wherever there are past litigation where TRC has been held to be a conclusive proof, will all get unsettled. Those will get reopened, but this will not impact other trades which are happening, other investments which are happening now or which have happened in the last few years.
Right. So one more question that comes up, which goes beyond the timeline that you're mentioning and not specific to Mauritius tax treaty, Ajay, here is that if we are questioning the legitimacy of TRC by any country coming from the precedent of the Mauritius tax case, in the case of Flipkart and Tiger Global, that means a lot of other geographies which have given TRC certificate where the companies have transacted on the assets which are backed here in India, but the equity transfers and shares have been really dealt with overseas, and tax waiver has been taken on TRC basis. Will they all come up for questioning, and whether TRC will lose its legitimacy overall?
Nisha, I think that's a very important question. And I think is one of the most important points here. Because, this decision may not just impact only the Mauritius and capital gains exit. Like you rightly said, there are different countries. Each country issues a TRC. Now, like I said at the beginning, if a non-resident has to claim a beneficial rate under the treaty, the tax residency certificate, or it's called COR in some countries, like Singapore calls it COR, which is certificate of residency. So either of them, a document with evidences residency, was taken as a proof by the Indian authorities. Today, that is questioned. It's not only for Mauritius, not only for capital gains. A dividend, for example, listed companies pay out dividend. Normal dividend tax rates are higher. Under Singapore, it's 10%. Netherlands is 5%, and US is 15%. And therefore, we apply these lower rates based on the certificate of residency or the tax residency certificate of those countries. Today, if the department were to challenge that, not accept it at face value, but to scrutinize that, then this impact could actually be much wider than just Mauritius and capital gains.
All right, Ajay Roti, thank you so much for getting us all the details and perspective on what could be the implications of this very large tax case, which Supreme Court verdict has really implied on the Tiger Global transaction on Flipkart stake sale. And also remember that Flipkart is headed for an IPO in India in this particular year, and this particular tax case comes on the transactions done on the stake sales of Flipkart earlier. All right, moving on then, India Mart stake shares, those are rising about 8.5% in trade, and that particular stock is buzzing in trade after, remember, Nalanda Capital scooped up a 1.8% stake. Let's take a look at what are the key triggers when it comes to this particular company and what is it that the market is really rewarding them for. Sharad, my colleague, joins in with a comprehensive analysis and a word on what the analysts have to say about this particular stock movement and the stock performance. Tell us, Sharad.
Nisha, you must be tracking the private equity space as well as Nalanda Capital, and once they enter for a very long period of time, and that is why it has been buzzing very positively for the stock. Now, the valuations are on the cheaper side. Looking at the return ratios, they are also very high. PAT CAGR is good, and management, they have stated that they are the leading indicators going ahead for the company. But there are some negative triggers also, especially on the churn coming in from the silver tier segment, and largely the last 5 years and 2025 highs, the stock has corrected. That means valuation is seeming very attractive, and a very large player like Nalanda Capital is entering the stock, and that is why the stock is buzzing in trade.
Thank you, Sharad. Of course, this is a very important development, but of course, we had a scratchy line with Sharad over there, and he was talking about the India Mart's brokerage point of view and the analysis. Some of the negative triggers, while the stock is still up and euphoric in trade, needs to be also laid out for a balance on how the perspective is really built on this particular counter. So negative triggers for India Mart: intermesh, lack of momentum in technical charts, and faced elevated churn in the silver tier segment. These are some of the few. We'll slip into a short breather on the show, but come back for more news and developments right here on Markets at 12.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and
Welcome back. You're watching Markets at 12. Now, the AMC stocks, they are soaring in trade on the back of strong Q3 results and also bullish commentary coming in from the brokerage nodes on some of these counters. Sharad, my colleague, has been really digging deep on this particular space and gets us all the insights that are really coming in. Sharad, of course, AMC stocks have been darlings of the market for a very long time, and currently the Q3 numbers seem to be also adding the positive momentum.
You're right, Nisha, for that. Of course, there was some yield pressure in the industry, but seems like the street is liking the AMC results. HDFC, AMC, ICICI Pro AMC, strong set of results coming in. And as per my talk with the dealers, there's a good basket buying happening across the sector. DI positioning, that's where they're trying to eat up more a little bit of it. And brokerages also, the last 2 days, they have turned bullish, especially on the earnings front. Now, the lower TER, the total expense ratio impact, that news is also factored in, and the markets are moving forward. And let's just look at the earnings table, how things have panned out. It's been, analyst estimates have been beaten for both HDFC AMC and ICICI Pro AMC. And interestingly, I'd like to point out one important thing. The board has reappointed S. Narayan as the executive director till June 2028. That is a very big news for ICICI Pro AMC, and that's why the stock has also bumped up. Let's look at the valuation check, how things have panned out, and most of the valuations have corrected still by 10 to 20% from their above levels, and the return potential also is still there between 1 to 10% for most of the stocks.
Right. Thanks so much, Sharad, for that. Of course, this is one space which is really buzzing in trade. Let's take it straight across to Feroz Aziz, who's the joint CEO at Anaraati Wealth, joining in with his perspective on the market. Feroz, looks like for the last couple of trading sessions, market has regained the momentum. A lot of it had to also do with the positive commentary coming in from the US, while trade tariff remains as one of the big worries for the market. How are you seeing a mix of factors considering geopolitics, tariff, as well as the earnings momentum so far having an implication on the near-term market?
Nisha, good afternoon. You've asked me all possible questions in one. I'll try my best to answer them and not let go of any. So if you ask me, one, very importantly, the market's gravity is upwards. That's been my commentary for long periods of time. Markets are going to gravitate towards the 52-week highs. Of course, markets can correct with all these global uncertainties, but FIIs have sold 1,66,000 crores. At the same time, DIIs have bought last year 7,50,000 crores. So as a percentage, of FII sale on the denominator of DII purchase, it's only 20% for last year. So that's why you see markets being so buoyant in spite of Trump on 8th of August or somewhere thereabouts increased tariff. Nifty was at 24,400. We are 1,400 points higher. So I'm very positive that Nifty can deliver 11-12% in this calendar year from the start of 1st of January. Because domestic monies will continue to come as they continue to come. We keep a very close eye on what comes into small cap funds every single day, which is a great barometer for retail confidence in India. That's point 2. Point 3, when it comes to earnings, earnings have delivered about, if I look at the first 2 quarters, Nifty has delivered about 8% earnings growth on the current constituents, because there are constituents which change twice a year. So it's very important to very microscopically look at earnings, which most of the street players don't look at it so microscopically. So 560 more rupees of Nifty earnings are expected in this quarter and the last one. And I think the odds of that happening is upwards of 90%. If that were to happen, you will get double-digit earnings growth on the current 50 constituents of Nifty, in spite of some not very profitable companies having got included in Nifty.
Right. So, Feroz, like I asked you all the questions all at once, you've given me all the data points on the anvil also all at once. Thank you so much for joining with all your insights right here on NDTV Profit. Thank you so much. With that, it's a wrap on markets at 12, but keep it with NDTV Profit. Thanks so much.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
Hi team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got
Hello and welcome to NDTV Profit. This is Hiral bringing you all new offering, trending stocks. And with me is Sharad standing not at the NDTV Profit market pit today, but he's with all the action with me right now in the studio. Sharad, what are the markets telling you? Because clearly there is some bit of profit booking that's coming in. It's a very interesting day of trade with the way IT is performing.
Well, it's a very, very interesting day of trade, Hiral. And yes, initially we had a very good up move coming in, especially aided by the IT earnings. And remember, a lot of important earnings, the Nifty heavyweights are going to come in the next 48 hours. But yes, a little bit of profit booking coming in. But while we talk about it, we are seeing a sudden dip coming in the markets. Nothing to be worried about. We had expected a range-bound movement coming in. But as the earnings come, that's where the momentum and the action will be there. Let's just pull out the Nifty Bank Index to see where the action is actually happening. And we have already shown the Nifty. And Nifty Bank also, the technical setup is better than Nifty going ahead. Yesterday we saw ICICI Bank and HDFC Bank not performing, but now we are seeing some kind of support is definitely there. But there will be movement happening in the FI heavy space with the IT or the private banking space. But let's look at the let's look at the overall sectors where's the entire focus coming on. And remember, now earnings is taking over focus over the macros. Global data is almost largely absorbed in, and now we are seeing some short covering likely for the IT stocks, and that is where we might see that 92% FI shorts actually coming down. Technical momentum that has still turned bullish. So yes, net we are still in the positive range, both Nifty and Nifty Bank. But yes, this is the short term. I'm talking about 35% of Nifty weightage earnings will be coming in the next 2 days. Of course, there's Reliance, there's Tech Mahindra, ICICI Bank, HDFC Bank on Saturday, and that is where the markets will be focusing on right now. IT capital market theme, these stocks are buzzing in trade and significant volume buying is happening, and a basket trade is definitely there in the offing for this segment. So yes, we will be watching out for these important trades in the day today. Back to you, Hiral.
So much for that, Sharad. You know, lots of trends that we are watching out for, but let me quickly take you through the watch list. Patel Engineering, you have Vijay Kedia, who's bought little over 1% stake in the company. Zen Technologies is in focus as well on the back of an order that they've got from the Defence Ministry. India Mart, you have Nalanda Equity Fund, which have increased their stakes, so some positive momentum coming in there, and an earnings reaction on an Angel one with some bit of positivity on that one as well. Kavach order has been a setback since quite some time, so HBL Engineering is trading under pressure. Apart from that, you have L&T Tech, a mixed Q3 is what they reported, and that's what is causing some bit of pressure. There has been a slowdown in revenue growth. Infosys has been a spectacular one, probably a stock of the day as well, because they've revised their FY26 guidance, that's the constant guidance, currency guidance upwards. And you have Wipro that will be reporting numbers today along with the Tech Mahindra. So the sentiment across the IT sector is pretty positive. One of the arms of Cipla has halted a key drug production, and that's what is causing the pressure on a Cipla. It was one of the top losers on Nifty 50 as well. And you had UBS, which had gone ahead and cut the target price on an Eternal some time back. The pressure has continued today. Growth, there is a positive brokerage commentary on the back of it, some bit of momentum on that one as well. And an order win boost coming in for Occurnex. Reliance Power, SEBI has initiated a forensic audit, and hence that stock is trading under pressure. So this is the watch list that we are watching out for. But let me go across to Sharad, who will take the rapid fire with our guest as well. Sharad, over to you.
Yes, thanks a lot, Hiral, for that. And Akshay Bhagwat joins in with us. A very warm good afternoon to you, Akshay. We'll start our rapid fire. The first company in focus is Patel Engineering. Vijay Kedia, Ace Investor, has bought 1% stake in the company. What will be your view?
Good afternoon. See, the stock is oversold and it's on the verge of a slight pullback. So technically you're looking at a pullback scenario till 35. Hold or buy with stop loss of 25 for potential targets till 35. More of a trading call.
Okay, a trading call coming in. Next stock, India Mart, Intermesh. Nalanda Capital has raised its stake now.
So India Mart is more of a neutral setup, although it is almost 8% up. It's more like a carry forward trade. 2350 is where it can head to. So be invested or keep on holding for targets of 2350 from a short term perspective.
Next stock, First Source Solutions. It's up 7% in last 5 days.
First Source Solution has seen some good momentum. It's a bit overbought on the charts as it goes right now, but even from the current level, because it's recovered from support, it is heading possibly for 375 targets. Continue to hold.
HBL Engineering, a coverage order setback coming in.
HBL Engineering, there is a support at 750, although a bit negative still. I would say continue to hold. There is a good chance of pullback again till 900.
All right, next stock, L&T Tech, mixed Q3 numbers, slow revenue growth.
L&T Tech, yes, there is a slow revenue growth and it is heading down for targets of 3800. Slightly negative outlook, so exit is the short-term recommendation.
Eternal, UBS is cutting its target price now.
Yes, but somewhere I believe there is a support in making at the levels of 280. Continue to hold. Potential recovery or a bounce back till 315 is possible.
All right, and for Grow, brokerages are turning positive. What's your view?
Yes, it's a good setup on technical charts. I think 190 is where it is headed for short term.
And the last one, Akshay, Electro Steel Castings. The stock is near its day high levels.
Electro Steel Castings, again, it's more of a trading pullback. 80 is the potential target you can look forward to.
All right. Thank you very much, Akshay, for giving your views in our rapid fire sector. Over to you, Hiral.
Thank you so much for that. I mean, that's an interesting rapid fire that we're looking at. But one sector which is hogging the limelight, trending in trade today is the IT sector. Let's pull up the IT sector on the screens and you'll see why I'm talking about it and the components there. At the day's highest levels, it's Infy which is given that booster dose as well by upgrading and revising their constant currency guidance upwards. Apart from that, Oracle Financial, Emphasis, Tech Mahindra, Wipro will be reporting numbers as well. Persistent System, Coforge, HCL Tech. All of them are trading in the positive. It's only L&T Tech which is trading in the negative. In fact, let me first head across to my colleague, Jasmeet, who's standing by to first tell us actually what really worked for an Infosys, because a complete flip coming in for the sector.
Well, Hiral, thank you for that. If you look at something like an Infosys, we have seen the guidance outlook which actually changed the overall perspective. The steer expecting the update from the lower end, that's from 2 to 2.5%, but the company has surprised the street by giving an immediate guidance update on both the levels and currently stands between 3.3 to 3.5. Now, what we see going forward from here is that the management remains confident in terms of the deal booking and the overall Q3 performance. If you look at the overall brokerages, they have hiked the target price as well for this particular company, and the management says the deal booking which they have done this quarter at $4.6 billion, which is nearly up 57% when you look at on quarter basis. In terms of other key aspect, the attrition also has come down for the management, and management sees the same rate going forward, and management continues to hire employees as well. If you look at the overall employees that they have hired in this particular year, it stands at 18,000, and they remain on track by seeing the employee addition basically means the company sees a good growth going forward. So even that is something which has boosted the overall sentiment in terms of the Infosys results.
Okay, so that's with regards to Infosys as well. In fact, let's also hear it, what Salil Parekh actually had to say on the back of the numbers.
We believe we are uniquely positioned to capture market share across these value pools and emerge as the leading AI value creator for global enterprises. We will share a comprehensive view of our approach at an investor day later this quarter. With a strong performance in this quarter, we have revised our revenue growth guidance for the financial year. The new revenue growth guidance for this financial year is 3% to 3.5% growth in constant currency. Our operating margin guidance for the financial year remains the same at 20 to 22%.
Okay, so we're talking about the companies that are gaining in trade, but one IT company which is losing out is the LTTS. In fact, Jasmeet did speak to them earlier as well with Amit Chadha, MD and CEO, where he shared the company's growth outlook for the upcoming quarters. He told that L&T Tech aims to reach 16.5% EBIT by Q4, and also said that he's cautiously optimistic about FY27. Let's quickly listen in.
Look, we would like to operate in the 16.5% plus EBIT range. And by the time we get to Q4 FY27, we will definitely and surely be in that 16.5% EBIT range. That's our aspiration. We do expect growth in top line in FY27. and the year has to play out. But we are fairly comfortable at this stage to be cautiously optimistic about FY27.
That's with regards to LTTS. Let me get in Astha Jain, Senior Research Analyst at Hem Securities as well. Astha, welcome to the show and always a pleasure to speak to you. We're talking about Infosys, a strong set of numbers and guidance. You have LTTS, which has reported a mixed set of guidance. The stock is ruling under pressure. And you have Tech Mahindra and Wipro that will be reporting numbers as well. Now, your view when it comes to Infosys and LTTS?
Hi, good afternoon to everyone. Talking about, first of all, Infosys, definitely a positive outlook from our side. And the reason being, all know, strong results from the company. And what we are seeing that they have seen acceleration not only in their deal wins, like this acceleration is also there in the European region. So main growth is coming in the from the European region, and companies quite optimistic about that. So we believe that yes, on the basis of number, Infosys is looking very strong, and hence their guidance is also looking very strong, and hence we are recommending a buy as well as hold on this. Although our price targets which we are setting for this counter as of now is 1730 to 50 in the medium term. However, in the long term, it can move till the levels of 1800 to 1830. So Infosys is looking good to us. Now talking about LTTS and the other upcoming results, we believe that this time mid-cap IT companies will going to outperform large-cap IT companies. There are various reasons behind that. First of all, their revenue guidance is always higher than large-cap IT companies. Maybe the base effect is there for the large-cap IT companies because their constant currency growth remains in the range of 0.3% to 1%, while in the mid-cap IT companies, we are seeing it in the range of 3 to 5%. So there is a gap in that. Another point which we are liking for the mid-cap IT companies is their deal wins. Their focus is on the niche area, especially AI. So I think mid-cap IT companies are looking much better from the earnings perspective for this quarter. This is what we believe. And hence, in that environment, if results like LTTS came, which is not at all performing strongly on the expected line, definitely market's going to punish them, and that is what we are seeing. So right now, our idea is LTTS is not looking good to us at this point of time also, and we believe that there's a further downside which we can expect in this counter. So remain, away from this counter for the time being. While Infosys, as I have already told you, looking good to us. For the upcoming results, we are expecting growth in the revenue term for both these counters. But again, I need to see the guidance, how the Wipro management is saying about what they are saying about the guidance, how they are expecting businesses to perform. But as of now, HCL Tech and Infosys, these two are our strongest bet in the IT space.
Okay, so Astha, HCL Tech and Infosys, these are the counters we should be looking at. But another counter which is doing really well in the trade is India Mart Intermesh. Nalanda Capital has taken roughly 1.8% stake in the company, and on that buzz, the stock is up 8%. Roughly, there are some positive triggers also I'd like to point out before we move on to what was the overhang for the stock. The valuations are very cheap at 22.5 times versus the high 2021 high P numbers. The high return ratios are there, 30% plus ROCE numbers. Also, the PAT CAGR is good. It is India's largest B2B marketplace, and from Q2 onwards, the management has started saying that the leading indicators are improving. But there were some overhangs, and there are some overhangs still now there. There is still a lack of momentum was there in the technical charts, which will of course reverse from today. And they have faced an elevated churn in the silver tier segment. Margins also have decreased because of higher marketing expenses, and interestingly, the paying suppliers have increased at a much slower rate as compared to its ARPU growth in the last 3 years, and net additions recovery has also been slow. So both sides of the coin I have put across, and also looking at the stock tracker from 2020-25 highs and 5 years, both the time the stock is down. And analyst take also, it's still very much divided. Astha, I want to get you on this. On India Mart Intermesh, of course, there's a massive correction which has already happened, and now today we are seeing some buy happening. But fundamentally, is there any change happening now in this counter?
So what we have seen when they have announced their past results, that they are seeing a strong growth. I think more than 10% growth they were seeing in their unique client inquiries. So I think that was major positive. In fact, their operational performance was also very strong. Now the unique business inquiries or the client inquiries that stood at around 31 million for the Q2 of FY26, which has registered the 12% growth. So that was very positive for us. And now, in fact, what we are seeing over past few days, that continuously they are engaging with the investor community a lot. And I think that is the reason that we are seeing a strong move in the prices also, and some of the news flow which came in. So my idea here is to just hold the counter. If anyone has this counter in their portfolio, just hold it. But for the fresh buying, I would recommend to wait for some more time, let the results come in. Let's see what the management is now saying about the guidances, etc., and then make a fresh entry into it. It will be a risky from the risk reward basis at this point of a time to make a fresh entry, and that's why recommending just a hold on this counter.
Okay, hold on India Mart. The risk reward is little risky so far. Another stock that is under pressure today, Cipla. Dealing with a double setback on one of its most important US products. In fact, the company has paused production of lanreotide, its largest selling drug in the US market, with resupply now expected only in the first half of FY26. And adding to the concern, Cipla's partner, that is Pharmathen, in Greece has also received a Form 483 with several observations. Let's go across to Varsha for more details. Varsha, what does this actually mean for a Cipla?
Yeah, so the drug that is lanreotide is, the one of the biggest contributor to Cipla, and the arm has paused production of that drug, which they expect resupply to resume in H1 FY26. Now, this product, if you see, treats hormonal disorders and certain type of cancer. And the Form 483, now why Cipla is in focus? Because Form 483 was being issued to Cipla's partner, that is Pharmathen, which got a 483 at its one of its units. 9 observations were noted, which includes data integrity issue as well. The observation number 4 may indicate data integrity issue. There were high particulate reject limits and rejected batches, and also there were poor aseptic practices which were found. Now, what is impact on Cipla and why this is in focus? Because lanreotide is Cipla's biggest US drug. If Pharmathen is actually facing a problem, that means the manufacturing of this drug for Cipla will also be impacted, and the sales will also be impacted in near future, which will affect the financials for Cipla. And hence this is one of the reasons why Cipla is in focus. Also recently Aurobindo Pharma got the approval for Advair, which Cipla was also expecting approval since 2020, but Cipla didn't get it, and the company which has been acquired by Aurobindo Pharma got that approval, and also one of the reasons why Cipla is under pressure today.
So that's with regards to Cipla. Asta, your view when it comes to Cipla, would this be a buying opportunity, or would you say avoid from here on?
No, I don't think so that it is a buying opportunity, because this product lanreotide, I think it holds around 22% of a market share, and the supply is already facing issues regarding the supply of G-Revlimid. So because there are some erosions which are going on in the revenue due to the supply issue of G-Revlimid. So I think these factors are not at all working in a favor of the company as of now. So we don't look this fall as an opportunity to buy, and hence recommending just to stay away from this counter for the time being. Those who have this counter in their long-term portfolio can remain invested, but I don't recommend any fresh entry at this point of a time, just looking after the price correction.
Just pull out Federal Bank, and we see that NIMS that has gone up sequentially up. Earlier, most of the banks were talking about their bottoming out, but there's a good surprise coming in when it comes to the NIMS number. And interestingly, let's pull out the numbers, how they have actually pan out, and we see it's at the day's high level. The stock is up 8% and we'll be giving you more numbers to it. Net profit has jumped 9% on a year-on-year basis. And let's just pull out the other numbers, the net interest income. See, there is a good asset quality improvement also coming in on a sequential basis. The GNP is at 1.72, while net NPA is also going down to 0.42%. So most of the banks, 2 days ago, there was Union Bank, and now Federal Bank also comes up with a good set of numbers. NIMS also improving, operating profit, seeing a jump of 10%. Asta, I want to get you on Federal Bank. What will be your views on that?
So one more fact about this bank is that, in fact, the GNP and NNP ratios have shown a very, very strong decline. So I am also taking that point as a very positive for this bank, apart from the strong earnings which this bank has posted. And hence we are seeing markets just rewarding such kind of numbers. What a movement we have seen today. I think Federal Bank, prima facie, this outlook I'm giving right now. So it's a prima facie looking very, very strong, and hence we are recommending a buy on this as well as a hold for the price target of 280 to 290 at the initial levels.
Okay, so that's with regards to where Federal Bank goes. Interesting moves coming in there. That stock is at the day's highest levels now. Now, Reliance will be reporting its Q3 numbers today. How will the company's earnings pan out? And what should one watch out from the company's key segment, which is oil and gas and geo? Somit Sarkar joining us with all the expectations. Somit, the stock has actually climbed to the day's highs and now it's actually cooled off. What should you be watching out for?
Well, largely a stable set of numbers is expected from Reliance Industries in the third quarter of FY26. Now, if you look at the headline numbers, revenues are expected to be up 1% on a sequential basis. EBITDA is expected to up by nearly 4.6%. Margins are expected to come in at close to 18.7%, while net profit number, that will be higher by around 6% on a sequential basis, close to 19,271 crore rupees. Now, if you talk about the key segments for Reliance Industries, firstly, the retail segment. There, the revenue growth will be just 2.8%, and retail EBITDA will be up around 9.3%. Now, this retail EBITDA growth is somewhat slower than what we have seen in the previous quarter, but this is largely due to high base coming in, JioMart quick commerce losses, and also because of the demerger of the Reliance Consumer Products business. Now, high base last year was largely because the festive season last year was in the third quarter, and this time around it spread between the second quarter and the third quarter of FY26. While because of this demerger of Reliance Consumer Products, the impact on the top line could be around 2% as per analysts. So that is the reason why the retail segment is expected to be muted. Now, when it comes to the O2C segment, which is the oil to chemical segment, there the EBITDA is expected to be up by nearly 6.5%, which is the biggest jump that we are seeing in the O2C segment's EBITDA in the last 4 quarters. And this is largely on the back of higher refining margins, weaker Indian currency as against the US dollar, and some of these positives will be partially offset by the weak petrochemical margins in the third quarter. Now, when it comes to the oil and gas exploration segment, there the EBITDA is expected to be lower by around 12% on a sequential basis, and this number is expected to come in at close to 4,390 crore rupees, and this is the biggest drop that we are seeing in the oil and gas exploration EBITDA in the last 15 quarters, and this is largely owing to lower realizations and lower volumes in the third quarter. Now, when it comes to the telecom business, that is Reliance Jio, there the revenue is expected to be higher by 3%, EBITDA is expected to be higher by 3.4%, net profit is expected to be up around 2%. The key number ARPU, that is expected to increase by around 0.8% on a sequential basis and expected to come in at close to 213 rupees per user per month. Now, this is the lowest growth that we will see in the ARPU number in the last 6 quarters. Now, the growth is largely supported by tariff hikes which were taken by the company earlier. ARPU growth for the 6th consecutive quarter, but the slowest in the last 6 quarters, and ARPU growth is largely on the back of upgradation and higher data consumption. Overall subscriber growth is aided by subscriber addition in the broadband segment. Now, the key thing to watch out for from Reliance Industries earning would be their commentary on crude sourcing strategy, their margin outlook when it comes to the refinery and the petrochemical business, and the growth pickup and the festive season in the retail business would be important to track from Reliance Industries earning.
Thanks a lot, Somit, for that. But let's focus on the broking stocks. Of course, AMC stocks are also buzzing in trade, but Grow and Angel One both are surging in trade today. Citi has come out with its report, and they're given a buy rating, target price of 195, and they have been very bullish on the M2F business and the better realizations happening in the future going ahead. Market share gains across the categories is something which they are bullish on, and Jefferies also have come out with this report, and they have hiked the target price, not a big hike, but yet from 190 to 195 odd rupees, and they have stated that the new ventures is something which the street is bullish on. OPEX growth was slower at 14% year on year due to the operating leverage, and the new businesses will be a key contributor in the future growth going ahead. Now, they're expecting that the key contribution in the EPS, that's expected to rise by almost 1 to 4%, factoring in a higher commodity market share as well. Also, let's look at the other side, Angel One. A strong operational update coming on a sequential basis, net profit jumping 27% on a year-on-year basis, EBITDA also up 27%, margins nearly touching the 40%. Remember, the M2F business for most of the broking players, that is actually increasing as well. So, two stocks, Grow and Angel One, which are buzzing in trade. Astha, out of these two stocks, which is giving a better risk-reward ratio?
So I would like to go with Grow, because the reason being now they introduce commodities and the margin trading facility. So these two segments are really contributing in their growth, and it will be going forward also. They will be continue to contribute in their incremental growth. So I am really liking that part, and hence I believe and Grow is well placed at the present moment of a time also to cater the opportunities, because the number of users has also rise in this space. My idea here is that Grow is looking very strong to us, although we are also liking Angel One. But if I have to pick any one of them, then definitely I would like to go with Grow with a price target of 195 to 200.
Okay, so that's with regards to Grow as well. Now, Kernex and HPL, let's pull up both the counters on the screens. You have Kernex, which has got order win. That stock is up 5.5%, and HBL, the Kavach impact is clearly putting pressure, 9.5% downtick coming on that one. How are you looking at both these counters, Astha?
So Kernex is looking very strong to us, and in fact, we are seeing this kind of a price movement since last 2 to 3 days. What an exceptional move which we have seen into the Kernex microsystem. So I still believe that this counter is well poised to show more upside from here, because what we have seen a continuous downfall, and with this last 2 to 3 day moves, proper bounce back. Idea here is that Kernex is looking more stronger, and remain invested in this counter with a price target of 1500 to 1650.
Okay, so 1500 to 1650 is what you should be watching out for. Thank you, Astha, so much for joining us on the show. Always a pleasure to speak to you. And thank you, viewers. We are completely out of time. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
First India News Channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers
It's shaping up to be a good Friday for the Lal Street. Nifty hovers near 25,800. Sensex jumps over 500 points. Broader markets mirror benchmarks. IT and PSU banks lead gains. Pharma and media, though, on the back foot. An inline set of numbers in the third quarter for Infosys as management also raises its FY26 revenue growth guidance to 3 to 3.5% in constant currency terms. Brokerage verdict remains mixed. But today, all eyes are going to be on Reliance Industries, with the company expected to deliver steady numbers this quarter. And Angel One is soaring on the back of healthy third quarter numbers. Company approves the first interim dividend of 23 rupees per share for FY26. Meanwhile, Grow and 361 WAM also surge on the back of positive brokerage notes. And it's AMC stocks that are soaring in trade on the back of strong third quarter results and bullish brokerage notes as well. ICICI Pru AMC reported its first quarterly earnings post-listing, delivering a strong quarter with average assets under management growth outpacing the industry average of around 5%. And NSE CEO Ashish Kumar Chauhan says that application for IPO has been accepted in principle and expects it to be in public after 6 to 8 months of receiving NOC from the SEBI. However, adds that IPO timeline dependent on regulators and third parties, not internal control. Early trends show the BJP Shiv Sena alliance consolidating its lead across Mumbai municipal wards, staying ahead in more than 100 wards as results trickle in from counting centres. The alliance is also leading in overall Maharashtra municipal polls. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers as well at this hour, all while you grab lunch. And let's kickstart the show by taking a quick look at what the markets are up to at this point in time. Of course, you do have this Friday sort of shaping up to be a good one, at least as far as the Lal Street is concerned. So what's leading gains in terms of some of your sectors is IT with that 3.5% uptick coming in, followed by realty up about 1%. PSU bank as well as financial services in good shape. What's not doing quite well in terms of sectors is perhaps pharma on the back foot, energy. You do have consumption and media also that are losing in trade as well. Those are the sectors that are in red. Quickly, let's also talk about some of the top buzzers as well from within the Nifty 50 pack. So it's Infosys that is holding up quite well. After an inline set of numbers, mixed brokerage verdict that you have, but you do have the management that has actually upped the guidance when it comes to FY26 revenue, reflecting on the stock with that 5.5% gain coming in. Tech Mahindra, 4.8% uptick thereabout coming in. Wipro, Shriram Finance, Tata Motors, PV, Tata Consumer, as well as HCL Tech, some of the other counters that are buzzing away in trade as well. When you take a look at some of the other counters as well that are doing quite well, there's an IndiaMart that is up about 8.1% after Nalanda Capital picked stake. Federal Bank also 8% uptick coming in for that one. And what's not doing so well right now though is perhaps an HBL Power. You do have a bunch of triggers coming in as far as some of your covered stocks are also concerned. And you do have a bunch of other triggers that we'll be talking about. Of course, there's Cipla, Eternal, Sun Pharma, BEL as well on the back foot, down anywhere between 1.5% to about 2.5%. But let's also talk to you about the world of commodities, because that's where you should be putting a lot of spotlight on, a lot of focus on, given that you've seen a record run come in as far as silver and gold are concerned. Although you do seem to have a little bit of a pullback coming in as far as silver is concerned. So 2% thereabout downtick coming in for silver prices on an average. That's something that you're looking at. Oil has also steadied after that big drop that we saw coming in. But you do have silver that is actually up about a quarter this year. Let's also take a look at whether or not there's more steam left in the rally when it comes to the white metal. We do have Kunal Shah, the head of commodities research at Nirmal Bang, joining us on the show. Thank you so much, Mr. Shah, for taking time out and joining us this afternoon.
My pleasure.
You know, Mr. Shah, it's a very important question right now in terms of silver, because you do have that record year since 1979 coming in. After that, the expectations largely were that there could be a little bit of a pullback, but we've not seen much of that being reflected for much of this week. We've not seen that actually happen. You do have silver that is still poised for a good week. I want to know whether you think this is tariff related right now in terms of the key triggers, or what are you looking at when it comes to silver?
Yeah, so yesterday morning there was a news which came from US that they are not going to put further tariffs on the critical minerals, and that led to 8% correction. So unfortunately at that time Indian markets were not off because of the holiday we had. But then lately during the day it fully recovered. So what's happening in silver is that since China has put export control and these markets are already in a deficit, so because of the supply side shortages or the squeeze in the supply, the prices are not coming down. Other thing, the fear of missing out demand is pretty high in silver. So I've seen people buying silver at even 2,85,000, 2,80,000. So I'm of the very firm view that these are not the levels to indulge into fresh longs. One should wait before entering long position. And I'm of the same view that there can be a possible correction in the price of silver going forward. And that shall make it again attractive. So if it comes down from 90 to 79, 80 or 75, between 75 to $80, in India, if you want me to translate 10 to 15% of correction, can again make it very attractive to go long. But these are not the price to enter into long position. And I foresee that even if it goes to $95 or $100, if it does, I would still recommend that people who have been holding
absolutely.
them.
And you know, Mr. Shah, it's actually quite interesting. I wanted to try and understand this a little better, explain this to our viewers as well, because you do have Trump also at this point in time not really ruling out tariffs, and that's been a key trigger when it comes to silver. So are you perhaps saying that if you have an iron stomach, bet on silver, and if you don't, sort of stay away from it right now at these kind of levels? I'm getting that sense. Is that what you're trying to sort of explain to our viewers as well?
Yes, that's quite you rightly put out, because we don't know what Mr. Trump is going to do with it. Number one. Number two, China has already initiated the export control. So I think these are the times when I would recommend to stay away from it, wait for correction before you don't jump into long positions right now, create fresh longs at 90,000 rupees. Doesn't make sense to me. These are the time that if you've been holding silver from 50, 80,000 or 1 lakh rupees, these are the time to book some of the profits, not to initiate into new fresh long positions. And for the traders, I would definitely say stay away from it.
Well, absolutely, and that just about sums it up. I think there's a lot of questions, more questions than answers when it comes to silver, Mr. Shah. But I also wanted to try and get a sense of what you think about gold as well. Do you think that the geopolitical risk premium is sort of baked in the pie when it comes to the bullion?
Absolutely. I mean, if you look at the gold prices at $46, $20 or $46, $40 was the maximum upside. I think a lot of positive news are in the price, and whether the US and Israel will attack Iran or they will not, I mean, I would say 50% is already discounted in the price right now. So if they doesn't, then you may see some cool off taking place. But fundamentally, and looking at the gold silver ratio, gold is more attractive right now to go long as compared to silver. So if you want to initiate a long position in bullion right now, gold is a better option than silver. And I would say the fall in gold will not be as steep as in silver going forward. So somebody who is a compulsive trader, for them going long in gold makes more sense. And for somebody who really want to enter into good levels. I would say whenever silver goes down, even gold will follow. So at that time, you can
It's
enter.
the entire investment playbook as well, Mr. Shah, when it comes to investors as well. But quickly, before we let you go, I wanted to get a quick word going. As far as 4 commodities are concerned, I want you to be sort of selecting the one that you think is poised for an upside for the year 2026. The options are going to be gold, silver, copper, as well as oil. Just for the benefit of our viewers, where do you see the most upside in 2026?
I see the percentage-wise, the most upside will be in copper. Second, followed by that would be gold, and third would be crude oil. It's a complete contra call, but I see the US shale oil production is going to stagnate going forward, and we are going to see upside in crude oil futures going forward. So I'm bullish on crude oil. Number 1 would be copper, followed by gold, and followed by that would be crude oil.
Perfect. Thank you so much, Mr. Shah, for joining us this afternoon. So there you go. That's the entire word coming in on a bunch of commodities that we're looking at this afternoon. But it's time for a very quick break. More news and updates on the other side.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table tapping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
Welcome back. Thank you so much for staying tuned in. Well, it's time to put the spotlight on a bunch of these IT counters that are buzzing away. So there's Infosys that is up after an inline set of numbers. But you do have the management that is actually up the revenue guidance. On the back of that, you do have the stock up about 5.5% thereabout. There's Tech Mahindra that is up about 4.5%. Wipro up 3% as well. And in fact, on the flip side, you do have L&T Tech that is actually down about 4% thereabout. Let's quickly take a look at the updates coming in as far as Wipro is concerned, because you do have the consolidated quarter-on-quarter profit that could actually rise over 3%. The acquisition of Harman's digital transformation solutions business could actually result in a one-month impact as well. We do have Jasmeet who's standing by with some of the key monitorables and what we're penciling in fact, Jasmeet.
Well, thank you for that. If you look at the overall numbers that can be expected from something like a Wipro, is the brokerages expect the overall IT revenue see uptake of 0.5 to 0.8%. Well, this comes well within the company what they had guided back in Q3. If you look at the other key aspect that will be important when we watch out for the company will be the Harman acquisition. We expect a 1 month revenue impact coming in from that. So that's why we see a slight uptake in the revenue which we can expect on 3C terms. In terms of other aspects, the margin could see a tailwind on the back of the Forex charges, but also we can see headwind coming in from the deal ramp of the company one in the previous quarter. So all in all, what will be in focus is the Q4 guidance, the AI commentary and other acquisitions the company has planned going forward. If you look at the other key aspects, the European segment and the client consolidation is something that will be also watched out very carefully. Let me quickly get you all the guidance update for the company. Back in Q2, company had guided a Q3 revenue guidance of minus 0.5 to 1.5 odd percentage on 3C basis, but brokerages expect the guidance would see an uptick from 0 to 2%, and also something like a Goldman Sachs expect the guidance could see an uptick from 1 to 3 odd percent. So it's a wait and watch, given something like a Infosys has also beaten the entire street by a surprise of raising the guidance. So Wipro is also wait and watch how they change the overall guidance, should be watched very closely.
Well, absolutely, and Jasmeet, it is a busy day for you because, we're looking at Tech Mahindra as well. Right now, the stock, of course, is buzzing away in trade. What are the kind of expectations that you have when it comes to this one as well?
For something like a Tech Mahindra, the overall guidance outlook will be focused on a very crucial way, given that company plans to achieve a 15% top guidance by a 15% margin roll by FY27, which will be watched very carefully of how the overall margin is turning up for the company. Apart from that, the key aspect to watch out will be the overall brokerages expect the CC revenue growth to come within 0.5 to 0.7 odd percentage, but the margin tends to have supported the overall growth. In terms of other key aspects, the new labor code impact will be watched carefully, given that the overall IT pack has been seeing the impact on the profit on the back of that new labor code, which will be watched very carefully. Then the commentary on the non-telecommunication business will be watched, given the telecommunication business of the company has been growing well. If we look at the other key aspects, the deal wins, we see that 600 to 800 million of deal wins, something which the brokerages are expecting. And in terms of the key numbers, the profit I would like to highlight here, profit is expected to see an uptick of 14 odd percentage in this particular quarter. But again, on the back of the new labor code, we can see slight deflation in the estimates as well.
Well, absolutely, and Jasmeet, that's something that we're looking out for. So the company's revenue is expected to rise by over 1%. The bottom line is estimated to shoot up by nearly 15%. That's Tech Mahindra that you're looking at as well. But quickly, let's also take a look at L&T Tech. The stock, of course, is taking it on the chin a little bit right now, Jasmeet. Mixed performance is what we're penciling in.
Well, as rightly said, the numbers were on a mixed performance note. But if you look at the overall other commentary, the management has remained stable in terms of attrition and headcount as they see the overall deal ramp-up coming up. Company has also noted a healthy deal add-on of $200 million in this particular quarter. But company remains focused on the overall AI aspect and they see that growing as well. In terms of margin, we see margin expand by 120 basis points in this particular quarter, and that has come on the back of better cost. Well, we got a chance to speak to the management where they clarified that the slow top-line growth is on the back of selective project strategy the company is following. That's why we see the top-line growing in a slower way, but the margins are expanding and that's up almost 120 odd basis point.
All right, and thank you so much, Jasmeet, for joining us with that update there. So it's a busy day for Jasmeet, and there's a bunch of counters that you should be looking at when it comes to the entire IT pack that are buzzing away in trade, and of course L&T Tech that is down, taking it on the chain, down about 4%. Let's quickly take a look at Grow as well on the flip side. That is up about 7.5% thereabout. And in fact, this is buzzing on the back of a brokerage note. Let's quickly take a look at what the brokerages also have to say. In fact, Sharath is joining in with that update.
Shreyanshi, actually there's multiple brokerages which are getting very bullish on Grow, and of course Angel One also came out with a good set of numbers. But coming back to Grow, City, they have maintained a buy rating, target price is 195. Bullish on the Q3 numbers, market share gains are coming across the segment. Remember, Grow gave out its numbers almost 2 days ago. Also the market share gains is coming in the new business segment, the MTF segment, and that is where the street is getting bullish on. So a constructive stance is coming in from City. Also Jefferies, they have maintained buy and a slight increase in the target price from 190 to 195 rupees per share. December 2025 quarter, they've stated that the new ventures is something which the street is looking out for, and that will be something where the future growth will be coming in. The product velocity model is similar to Robinhood. Robinhood is the international player in the broking space, a bigger player, and they're estimating that the EPS would increase by 1 to 4% in the next 3 odd years, especially in the higher commodities market segment where the company is going ahead for. So that's why Grow is buzzing in trade.
Absolutely. Thank you so much for joining us with that update. So not one, but two brokerages actually retaining their buy call when it comes to Grow as well. And you do have Jefferies also hiking the target price. Both of the brokerages have 195 as their price target as well. But let's also move on and onto our special coverage on Budget 2026. Now, it's not just about numbers this year. It's about narratives. And in Jammu, that narrative is being shaped by women who are turning ambition into action as well, from running small enterprises to scaling tech-driven startups. These women are the heartbeat of Bharat's entrepreneurial revolution as well. And you do have NDTV Profit's Budget for Bharat that takes a look at Jammu's budget wish list. This is a special report. Let's take a look.
After abrogation of Article 370, more women entrepreneurs in Jammu and Kashmir are entering workforce and managing their personal finances. Now when the country is set for the union budget, once again the spotlight is shining on how to make atmosphere conducive for entrepreneurial ecosystem. More and more women are doing so well and excel in their respective field. I'll be talking to the women entrepreneurs here and trying to find out what actually they're expecting from Nirmala Sitharaman this time during the budget. What are your expectations from Nirmala Sitharaman? What is your wish list? What really you want?
Well, as far as I'm concerned, and with my what I do, I think I would like to thank them for the 2.0 reforms of the GST and the GST coming down on my product. Second, what my suggestion would be, from stabilization to move to simplification, so that the input credit, the process is simpler, because this gives strength to a lot of MSMEs.
We can scale our businesses, like the low pressure funding should be there, and some kind of support from the equity, and the repayment option should be more flexible.
First of all, subsidies for women entrepreneurs are very, very important. Collaterals, the value of collaterals should increase. It's hardly 10 lakhs, which doesn't really suffice a good business. So that should increase. That is very, very important. And another thing, being an interior designer, being into turnkey projects, GST reform did not benefit us at all. The percentage is 18, which is a very, very high percentage. When we take up projects and furniture, that amount really, really affects the customer and our sales. So our sales cannot accelerate if the GST amount is so much. So this, I really request the government to look into these factors.
We have the young entrepreneur also with us. What do you think should be done?
So as ma'am said, that 18% GST really affects us. So I am a wedding planner, and
it takes 18% a lot, because the budget obviously goes higher and then the people have a lot of issue with it. So I personally feel there should be lower taxes, and the loans should work on, like we should get easy loans and with less paperwork, especially.
Me being from the education sector, I'm suggesting and I'm hoping that greater allocation is for women to enter into STEM education. So, for that, whether it means providing greater scholarships, greater grants for women so that we can kind of eliminate the financial barrier that exists, setting up of STEM labs, not only in the urban schools, but also in the rural schools. And apart from the education sector, I would also suggest that greater outlay can be made for R&D for the country. With such an unstable geopolitical scenario which is prevailing in the world right now, 0.66% of the GDP in India is being allocated to R&D compared to the developed countries where 2 to 4.5% is being allocated. So I would really urge the government that we become self-sustainable, have our own tech stack, and reduce our dependence on other countries in this time.
So very important suggestion coming from the women entrepreneurs here in Jammu region. What they are saying that we need to focus on the self-reliance, and for self-reliance, we need to look into certain things. And then the second thing that they have been suggesting is that one need to encourage that financial technology ecosystem. Only then the people from different parts of life, different walks of life can also be the part of this financial ecosystem, and they can do better, they can sustain. And the third thing is that they want that the loans need to be available, and then they want that AI technology need to be provided. And what is more important is that GST. When they talk about GNC, many people are not really happy with even GST 2.0. They feel that more need to be done. What actually is required is that simplification of GST, because it's a kind of a headache for many of them young entrepreneurs when they are filing the GST, because they say that we have to file those GST thing, but still what actually is required is that simplification is more important. You need to make process simple. You have to make them sustain, and all you have to do is that you have to make the atmosphere creative, and research and development is the area that you need to really focus on, and the government need to focus on that. That's what they are expecting this time from Finance Minister Nirmala Sitharaman.
All right, then. Thanks, Pradeep. It's Budget for Bharat that we're gearing up for. That's Pradeep. That's the special report coming in from Jammu. With that, it's a wrap on this edition of Lunchtime Trades, though. Thank you so much for tuning in. Better stay tuned, because small cap buzzers on the other side of that short break.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets old industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I'm spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. But before that, let us first see what's on the show today. Firstly, we'll be speaking with the management of Iris Infra Solution. The stock is up 18% in the last 5 trading sessions, but it's down nearly 24% in the last 1 year. The company recently announced an order win of close to 35 crore rupees, but what's the way ahead is something that we'll get to know from the management today on the show. Second stock on the list today is Devangar Sugar. Now this is a 750 crore market capitalization company, but on a YTD basis, which means that in the first 15 days of 2026, the share price of this counter is up nearly 42%. And in the last 5 trading sessions, the stock has moved up nearly 27% in trade. So what could be the potential reason is something that we'll try to decode on the show today. Sterling and Wilson. Stock gained on a 70% sequential jump in the company's EBITDA number in the third quarter of FY26. If you look at the FY26 order inflow so far, it is close to 11,000 crore rupees, which is nearly 60% higher compared to what it was last year. For Orient Electric, that stock is down nearly 25% in the last 1 year, but it's been gaining for the last 2 consecutive sessions on the back of strong volumes. On January 14th, that is on Wednesday, if you look at the volumes, it was nearly 12 lakh, as against 96,000 shares that we see on an average in the last 20 days. And today, if you look at the volumes, it's close to 21 lakh shares, as against the 96,000 average that we have seen in the previous 20 days. So that's what we are going to discuss today on the show. And if you look at the markets right now, the Nifty 50, it has given up largely all of its gain. From the day's highest point, we have declined nearly 200 points in trade today. But on the if you look at the sectoral indices, on the gaining side, it's largely the Nifty IT index, which is up nearly 3%, followed by Nifty Real Estate, which is up nearly 0.9%. But on the losing side, it's Nifty Pharma, Nifty Energy, Nifty PSU index, which are down anywhere between 0.5 to 1% in trade. But Mahima, when it comes to the small cap segment, what's been buzzing in trade?
Right, so on the positive side, you have counters like Bazaar Style, which is doing very well in trade today, up 14% as we speak. Counters like E2E Networks is also up 10%. JTL Industries up 9%, continues to gain. Anand Rathi on the back of its earnings up 8%, and Patel Engineering also up by about 7%. In terms of where the losers side, you have Landmark Cars, which is down around 8%, Prakash Industries, which is down around 7%, GTPL is down by about 4%, Delta Corp also seeing some pressure, down by about 4%, and you have Themis Medicare, which is also down by about 3%. So that's with regards to where some of these small cap names are concerned. But with that, let's also welcome in as Somit was promising, let's also welcome in our guest in terms of where Eris Infra Solutions stands. We're joined by Srinivasan Gopal, who's the CEO, who's joining us on the show now. Mr. Srinivasan, thank you so much for taking out the time. My first question to you is with regards to the recent order win that has come in. That's with regards to the asphalt order. Plus, you've also signed an MOU with JSW Infra, and this could go ahead and explore around 35,000 crore plus market in this entire asphalt space. Just want to understand as to what are the specific timelines that you're looking at in terms of how the expansion for this particular segment will take place, and what is the kind of capability gaps that you're observing right now that you would want to fix?
So first thing is there is absolutely no organized player for asphalt. I mean, you would have hardly heard anyone taking an asphalt order or doing a joint venture with such a company. So this is a completely unmet demand, which is a huge market for us. And that's the reason why we went into a JV with this company. And we won the recent order, and it's extremely promising. So look at the size of infrastructure that is going to happen over the next 3 years. The PPP alone is around 17 lakh crores. The amount of road kilometers are around some 13,500 kilometers to be done. So there is, simply put, it's a market where there are no organized player, and that's where Eris steps in. So if you look at our entire portfolio, we are only into those products where there is no organized player.
Sir, and if you could just guide us through what could be the margins for this segment that you have entered?
So typically at a manufacturer level in an asphalt business, you make around 20% EBITDA kind of a margin in this business.
Okay, Mr. Srinivasan, this particular entry into asphalt as a whole, just want to understand, is it going to be asset light for you, or is there going to be any balance sheet deployment? How are you seeing the entire expansion happening? Give us some perspective on that.
So basically, other than the working capital required for it, we have always been asset light. That has been the fundamental principle under which Eris has been even born. So we continue to be asset light. We will, whatever the working capital requirement that will be there, that is something which we will supply, and that is going to be like, say, 10 to 15% of the total volume. And so that's what. So the deployment could be around 10 to 15 crores, whereas the top line that can come only from this over the next year could be in the range of 90 to 100 crores.
And if you could just give us some sense on what has been the new order inflow, and what is your target for the remaining part of FY26 and for the next financial year?
So as far as the target and other things are concerned, this is a period where I don't want to give any kind of guidance or anything and respect the law. So it's very important to know what we are doing. We have 3 pillars. There is a contract manufacturing pillar where we buy capacities by deploying just the working capital. So that becomes a completely asset-light model. And if you look at it, 2 years back, we were at 2% of the total turnover. And in the last quarter, you would have seen that we are at a 42% kind of a situation there. And very important is the EBITDA level for a contract manufacturing that we churn out is around 9.5 to 10%. So we are clearly moving from low margin products to high margin products. And also the strategy there is to do contract manufacturing. The other pillar that we are strengthening on a day-to-day basis is our services business. Again, starting from a 1 or 2% of the total turnover, last quarter we were at around 8.5% of the turnover. These services businesses give us a margin of around 70%, and with no deployment of any kind of working capital, zero risk involved. So our business is clearly focusing towards the high profit products, high profit services, and also into unexplored areas where there are no other competitors. Like asphalt, I don't think there is anyone who is there to compete with us in a very organized manner.
So I completely agree that you would not want to share any forward-looking statement given the fact that you are in a silent period. But these are the numbers that you had guided for earlier. For FY26, you guided for a revenue, I believe, of around 1100 to 1200 crore for the full financial year, EBITDA of around 1000 odd crore, and PAT of around 100 odd crore, and PAT of around 60 to 75 odd crore. So,
we stand by all. Yeah.
Also on the margin numbers, 10 to 11, because for the first half, I guess the margins were a bit lower.
So, whatever guidance that we are given in the non-silent period, we will stand by that or maybe better than that. That's all. That's all I can say.
Okay, all right. All right. Although my next question, Mr. Srinivasan, was that you've already achieved 60% of what you did in FY25, and your guidance for revenue growth was around the 35 to 40%. And since you're saying that you're going to do better, do you think crossing that 40% mark is very much possible? Maybe a 50% on the cards by the end of FY26?
I think it's I mean, the results are just round the corner. I mean, I would love to come there and talk specifics at that point in time. Please appreciate that.
Sorry for again pushing you, sir, on that matter. Just one question, if you could answer. Like you entered the asphalt segment, any other such areas that you're looking out for where the competition is low and profitability is higher? Anything that you have planned out?
We keep exploring products on a daily basis, right? So we have close to more than 2,400 vendors, and the product types that we are looking at are significant. The type of products that we will choose, I think it's important for you to understand that we will always choose products which require some element of services also. For example, asphalt. Asphalt is not something that I just transport from one place to another and that's the end of it. There is a requirement of laying, there is a requirement of a service element there, and those are the type of products which earn us more profits. So we will be in those type of categories of products which we will keep exploring. We will explore organic, inorganic, both ways.
Mr. Srinivasan, one last question from my end with regards to where your working capital days are concerned. They've improved, this particular year. But considering that now you're going into the, asphalt expansion, and you said that that's going to be asset light, so working capital for you is going to be, a concern. Do you think that this metric will again go back to that 110 days that you were doing earlier?
Not at all. If you look at our Q2, our net working capital had come down to 84 days. I mean, very clearly, the business that we run are run on ROC, ROE, and working capital management. We will not do any business which will have an impact, a negative impact on these. So even in the asphalt business that we have do, the average credit period there is 60 days. So it is not something which is going to drag. It is something which is going to improve my net working capital days better.
Thank you, sir. Thank you for joining us and giving us the way forward for RS Infra Solution. Let's also welcome in the fundamental guest, Prashant Tapse, Senior Vice President, Analyst with Mehta Equities. Prashant, you heard the management. They are quite confident of achieving the FY26 guidance, and there's a chance of they bettering that also. And given the fact that they're entering such new segments with higher profitability at the current valuations, do you think RS Infra Solution is a good buy?
I think considering the market cap around 1,000 crores and the way the management is projecting their future guidance with respect to the top line and the bottom line looks very, very optimistic for me. The way they are getting a lot of order books, I think currently the order books are around 750 crores to 800 crores. But again, they are targeting to have 1,100 crore top line. So they are also expecting a huge order books going forward into the company which they are into. One thing which I am very bullish is the rise in the EBITDA margins due to the segment change from the contract manufacturing from contract construction materials. So I think that is giving a lot of boost for the EBITDA margin improvement as well. So at the current valuation, with some risk because the PE valuation is almost 60, price to book valuation is almost 2. So with the risk appetite of any investor, the one can have a positive outlook for this company.
Yeah, all right, so that's the view coming in on RS Infra Solutions. But time to take a look at the F&O space. And we have Sharad joining by to help us understand as to how the FNQs are shaping up for today. Sharad, over to you.
Well, it has been a very volatile session, to be honest. In the beginning, we thought that there will be a good up move coming in Sensex and continuing. But then, again, moderation coming in and only IT. That's why we are seeing a really good round of short covering happening. Infosys still leading the pack. Tech, Mahindra also following this. HCL Tech, all of them doing well in the trade. But there are some really heavy weights, Nifty heavyweights, I mean to say the Sensex heavyweights, they will be coming for their results as well. BL, Eternal, these are the stocks where we are seeing a significant sell-off happening as well. And the options data is also suggesting that this might be a range-bound trade over here. Sensex top trades includes ITC, BL and Infosys. And BankX also we see there seems to be kind of a good momentum coming in. Federal Bank came out with a good set of numbers also. SBI also holding the fort. ICICI Bank, however, on the losing side. So a little bit of divergence coming in BankX as well. Remember the FI heavy counters. One side is the private banks, other side the IT banks. IT, that's where the changes are happening. Let's just pull out the stocks and see what's happening there. Long build up in Federal Bank, as I mentioned, and Angel One, that has also picked up. Broking upgrade and a strong numbers coming in from here. Short covering candidates, they include Infosys and Premier Energies. That's what we are seeing a momentum in these counters. And the long unwinding candidates, they include Nalco and Samman Capital. Of course, the metal trade is fizzling out a bit and profit booking is being seen across the stocks in the F&O segment, and short build-up happening, interestingly, for Kalyan Jewellers and Hitachi Energy.
Thank you, Sharad, for that extensive F&O market check. Moving on to our next small cap stock for the day today. It's Devangar Sugar. Now, this company has a market capitalization of 750 odd crore. The stock has been gaining for the last 5th consecutive session, and so far on a YTD basis, the share price of this counter is up nearly 42%. What could be the potential reason behind this move? Let's get in Jasmeet with more details.
Well, Sumit, thank you for that. If you look at the overall stock performance, as rightly said, the stock has been buzzing in trade. And if you look at the reason for the volumes, the high being the stock's performance. If you look at the overall trading volume, it stands at 5 times our 20-day average, and the stock has higher in the 5th consecutive session. In terms of what the company does, company has fully integrated and operated the sugar and ethanol space, while the company also manufactures ethanol using both sugar and a grain-based feed. Now, in terms of the key takeaways, the overall PAT, if you look, the PAT was aided by the other income. Fundamentally, the company has still done a weak performance when you look at the Q2 numbers. If you look at the overall, what helped the PAT number grow further would be the less cost of material and other expenses, also aided the EBITDA. In terms of the H1 performance, what we saw was the revenue was down to 15% and even the EBITDA saw a slight uptick of 8.2%. Overall margins have improved considerably and came at 37.19 versus 29 earlier, and this margin uptick comes on the back of that other income helping the company. In terms of net profit, it's up 75%. If you look at the segmental result, the overall sugar segment is down about 31% on H1 basis. In terms of the overall other segment as distillery and segment revenue is down about 8.6%. So we see a weak set of numbers, but the stock has been buzzing.
Right. Thank you, Jasmeet, for that. Prashant, Devangar Sugar, the stock is up 42%. How have you looked at this counter? Any view here?
I think considering the weak numbers as well as the volume rise, I think there is a good chunk of block deals which has happened in December. I think that's such kind of huge coverage with respect to the new investors getting into this stock, considering there will be good H2 earnings going forward, despite having the profitability aided by the other income. But I think there is some kind of better financial performance coming down the line. That would be the reason why volumes are too high. But considering the valuations, it's still expensive in the market.
And if any other sugar stock that you find attractive?
We avoid actually sugar stock sector. We are very negative on that. But again, if you consider Renuka can be one because of the capacity in the ethanol as a business. Because they're expecting something new in the budget. So ethanol can be one stock one should focus more on.
So that's the view coming in on the sugar pack. But Prashant, with regards to something like a bazaar style, any view there? The stock is up 14% today. We saw that on 14th of Jan there were two top management resignations that we saw. Overall business update also not looking very attractive as it was, but also sitting on a very high base, right? All of these tier 2 retailers. Any view on bazaar style in specific or any of these tier 2 retailers that you probably like right now?
I think because of the correction in the price, there is some kind of comfort level where traders and investors are looking to hunt the stock at this point of time. And even H2 can be a better number for Bajaj style. So that would be again a second opinion where an investor would like to bet on at the current level. So overall, with respect to the retail kind of segment, I think one should focus more on stocks like AB lifestyle. That would be one stock one should focus more on. Again, B2 retail can also be a second stock one should focus more on the fundamental side.
All right, so that's the view coming in on bazaar style. But moving on, a stock that's gaining in trade today is Sterling and Wilson. The company projects 15 to 20% revenue growth for FY27 and has raised its order book inflow guidance for FY26 as well. We've my colleague Varsha joining us to tell us more on this particular counter. She tracks this very closely. So Varsha, take it away.
Yeah, so the stock is buzzing on the strong management commentary that has come, post Q3 FY26 numbers. But let's, revise how the quarter has gone by, where there was a margin pressure. Now this was due to legacy project issues and exceptional legal cost. Now why the stock is up? Because one is the exceptional losses that the company has seen is behind, and quarter on quarter performance has also been sharp improvement, and revenue growth, if you see, remains strong, but the order inflows and order book are at record levels, and FY26 outlook are better than earlier expectations. Onto the order inflow, FY26 order inflow guidance have been raised to more than 11,000 crores. Strong wins in Q3 and robust Q4 pipeline has been expected, and a Q3 FY26, if you see, the new orders were at around 3,000 crore. Total order inflows in 9 months FY26 stand at around 6,926 crore, which provides multi-quarter revenue visibility, while the exceptional loss has been set behind, and that's the reason of 30 crore exceptional loss. That's the reason why you're seeing a downtick in profit. But overall, the strong guidance which is being given by management is one of the reason why the stock is buzzing.
All right, Varsha, thank you so much for getting us those details with regards to where Sterling and Wilson stands. Prashant, your quick view on this one in terms of where the counter stands. It's up, of course, 9% as we speak almost. If it's a buy recommendation from you, do you think it makes sense to make an entry right now?
I think on a technical basis, after long underperformance in the price, I think that stock is trying to close about 50-day DMI. So that can be one reason one should be very much active in the positive side. Again, on the valuation side, still looks very expensive. But the way they have presented their Q3 earnings, that gives some kind of comfort level for a risky investors to continue to hold on the positive view.
Another stock which has been making headlines in trade is Orient Electric. If you look at the YTD basis performance of this counter, in fact not YTD, on the last 6 months, if you look at this counter, it has not moved much. In fact, the stock was down, I believe, the stock is down nearly 25% in the last 1 year. But for the last 2 trading sessions, the stock has been buzzing in trade purely on the back of volume action, strong volume numbers. Today, if you look at the volume numbers, it's nearly 21 lakh shares as against 96,000. That is the average that we had seen for the past 20 days. What could be the reason behind this volume action? Let's try and decode this with Puneet.
Well, thank you for that. It's also the second consecutive day of volume action, as you rightly said. Today, 21 lakhs. On 14 January, it was 12 lakhs. So definitely a lot of momentum seen on this stock. Since the highs in May 2025, the stock was at 243 versus the 174 it now trades at. So definitely a 28% correction from the highs since May of 2025. Now, there are some key aspects that the company had mentioned in terms of commentary across segments that we are putting our focus on. One's, of course, on the premium as well as the BLDC fans. Now, since the mandate, it has been a tumultuous road in the first few months, but now the company is almost contributing 30% from BLDC as well as the premium fan space out of the total domestic ceiling fan revenue as well. So this is, of course, the high margin product. Augurs well for the company at this point of time. The other key aspect is that inventory normalization, which was the key concern after Q2, has also started to happen now, and high utilization at its plant in Hyderabad will boost this further going forward. Finally, in terms of lighting as well as newer segments, now for lighting specifically along with appliances, they have mentioned that the premium lighting segment is driving the high growth as well as market share gains for the company, as well as the LED price stabilization, which was a key concern over Q4 and Q1 of last year, is starting to help and support margins. They've said that appliances are growing steadily. E-commerce is a big driver for that, but they feel that switches as well as switch gears remain largely newer segments for the counter and will see some time to see growth, but the under penetration compared to lighting will help that growth. Finally, in terms of H2 outlook, they had mentioned for FY26 they're anticipating strong demand led by the festive season, so we should see some comments in Q3, and improving retail sentiment along with normalization of channel inventory will be a big positive.
Well, thank you, Puneet, for that link on Orient Electric. Prashant, any view here? Strong volume action that we are seeing for the last couple of trading sessions. Anything that you're hearing here?
I think with respect to the margins, I think that has been already discounted in the prices. I think a 5% margin in the September and the high was almost 8% in March. So I think there is some kind of improvement in the margin in the coming results, plus volume growth with respect to the post-GST sales volume in the consumer electric goods. But one news which I read today morning was Orient Electric got MS Dhoni back to his in the company for marketing, and also I think that is also giving some kind of boost for the branding for Orient Electric.
the capital market play is quite strong in today's trading session, and one of the small cap counter which belongs to this sector is Anaraati Wealth. The company reported, Anaraati Stock Broking, not Wealth actually, they reported its numbers. If you look at the consolidated revenue from operation, that was up nearly 21% on a YOY basis. This came in at close to 250 odd crore. EBITDA increased nearly 32% to close to 101 crore. Margins improved to 40.8%. And if you look at the net profit number, that jumped nearly 72% on a YOY basis to close to 37 odd crore rupees. The company reported strong business performance despite the challenging capital market that we had seen overall in the third quarter of 26. They also reiterated their medium-term guidance of achieving 50-50 revenue mix from broking and the non-broking business by FY27, that is the next financial year. They aim at scaling their distribution AUM to close to 9,500 to 10,000 crore rupees, and they aim to expand their MTF book to a close to 1,500 crore rupees by FY27. So overall, a strong set of numbers that have come in from Anaraati Wealth, and that is one of the reasons why the stock is up nearly 7.5% in trade today. Prashant, any view on Anaraati stock broking?
Positive on the sector with respect to capital markets, the way how Grow has also presented its results last week. So I think that is also giving some kind of boost to the overall capital market. Anaraati, yes, obviously the numbers were really good, valuations very comfortable. I think the way they are moving towards 50-50 in terms of business model, I think it will give a lot of boost for their earning growth. I think very positive at this point of time, and we continue to hold the positive outlook.
That's the view coming in on the entire capital market space. But with that, Prashant, thank you so much for taking out the time and giving us those insights on all the small cap stocks that we discussed on the show today. With that, we're completely out of time on this edition of Small Cap Buzzers. But do stay tuned because Ask Profit is next.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no.
Watching NDTV Profit, and this is Ask Profit, a show that gets all your stock related queries answered. I'm Mahima Vacharajan, with me is Puneet Javeri. Puneet, I think at the start of today's trade, everybody was hoping that it's going to be a good day of trade, but it's proved to be wrong, right? Yeah. If you can see the Nifty 50, it's overall. Let's try to pull up the chart of Nifty 50 and see as to where it's trading at. It's just about flat, up by about 0.06%. The Bank Nifty also almost in line with the Nifty 50 is in terms of where the percentage stands. However, it's doing slightly better where the Nifty 50 is, by about 0.7%. But the mid cap 150 and the small cap 250 is where mid cap 150 doing slightly better, but the small cap 250 clearly under pressure, down by about 0.3%. Let's try to quickly pull up the Nifty 50 heat map and see as to what are the counters that have actually kind of weighed down in trade today. You have counters like Eternal, which is down almost 3% as we speak on the back of the UBS downgrade that had come in. Cipla down 2% as well. BEL, Hindalco, Sun Pharma, Maruti, as well as Geo Finance. All of these counters down in that range of 2% followed by something like an HDFC Life, Asian Paints, Bajaj Auto, ITC, ONGC, Coal India. All of these counters down by about 1% each. But in terms of where the advanced decline ratio stands, let's quickly pull up that and see as to how the advanced decline ratio is panning out right now, and then also pull up the sectoral heat map to see as to how sectors are looking like. Right now you have around 1,000 odd advances versus that of 1,400 odd declines. So of course in the favors of the bears, but slightly in that ratio of 1:1.4. But in terms of where the sectors stand, IT clearly leading that pack, largely led by Infosys. On the back of its earnings, you have your Nifty Bank, Nifty Realty doing fairly well, but on the flip side, Nifty Pharma largely dragged down by Cipla, Nifty Defense, Nifty Energy and Nifty Consumption seeing pressure in trade today. But broader end of the spectrum, Puneet, the mid cap 150 slightly better, but the small cap 250 still under pressure.
Yeah, most certainly. It's actually been a very, very disappointing trading session because we started off with such a huge momentum actually at the start of the trading session, but then fizzled out, as you rightly mentioned. The mid cap, small cap, let's quickly pull that up because largely stock specific broader market action as well. So the mid cap 150 also seeing a similar trajectory to the Nifty 50 where selling has been across the board. The small cap 250 now slipped into the red and consistently been there now. So the BSE 500 is the final one. Before we welcome in our guest to take all your stock related queries, and do start sending them on the numbers that are flashing on the top of the screen. You have Federal Bank post earnings doing very well in trade. Sterling and Wilson Solar also similar one, well Angel One is the third counter. Orient Electric, we discussed in just the previous show as to what's working for the counter, up 6.5%. On the losing end, though, L&T Technology is not participating in the broader IT rally, and CSB Bank as well has been consistently under pressure despite having a very strong show in the quarterly earnings, led by gold loans, of course. But let me welcome in Ruchit Jain, the Vice President, Equity Technical Research at Motilal Oswal Financial Services, as well as CA Tapan Doshi, Research Analyst at CA-Tapan.in. Gentlemen, thanks so much to both of you for joining in today. Let me go across and start with the first query. Now, this is coming in from Vri Murli from Bengaluru, asking on a stock we haven't discussed too much, Frontier Springs Limited. And he's asking, he's entered considering bonus shares around the corner on 22nd of January. Budget likely outlay to have an impact on the railway as well. Ruchit, it's a counter we don't discuss too much. Very good afternoon to you. Any view that you can offer, V. Murli, on the Frontier Springs?
Yeah, hi, very good afternoon. Don't have much view on this because technically as well, we don't track this much on a regular basis.
Tapan, do you by any chance track this counter?
Yeah, see, the overall stock, the quarterly results are okay. And of course, the budget is coming, so little bit of spark is there in this stock. But I think he should hold on the stock. I think, for next 1 year, I think much more focus will be on railway. And again, the wagons and all that, whichever segment they are in, I think that is where the buzz will be there. So I think one should hold on. And overall, stock look decent. He can hold on for at least for 2-3 quarters more.
Okay, all right. So that's the view coming in. But the next question that we have is from Sudha, who's writing us from Hyderabad, asking about Lemon Tree Hotels. She's bought 25 shares at the levels of 155 and wants to know if she can add more, hold or sell from a long-term perspective. Tapan, with everything that's happening, with Warburg coming in, in terms of where Fleur stands, and now Fleur and Lemon Tree will be two separate entities. How are you viewing this development and whether it makes sense to make an entry right now?
Yes, it's a good development. There will be a value unlocking in future whenever this demerger happens. And overall, we know the hotel industry is doing well. In next 1 year also, the things are much more better. So I think she should stay on this stock. Even if she wants to buy, she can hold. She can buy at this level. But yes, fairly long term, 2 years she can wait. Then I think it will give you a decent return. Overall, I am positive on this stock.
The next counter is Paytm. Now, Shrikant from Hyderabad is actually holding this counter at 1,376 rupees per share. He's holding 100 shares, currently slightly at a loss, very close to his current market price. Asking if he should continue to hold or exit at this point of time. Ruchit, on Paytm, it's had a good run over the last few months. Any view?
Well, I would recommend to continue to hold on to the positions. Although last 1.5 to 2 months, we have seen more of a consolidation in the stock. But if you look at midterm charts, then this entire consolidation just seems to be a time-wise correction within a broader uptrend. Whenever the stock is coming around the 1250, 1260, we are witnessing good support base happening over there. So no signs of trend reversal. It's just a consolidation. So until we see any major trend reversal signs, it's better to have some more patience and continue to ride this trend.
Right, so that's the view coming in on Paytm. We've got our first caller for the afternoon edition, of course. Krishnaswamy is calling us. Krishnaswamy, hi, a very good afternoon to you. I believe you have a question on South Indian Bank.
Yes, madam.
Go ahead and ask your question.
I am holding 2,000 shares of South Indian Bank at the rate of 26.88. What I have to do further? I want an opinion on that.
Okay. Do you want a technical view on this one or a fundamental one?
Generally, whether I have to hold or to sell and what to do.
No worries. Okay. I'll take this up with Ruchit then. Ruchit, your view with regards to where charts are concerned for South Indian Bank?
Yeah, I think should continue to hold on. Firstly, the banking as a space have been doing well. Even if you look at last few weeks, last couple of weeks, then overall markets have seen a corrective phase. The banking space has managed to do well. So I think there is a good relative outperformance indicating that uptrend could continue in selective banking names. And South Indian banks recently have seen a good volumes along with a price up move. So I would advise to continue to ride this trend. And on the higher side, you can expect levels around 48 to 50 range, where you can take a review again on this one.
Got the view, Ruchit. The next query that we're getting is on ICICI Pru AMC. Now, it's a recent listing, of course. Company came out with its earnings this week and has done well for investors. So stocks up 7% actually as we speak. Started off the day with 3% gains. And Shiv Kumar was one of the lucky ones who got allotment in the IPO. He's asking if we should continue to hold for the next 2 to 3 years. Should he do that, Tapan? It's a good counter, good earning. What would you recommend him to do?
First of all, congratulations to him for the handsome return. Now, of course, I'm positive on the stock. The company has been doing well, and we know how the ICICI Pro AMC has been operating. I think in future also, mutual fund AUM is going to go up, and still more retail investors are coming into. And of course, there are some SEBI regulation which will restrict their earnings, but I think overall the volume will actually offset that one. So yes, I'm positive. Please hold for next 2 years. It will give you a good return.
Got the view, Tapan. The next one is coming in from Jaipur now. It's a caller now. Raj has a stock query for us. Raj, very good afternoon.
Yeah,
Welcome
good
to Ask Profit. What's your query?
Yeah, good afternoon. My query is regarding the TCS. I'm holding 62 shares at a price of 3251 and currently sitting at marginal loss of 1.5%. So I just, can I average at this juncture, or what should I do as per the long-term perspective?
Raj, any particular reason you like TCS? Is there a fundamental research that you've done? Because the last few quarters haven't been kind to the company in terms of performance. Any particular reason you're holding on to this one?
Yeah, because of this is the in the IT sector, this is the
bellwether in that
giant
sense.
And having a good dividend as well. So that's why I wanted to keep it.
Got it. Tapan,
having it.
Got it, Raj, and thanks so much for calling in. Tapan, Raj has been actually holding TCS at 3251. Should he continue to do so? Buy right now? What would you recommend?
Well, TCS has been not doing well from last 3 years as such, and the guidance is not so great also. Still, I feel next 1 year, 1.5 year will be struggling. They are, transformation is happening towards AI products now. And I feel that, still it will take some time. So my suggestion is better to get out from the stock. He is in a marginal loss. There are much better sectors available, banking, NBFC, defense. I think there much return will be there compared to IT sector. So my take will be to sell at this level.
Okay, all right. So that's the view coming in on TCS. The next question that we have is from Shrikant, who's writing us from Bengaluru, asking about Midwest. He wants to know that if it is okay to buy this from a short-term perspective, as it is near to its 50 to 100 DMA is what he's saying. But Ruchit, you'll be the right person to answer this question. Do you think it makes sense to make an entry right now?
Well, no, I would recommend to keep a wait and watch approach. The stock earlier, and you see then when the prices were going up, the 20 DMA were acting as a support on the minor dips we were getting. But this 20 DMA support got breached during the first or second week of Jan. And today, even the 50 DMA has been broken. So technically, the structure is not looking that positive. Let the stock show some signs of the trend reversal. Then you can take a review. But at current levels, I would recommend to keep a wait and watch approach and avoid bottom fishing here.
Got the view, Ruchit. The next caller now that's coming in is from Bengaluru, and Mohan has a stock query for us. Mohan, very good afternoon. Welcome to Ask Profit, the afternoon edition. What's your query?
I just want to buy this Interact Buildings. Is it the right time to buy now?
Okay, and any particular reason that the stock has popped up on your radar, Mohan?
No, the stock is, I'm busy, buzzing with a lot of things, a lot of orders, and ROC is very good. So I thought this is the best time to buy this share for a long-term view.
Right, and that's good research, Mohan. Let me go across to Tapan for this one. Tapan, there is another listed company now in this space with Interact, that is EPAC Prefab, and has done well for its investors. Has also seen some correction now. Is it a right time to buy Interact? Also, any view if you have for Mohan on EPAC Prefab?
Yes, see, all of this stock, if I see, it's been decent correction, and as he's rightly told, the sector is quite buzzing. And if I see the profitability and all, that is also decent. And even on valuations are okay, so he can start accumulating slowly and gradually in a SIP manner. And even EPAC also, what you told, I'm quite bullish on that also. Yes, I'm bullish on this overall counter. So yes, he can start accumulating at this level, no problem.
Okay, so that's the view coming in on EPAC Prefab. But the next question that we have is from Vidya, who's writing us from Chennai, asking about Elecon Engineering. She's got 500 shares, bought at the levels of 510. Wants to know if she can continue to hold or sell. Ruchit, your view on this one?
Technically, the trend looks negative. The stock has been forming that low top, low bottom structure, which are clear signs of the downtrend. Last time when the stock corrected, in the month of February, it formed a bottom around its weekly 200 EMA, which was, that time around 370. And from there, we witnessed a pullback move uptrend towards 700 levels. So again, the stock has approached the 370 support. Although the 200 EMA this time has been breached, but if the stock breaks that 370 mark, then we could see a continuation of the downtrend. So avoid any kind of averaging, I would say, over here. On your existing positions also, if you get any minor pullback moves going ahead, look to exit on pullbacks.
Got the view, Ruchit. But another caller now coming in from Amchi, Mumbai now. Anil has a stock query for us. Anil, very good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon to you. Okay, I'm holding 600 shares of Crompton Greaves at 275. So should I hold or sell?
And Anil,
And another query was...
Anil, just one follow-up on Crompton. Do you want to hold it for the short term or the long term?
Okay, I can hold for next coming 6 months.
6 months, okay. Let me go across to Ruchit very quickly on this. Ruchit, on Crompton, it's a stock that's been, a kind of a laggard over the last few months. Should Anil continue to hold at 275? What would you recommend?
Yes, it has been an underperformer if you compare to the kind of movement it has seen along with the broader markets. But the only thing is that the stock is now hovering around its monthly 200 EMA, which is a long-term support, and the momentum readings post the recent correction are also in oversold zone on the weekly and the monthly charts. So I think maybe you can wait for some pullback move going ahead. These may not be the right levels to book losses, as if the 200 EMA remains intact. Then you can expect some pullback in next maybe 1.5 to 2 months. So I would say wait for some pullback move and review the stock when you see pullback at higher levels.
Okay, all right. So that's you coming on Crompton. The next question that we have is on LTTS. This is from Udit Guru, who's writing us from Mumbai, asking whether this is the right time to buy into LTTS or not. Ruchit, we did see its earnings coming out in terms of where the overall numbers are concerned. Of course, there was a one-off in terms of where the profit stands because of the labor code, but overall margin saw an expansion of around 120 basis points. So mixed set of numbers is what we saw. But do you think it makes sense to make an entry right now in the counter because the stock is down almost 6% as we speak?
Not really. You can see today Nifty IT's index is up by around 1100 points and the stock is down by 5% because of the numbers, and clearly indicate that there is lack of buying interest in the stock and more of a selling pressure. So usually if the sector goes up, then based on the numbers, the stocks which are showing the leadership shines, stocks such as maybe Infosys is there or even HCL Tech is there, I think they would continue to show a relative outperformance. So I think LTTS should, just because the prices have corrected by 5%, this should not be a reason to enter into. I think even if we see any kind of pullback moves, the stock would largely show a relative underperformance compared to its peers in the near term.
Got the view, Ruchit. We have another query now coming in from Kerala, and I hope I'm pronouncing name right. Tenzuk actually has a stock query for us, and he's holding Siemens Energy 715 shares, and he's holding it as an intraday position. So at 2,328, Ruchit, any quick view that you can give Tenzuk at this point of time?
Not looking that positive. So if it's just an intraday position, then I think we should take an exit from it.
Okay, all right. The next question that we have is from Shankar, who's writing us from Bengaluru, asking about TVS Supply Chain Solutions. Wants to know if this is a good time to make an entry for this particular counter, and from a long-term perspective, what will the targets look like? Tapan, your view on this one?
Well, I'm not too much bullish on TVS supply chain. No, it's been a laggard for a long time, but I think he can wait for one more quarter. I think just a spike coming from last quarter, and I know maybe things may be getting around here. So he can wait for some time next quarter, this quarter result, and if it's not coming, then he should get out from this stock.
Got the view, Ruchit. Got the view, Tapan, pardon me. The next, what we'll start and do is take the rapid fire round now. Tapan as well as Ruchit, you know the drill. Keep your answers on buy, sell or hold so that we can take as many queries as possible in this particular time frame. The question is on LG Electronics first, bought at 1140. Tapan, should he continue to hold?
Yeah, hold.
Okay, the next one is on Granules. Lata from Bengaluru has bought 50 shares with a level of 607. Should he hold or accumulate? Ruchit, your view?
Can hold with stop loss below 570.
Satyan has a stock query for us on Varila Industries. It's a very small stock. We don't talk about it too much. But Rochit, any view that you can offer him? He's bought at 2,200.
Can continue to hold on. Prices are, momentum readings are oversold. Review on pullbacks around 5,000.
Okay, Sudhir from Chennai wants to know if he can go ahead and buy Natco Pharma right now. Tapan, would you recommend that?
Yeah, slowly, gradually, as an SIP manner, he can.
JP Power, Tapan, he's bought at 22, and this is Srinivas from Hyderabad. Should he continue to hold?
Yeah, hold.
Okay, the next one is on Suzlon. Ashok wants to know if he can touch 55 to 60 rupees soon. Ruchit, are you seeing that on the charts?
No, doesn't seem in the near term. I think 44 should be level which it should test first.
Dixon Technology is bought at 13,435. A 6-month view, Ruchit, what does the chart say?
Trend is negative, so look to exit on any kind of pullback moves if you hold longs.
Okay, Hudko is the next one. Deepak from Bengaluru wants to know if he can continue to hold the 150 stocks that he's bought at an average price of 244. He's sitting on a loss of around 4,500 rupees. Tapan, what would you recommend?
Yeah, hold the stock.
Next one's Indian Hotels, bought at 751. Ruchit, a 6-month view again is what Jay Krishnan is asking.
Largely range bound, can hold for pullback move towards 730, 740.
Okay, all right. Okay, L&T is the last one from a long-term perspective. Is it a good time to enter? Your view on this, Ruchit?
Keep a buy on dip approach. 200 DMA is around 3750 would be the good levels to enter.
All right. Okay. So that brings us to the end of this rapid fire round of Ask Profit. Ruchit and Tapan, thank you so much for giving us those insights on the stocks that we had query for. But with that, we're completely out of time on this edition of Ask Profit. But do stay tuned. India Market Close on the other side.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these. Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. We've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hello and welcome to India Market Close. I am Sharad Dubey and with me is Alex Matthews and Hiral Dadia. And looking at the markets, Nifty after a good up move in the earlier part of the day, now of course trending downwards. It's still in the green, up 40 odd points. Nifty Bank, a better setup happening. It's up 500 points in the day's trade. Also, let's look at the Nifty constituents, how they are panning out, and largely is the day for the IT stocks, especially aided by a very strong earnings from Infosys. But now Tech Mahindra has also picked up. That stock is also up 5%, Wipro up 3%, and Shriram Finance on the back of an upgrade coming in is also doing well in the trade. TCS, M&M also in the green. What's not working, of course, is Asian Paints, Maruti, Sun Pharma, Hindalco, Cipla and Eternal. That's where the downtick is coming in. And because of that, there are a lot of divergence trends are coming, especially what the options data is suggesting. But let's look at the sectors where the action is there, and of course IT is doing really well, and the banking space, the PSU banking space, and remember both of these two segments are FI heavies. That means we might see some short covering data also towards the end of the day. Realty is in the green, but what's not working is the consumer durable, healthcare and the pharma space. That is where the selling is happening. Let's just pull out the advanced decline ratio to see what's happening in the broader indices, and largely we can see the declines have increased. This kind of change happened just 1 hour ago, and now we are seeing almost 1446 declines to 1002 advances. But what's happening stock specific, sector specific and the broader indices, Hiral will get us more details. Hiral?
Thank you so much for that. You know, it is a choppy session that we are following, Sharad. Let's pull up the mid cap and the small cap index, because a lot of individual stock specific action is what you're seeing. If you pull up the mid cap, 150. Pretty flat right now as we speak, and if you have to look at the small cap 250 as well, they are seeing cuts of around 0.4%. In terms of individual stocks, if you have to look at names which have been buzzing in trade today, the AMC pack is pretty strong, but apart from that, you have names like IFCI, a 10% up move coming in yet again today. India Mart Nivesh is seeing some strong gains. Federal Bank on the commentary post the conference call, 8.5% after the earnings as well. Angel One reacting to numbers. What's losing out is HPL Engineering on the back of the Kavach setback. In fact, in consonance to this, you have a Kernex, which has got a Kernex Kavach order as well, and that stock
was seeing gains of 7.5%. LTTS, the entire IT pack was seeing some strong momentum. It was only L&T Technologies which was trading under pressure, and that pressure has continued. You have Paradip Phosphates also, which is ruling under pressure as we speak. So a lot of stock-specific action that you're seeing. Small caps absolutely seeing major cuts, mid-cap trading flat. But a couple of factors that you should be watching out for in terms of markets over the next 1 hour. And Sharad is continuing to stand by to tell us about it.
Interestingly, Hiral and Alex, the Nifty Bank, that technical setup is looking really strong as compared to Nifty. Remember, a lot of earnings are expected to come in the next 48 hours or so, and these are the large heavyweight earnings. I'll give you the details about it. Also, let's move on and say that the options data, they are suggesting a range-bound movement, and this is only for today because a lot of volatility is happening. But yes, India VIX is still in the lower levels below the 12 mark. And the short covering likely is there for the IT stocks, which I had mentioned earlier. So these are the important triggers for the market. But the 35% of Nifty weightage earnings would be coming. This includes Reliance, ICICI Bank, HDFC Bank, Tech Mahindra. So it will be very much important. A lot of pre-positioning trades are happening right now. And the overhang of US-India trade completion, it's still remaining there. There might be positive talks about it, but nevertheless, it's still an overhang for the markets. European markets, they have opened in red, and this is the second straight day where they have opened in red. So, of course, there's a global sentiment, little bit of volatility is definitely there. But for Nifty, there are the two important support levels which you should be looking at for, since it's going in the very small range-bound trade. But on the other hand, Nifty Bank, I have given resistance levels because it's showing a good strength. Good long trades can be made. These are the two levels where you should be focusing on. Over to you, Alex.
Well, you said it. It's going to be earnings and more earnings, Sharad, because you have post-market hours. We've got TechM to talk about. We've got Reliance Industries. And then over the weekend, tomorrow is going to be a busy day for all of us because it's going to be ICICI Bank, HDFC Bank to look forward to, RBL Bank, Yes Bank, throw a couple more banks into the mix and a few NBFCs as well. So trade on Monday is going to be quite interesting to watch out for. And of course, let's assume that nothing else comes from overseas in the way of big headlines. But we've erased quite a bit of ground for the benchmark Nifty 50. Let's find out what Tapan Doshi has to say about the results that we've already seen. Tapan, if there's one bright spot today, it is IT, right? And you have Infosys that has really taken the cake, so to speak. Would you say that overall the earnings season, even in the early days, is better than you had anticipated?
See, Alex, when we started, the business updates are quite promising across the sector. Of course, then came the TCS and HL number, which was not so great. HL was a little bit okay, but yes, Infosys numbers are much better. So we can say that yes, short term to medium term, IT sector may go up, but still the big question remains for the long term, correct? And how the AI transformation will happen and how the margins they will able to sustain, because still there are a lot of challenges. So we have to wait and watch. But regarding other banks and all that, I think result whatever coming are much more promising. So I'm quite optimistic about this result season, and because the October to December was a festive season, hopefully lot many domestic sector will do well. Of course, export oriented will be impacted because the trade deal is still not signed. But comparatively last few quarters, I think this result season should be much better, and hopefully the market should go up.
Right, hopefully the market should go up. Let's ask our technical expert whether he thinks that that's the case as well. Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sharekhan is joining us. Kunal, thanks so much for taking the time and happy Friday. But do you think that it's going to be a happy end to the week? And what are the key levels that you're looking for heading into next week?
Good afternoon, Alex. Good afternoon to everyone. See, I think the fall what we got from the all-time highs for the Nifty 26,300, 373 zone towards this low of 25,473. So this is the first leg of the fall what we have got. Now 25,700 was a very important breakdown what we got, and we are currently hovering around that 25,700 mark. So now we are consolidating in this broad range where 25,900 is the resistance and 25,600 is the support zone on the downside on an immediate basis. My sense is we are likely to break on the downside. 25,600 will be taken out and we will be touching 25,300 on the downside. So for me, I require a confirmation below 25,600. Once that is taken out, then we will see more more 300 points fall on the downside for the Nifty index. On the higher end, till the time 25,900, 26,000 is not taken out decisively, the view continues to remain as a sell on rise mode. Bounce should be utilized as a selling opportunity. Once 25,600 is taken out on the downside, expect Nifty to go toward 25,300, which is the next support zone. Now, in today's trading session, Bank Nifty has been resilient. And because of Bank Nifty, Nifty has not been able to fall on the lower end and break that 25,600 mark. So now we will be having in the coming weeks, or I think, in fact, if I'm not wrong, then tomorrow we have the big boys, HDFC and ICICI results. So I think Bank Nifty is holding on, and that is supporting Nifty. Once on the downside, Bank Nifty breaches 59,500 zone, 400 zone, which is the support zone, then Bank Nifty will witness correction on the downside. So Bank Nifty, I would say avoid, don't trade at the current levels. There is no such view. You might hit the level of 60,500, 60,700 on the upside, probably a new high. But again, we would fizzle out from those levels, and then again, we can expect correction on the downside.
Okay, so with this, Kunal, what would your top trading bets be for today?
See, I think my first bet would be on the sell side. What I'll be looking out here is the defense pack. So defense has been looking on the weaker side, and here we have seen some rejection from the higher levels on the defense space, and that is where probably the momentum could go on the sell side. So here the stock which I have picked up over here is HAL. The stock has given us a breakdown below the 20 DMA. So one can go short at the current levels, keeping a stop loss of 4493, looking for targets of 4,300 on the downside on HAL. So that is a sell from my end. On the buy side, what I'll be looking out over here is Tech Mahindra. That is looking strong on the chart, a clean and breakout what we have got into the stock. The support for the stock is at 1645, and one can expect this rally to continue towards 1730, 1750 on the upside.
So HAL and Tech Mahindra, both are stocks from Kunal's side, but let's focus on Infosys. The stock has joined other Indian IT companies to report a strong momentum in the profits in the third quarter due to the important numbers coming in. But to put the entire perspective, especially with the management raising the guidance, we are having Jasmeet with us. Jasmeet, a second large IT company coming out with an upgrade in the guidance. What are the views?
Well, as rightly said, Infosys overall improvement in the guidance just did not take the overall Infosys up, but the entire IT pack, which is buzzing in trade. If we look at the key takeaways from the result, what we understand is the numbers were in line with the estimate. There was slight miss on the profit coming on the back of that one-time expense, which won't be seen going forward. The other aspect is the overall CC growth came at 0.6% versus 2.2 in the previous quarter. Given Q3 is slightly weaker, but the numbers were still in line. In terms of the other upgrade, we see the overall guidance has been upgraded to 3 to 3.5. The brokers are expecting a lesser upgrade, but the management surprised the overall SIP by giving a higher upgrade going forward in FY26, showing a good momentum from Q4 onwards. Lastly, the attrition is down 200 basis points, showing strong up move in terms of the hiring as well as the overall headcount addition the management has done in this particular quarter. If you look at the other key highlights, the management has maintained the margin guidance at 20 to 22 range for FY26. Further, the attrition, as we discussed, is already down, and the headcount addition so far in FY26 stands at 18,000 employees, and management is in line to meet the 20,000 mark going forward. If you look at the other key aspects, the overall CC growth has come in line, it has been changing, and now we see it moving into a positive U-turn. In terms of overall deal wins, they have been taking a slight uptick. If you look at the overall Q2 FY25, they came at 2.4 billion, but now they're at 4.8. It's roughly 56% on QOQ basis. If you look at the overall attrition rate, it has been coming down from 14.4% back in the Q1 to 12.3 in this particular quarter. Let's really go to the brokerages. Brokerages have upgraded and hiked the overall target price for this particular counter. Now, something like a Morgan Stanley, what they say is the midpoint of FY26 guidance will make the Q4 strongest for the company in next 4 years going forward. Further, they also make a note that the guidance upgrade was on the confidence that company can see for the Q4. Now, something like a Jefferies sees the opposite out of it. What they say is the higher guidance reflect what was done in Q3 and not Q4 going forward. Further, they make a note that the overall uptick in the life science was on the back of the new NHS deal, which saw an early ramp up compared to what was expected in the Q4. Lastly, I have Citi also. What Citi says is the North American geography sees a slight downtick, which needs to pick up going forward if the company has to retain its growth. Further, they also make a note, they see a slow and uneven recovery in terms of growth when you look at the vertical as well as the overall sector. Lastly, in terms of what the analysts are recommending for this particular stock, we see that the company has 37 buys and holds are at 12, while the sell is at 2, with a return potential of 7.7%, while this RP comes after the stock up move of 6% that we have seen today.
Okay, thank you, Jasmeet. That was a quick roundup, and it just ought to be a stock of the day with the kind of gains that are coming in on this one. But let's also listen in what the management had to say.
We believe we are uniquely positioned to capture market share across these value pools and emerge as the leading AI value creator for global enterprises. We will share a comprehensive view of our approach at an investor day later this quarter. With a strong performance in this quarter, we have revised our revenue growth guidance for the financial year. The new revenue growth guidance for this financial year is 3% to 3.5% growth in constant currency. Our operating margin guidance for the financial year remains the same at 20 to 22%.
All right, now from the IT pack, there's a stock that is not really doing particularly well, and that's L&T Technology. And that's because the company has gone through a little bit of a restructuring from the perspective of picking and choosing deals, at least according to them. They're being more selective. That's had a bearing positively on the margins, but as a result of which the top line has taken a bit of a knock, and it's come in below the expectations in constant currency terms. Here's what the management had to say. Amit Chadda, who's the Managing Director and Chief Executive Officer of the company, who shared the company's growth outlook for the coming quarters and also the aim to reach a 16.5% EBIT by Q4. Listen in.
Look, we would like to operate in the 16.5% plus EBIT range. And by the time we get to Q4 FY27, we will definitely and surely be in that 16.5% EBIT range. That's our aspiration. We do expect growth in top line in FY27. And the year has to play out, but we are fairly comfortable at this stage to be cautiously optimistic about FY27.
All right, this was both the management of LTTS and Infosys. Tapan, I'd like to get you in on this. Let's just divide the conversation on the mid-cap IT front and the large-cap IT front as well. I know that you're not that bullish in the IT space as such, and you need more numbers and clarity in the budget last time we had spoken about. But Tapan, mid-cap IT or large-cap IT, which would be your pick and why?
Yeah, of course, now mid-cap IT will be a peak now because Sharad, if you see the results, whatever came now for Infosys and L&T, of course, now was not a great result. Infosys also, no, there were good, great deals win. But if you see there is a margin pressure and the renewal, we have to see at what margin they are going to renew it. The problem is now in future, as AI is going to take or what will the impact, that is uncertain currently. Talking about mid-cap, of course, now Coforge Persistent, that will be my call. And I think they are doing much better. Even the margin, you see they are, there I think it is sustainable also, and the deal pipeline is good. So yes, my take will be go for mid-cap IT. That is where the clarity is there, and the future also looks better compared to large cap.
All right. By the way, we spoke with Moshe Khatri, who tracks the space very closely, and that conversation should be available for you to watch on any one of our social media platforms. But effectively what he said is that for the large cap IT space, he's expecting broadly a 6 to 10% growth in top line in the next year. And he's expecting more than 10% growth in FY27 for the mid cap IT space. And he's also expecting an improvement in the margins because he feels like IT is at an inflection point where productivity gains will lead to margin expansion for some of these players beyond, of course, what you've seen as a result of the rupee depreciation. Now, very quickly, Kunal, on the charts for some of these players that are seeing a big run up, would you build on that? Because we've seen the IT sector as a whole move up in the recent past. Would you add to that, or would you take money off the table, if at all?
Yeah, I think for Nifty IT, the level I would be watching out is on the upside where the resistance is at 39,500. And once that IT index breaks out on the upside, then we'll see a good breakout towards the mark of 43,000 on the upside. We are somewhere close to 39,000, so move 500 points on the upside, and then probably a clean breakout could be visible on the IT space. So I'll wait for that breakout to happen, a sustained breakout, and if that continues, then probably IT could be the flavor where the momentum would be very strong on the upside. And from the IT space, the stocks, again, which I've mentioned, I think Tech Mahindra, Persistent, these are some of the counters which are looking very strong on the technical charts.
Right. Guys, the other pack that has been doing incredibly well today is the entire capital market theme and AMCs in particular, right? So you've had clarifications, and Sharad, you were pointing this out earlier today.
Right.
ICICI Prudential, the Narain clarification that came through, the fact that he's going to be there for another 2 years, is a massive relief to a lot of investors, isn't it?
Yes, they trust him a lot as a personality, and ICICI Pru AMC itself, he's the one, the equity segment, how he has managed it, and I think, Alex, you track it more. And not only that, the numbers are also good. The HDFC AMC numbers, right now also we are seeing a rally happening, ICICI Pru AMC. So I think the entire AMC space, it seems like they have forgotten that TER news, which was that it's factored in, that total expense ratio.
I think it was better than expected, because a lot of people in the earlier draft, it was expected to be a cut in the TER to extent of 10 basis points. And now in most schemes, you're talking about a 3 basis point reduction in the TER, which doesn't really affect anybody. So it's a win-win, I think, for everybody. But let's ask Tapan very quickly, out of the entire pack in the AMC space. Now, there are quite a few to pick from, whether you're talking about UTI AMC or on AMC, or you're talking about an ICICI Pru or HDFC AMC, which would you pick?
Well, yes, I'm bullish on AMC, but when you talk about the valuation, I think Nippon AMC, what you talk about, and the Canara also looks quite reasonable. The valuation looks reasonable, because I think the overall the AUM growth of all these AMC is going to go up, and the equity flow is going to go up the way the retail investors are investing. So yes, if you specifically talk about valuation, I think I'm bullish on Nippon and Canara.
Okay, so that's AB, Sun Life and Nippon is what you're talking about as well right now, seeing some strong momentum in today's session. But it's 2:44. By the time it hits 2:45, it's that time when we talk about all the chatter in the dealing room. Somit Sarkar joins in. Somit, what have you found out today? What's buzzing? What's happening?
Well, a host of stocks that remain in focus given the fact that strong volumes and strong action in market that we are seeing in trade today. Firstly, the counter is Sun Pharma, where there's a buzz of a potential acquisition that is in works. Now, what dealers are indicating is that this acquisition size could be as large as nearly $10 billion US. So a big acquisition is something that has been in works when it comes to Sun Pharma. For Polymed, there are sell flows on the PMS desk is what dealers have indicated, and this is largely because dealers are expecting a block deal to come in soon when it comes to Polymed as a counter. For Polycab, that company will be reporting its numbers today. There are some sell flows that we are seeing at higher levels on the large HNI desk. Now, dealers are indicating that revenue and EBITDA on an absolute basis could be much better than what the street is anticipating, but there would be weakness that they are expecting when it comes to the margin number, and hence this sell flow coming in. For HDFC Bank and SBI, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating the shares in both the counters, and delivery volumes are expected to be on the higher side. For M&M, multiple dealing rooms have recommended buy calls to their clients based on technical charts, so keep an eye out for that counter as well. And lastly, when it comes to Cipla, a negative news flow had come in. That's the reason the stock was down in trade, but what dealers are now indicating is that there are some buy flows that they are seeing on the HNI desk at the lower end. Dealers believe that the worst is priced in for Cipla at current after today's downtick.
Thank you so much for that, Somit. These are interesting names that we are watching out for as well. In fact, a quick view I want to take with you, Kunal. I mean, we have HDFC Bank that will be reporting numbers tomorrow, so there is some momentum there. RBL Bank also will be reporting numbers tomorrow. What are charts indicating? Any trade just before the earnings?
I think for HDFC Bank, we have already seen a good correction from the higher level, so there could be a pullback that could come in. But again, utilize that pullback as a selling opportunity. Probably HDFC Bank has already given us a breakdown. And once this support zone of 925 is taken out on the downside, then we'll see further correction towards the mark of 880.
Right.
Okay, so those are where banking names go. Now, a couple of stocks that are trending in trade as well. From that, I would want to pick up IndiaMart Intermesh. Now, Nalanda Capital has actually gone ahead and increased their stake in the company, and that's the reason why you're seeing this kind of momentum. Valuations are reasonable, so that is one of the key triggers why Nalanda probably would have looked at entering at this juncture. And it is one of the largest B2B market or online space as well. The management has said that the leading indicators have continued to improve, and this is what they had mentioned in the second quarter. Yes, there is lack of momentum when you talk about the technical charts. However, the margins have decreased due to higher marketing expenses, and the net addition recovery is likely, but at a historic lower level, at lower levels versus the historic average. So that's what you're watching out for. Very quickly, Tapan, your view when it comes to IndiaMart Intermesh?
Yeah, the stock has fallen a lot from the top, and no, as you told, no, from last few years it's not performing. But now it is coming at a level now where the valuation is quite attractive. If one has to, if one has a view of almost 2 years, I think one can hold this stock, or can even buy this stock at this level, because I think the things will turn around. What the management is quite saying, that the margin stability will be there around 35%. Again, the India SME penetration is going around, and I think product innovation and upselling is happening. So yes, I think at this valuation, nothing to lose. One can hold this stock even at a buy at this level. Wait for 1 or 2 years. I think things will be settling down here.
Now, let's talk a little bit more about one of the capital market plays that is buzzing today as well, Angel One. And this is on the back of a lot of brokerage notes that have come through. Investec also weighing in on this particular counter. It's maintained a buy with a target price of 2,850. And this is now them weighing in on the earnings, because they say it's a strong quarter that should drive upgrades. Better broking realization has been seen. They're also seeing a strong distribution income that drove the PAT beat in the quarter gone by. They have maintained their market share in the broking business as well. And the digital business model is driving operating leverage. They're also saying that they're seeing a strong traction in new initiatives, and these valuations, at least before today, were attractive according to Investec, because that it talks about yesterday's closing price. The stock is up as much as 9% right now. So the question is, on the technicals, what is the view, Kunal, on Angel One? I think a lot of people are preferring this on the fundamentals as well. A lot of brokerage notes coming through positively on this one. But would you trade this at all?
I think on the technical front, what we have in the rally from the listing of Angel One, we have seen a good upsurge from almost the level of 250 towards the mark of 3,500. So if you look at the technicals on the entire wave count, we are in the fourth wave, and now the last wave have started for the stock right now, with the bullish momentum that has picked up from the lower levels. So now, since the March of 2025, the low what it made at around the zone of 1960, 1970. From those levels, the stock has been forming higher lows, indicating a positive stance. And once we break out above this level of 2865, I'm expecting a good rally towards 3,500, 3,700 on the upside. So I think a good buy, but already in the last 3 to 4 trading sessions, the stock has run up from almost 2,300 to 2,800. So there will be some pullback, some retracement. Utilize that as a buying opportunity. The support for the downside is placed at around 2,500, 2,600 zone. So any dips towards the support zone would be a good buying opportunity. For a positional trade, keeping a stop loss of 2,300 on the downside and looking for upside targets of at least 3,200 to 3,500 on the upside.
All right, from Angel One, also other capital market theme plays are also there. Me and Alex were discussing also the asset management companies. We'll give in some more details about it, folks, on this entire setup, why these AMC stocks are actually rallying in trade. And interestingly, I'll get you all the valuations and the return potential also, which are very much important in our analysis. Of course, the first and the most important thing is the earnings. Till now, ICICI Pru AMC and HDFC AMC, these companies have come out with their numbers, and all of these numbers have been very strong. A double-digit growth, a very strong double-digit growth for both PAT and revenue was coming in. The second one is, of course, a strong basket buying seen across the sector, and that's today it's happening. And DIs are actually increasing their positioning also, and that is why we are seeing a significant volume up move also in these counters. The fourth trigger, which is a positive one for the AMC stocks, is definitely that the brokerages, they are turning bullish as well. Target prices are being hiked. And last but not the least, the fifth positive trigger is definitely going to be the total expense ratio news flow which was there, that was of course on the lower side as well, not that much, and that's also factored in. These are the numbers on the screen which you can see for both HDFC AMC and ICICI Pro AMC. Look at the PAT numbers, that's where the magic is there. And ICICI Pro AMC, one important trigger is there, that board has reappointed S. Narayan as the executive director till June 2028 for the next 2.5 years. 12-month forward P, let's see how the valuations are looking like. There has been a 10-15% correction from the lifetime high levels, and right now these are the important valuations. Of course, ABSL AMC is the cheapest amongst the larger AMCs which are listed in the space. Let's see, look at the return potential. These stocks have run up, but out of which still HDFC AMC has a 13% return potential for the next 12 months as compared to ICICI Pru, Nippon and ABSL, where the range is between 8 to 10%. Kunal, I just want to get you on the AMC stocks. Already Tapan is bullish in this space, but Kunal, on the charts front, where is the risk reward ratio looking good? AMC stocks?
Yes, on the chart front, I think Nam India looks quite attractive at the current levels. It has been one of the strongest stock from these sectors, and Nam India looks for a good breakout on the upside. So here the consolidation phase has been around the zone of 850 to say 925 on the upside. I'm expecting it to break out on the upside. The risk to reward ratio is favorable, so one can buy at the current levels, keeping a stop loss on the downside of 850 on a closing basis, looking for the first target around 920. And if that is taken out on the upside, then the stock can go towards the mark of 970, 980 on the upside.
Okay, all right. On that note, let's slip into a very quick break. On the other side, we'll talk about more stocks. We've got some interesting research pieces lined up for you as well. The bull versus bear, as we normally bring you. Do stay tuned.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great
Welcome back to India Market Close. In fact, let's shift focus to what's happening with your covered stocks. Tale of two triggers where you have Kernex Microsystems, which has actually received a coverage order worth little over 2,400 odd crores, whereas HBL has been under pressure, and this is on the back of losing out on a locomotive coverage tender for almost 6,200 units. So clearly, two stocks, different reactions that are coming in on the back of coverage orders itself. Let me go across to Kunal to quickly take his view in terms of what the charts are indicating. Kunal, what's your view?
I think for Cornex, obviously the trend has been on the positive side. A highly volatile stock where the moves are very big, but I think overall the momentum is on the buy side. And once this resistance on the upside is at 1390, once that is taken out, then the stock can go even higher towards the mark of 1500.
Would you say that you should be a little careful, Kunal, when you're trading or looking to trade Kernex, purely because it is 2,300, 2,500 crore market capitalization, about 1,200 crore free float, and it even day before yesterday 13% up move, and today it's moved pretty wildly. So would you say caution is advised?
100%, definitely. I think one of the stocks which I would not like to trade over here. So overall, we have seen positive momentum, but I think very risky. Even if you're trading, trade it with strict stop losses. If that is triggered, then please exit the stock.
All right, Ambrish Baliga, independent market analyst, he also joins in. Good afternoon, Ambrish.
Good afternoon.
Of course, looking at covered stocks we were discussing earlier, HBL Engineering, I would like to talk on that. It's been a kind of, it has taken a beating, and it was supposed to get in larger orders, but some tenders have been cut down. The stock was having a high momentum. It's a high beta stock as well. Any views on this, Ambrish?
Yeah, in fact, they were expected to win some orders, but then since that's not happened, I think that's a big disappointment. Instead, you've seen Kernex getting a very large order. I mean, compared to their revenue, the sort of order which they've got is huge, and because of which we have seen that run up. So HBL Engineering, I think we could see some more downside. I mean, we've been seeing the stock coming down from those levels of 1,100. And in the recent past also, we have seen a decent correction. So I think it can come down to levels of about, say around 730, 740 or so.
Interesting. Okay. Another stock, and you see a lot of stocks in the banking space, Sharad, that are really, really active, right? So one of them is Federal Bank. What a set of numbers, isn't it?
I mean, clearly evitable in terms of the stock as well. And their commentary when it comes to Blackstone coming in as an investor with why they were looking at it, very encouraging. And I mean, there you go, 9% up move.
And look at those numbers, right? I'm going to pull that up as well. And you have the Q3 PAT that was saw 9% sequential improvement. And that was aided by a strong net interest margin, as well as contained operational expenditure, right, during the quarter. That net interest income growing at a strong 9% year-on-year, 6% sequentially. It is an improvement over what was estimated as well by the street. And the NIM improving as much as 12 basis points sequentially in an interest rate falling environment, which is quite considerable.
Asset quality also improved.
Yeah. So they've got a gold loan exposure, don't they?
The CSB banks also had the same story, and now there's a little bit of profit booking coming in. Interestingly, both of them are based out of Kerala.
They are. Why don't we ask Ambrish what he thinks about this pair, right? Because you saw CSB Bank react quite positively to its quarterly update. And what about Federal Bank? So if you look at these two, Federal, for example, going up as much as 9% in trade today, which one would you be more comfortable investing in, though?
I would be more comfortable with the Federal Bank, although we have seen the stock really moving up quite well from October onwards.
The quarterly update.
Yeah, because in October it was about 190 odd, and from there we have seen this big move. Yes, I mean, it may not go up another 50, 70 rupees more from here, but a level of closer to about 290, 300 is very much possible.
Well, that's pretty interesting on that, but let's move on to other sector, that's the pharma sector. Cipla is dragging in 3 days straight today as its arm has halted a key drug production. Let's go across to Varsha to know what's the street view on the stock in our bull versus bear segment. Varsha?
Well, the stock is under pressure now because one of the key drug for Cipla, the partner of Cipla has paused the lenarite production, which has impacted Cipla because this is the biggest US drug that Cipla has. But onto the bull case, the US biosimilar and peptide foray will actually lead to $1 billion sales that the Cipla has target when it comes to the US business. Moving on. They have also partnered with Eli Lilly when it comes to GLP-1 products or your anti-diabetes and anti-obesity products, which will help Cipla's growth in near future. But FY26 Revlimid sales has been phasing out, which will weigh on US revenues, and overall if you see the US revenue for Cipla will be under pressure. Now moving on, if I were to talk about the upcoming launches, so they have multiple upcoming launches planned which will help in FY26 and of course FY27 and FY28 as well. But generic Advair has been approved for competitors, and Cipla had, Cipla was awaiting the approval since 2020, but Cipla didn't get the approval. But Aurobindo Pharma, the company which was acquired by Aurobindo Pharma, got the approval, and Cipla will see more competition. But biosimilar and peptide foray will actually help to cut the dependence on the generic segment, which will also, somewhat I would say help in margin expansion, but in future, in the long-term vision for the Cipla. But H2 margins may soften as Revlimid contribution fades away for the company, and we may see some bit of pressure when it comes to margins overall for second half. So overall, the long-term pictures looks good for Cipla, but short-term picture for Cipla, may have some kind of pressure when it comes to overall company.
Interesting. Thanks so much, Varsha, for that. That's evidenced in the stock price today and in the recent past as well. It's one set of bad news after the other, though. The stock is off the low point of the day. Now, in the financial capital, you've had quite a bit of action in the political arena, because just yesterday you had the BMC elections, and this is something that is now pretty hotly contested. But you're seeing early signs of victory, because the BJP-led Mahayukti Alliance is opening up a clear lead as counting continues in the civic polls. Anuj Raite is joining in from the ground with the latest updates as to who's leading and what's at stake. Anuj, give us some perspective.
The Bharatiya Janata Party-led Mahayuti Alliance has taken a very consolidated and a very strong lead here in Mumbai. Just to put it into some sort of perspective, the Mahayuti constitutes of the Bharatiya Janata Party and the Shinde faction of Sena, and their primary opponents here are the two Thackeray brothers who have joined hands together politically for the first time in 20 years. And all they're fighting for is this coveted piece of architecture, which is the BMC building, a municipal corporation with a budget of in excess of 75,000 crore, which is no less than several states here in India, and which is why this particular building is at stake and has gained so much of political prominence. Again, this particular election result becomes so important because this is the first time since 1997 that the city will have a non-Thackeray or a non-Shiv Sena mayor in all probability. Although Shiv Sena is also in alliance with the Bharatiya Janata Party, but given the fact that the Bharatiya Janata Party is emerging as the strong single largest party in the 2026 BMC elections, it means that Bharatiya Janata Party's final project of having its very own mayor here in Mumbai city will finally be successful. Now, when you talk about the election, the entire campaigning for this election was based on identity issues, right? While on one hand, we had the Bharatiya Janata Party-led Mahayuti talking about, Hindu first or Hindu becoming a mayor of the Mumbai Municipal Corporation. On the other hand, we saw preference being given to Marathis by the Thackeray's, who stated that the city, which is seeing a rising amount of dominance from the Gujaratis and other non-Marathi communities, will see a Marathi mayor and will continue to have a Marathi mayor as well. In between all of these narratives, what several voters complained of was the fact that the local issues got lost. That is why this election again becomes so important, because this is the first time in 4 years that the city will have an elected mayor. It will have an elected corporation. For 4 years, be it the standing committees of Mumbai, be it the BEST, be it the several other important committees of Mumbai, they were all run run by bureaucrats, they were all run by officials without not much accountability. But now people will have their own elected representatives who can be held accountable, be it for the roads, be it for the rising AQI levels, or be it for the state of BMC schools that we find today. So these are of course some positive things to look at, although the campaigning by itself may not have been very positive as far as people's approach or people's choices is concerned. But the fact that, in almost half a decade, it will be the first time that the Mumbaikas will have someone to ask questions to, that is something they'll surely welcome. Back to the studio.
All right, thanks a lot, Anuj, for that. But coming back to the markets, just pull up the Nifty chart and the Nifty Bank chart to see where the market move is happening. And definitely, Nifty is trying to make an attempt, but still in a very small, narrow range below 25,700 mark. And Nifty Bank also looking at these numbers, it's still sustaining. It's above the 60,000 mark. Amrish, I want to get you on this, especially let's talk about the new age companies also. Especially Eternal, Misho, that's where the brokering houses are also turning a bit of bullish growers also there. But amongst the new age companies, especially after the earnings coming in the last 2 quarters and some coming right now also, which are the pockets where you think there is some good value left?
The delivery companies like Eternal, I think, whatever statements have come, although it's not a diktat, whatever statements have come as far as the 10-minute delivery is concerned, if that finally gets increased to that 15 or 20 minutes, the capex and the opex of these companies will come down, which I think should be positive. It's positive both for Eternal as well as Swiggy. And the other one which I'm positive on, again, in the logistics space is delivery, where we've seen a decent correction in the past couple of months. I think the stock has more or less bottomed out at these levels. And looking at the sort of a growth which can be there for over the next 2 to 3 years with margin expansion, in fact, this stock can easily go to levels of about 480, 520, which we have seen recently.
All right, let's talk about Eternal. By the way, we had 2 technical analysts this morning. We had Osho Krishan as well as Kush Bora. Both of them liked Eternal on the charts, and you had a little bit of a wobble for Eternal. It was down about 3%, and then it recovered quite sharply. But it's something that we should check with them, not just right now, but we should check on Monday. Kunal, before we talk about some of the notes that are playing through, there's a UBS note that we'll discuss. On the charts, is there any reason to continue to stay positive on Eternal? It is at the low point of the day right now.
I think definitely the stock has been consolidating in a very broad range, where on the lower end 275, 276 has been the support and 300 has been the rejection zone. Once the stock surpasses 300 on the upside on a closing basis, a good short covering move can come in that could take the stock toward 320, 330 on the upside. So right now it is stuck in a range. If somebody is holding it, continue to hold it with a strict stop loss of 275 on a closing basis. If that is taken out, then probably we'll see further correction coming in for Eternal.
Eternal.
So that's with regards to Eternal. That stock is down 3.5% as we speak. In fact, there was a UBS note that was released as well when it comes to UBS. If you just pull up that one on the screens, and you'll see what they've said is that whether quick commerce margins will turn in FY27 or not, that's the key. They've actually have a buy call, and they've reduced the target price to 375 on Eternal. And Swiggy, the target price has been reduced to 510. For Swiggy, they've reduced their quick commerce margins by 100 to 120 basis points for FY27. And they've cut Eternal's quick commerce adjusted EBITDA estimates for FY26-27 by 15 to 20%. That's what, I mean, and that's, I think, one of the reasons why you're seeing this kind of pressure as well.
Quite considerable, especially in a scenario where you're seeing increasing competition, but at the same time, this is really the part of the business that they're betting on to take them to the next level. A quick view, Amrish, on these 2 counters, if you've got a positive view at all, because I think this is one sector or space that has so many people divided. The traditionalists will say that they're not really convinced on the model, whereas everybody who thinks about the TAM, if you can call it that, they say that this is the business to be in. What do you think?
Absolutely. I mean, look at the sort of growth which has happened in the past, especially the past 2 to 3 years. Yes, I mean, competition is bound to rise, but then again, it's going to be that 80-20 game. Even in this space, I mean, the top 2 or 3 will have that 80% of the market share, and the balance will have 20%. And clearly, Eternal would be one among those two or three which will have that 80% market share. So if you're talking of the next 2 to 3 years, I clearly see this side of the business really booming. And like what I was saying earlier, if the 10-minute thing does not remain and the time limit increases, I think it is extremely positive for these companies, because the amount of capex which goes into a 10-minute delivery, is much higher than the capex which goes into a 20-minute delivery, because your total space expands, the number of dark stores you require comes down quite sharply, so your OPEX comes down. So you'll surely be getting higher margins going ahead.
Interesting take coming in a Profit exclusive. IT department has launched crackdown on food adulteration. This is largely dairy related companies. That's what sources are talking to NDTV Profit, and they're saying Infosys action against these companies. 12 food and drug companies are under the IT scanner. It'll be pretty interesting to see. Let's just pull up any listed players in case something is happening. Dodla Dairy, the stock is definitely down in the day's low as well. And also let's get in Hatsun Agro and all these Parag Milk Company, where we'll have to see whether this is actually happening on the entire sector or this is just the sentiment, but we'll get in more details regarding this. Moving on to another segment, the Profit Intelligence segment, that's in where the commodity prices are rising significantly for the consumer durable companies, as they are stuck in a catch-22 situation where they need to take a call whether to raise the prices or not. Soumit is here in this Profit Intelligence segment. Soumit, commodities and consumer durables, what's the correlation and what happens now?
Well, a very important and significant correlation is between consumer durable companies and commodity prices. Commodity prices have run up significantly. Copper and aluminium are two key commodities which are majorly used in most of the consumer durable items, including air conditioners. And if you look at the copper prices in the second half of FY26 so far, they are up nearly 28%, and aluminium prices have increased by nearly 20%. So now there are three key questions in front of consumer durable companies. First, will companies take price hike to maintain the margins? Second key question is, will price hike impact demand? And the third, given the competitive intensity in the market that we are seeing, can companies even take a price hike? So first, let's look at the factual data that we have. Now, copper and aluminium form major part of the raw material cost for fans. Nearly 50 to 52% of the raw material cost is copper and aluminium. For electric motors, 35 to 38%. For air conditioners, 35 to 37%. For lighting products, 20 to 22%, and for main circuit board, which is present in largely all of the electronic items, it's nearly 20% of the raw material cost, that is aluminum and copper. Now, which are the key companies that stand to get impacted? It's Crompton Consumer, Havells, and Voltas. Now, what we have done here is we have tried to see the comparison of the last year when we had seen such kind of a surge in commodity prices. What was the margin impact back then? And what we have tried to do here is in FY28, in FY18, if you look at copper and aluminium prices, they were up nearly 26% and 28%. Now, the impact of this increase in commodity prices was something that was visible in the next financial year, that is FY19. In FY19, the margins of all the three consumer durable companies, that is Crompton Consumer, Havells, and Voltas, were down. For Crompton Consumer, it was down from Let's move on to what could be the impact in FY27 because of this. As per gross, if you get the earlier graphics, as per Goldman Sachs, for FY27, the impact on gross margins for Crompton Consumer could be 315 basis points. For Voltas, it could be close to 290 basis points. And for Havells, it could be close to 90 odd basis points. So what's the catch-22 situation right now for these consumer durable companies? Taking price hike could impact demand, and not taking price hike could impact margin. So that's the catch-22 situation that consumer durable companies are present.
Absolutely. You don't know which side of, the boat that they should be hanging around. Thank you, Soumit, so much for that. In fact, Amrish, how are you looking at this? This is interesting when you're talking about companies like Crompton, Havells, Voltas. Take a price hike, don't take a price hike, where to go? How would you look at it?
I don't think they will have much of a choice but to take a price hike. But I would say those who have still have a decent inventory in the system would be the ones which will benefit because that's at at a lower cost. But the way I see it is whatever benefits had come because of GST cut in like September, I think a decent amount of that will get reversed. And I suppose most of these are not even luxury. They are those items which are required for daily use. So I don't think it will have too much of an effect on the demand. Yes, once the price hike happens, there'll be some small reduction in demand. But if you're talking of longer term, I don't think it'll affect much.
Okay. All right. Let's talk about earnings. And we already mentioned to you at the start of this program that it's going to be earnings heavy post-market. Reliance Industries is one to look forward to. You will also have over the weekend several large banks that will report. But let's talk about the key factors to watch. And you'll have to divide this into the key businesses as well. Somit Sarkar with us to talk about what you should watch out for. Somit, for the traditional business and then for the new businesses as well, what are the key numbers to watch out for?
So when it comes to Reliance, if you look at the numbers are expected to be largely stable on a sequential basis. Not much of an excitement is what is there on the street. Revenues are expected to be up by nearly 1% on a sequential basis. EBITDA number is expected to be higher by close to around 4.6%. Margins are expected to come in at close to 18.7%, and the net profit number that could be higher by around 6% sequentially. But if you look at the segmental data, firstly, the retail number, there the revenue is expected to be up 3%, EBITDA is expected to be up 9%. Now this growth, whatever we are seeing, there is a slowdown compared to what we had seen in the previous quarter. Now there are three reasons behind this slower growth for the retail EBITDA of Reliance Industries. Now this is because of a high base. Last year, the festive season was purely in the third quarter, but this time it's spread across 2 quarters, Q2 and Q3, hence this high base coming in. And then there would be losses when it comes to the JioMart quick commerce segment, and also because the Reliance consumer product business was demerged from Reliance Retail, and hence because of these three factors, the retail EBITDA is expected to be lower, or the growth is expected to be lower on a YY basis. When it comes to the O2C EBITDA, that is expected to see a jump of nearly 6.5%, which is the biggest jump that we are seeing in the last 4 quarters, and this is largely because of higher or better refining margins and because of the weaker rupee that we had seen. And when it comes to the exploration, oil and gas exploration segment, there the EBITDA is expected to be lower by nearly 12%, and this is the biggest drop that we are seeing in the last 15 quarters, largely because of lower realization and lower volume numbers. Now, if you look at the telecom business, that is Reliance Jio, revenue is expected to be up 3%, EBITDA is expected to be up by around 3%, margins are expected to come in at 54.6%, and the net profit number that is expected to be higher by 2%. But the key number, that is ARPU, is expected to be up by just 0.8% to close to 213 rupees. Now obviously we are seeing this growth coming in on the ARPU number for the 6th consecutive quarter, but the growth is the slowest in the last 6 quarters. Now this growth is largely on the back of the tariff hikes and some customer upgradations that we had seen in the 3rd quarter. Overall, numbers are expected to be largely muted for telecom business, and the growth in the subscriber base is largely on the back of new subscriber additions on the broadband segment. Now the key things to watch out for from Reliance Industries earning would be their commentary on crude sourcing strategy, given the fact that a lot of back and forth has happened when it comes to Reliance Industries sourcing Russian crude. Apart from that, what is their margin outlook when it comes to the refinery and the petrochemical business, how growth is picking up in the retail segment, what are the commentary coming in for telecom tariff hike and Jio IPO would be important to track from Reliance Industries earning.
Reliance Industries, it's going to be interesting to watch out for. Pretty flat on the day of the earnings. Thank you so much for that. Kunal, what would your BTST, STBT calls be? I mean, I know it's a holiday tomorrow, but anything you're looking forward to from a Monday perspective, because it's an earnings heavy weekend as well.
Yeah, I think from this perspective, I will again go from the space of IT. I think IT still looks strong, and your Wipro would be a good BTST trade where the stock has given us a breakout above the 20 DMA. So one can go long over here with a strict stop loss of 262 on the downside, looking for targets of 273 to 275 on the upside.
All right, apart from Wipro also, I think let's just get in the numbers, what the street is expecting. And largely the revenue is expected to rise by almost 3% on a sequential basis. And of course, the key monitorable will be their guidance going ahead. Already the larger names, especially HCL Tech and Infosys, have upgraded their guidance. So this will be very much important. And remember the Q4 guidance which the company gives, that's where the buyback announcements or acquisition might be in focus. AI, BFSI and European geographical segment, that's where the focus would be. And the upward guidance is ranging between 0.5% to plus 1% on a sequential CC growth. So that's pretty much important, Alex, on the Wipro front. But I think Tech Mahindra is also doing well.
Yeah, TechM is certainly something to watch out for. And the revenue is set to rise as much as 1.18%. But I think more than anything else, like in the case with the other players as well, you will watch for one outlook. You will also watch for the margin picture, right? And whether there is going to be an expansion. It is expected to expand by as much as 35 basis points. And again, to reiterate what Moshe Khatri was saying this morning, IT companies are at an inflection point. There is that improvement in sweating of the assets, or a better efficiency that is leading to some of this. Of course, the rupee depreciation doesn't hurt.
Yeah,
right?
I mean, the rupee depreciation doesn't hurt at all. In fact, talking about the rupee as well, it's already hit that 91 to the dollar mark right now. I think
it's a one-month low.
One-month low that you're talking about. So that is something that you need to consider as well in terms of the action that's happening on the Indian currency. We're currently looking at 90.84, but in intraday, it's actually hit that 91 mark already as we speak. Amrish, any views when it comes to Wipro and Tech Mahindra? It will be reporting numbers today.
No, I don't think it'll be very different than what the others have reported. And what you're talking about, the currency. Yes, I mean, currency benefits just for a quarter, maximum 2 quarters. Beyond that, it gets normalized. So that's only sentimentally positive. I mean, I would still be a bit cautious as far as the overall IT space is concerned, at least for the next 1 or 2 quarters. I mean, I think the commentaries have been positive, and that's what is working in favor of the ones which had come out with the earnings. But then whether the commentary really turns into black and white over the next couple of quarters is to be seen.
Okay, all right. So that's a view on TechM as well as on Wipro and on IT in general. By the way, we were speaking, and so ultimately it's becoming 2 big themes or 3 big themes. 1, we were talking about IT. 2, we were talking about capital market plays. 3, we were talking about a few of these banks, right? Yes. Because the PSU banking space, it's been incredible. But there's also Citi that has weighed in on Grow. We spoke about Angel One a short while back. Let's talk about what they're seeing on Grow as well. They've maintained a buy with a target price of 195. Where's the stock right now? It's 5% higher, at very close to 172 or thereabouts. So still further upside based on what Citi is saying. They're saying it was a solid Q3. It was characterized by market share gains across segments, but they're also seeing momentum in the margin trading facility space that Grow is pretty active in. They're seeing a gradual realization of revenues from their new segment, and they're seeing that a scale-up of wealth and product diversification set to continue. Jefferies also has maintained a buy and hiked its target price to 195 from 190 earlier, and similar statements are being made. They're saying that Grow's product velocity model is similar, very interestingly, to Robinhood, something that you might be familiar with if you're watching the space. Amrish, you want to weigh in on Grow and whether valuations, according to you, are comfortable at this point, or would you give it a miss if you haven't bought yet?
No, if you don't have it, then I would surely suggest that one should give it a miss because, yes, I think it's extremely good. I mean, the way they have grown. But at the same time, when you look at the valuations are also decently expensive. And we should remember that there was a huge amount of placement in the past 1 to 2 years, which has happened with the HNIs. And all those shares will be free to trade in the next couple of months. So remember that there'll be a decent amount of, liquidity coming into the stock in the next couple of months, and most of them have bought at much lower levels. I think the last deal which had happened was at about 134, 135 levels. So quite a few of them would surely come to sell. So we should keep that in mind.
But one more capital market themes stock needs to be discussed, and that's actually doing well. I can't help it, but we have to cover them. Jefferies on 361. They have maintained a buy rating. Target price is 1410. Very bullish report coming in when it comes to the Q3 earnings. They're expecting a 20% CAGR in core profits for the next 3 years. And Citi also, they have maintained buy rating, and the target price has been hiked to 1700. Now there's a re-rating potential expected. and an all-round performance is there. That's why the flows are also important, and the productivity benefits, that's also going to aid the margins going ahead. Kunal, I want to get you on this 361 WAM. A good strong performance coming in, trying to come down a bit from the day's trade, but how are the medium-term setup looking like?
I think definitely the medium term looks very attractive for the stock. 1130, 1150 has been a good demand zone for the stock. So any dips towards the support, the immediate support, if you look at the gap up, what it had opened around the mark of 1165, 1170, I think that would be a good area to enter into the stock. And one can keep a stop loss of 1120. I'm expecting a positional target somewhere close to 1260, 1280 on the upside.
361 as well. Amrish, tomorrow you have HDFC Bank, you have RBL Bank, Yes Bank, and ICICI Bank that will be reporting numbers. What is your expectation from a Monday perspective as well? Because basis expectation, it's going to be interesting how Bank Nifty actually looks like on Monday.
Yeah, in fact, I am waiting for some surprise from Yes Bank as well as RBL Bank. I think those are the ones to be looked at. HDFC, I don't think, it will be more or less flattish. ICICI Bank also should be flattish.
All right, thanks a lot Ambarish and Kunal for your time, giving both fundamental and technical perspectives. Of course, we are moving towards earnings heavy weekend. So we'll be, of course, focusing on large players. And today itself, Reliance will also be coming out with its numbers along with Wipro and Tech Mahindra. But largely, it's been a range-bound move. We have seen a bit of correction coming in, but still Nifty holding near that 25,700 mark. But Nifty Bank's technical setup is good. It's still maintaining that 500-point up move. Let's go and see what are the stocks in the Nifty constituents which are buzzing. And of course, there's no thought that the IT has done well, and Infosys is also seeing a much more good up move. It's up almost 6%, Tech Mahindra up 5%. So you can see it's the day for the IT, but yes, HDFC Bank is holding the fort as well. Amongst the losers, if you look at it, Asian Paints, Hindalco, Cipla, Geo Financial and Eternal, that's where the cuts are coming in of more than 2%. Little bit of momentum in the India VIX also. But nevertheless, the options data is still suggesting a range-bound move, and some positions are being taken place ahead of the earnings. Let's see the sectors where the move is happening. And PSU Bank is holding up. We have already discussed about the IT front, the banking and the oil gas segment are doing well. The rest, all of them are in the range. But the healthcare, consumer durables and the pharma segment, that's where the selling is more. Advanced decline ratio, let's pull up and see what's happening. Largely we see it's almost 3:2 in the ratio of the bears. That means the mid cap and the small cap indices, that's where some kind of pain is there. Remember, for 2 days, for the last 2 trading sessions, there's a good value buying in the small cap space. But now, let's just figure out how the mid cap and the small cap indices have fared. And before that, we'll just show you the market closing. We are about to close the market. But yes, the rupee was under pressure near that 91 mark. And that is where the concern is definitely there for the street. But yes, mid cap is closing in the red. Small cap, let's get them in. That's where the concern again comes back after 2 days. And let's just pull up the BSE 500 constituents to give you the entire picture of the stock-specific move. Federal Bank, that stock is up 10%, a very strong up move coming on the numbers. India Mart, there's a Nalanda Capital entry. And also, apart from the IT names, LTTS on a weaker earning. That's where we saw the stock. Profit booking in MRPL, Embassy Development, reversals are happening, and Hitachi Energy, this has seen sustained selling pressure. So these are the important stocks in the BSE 500. Let's see what are the stocks to focus on, especially its earnings heavy weekend. We will be busy as analysts. India Forex numbers, US industrial production comes, but of course the big one is definitely going to be the Reliance numbers, and these are the China GDP numbers. The stocks next week, these are the stocks which will be exiting the anchor lock-in. But the earnings post-market, that is where it will be very busy for everyone, including us. And also the work starts in Saturday also. For tomorrow, there are just like large banks coming in, HDFC Bank, ICICI Bank, you have Yes Bank, you have RBL Bank. All of these banks will be coming out with their numbers, and look at it. Our banking analysts will be very, very busy, and of course our team as well. And other companies also for next week. This includes BHEL, CEAT, Havells, Hindustan Zinc, as we get into the thick of the earning seasons in Q3, and that's what matters more than macro. in the coming days. Also, the IPO listing for Bharat Coking Coal would be there, and especially Coal India is something which you should be focusing on. Very strong subscription numbers also coming in. So these are the entire cues for the next week and how the market is positioned. That's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express by Himangshi.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets are fared today. So benchmarks have erased the Friday morning cheer in a late pullback with Nifty ending below 25,700 levels. Nifty has ended largely flat for the week while Sensex also managed minor gains for the week. And sectorally, if we talk about, so IT stocks have seen some strong buying there in trade today, as the sentiment improved on the strong Infosys outlook, and on the losing side, pharma was the top sectoral drag today, followed by energy and metals. In fact, Infosys has raised its full-year revenue guidance to 3 to 3.5%, which is up from the earlier 2 to 3%. Now, after delivering a largely in-line Q3 performance, But profits are, taking a hit, down nearly 10% sequentially as the company absorbed a one-time 1,289 crore impact from the new labor codes, dragging the bottom line. Despite the profit miss here, Infosys has reported strong deal momentum with large deal TCV jumping 56% quarter on quarter to $4.8 billion, which is one of its strongest quarters on this front. And Cipla has been hit by two major disruptions. First, that its subsidiary has paused production of lanreotide, which is a key peptide drug, and with manufacturing halted, the resupply is now pushed out to the first half of FY27, and this is creating a long supply gap. Second is Pharmatin's facility in Greece, which is a partner in Cipla's supply chain, has received an FDA form of 483. So inspectors have flagged data integrity issues, and this is raising the compliance concerns. So together, these manufacturing and regulatory challenges pose near-term supply pressures and also a potential risk impact for Cipla. And viewers, AMC stocks are seeing some sort of strong traction today. This is boosted by robust Q3 numbers from both the HDFC AMC and ICICI Prudential AMC. So the stronger than expected earnings have triggered broad-based basket buying across the asset management space. Now, at the same time, domestic institutional investors are steadily increasing their positioning, and this is also signaling rising confidence in the sector stability and also the earnings visibility. Brokerages too, in fact, are turning firmly bullish, saying that the worst of the margin pressure is behind the industry, and importantly, the market believes that the impact of lower, tier norms is largely factored in. I beg your pardon. Viewers, Nalanda Capital has made a notable move in IndiaMart Intermesh. This is scooping up a 1.86% stake for 236 crores, and this is signaling renewed institutional confidence in the B2B marketplace. So the stock's valuations have sharply cooled, now at a P ratio of 22.5 times, which is compared with the peak of 90 times in 2021, making it far more reasonable for long-term investors. And IndiaMart continues to deliver strong return ratios with ROCE at 34% and also ROE at 29%. And this is backed by a solid 29% PAT CAGR over the last 5 years. And as the largest online B2B marketplace in India, the company remains well positioned. Let's look at some brokerage notes now. Morgan Stanley has maintained its equal weight stance on L&T Technology services while cutting the target price to 4,420 rupees. The brokerage has said that the company's recent strategic portfolio running is likely to moderate growth across FY26 and FY27 as the LTTs, recalibrate its mix of offerings. So, however, Morgan Stanley expects the pace of, margin improvement to pick up, and this is supported by operational discipline and also sharper execution. They have also highlighted that the company's medium-term margin aspirations remain intact despite the near-term growth headwinds. Next up, we have Federal Bank that has delivered a strong Q3 performance with robust NII driving a clear, earnings beat and also overall growth coming in better than expectations. Profitability, if we look at, remained healthy, and this was supported by strong, NIMs and also a solid uptick in the other income segment. And the net interest margins have improved, 12 basis points sequentially to 3.18%, while the other income has jumped 20% year on year, and this is giving meaningful push to the bottom line. So cost discipline has also showed through, with the cost to income ratio easing 12 basis points to 53.9%. And on the asset quality front, if we look at, provisions have declined 8% quarter on quarter to 330 crore rupees, and also slippages have been moderated. In fact, brokerages are turning increasingly upbeat on growth outlook, with both Citi and Jefferies maintaining their bullish stance. Now, Citi has a buy rating with a 195 rupees of target, and this is highlighting strong, traction in the MTF momentum, also improving the client activity and also steady progress in wealth and product scale up, while also retaining a clearly, constructive view on the platform. Jefferies is equally positive, and they've also, assigning a 195 target and also pointing out that new ventures are ramping up faster than expected. They also believe that new businesses will be a major future growth drivers, and also they've noted that gross product velocity model mirrors Robinhood's approach. So Jefferies is also factoring in better operating leverage and raises FY 26-28 EPS estimates as well. Viewers, Investec is staying firmly bullish on Angel One, maintaining its buy rating with a target price of 2,850 rupees. Now, the brokerage says that a strong quarterly performance should trigger earnings upgrades with better broking, realizations, driving a clear PAT beat here. Now, Angel One has also maintained its market share in the broking business, and they are underscoring the strength of its competitive positioning. Now, Investec is highlighting that the company's digital-first operating model is now delivering meaningful operating leverage, while new initiatives are also showing strongly early traction. Next up, we have Kernex Microsystems that has scored a big order win, bagging a contract worth 2,465 crores. And the order is for the supply and installation of 3,024 sets of onboard Kavach equipment, also strengthening the company's presence in railway safety space. So the project will be executed within 12 months, and this is marking one of Kernex's, fastest rollouts for such large-scale deployments. And also, what makes this, even more significant is the company's scale. So Kernex market cap as of January 14 stands at 2,128 crores, meaning that the order size actually exceeds the company's valuation. And since we are talking about, the orders, let's also talk about a stock that was under pressure due to an order. Now, HPL Engineering has missed out in the latest round of locomotive Kavach tenders, losing the bid for 6,300 units. Now, the company was edged out to, due to the lower competitor pricing, which has tipped the balance in highly competitive round of evaluation. Now, following this outcome, HBL has now revised the total demand estimate for Kavach-equipped locomotive units to 12,129 units, and this is reflecting the scale of opportunity still ahead in the nationwide deployment pipeline. Viewers, next up we have SW Solar that is soaring, after posting a strong Q3 performance there. Revenue has jumped 13.9%, which is nearly 14% to 2,082 crores versus 1,837 crores. Even though EBITDA has slipped, 4.8% to 66.9 crores, and this is pulling the margins down to 3.2% from 3.8%. The bottom line, however, showed stress, and the company has reported a net loss of 2.8 crores compared with the 14.8 crores of profit last year. But sequentially, if we look at, the numbers show sharp improvement, and this is backed by record order inflows and also the highest ever order book. Next up, we have Patel Engineering that is in focus after ace investor Vijay Kedia picked up a 1.01% stake, and this is also signaling renewed interest in the company's growth trajectory. Now, operationally, if we look at the numbers for H1 of FY26 show a mixed but improving picture. Revenue is up 7.2%. This is reflecting steady project execution. However, EBITDA has dipped 2.1%, and this is also indicating some pressure on the operating margins front. Now, on the positive side, if we look at profitability has strengthened meaningfully, with net profit rising 20.1% in the first half of the year. Next up, we have KPI Green that has secured a major solar order. Gujarat, bagging contracts for 534 megawatt solar power project. Now, the mandate covers both supply of goods and also comprehensive on-site services, reinforcing the company's execution capabilities in the large-scale renewable project. Now, the order strengthens KPI Green's position in the rapidly expanding solar energy space and also adds meaningful visibility to its project pipeline. Now, since we are talking about green energy, let's put the spotlight on a renewable energy counter. Waaree Renewable has delivered a strong Q3 driven firmly by robust execution, leading to its highest ever revenue, EBITDA and PAT. The company has maintained its EBITDA margin guidance at 18 to 19%, and this is supported by disciplined project delivery. The unexecuted order book stands at 2.92 GWP, giving strong visibility for future quarters, while the company has also expanded into BESS and data center solutions. Now, broadening its clean energy footprint. Financially, if we look at, revenue has surged 136% to 851 crores. EBITDA has jumped 121% to 159 crores, and net profit has risen 125% to 120 crores, even as margins have moderated slightly to 18.7% from 20%. Next up, we have ME Photovoltaic that has posted a strong quarterly performance with growth driven by its capacity expansion and also better utilization levels. Now, both of which have supported a sharp scale up in operations. The company is set to deliver 6.3 gigawatts over the next 12 to 18 months, giving strong visibility for future revenues. Financially, if we look at, it's been a standout quarter. Revenue is up 118% to 1,152 crores, while the EBITDA has risen 105% to 413 crores. Margins came in at 35.9% versus 38.2%, still very healthy despite a slight dip there. Now, Zydus Life Sciences has received a key approval from the US FDA for its Electrom Bopac tablets, now which is a drug used in the treatment of blood disorders, and the therapy works by stimulating the bone marrow cells, helping increase the platelet production in patients with low platelet counts. Now, the tablets will be manufactured at Zydus' facility in Ahmedabad, and this is strengthening the company's US portfolio. So the drug is a significant opportunity, and it also enjoys annual US sales of about $1.26 billion. And India and the European Union are edging closer to clinching a long-pending free trade agreement as top EU leaders are set to arrive in Delhi for Republic Day celebrations. The visit is not just symbolic, it's strategic. Negotiations on the India-EU trade deal have made significant progress, with 20 out of 24 chapters already closed. Officials are saying that only a few tough issues remain, and the final push could happen during the summit on January 27. Now, Commerce Minister Piyush Goyal's recent Brussels visit is also being seen as a decisive step. Now, if sealed, this could, reshape India's trade ties with its largest export destination. And viewers, we are getting to know that Wipro is out with its quarterly results, and let me just first take you through the numbers there. So EBIT, if you look at the revenue, which is up 3.8% at 23,556 crores versus 22,000. If you can go back to the revenues, yes. So versus figure is 22,697 crores, which is probably in line with the estimates there. If you talk about the net profit numbers are which is down 7%, at 3,119 crores, and this could be on the back of the new labor codes. If we look at EBIT, so this is down 5.1% at 3,491 crores versus 3,681 crores, and margin stands at 14.8% versus 16.2%. So there's a slight dip there on the margin front as well. This could be because of the net profit that is down and seeing some pressure because of the labor codes. My colleague Jasmeet, who tracks the sector very closely, is joining us in the studios today. Jasmeet, over to you. What are you making of the numbers of Wipro?
Well, on the first view, we see a weak set of numbers coming for the company. We see the margins have taken a downtick of 140 odd basis points, and further the EBIT also is down about almost 5.1 odd percentage. Well, this is interesting to watch out, given the rest of the IT pack have already reported their extra additional new employee cost onto the overall profit, but this particular company has added that cost in their employee expenses and then taken the overall hit. So that's why we see the hit in margins coming up, because the new labor code expense is added in the employee cost, and we see the margin down. But in terms of net profit also, we were expecting a healthy rise of 3% net profit. Even that is down on the similar cases of new labor code. If you look at the other key aspect, the deal wins for the overall company stands at 3.3 billion, which is turned out to be healthy in this particular quarter. If you look at the overall estimates, we were estimating a rough deal win around the same range. range. Now, what would be the interesting aspect is to see the overall IT revenue in CC terms. We're expecting an overall uptick of 0.5 to 0.6 odd percentage, but the IT CC revenue is up by 1.4 odd percent in this particular quarter. In terms of other reported CC terms, it's up 1.2 odd percentage. We see a healthy growth in terms of the CC revenue. All in all, we see a mixed set of numbers at this point in time. It's a wait and watch for management community to get more understanding of what we make out of the results.
Yes, Jasmeet. So, how do you see the guidance there, change going forward, as some of the brokers were expecting an upgrade there and few were expecting no change. So, what do you have to say on that front?
Well, on the front of guidance, we see a really positive up move for the company coming in. Last quarter, the company had reported negative 0.5 to positive 1.5. But in this quarter, we see a guidance update coming from the management where they expect 0.2%. The overall guidance is in line with what the brokerages were expecting. Something like a Nomura and Citi were penciling in this kind of brokerage update, and it has come in line with what they were expecting. So that's something interesting to watch out from the negative overall momentum. The Wipro has itself moved into from a negative guidance to a positive guidance going forward, which is very interesting given after Infosys, where they reported overall guidance update from 2 to 3, they have moved it to 3 to 3.5, which is a positive up move. In a similar way, we have seen that coming from Wipro as well. So all in all, we see a positive guidance, good set of deal numbers, but a hit on margins and EBIT. That's something which the street might not like as of now. I would also talk about the attrition. The attrition overall stands at 14.2 odd percentage in this particular quarter, which is what we had seen in the previous quarters as well. But it's a wait and watch of overall headcount addition of what we see going forward.
Absolutely, Jasmeet. And also, what's catching my eyes is the interim dividend, that has been given by the company. So what sort of message does this convey, despite the net profit, seeing some pressure due to the labor codes?
If you look at the overall, it's a mixed picture for the entire IT pack, must say. Something like TCS, where they give a bumper dividend, and something like Wipro sticking to their old guidance and stuck to the same dividend of 6 odd rupees. That's something which will be watched out of what are the further plans. In Wipro, there is also wait and watch of the buyback coming up. As we saw buybacks in the other folks, Wipro is also as of now wait and watch to see if the company goes ahead for the entire buyback. While also to add on, the overall total headcount stands at 2.4 odd lakh and attrition has come to 14 odd percentage, while net utilization stays in line with what was in the previous quarter at 83 odd percentage. So all in all, again, just to sum up the entire numbers for the viewers, we see that the numbers look on a weaker side for the company. The EBIT is down, the margins are down, but in terms of deal wins, they have come in line with the deal wins, and the management also upticks the guidance going forward, showing overall positive up move coming in from the Q4, what they expect.
Absolutely. And also on the AI revenue front, what do you have to say on that? How are you tapping that aspect in the numbers?
We look at the overall AI revenue. We are yet to get more details on that. But if you understand the AI aspect, out of 3, we have 4 companies reported. Out of 4, 2 of them have come up and given their AI revenue for the individuals, for the companies. But something like an Infosys is yet to report, and Wipro also is yet to see the overall AI uptake coming forward. It's a wait and watch for AI revenue angle as well. But it will be interesting to watch out and understand from management what are their views on overall AI and how do they see the overall AI shaping up for the company. Given the AI ramp up is happening at a very quick pace for other players, and something like a Wipro being at that large, it will be interesting to watch out how overall AI works for the company.
Absolutely. So we are also being joined by Gaurang Shah, Senior Vice President, Geojit Financial Services, on the phone line. Gaurang, hello and welcome to the show. So Wipro is out. What do you make of the numbers?
Well, flashing numbers, whatever I can see in front of me, top line, bottom line, I think there's a squeeze in margin as well. 6 rupees dividend is what they have declared. Historically, Wipro, being a frontline stock, large cap IT stock, has been disappointing when it comes to comparison with TCS, HCL, Tech Mahindra or Infosys, as a matter of fact. Disappointment is there. Of course, business related update, either via press conference or any detailed verbatim from the management, will possibly help soothe the sentiments. Since we are discussing Wipro, a disclosure or the recommendations on Wipro from our fundamental team is on the reduce stroke sell side. We believe large cap names, TCS, Infosys, HCL Tech are better bets. Small disclosure, all recommendations that I'm sharing with you on this channel this evening are a part of our fundamental research team recommendations. Our company Geopolitical or I do not have any kind of personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. So they might hold their investment interest. But on Wipro, we've been maintaining a reduced stroke sales stance, and the numbers doesn't seem to be impressing, at least whatever is in front of me.
Hello, Mr. Gaurang. Jasmeet Singh joining in here. We have seen something like a Wipro has added the new labor code impact into their employee cost. Is that the reason why we see a downtake in the margins and the EBIT?
So, Jasmeet, look, labor code impact has been there in TCS, HCL Tech, Infosys we saw yesterday. So I think, and like we had discussed earlier also, my sense is, this is my personal view, that most of these IT companies would be taking a large chunk of that negative impact of labor code cost into possibly in this third quarter and maybe a slight in fourth quarter. I'm just assuming this. But even otherwise, if you actually go to see, in terms of margins as well as the kind of expectation that was there, they have fallen short of that.
Got that view, but we see numbers coming on the weaker end, but overall CC revenue sees a good uptake. What we were estimating was anywhere between 0.5 to 0.6, but in the current quarter, we see the overall CC for the company stands at 1.2% reported terms. So do you see the CC growing, but again, the margins shrinking for the company? How do you see that coming?
I think that is a possibility, and most important thing is whether they will be able to maintain this CC growth. That's going to be a big question mark. And like I mentioned, in terms of comparison, I think other large cap IT companies have done well compared to what Wipro has been. I think there is some mojo missing as far as Wipro's numbers are concerned.
Gaurang, also, is this quarter a sentiment reset for Wipro Street expectations according to you now?
One quarter should not be a kind of, guideline or giving you the kind of, view that whether there is going to be a positivity or negativity. I think Wipro needs to do a lot more in terms of getting their act together and, falling in line with what other large cap IT companies are doing. I hope that going forward, if there is any major improvement in the business strategy, and of course with respect to AI, we have seen other companies. I'm not too sure about what Wipro's plans are because I've missed that particular line. But according to me, continuity is something that matters for changing any kind of stance as far as our view is concerned on Wipro.
Absolutely. And Gaurang, also for investors who are watching us right now and who are eyeing, to buy or take fresh positions in the IT pack. So Wipro, after, these results, a disappointing set of results, if I may call it. So what suggestions still do you have for those investors out there?
So like I mentioned, our fundamental team has a reduced stroke sell recommendation, and I believe large cap names like TCS, Infosys, HCL, Tech Mahindra are better investment ideas with absolutely clear time horizon of 1.5 year plus, given the kind of backdrop of events that IT sector is coming out from. Wipro I would again reiterate that our fundamentals research team has given a reduced stroke sell recommendation. Even mid-cap IT companies have done better than what Wipro has done in the past.
Well, now if you look at the next company coming in, we have Tech Mahindra. Gaurang, do stay with us. Let's really pull out the Tech Mahindra numbers. Let's see what the numbers show for the viewers. Now, if you look at the overall Tech Mahindra flashing down the screen, we see that EBIT margin has come at 13.1. We see a good growth there coming in as the management guides to reach 15% by FY27. It's a wait and watch. They have one more quarter left of how they'll fulfill that balance. And we look at the revenue. Revenue has come at 14,393 odd crores, while above what the estimated. If we look at the net profit is slight down, while we were expecting a 15% uptick in the net profit, but we see it has coming at 1,122 odd crore, while the EBIT also sees a healthy up move coming in. The net profit for sure has that additional the new labor code impact that we can see. Gaurang, I would like to come to you. You have seen the Tech Mahindra numbers are just out. A healthy growth in margins, must say. They have crossed the 13% mark and on track to that 15% guidance by FY27. How do you see how close are they? They have to still expand by 190 basis point going forward.
Yeah, so I'm just trying to digest what numbers you're telling me, to be very honest. But Leo, this is what exactly I was saying with my comments with respect to Wipro and what Tech Mahindra and others have done. So there's a huge gap between other large cap companies and Wipro, what they deliver. So in terms of catch-up, I think definitely, with the kind of business strategy that most of these IT companies are going through and revamping themselves and bringing up their capability and capacities with respect to AI and other investments, I don't think it should be very difficult for Tech Mahindra to mark up to that kind of a number. As a disclosure, we do have a buy recommendation on Tech Mahindra.
So you see that gap between that margin filling up. I would like to get one more view on the margin aspect itself. We see that the margins are up about 60 basis points in this particular quarter from 12.5 to 13.1. And now they have to move to that 15% range bound. So how much do you think the overall 4x will help the company reach that? And that's the FY27 target. And we have almost a quarter left where the company will have to expand and reach to that goals. So what do you think? How soon that gap will be bridged? Firstly that, and secondly, how much of 4x impact, that's the main question, will help the company reach that margin gap?
See, 4x impact, basically what I understand is that most of the companies, whether they're IT or a pharma or any company which has got dollar income, they also hedge their position as far as currency risk is concerned. So it will be difficult for me to quantify as to whether they'll do it in 1 quarter, 3 months, or maybe in 2 quarters, 6 months. I think that we'll have to just wait and watch and let the management give a little bit of verbatim on that so that we have a little bit more clarity. I would not jump and make a statement that they will be able to meet up in maybe about a quarter or 3 months. I will wait for the kind of guidance and the kind of commentary that the management would be given with respect to this.
Okay. Thank you so much, Gaurang, for being there and decoding the numbers for our viewers out there. Thank you so much for joining us. And Jasmeet, overall, if we look at the numbers of Wipro and Tech Mahindra, so are you surprised? And if yes, so what is that surprising factor?
Well, if you look at the overall Wipro numbers, it was surprised to see the company adding that new labor code impact into the margins, and we saw the margin impact. That something came out of surprise to the overall street. While I would like to also address the Wipro number once, if we quickly pull the numbers on the screen, we see that the revenue sees a slight uptick in terms of what was expected. And on the other hand, if you look at the overall margins have seen the hit, the whole EBITDA has seen the hit, and even the net profit is something we saw the hit. See, exactly right here. The revenue is up by 3.8%. It's above what we were expecting in terms of EBIT. If you look at the overall net profit is down 7%. This was expected on the back of the new labor code. But in terms of the margin, where we were expecting a roughly 30 to 40 basis point of healthy up move for the Wipro, that was not seen. Indeed, we saw a slight downtick of 140 basis, or major downtick of 140 basis point coming in from 16.2. They have moved down to that 14.8 range. When we have large players like TCS reporting around 25-26% of margin, and Wipro being in a similar space and having almost 1,000 basis point lesser margin, that's something which will be watched out very keenly by the street. Apart from that, the deal wins have come up what they were expecting in terms of what the expectations were, and also in terms of the guidance is something that is also seen as a positive up move going forward. From the negative overall macro momentum, they have moved to a positive range of 0 to 2%. So that's a very interesting move. Now let me quickly go through the Tech Mahindra numbers for you all and address the numbers. If you look at the overall Tech Mahindra top line, we see the Tech Mahindra top line coming in line with what the estimates were. If we could quickly pull out the Tech Mahindra numbers on the screen. While in terms of the net profit, we see it has seen a slight downtick. We're expecting a 15% up move in the number of profit, but the profits have obviously seen that impact of that new labor code, down about 6%. Now in terms of revenues, is a healthy growth 2.8 in line with what the expectations were. If you look at the overall margins, even margins have moved in a similar range, up about 11.3%, a positive up move for the margins. And a bit in terms of margins it has increased by almost 100 basis points from 12.1 to 13.1, and they are very close to the 15% mark. In the previous call commentary, I did mention that when they reach the end of the margin, it becomes a little harder for them to close that gap. If you look at the other details for Tech Mahindra, a strong set of deal wins coming in for the management. We were expecting a $600 to $800 million of deal wins, but the management has come up with $1,000 million of deal wins in this particular quarter. They are roughly up about 34.3% on QQ basis, which is a very positive up move. We would like to also understand how will this deal overall ramp up happen going forward, and this ramp up might have additional impact on the margins. Even that will be something which will be queuing the management to understand more ideas on that. In terms of other aspect, we see that the overall attrition stands at 12.3, which is a healthy range for the company, and the headcounts are down in this particular quarter, down about 872. So all in all, we see a positive up move numbers coming in for something like a Tech Mahindra, but for Wipro, we see a slight concern across the street.
Okay, Jasmeet, thank you so much for, decoding those numbers for our viewers. They're giving us a holistic pictures of Wipro and Tech Mahindra's quarterly results. And with that, it's a wrap on this edition of Market Express, viewers. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
NDTV Golf Pro in partnership with EGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you deep insights into news related to markets, national as well as international news. Today we'll begin with a big exclusive news. According to sources in the IT department, the IT department has launched a major crackdown on food adulteration. Target are companies involved in milk, ghee and edible oil production. As a part of this investigation, 12 food and drug firms are under the scanner. We have also learnt that such operations are underway across Delhi, Rajasthan and Uttar Pradesh. The action follows FDA sharing adulteration data with pharma and fertilizer units next in line. My colleague Shrimi Chaudhary gets us all these exclusive details.
Absolutely, in a significant move, the Income Tax Department has launched enforcement action against companies allegedly involved in food and drug adulteration and widening the government's crackdown on unsafe food practices. In fact, sources told NDTV Profit that at least 12 companies dealing in products such as milk, ghee, vegetable oil and whey protein have come under the tax department scanner. In fact, search and survey operation already been initiated across Delhi, Rajasthan and UP and will soon reach to multiple cities. Now, what makes this action notable is the close coordination between the several departments, especially Food and Drug Administration, which recently shared intelligence data with the Income Tax Department after flagging adulteration in certain products. Now, this data sharing is said to have provided the initial trigger for the tax probe, but the Income Tax Department, of course, is going beyond the adulteration and looking into the financial trail behind it. Now, investigator began spotting patterns that did not add up in the company's book, and one of the major red flag being is the timing of the transaction. Several bills actually were adjusted near the end of the financial year, especially around January 31st, February 28th and the March 31st of last year. That period is actually used to square off the accounts before the books are actually closed. Besides, the transaction exceeding 1 crore with a single party were allegedly completed in one or just two entries and often close to year end raised further red flag. Books also showing use of a lot of round figures, especially in the high value transaction. Now, the department is also examining the TDS payment pattern. In some cases, all TDS was paid in a single month, and that were long gaps between the payment. So clearly, it's a developing story as we get to know more as investigation widen. But what we've been given to understand that the probe will soon reach to some of the companies in the fertilizer as well as pharma sector. So we will be, keeping track of the story and will bring you more as we get more information on the development.
Thanks so much for that, Shrimi. And let's now take a look at how the Indian markets performed today. Markets closed a volatile day of trade with the Nifty snapping its two-day losing streak. The index, in fact, gave up most of its intraday gains to end just a point above 25,700. The gains were led by IT majors like Infosys and Tech Mahindra that gained over 5% to emerge as the top gainers in the Nifty 50 basket. Broader markets, in fact, saw a tad bit more pressure than benchmark indices. The sectoral picture settled mixed, with IT shooting up as the highest and the most strongest sectoral gainer, and pharma slipping the deepest. Let's get in my colleague Varsha for a detailed roundup of today's market action.
Yes, benchmark indices outperformed broader market indices. Nifty snaps two-day losing streak. Infosys and Tech Mahindra gain over 5%. Top gainer when it comes to Nifty. Nifty Midcap 150 closed on a flat note. Federal Bank and OFSS lead the gains, while Federal Bank gained nearly 10% after its strong Q3 results. Nifty Small Cap 250 snaps two-day gaining streak. Engineers India and Lemon Tree are the top losers. Nifty IT gains over 3% for the day, emerges as the top sector for the day. Infosys and Tech Mahindra gain over 5% for the day, emerges as the top gainers when it comes to Nifty IT.
Thanks so much for that, Varsha. And viewers, IT stocks are back in focus as sentiment improves following a stronger outlook from Infosys. All eyes now turn to the IT pack as companies report AI revenues as an important growth driver. My colleague Jasmeet now shares with us all the insights on what's really driving the sentiment in this particular space. Jasmeet.
If we look at something like an Infosys, we have seen the guidance outlook which actually changed the overall perspective. The street were expecting the update from the lower end, that's from 2 to 2.5%, but the company has surprised the street by giving an immediate guidance update on both the levels and currently stands between 3.3 to 3.5. Now what we see going forward from here is that the management remains confident in terms of the deal booking and the overall Q3 performance. If you look at the overall brokerages, they have hiked the target price as well for this particular company, and the management says the deal booking which they have done this quarter at 4.8 $1.6 billion, which is nearly up 57% when you look at on quarter basis. In terms of other key aspect, the attrition also has come down for the management, and management sees the same rate going forward, and management continues to hire employees as well. If you look at the overall employees that they have hired in this particular year, it stands at 18,000, and they remain on track by seeing the employee addition basically means the company sees a good growth going forward. So even that is something which has boosted the overall sentiment in terms of the Infosys results.
Thanks so much for telling us what exactly is driving the sentiment in the IT pack just made. But clearing the air on NSE's long-awaited IPO, NSE CEO Ashish Chauhan said the application for IPO has been accepted in principle and expects it to be in public after 6 to 8 months of receiving the no objection certificate from SEBI. Speaking at the regulator's annual conference Summer 2026, he also clarified that the IPO timeline is dependent on regulators and third parties, not internal control. Listen in.
Good news that yesterday it has been told that our application has been accepted. Once we get the formal no objection certificate in writing, then we will be able to prepare DRHP, which will take 3 to 4 months. And then after that, we submit it to SEBI again. Again, they have a process to ask queries and other things. And so they also take at least 2 to 3 months, sometimes even 4 months. So broadly, somewhere around 6 to 7 months or even 8 months after the SEBI's no objection certificate is received by our board officially.
And as part of our Budget for Bharat series, NDTV Profit is traveling across the country to understand what India's real economy wants from this year's union budget. This time, Profit team went to Indore, a region that sits at the heart of India's soya ecosystem. From farmers to processors, the soya industry has been navigating price swings, export challenges, and rising input costs. So what are soya producers hoping the finance minister will deliver this time? Are they looking for policy stability, export incentives, or bigger support for oilseed cultivation? Sharad takes us to the ground zero in Indore to capture those voices and expectations. Let's take a look at this report made by him.
Welcome to NDTV Profit's Budget Exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry. And to give us more perspective, we are joined by Shrey Mittal. He's the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes, yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It is contain maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory. We are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soya bean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना रेलेवेंट है और भारत का प्रोटीन क्या सोया है?
Yes, yes, definitely. You can say it. It contains maximum number of protein. After the COVID, Corona, we can say everyone conscious about their health conscious.
Right.
So basically, सब जनों को ये लगने लग गया कि हमको हमारी health conscious पे रहना है. हम कैसे अपनी diet को protein full करें.
The soya protein, this is the OG proteins. हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. So right now the generation, what do they need to know about the soya?
These are natural kind of protein. We can say protein powders भी आता है, nutrition powder भी आता है, पर उसमें कहीं ना कहीं adulteration रहता है, mixing रहती है. ये जो है ये natural protein अपन इसको बोल सकते हैं. ये direct farmer से आता है. मैं आपको लेके चलता हूँ अपने next part में जहाँ अपना raw material intake हो रहा है हमारा.
And Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
This is a raw material of soybean. तो उसी का ये हस्क है. जब हम raw material वहाँ देखेंगे वहाँ से हम ओपन करते हैं तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं उसको हम यहाँ पर स्टोर करते हैं. तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्परेरी स्टोर करके हम रखते हैं इसको यहाँ पर।
All right. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there's been a lot of support coming in the agriculture space. तो आपको क्या चेंजेस देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश के सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट नहीं, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं। आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री की सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं।
We saw the two processes there. What is this process?
This is we can say soya refine, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन जो कि हम देखते हैं मध्य प्रदेश, राजस्थान, सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है, यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है।
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
Okay, so basically ये ऐसा है कि US गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल्क केक है वो इंडिया में इंपोर्ट हो। बस वो अपना हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है, वो होता है नॉन GMO, उनका आता है GMO। नॉन GMO इज नॉन जेनेटिकल मॉडिफिकेशन, उनका केमिकल मॉडिफाइड रहता है। अगर वो इंडिया में आता है तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी। प्लस जो हमारे लोकल प्लेयर्स है उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा। रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये लगता है। तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको।
एंड श्रेय, बट द वेरी इंपॉर्टेंट थिंग इज योर बजट एक्सपेक्टेशंस। बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज ए इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए। हमारा आज भी एक्सपोर्ट जो है बहुत कम है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनके प्राइस कॉम्पीट नहीं कर पाते। डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना।
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें, वर्ल्ड वाइड देखें, तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज हो रही है डे बाय डे। तो उसके लिए एक सोर्स हमारे पास ये सोयाबीन ही है, जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है। तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे। प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है। इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखते हैं।
Thank you very much, Ray, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
US, that's our on-ground report from Indore, the voice of soya cultivators, the OG source of protein. The soya industry is paramount for India's agriculture as it has multiple uses and the industry demands some export-oriented help. But apart from this, we've also brought and will continue bringing you voices of the Bharat from Jammu, Coimbatore, Kolkata and a lot more. So stay tuned to NDTV Profit as we continue to bring you a lot more news and updates and these special reports. Thanks so much for watching. This is Malika Mishra.
First Indian News Channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. We've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Now let's start the show, but before that, we play a lot of guesswork with you to identify which company we are getting at KYC today. Also, let's give in the hints before you guess the company. It's a solar cell manufacturer. A lot of larger names have come up in the last 2 to 3 years. I'm just giving you one more hint on that, and it's one of them. The second one is they are beneficiary of China's cutting of the export incentives. Recently, there was a news flow also on this, and a lot of these power related companies were rallying on the trade. Also, the third hint would be that the earnings is coming on January 22nd. Now, just to put it in perspective, in our KYC show, because of the SEBI's non-disclosure rules, and it's a silent period, we will not be asking the management about the overall numbers, but we will ask something on the industry as well. But remember to track this stock. In some days, the earnings will also be coming in. Also, the company, let's make it the big reveal for the company, and that one is going to be especially the solar related company, and technical charts have also suggested that last 2 to 3 trading sessions, the deliveries have also going up. That means some value buying is happening. The company in focus is Premier Energies. That's what we are talking about, and we'll discuss more details about it. But let's just understand why we are actually getting this company in KYC. Of course, the numbers won't be discussed, but we'll discuss the industry dynamics. The first one is, what are the benefits coming in the China cutting in export rebates? Is the tide going to turn for the industry? That's one of the main questions to be asked. The second one, we are asking why Premier Energy is there in our show, is that the industry perspective would be there. Which side are the global solar prices going? Is it the going up or is it going down? Is going to be a consolidation? A lot of questions are there, and a lot of viewers on KYC keep writing to me, and we will be getting these answers from the management. The second question is the raw material dependency on China. Will this come down, or will we still depend on China and our industry will suffer? That's a very big question to be asked. A lot of stakeholders ask us. That's what we'll be asking. Also, the fourth one, why we want to call Premier Energies, is what are the supply chain constraints? Have they improved?
Its ability to transform business models, unlock productivity, and of course, create lasting competitive advantage. We are also seeing the same themes continue from the past quarters in terms of our deal momentum, cost optimization, vendor consolidation, and a very clear shift towards AI-led transformation. In Q3, we also marked 2 important milestones for Wipro, which I'm very proud of. In December, we completed 80 years as a company. And in October, we celebrated 25 years of being listed on the New York Stock Exchange. In fact, these milestones reflect a legacy of strong governance, values, and integrity, a foundation of trust that continues to differentiate us with our clients, our partners, and our investors. Now, turning to Q3 performance, our IT services sequential revenue at $2.64 billion grew 1.4% on a constant currency basis. Excluding Harman DTS acquisition, our revenue grew 0.6% in constant currency terms. In fact, growth was broad-based, with 3 of our 4 markets and 4 of our 5 sectors reporting sequential gains. Americas 1 delivered sequential and year-on-year growth, driven by strong performance in healthcare, consumer, and LATAM. Our Americas 2 saw a sequential decline. Europe grew sequentially in Q3, led by ramp-up of the earlier announced mega deal. We are also seeing good traction in the UK and the Western Europe markets. APMEA grew sequentially and year-on-year, led by India, Middle East, and Southeast Asia. BFSI continues to show strong traction with ramp-ups and new wins. Capco revenue was impacted by furloughs and remained flat year on year. Our operating margins at 17.6% expanded 0.4% or adjusted quarter two margins and 0.1% year on year. We also closed $3.3 billion in total contract value and $871 million in large deal bookings. If you recollect, last quarter, I introduced Wipro Intelligence. You would have seen the video, and if you remember that. It is our unified approach to delivering AI-powered transformation across industries that we serve. This approach is anchored on three strategic pillars. One, industry platforms and solutions. We are building consulting-led AI solutions across sectors. For example, platforms like Payer AI in healthcare, Net Oxygen for lending, and AutoCortex for automotive. These solutions help streamline operations, improve our customer outcomes, and open up new avenues for growth. Second, our delivery platforms accelerate AI adoption at scale. I talked about Wings last quarter. Wings brings AI into the heart of our operations, from application management to infrastructure support and business process operations. Vega, another delivery platform from Wipro Intelligence, adds AI-driven capabilities across the development lifecycle, be it software development lifecycle or product engineering development lifecycle, and from vibe coding to model tuning and data pipelines. Together, these platforms help our clients modernize faster, operate smarter. Third pillar is the Wipro Innovation Network. It connects our labs with partners, startups, universities, and deep tech talent around the world. This ecosystem helps us explore new technologies and build solutions for the future. In December, we launched innovation labs in 3 cities in the US, Australia, and Middle East, expanding our network, growing our global footprint, and strengthening our role as a trusted innovation partner. We are also partnering with client GCCs to help drive transformation and turn their cost centers into high-impact innovation hubs. Now, let me share 2 examples of the large deals that we have won leveraging Wipro Intelligence last quarter. First, a leading global education provider in the UK, which is expanding rapidly across markets, has chosen us as its strategic partner for a multi-year transformation. Their goal was to build a single, secure, intelligent operating model that can scale with their growth and improve stakeholder experience. Using Wipro Intelligence Wings, we will standardize all their core processes, embed automation and AI-driven insights, and helping optimize costs through their global delivery model. In my second example, a leading US-based fitness technology company has selected us for a multi-year transformation to accelerate their shift to a subscription-based wellness model, which is actually catching up, and support global expansion. Here, we will use both the delivery platforms, Wings and Vega, to embed AI and automation across their IT infrastructure and all of their core functions, helping drive efficiency, productivity, growth, and of course, customer experience. These engagements highlight a clear trend. Our clients are bringing us in much earlier and recognizing the step change in the way we deliver and innovate. I would now like to update you on Harman DTS. First of all, a warm welcome to all Harman DTS employees joining us. With this acquisition now complete, we have added engineering and AI capabilities that truly complement what we do. This, in fact, strengthens our engineering global business line and helps us accelerate AI-driven product innovation for our clients. In fact, this integration also opens new regions and high-growth industries and allows us to take on larger and more complex transformation programs. As our teams come together, we look forward to entering new markets, building deeper client relationships, and turning innovation into long-term value. Finally, the guidance for Q4. In Q4, we are projecting sequential IT services revenue growth of 0 to 2% in constant currency. With that, I will hand it over to Aparna for the detailed financials. Thank you.
Thank you, Srini. Good evening, ladies and gentlemen, and wish you all a very, very happy new year. Let me share a quick update on the financial performance for the quarter ended 31st December 2025, after which we will open up the floor for questions. Our IT services Q3 revenues grew 1.4% sequentially in constant currency terms and 1.2% sequentially in reported currency. It also grew 0.2% year-on-year in reported currency. Our constant currency revenue growth numbers included 0.8% contribution from the Harman DTS acquisition that was closed in Q3 of 26. Our operating margins for the quarter was at 17.6%, an expansion of 40 basis points over the adjusted operating margins for Q2. It also expanded 10 basis points on a year-on-year basis. I would like to highlight that this is one of our best margin performances in the last few years. As we move into Q4, we will need to factor for the incremental dilution of Harman DTS acquisition. Our endeavor, as always, will be to maintain the margins in a similar band that we have delivered in the last few quarters. Adjusted net income for the quarter was at rupees 33.6 billion rupees, and adjusted EPS was at rupees 3.21. This is an increase of 3.5% sequentially and flat year-on-year. Moving on to our market unit and sector performance, I will share some of the commentary. All the numbers that I will share are in constant currency. Like Srini said, this has been a fairly broad-based performance with 3 of our 4 market units growing quarter-on-quarter and 2 of the 4 market units growing year-on-year. Americas 1 grew sequentially by 1.8% and grew 2.8% on a year-on-year basis. Americas 2 declined 0.8% sequentially and 5.2% on a year-on-year basis. Europe grew 3.3% sequentially and declined 4.6% on a year-on-year basis. APMEA grew 1.7% sequentially and grew 6.6% on a year-on-year basis. Now for the sector performance. BFSI grew 2.6% sequentially and 0.4% year-on-year. Health grew 4.2% sequentially and 1% year-on-year. Consumer grew 0.7% sequentially while declining 5.7% on a year-on-year basis. Technology and communication grew 4.2% sequentially and a 3.5% year-on-year. EMR declined 4.9% sequentially and declined 5.8% year-on-year. You can note that 4 of our 5 sectors grew sequentially and 3 out of our 5 sectors grew year-on-year. Further, Capco growth was flat on a year-on-year basis for the quarter. Before I move on to other financial parameters, I would like to draw your attention to 2 specific one-off charges that we have recorded in our P&L for the current quarter. These charges are not included in our IT services segment operating margins, but have impacted our net income and EPS. First is an increase of 302 crores for gratuity expenses due to the implementation of the labor code. And second is regarding a restructuring exercise that was completed during the quarter, and the impact of this is about 263 crores. I would like to confirm that we've now completed the restructuring that we want to and do not anticipate any further charges. Our operating cash flow continues to be higher than the net income and stood at 135% of our net income. Our gross cash, including investments, was at $6.5 billion as of 31st December. In Q3, our net other income rose 15% sequentially. Accounting yield for the average investments held in India was at 7.2%. Our effective tax rate was at 23.9% for Q3 26 versus 24.4% same time last year. In terms of guidance, to reiterate what was stated by Srini, we expect our revenue from IT services business segment to be in the range of $2.635 billion to $2.688 billion. This translates to a sequential guidance of 0 to 2% in constant currency terms. Our guidance includes the incremental 2 months of revenue from the Harman DTS acquisition. It is impacted by fewer working days in Q4 and delay in ramp-ups in some of the large deals that we had won earlier this year. Lastly, I would like to share with you that in our recently concluded board meeting, the board of directors have declared an interim dividend of rupees 6 per share. With this, the cash distributed to our shareholders during the current financial year will be in excess of $1.3 billion. And we've been able to significantly exceed the minimum floor in our capital allocation policy for the block for the year ending FY 2026. With that, I'm going to hand this over to Nisha for Q&A.
The World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV, bringing this subject forward, would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
NDTV Golf Pro-Am in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school.
Welcome to NDTV Profit's budget exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry, and to give us more perspective, we are joined by Shrey Mittal. He's the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes, yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It contain maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory. We are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soya bean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना रेलेवेंट है और भारत का प्रोटीन क्या सोया है?
Yes, yes, definitely. You can say it. It contains maximum number of protein. After the COVID, Corona, we can say everyone conscious about their health conscious.
Right.
So basically, सब जनों को ये लगने लग गया कि हमको हमारी health conscious पे रहना है. हम कैसे अपनी डाइट को प्रोटीन को इंटेक फुल करें.
The soya protein, this is the OG proteins. हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. So right now the generation, what do they need to know about the soya?
These are natural kind of protein. We can say protein powders भी आता है, nutrition powder भी आता है, पर उसमें कहीं ना कहीं adulteration रहता है, mixing रहती है. ये जो है ये natural protein अपन इसको बोल सकते हैं. ये direct farmer से आता है. मैं आपको लेके चलता हूँ अपने next part में जहाँ अपना raw material intake हो रहा है हमारा.
And Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
This is a raw material of soybean. तो उसी का ये हस्क है. जब हम raw material वहाँ देखेंगे वहाँ से हम ओपन करते हैं तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं उसको हम यहाँ पर स्टोर करते हैं. तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्परेरी स्टोर करके हम रखते हैं इसको यहाँ पर.
All right. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there's been a lot of support coming in the agriculture space. तो आपको क्या changes देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश की सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट है ही सही, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं। आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री की सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं।
We saw the two processes there. What is this process?
This is we can say soya refine, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन जो कि हम देखते हैं मध्य प्रदेश, राजस्थान सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है, यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है।
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
Okay, so basically ये ऐसा है कि US गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल्क केक है वो इंडिया में इंपोर्ट हो, बस वो अपना हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है वो होता है नॉन GMO, उनका आता है GMO। नॉन GMO इज नॉन जेनेटिकल मॉडिफिकेशन, उनका केमिकल मॉडिफाइड रहता है। अगर वो इंडिया में आता तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी, प्लस जो हमारे लोकल प्लेयर्स है उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा। रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये लगता है, तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको।
एंड श्रेय, बट द वेरी इंपॉर्टेंट थिंग इज बजट एक्सपेक्टेशंस। बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज ए इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए। हमारा आज भी एक्सपोर्ट जो है बहुत कम है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनकी प्राइस कॉम्पीट नहीं कर पाते। डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू US, ब्राज़ील, अर्जेंटीना।
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें, वर्ल्ड वाइड देखें, तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज़ हो रही डे बाय डे। तो उसके लिए एक सोर्स हमारे पास ये सोयाबीन ही है, जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है, तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे। प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है, इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखते हैं।
Thank you very much, Ray, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets old industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I'm spending time in a startup.
Picture this, you needed to buy shoes. Everyone needs shoes, right? So you went to the shop around the corner and you got what you thought was a decent pair. You're happy. Till you meet a friend who tells you that that same pair of shoes is available at a discount of 50% at the factory outlet barely a kilometer away. Man, that's gotta hurt, right? Well, in that scenario, at least you have a good pair of shoes. But what happens when you pay more tax than you should? This is MoneyWise on NDTV Profit, and I'm Alex Matthew. And today, we're talking about tax hacks that could save you lakhs. My guest today is Abhishek Mehta, the founder of Investa Capital. Abhishek, thanks so much for taking the time.
Thank you.
And you're going to give us a few secrets of the trade, tricks of the trade, so to speak. And we're going to run through sections and we're going to make it pretty simple for people to understand.
Right.
So what are we starting with?
So the first section I think every individual should know is about section 54, because like a parent said कि सर पे छत होनी चाहिए और आप छत कभी ना कभी you sell. So that is one section which every Indian should know is
to move to a better छत, effectively.
Yes, or you buy a new better house, you keep buying a better house. So section 54 is very, very important and critical to know, because this section tells you basically if you have a residential house and if you sell that residential house and buy a new one, the entire capital gain tax gets exempted. Now there is an upper limit of 10 crores, but mostly all Indians will fall below the 10 crores. So if your capital gains is less than 10 crores, you can go and claim a section 54. The only preemptive is that you should buy the new house before either 1 year before selling the new house or 2 years after you sell your old house. And if you're going into under construction building, so you have 3 years to pay that money from the money which you have got from selling the house. So that's the only catch which you have to ensure that you are within the limits to claim the exemption.
Isn't this applicable only to the first house that you buy, to one house? It can be any house that you buy.
It can be any houses. If you have 100 houses, you go and sell 100 houses, you buy new 100 houses. So the money keeps churning within the residential property only.
I always thought it was available only for the first, to the second house that you buy.
Yeah, so there's another section which is section 54F. It's on that you can buy maximum 2 houses.
Explain that.
So what does section 54F is? Basically, if you sell anything other than residential house. So if you sell your mutual funds, you sell your stocks, you sell unlisted shares and all those stuff, and you go and buy a residential house, then you don't have to pay the taxes. You can claim your capital gains exemption by filing under 54F.
But in the case of 54, you can sell the house that you're residing in, or if you have an existing house and you are renting out a second house, you can sell one of those houses.
Yes, so basically you have to sell the residential house and then buy a new one. You keep buying and selling. If you sell one, you can buy one. It cannot happen that you sell one and buy 2.
Okay, you sell one and buy one.
Buy one. And that's how you can keep claiming section 54 over and above, like you can claim it 100 times. And only the capital gains has to be reinvested. So if I have bought a house for 8 crores, I sold it for 10 crore, I just need to reinvest the 2 crores to claim the exemption. Whereas in section 54F, I need to invest the entire proceeds.
Oh, that's an interesting catch. And are the limits different in 54F?
So 54 is 10 crores of the capital gains and 54F is 10 crores of the proceeds, sale proceeds. So that way probably your gain in 54F would be 2 crores, 3 crores, probably 5 crores, whatever it is. But these are very 2 key sections. Lot of people have seen they fail to claim Section 54F because you keep saving your money to buy a house.
Yeah.
Eventually, everybody needs a house. So you keep saving into mutual funds, you save into stocks, and one day you sell those things. And government has given you that option that if you sell your shares, mutual funds, and if you buy a property, claim the exemption. You don't need to pay the taxes.
You said that there is a window, right? Is this
Yes.
applicable on 54F as well?
Yes,
So
both
1 year
cases.
before and 2 years after.
Yes.
In the case of an under construction property, you get a little more time.
3 years.
But there is a different account that you put the proceeds into, isn't
Yes,
there?
right. So before you file your returns, once you have sold the house, and before you file your return, which is usually 31st July, you have to save that money into a capital gains saving account. You have to go to a public sector bank and open a specific account which states a capital gains savings account, and you have to keep the money there. If you forget it, then you cannot claim Section 54F.
Okay.
Okay, if you go and file your return on 1st August and you say that, look, I have just deposited on 1st August, no, you cannot.
Technical question, can you claim it in anticipation? Like, for example, here's a situation, hypothetical situation, where in January of 2026, another month and a half for the end of the financial year, right? So, no, 2 months and 2.5 months effectively, right? So, if I anticipate that I will buy a house in May of next year, that is the financial year, in anticipation, can I claim, say that I've sold mutual fund units, I've parked it in this special bank account?
Yes.
And in my returns for this year, can I say that I've set it aside with this purpose?
So once you have deposited the money, the bank will not release the money till the time you give them the certificate of payment to the builder. Okay. And if you want to take out the money, suppose you drop the plan, ki Abhishek, I'm not buying a property, then you need to go to your ITO. You have to go to your assessing officer, take a letter from him that I have paid all my due taxes on whatever amount I claimed as an exemption. Then they will give you a release letter to the bank that, okay, release the money. So
can you use those proceeds only to pay the taxes?
You can use any proceeds.
No, I'm saying whatever you had in that account.
Yes, you can use that.
You can use that.
Yes.
Okay, so we've talked about what to do when you have a house or when you need to book out your investments in order to buy a house. And this is all capital assets, right? It can be gold, silver, it can be everything, right?
Yes, anything.
Okay. Beyond this, what else is there?
So for businesses, people who are doing businesses, there is a very good section called as Section 44AD.
Okay.
Now what is this? This is called a presumptive taxation section. So if you have sales in a business up to 3 crores, you can file your income tax return without preparing a balance sheet and P&L. You have to show 6% as profit.
Okay.
So whatever digital sales has happened, wherever you have received money digitally, you can show it as 6% of the profit.
Is there some logic, the 6%?
So mostly, basically the IT department thought that if somebody is doing a business, they would at least earn 7-8% return on their business. Or else why would somebody do a business?
Right.
There might be certain businesses where the margin is very less, but those are more volume business.
Right.
If I'm doing a 2-3 crore kind of business, at least I'll earn 8%.
Sure.
So now what does this do is, if I'm doing a sales of 2 crores, 6% becomes 12 lakh rupees. I'll pay 0 tax in the new regime.
Okay.
I'm doing a business of 2 crore and I show it 6%.
Most people know this. If you have 12 lakh rupees of income in the new tax regime, you pay no tax.
Yes.
Right?
So 2 crores sales and I pay 0 tax under the new regime.
Okay. And this is, now what do you fall under? What type of taxpayer do you fall under? This is for business owners.
This is for individuals, HUFs and partnership firm. All three people can use this section 44AD. And most important, it comes you out of the biggest hurdle of preparing your balance sheet, P&L and accounting, all those, tensions and problems you come out of that.
It's called
presumptive taxation. For businesses, people who are dealing in goods basically, who are into trading, manufacturing of goods.
So in this case, you're paying GST first, right?
Yes, right. You will be paying GST over and above your sales.
Sure. Okay. So in an example, if you're talking about 2 lakh rupees, then you're talking about say 18 or say 36 lakh rupees. Suppose you're.
So if my turnover is 2 crores, I'll probably end up.
2 crore rupees, then 36 lakh.
I'll be end up paying. If I don't have any GST purchase, I will end up paying 36 lakhs as GST to the department. But that the customer will give you.
Right.
And customer will also get the input tax credit on that sale, on
Understood.
that purchase basically. So this is a very good section which people should use and directly file their returns. Even if their profit is 20%, Government will not ask.
And if your income is or your sale is over 2 crore, which effectively takes you beyond that 12 lakh number on that presumptive number, it's still beneficial because you're paying taxes based on the new tax regime.
Yes. So the upper limit is 3 crores.
Okay.
If you have more than 3 crores, you cannot go for this presumptive taxation.
Okay. There is probably more to that, right?
Yes.
It has to do with professionals, I would think.
So there are certain 7-8 professions which income tax has said, like doctors, lawyers, CAs, engineers, who can file their income tax return under section 44 ADA. Again, presumptive taxation, but there are 2 points here. The upper limit is 75 lakhs. So only people who are earning up to 75 lakhs can go under this section. Second, you have to show profits as 50% of the revenue.
Okay.
So if I'm earning 50 lakhs, I have to show profit as 25 lakhs.
Sure.
Which is generally the case in these professions, because they don't have much of expenses in the individual kind of. So if there is an individual doctor, an individual lawyer, he wouldn't have about 50% of the expenses.
Sure.
But he can go for this presumptive taxation and save a lot of taxes, and again, no hurdle to prepare their books of accounts.
So, but tell me something, it is something that we come across a lot. Look, as salaried employees, you always look at professionals and say, hey, you guys can claim quite a bit in the way of expenses, right? So, suppose you buy a car, you effectively need that car for your regular daily business.
Yes.
And it can be a car that is worth, say, about 20 lakh rupees, right? And you can then claim depreciation over a period of time as a cost.
Right.
And so it's a substantial cost that forms a part of your cost for the year, right? And you add things like that to your list, you can very easily hit more than 50%.
So again, anybody has to do a cost-benefit analysis.
Sure.
And the biggest cost-benefit analysis, do you want to go into a hurdle of preparing your books of accounts? Okay, because accountants have got expensive. It's not easy. You have to put down all your transactions. Because of UPI, I have seen number of transactions increasing from 500, a simple professional guy having 500 transactions, that has increased to 3,000. Because people are doing 20, 30, 40 rupees also UPI transactions.
Sure, and you have to explain all of that.
Explain all of that, prepare the books of accounts, file it. So better if there is you need to do your cost benefit analysis, but I would still prefer presumptive taxation because it gets me out of the hurdle of preparing books of accounts.
If somebody were to be claiming these expenses, then what kind of advice would you have for them? In that sometimes frivolous expenses can also be claimed, right?
Yes.
Abhishek?
Yes.
So therefore, what advice would you have?
So mostly, see, expenses which are related to business, only those can be claimed. So if you are going to your restaurant, hotel with your clients, you need to have all the bills in your hand.
Sure.
So that when the assessment comes, if there is any scrutiny, they require all the bills and the date of payment made on those bills. So I have seen a major gap in this thing because people
what
spend
are some
money.
of the weird things that people have claimed in your experience in these kind of expenses?
So mostly vacations, foreign vacations, people take, they claim it as business expense. A lot of time people claim their marriages also under business expense. They show it as exhibition, they show it as event happen for the business. so all those expenses also people put it in the business to claim the GST also and to claim the outgoing as an expense. But income tax has become very vigilant now and they know where the marriages are happening. They know each and everything. So it's not that easy nowadays to claim all those things. There used to be an era, but with AI and everything, it's now difficult.
It's now difficult. Okay, so bear in mind that you should claim only what you're spending for your business. It's getting tougher, and the tax department is even digitally keeping your footprint in view, right?
In fact, there was a nudge campaign which income tax department, just a nudge, and 2,800 crore was recovered only on the nudge campaign.
What was this about?
Basically, income tax department just sent an SMS to everybody who had claimed a refund that your income tax return is on hold. If you want to revise it, you can go and revise it. So all those people who tried to play around, just on that nudge SMS, 2,800 crore was recovered by the department. So if department starts scrutiny of each and every return, the amount of money the department will recover is enormous.
So, and here it must be said, we're talking about legitimate ways in which you can save tax. So what's the next one on the list?
So a lot of people don't know that if I'm getting a rental income, Okay, in the new regime also, I can claim the interest expense of the home loan which I have taken, or if I have taken any loan on that property.
Oh.
So whenever I buy a property, I make sure that I take a home loan.
Right.
Reason being, if I'm getting a rental income and if my interest is going out, the both get set off and I don't have to pay any tax.
But okay, so this is a conditional thing where in the old tax regime, under section 24,
right,
you're allowed to have up to 2 lakh rupees
of loss
of interest expense.
No, you can claim the entire interest expense, but only if there is a loss in the business, in the rental income, you can claim up to minus 2 lakhs.
No, okay, no. So let me qualify.
Yes.
Most people will be aware of section 24, which is not related to loss of rental income, right? It is a pure provision for interest cost on a home loan, right? Which allows you to claim up to 2 lakh rupees, per year.
Yes.
Now, what you're saying is that even though deductions broadly are not available in the new tax regime,
yes,
there is a provision that allows you to set off if you've earned a rental income.
Yes.
If you've earned, or rather if you've expended on interest to that same amount, you can set off your rental income.
Yes. So if I got a 12 lakh rupees rental income,
sure,
I will get firstly a minus 30% standard deduction.
Okay.
That will be first minus 30%, which will come to about 4 lakhs. Then whatever property tax I have paid for that property, that will also get minused. And if I have paid any interest on that property, I have taken a home loan and paid any interest, that amount will also get minused. And eventually, mostly I'll go to up to 0 rupees.
So this is assuming that you don't have any other income?
No, if I have any income, this is an
How do you have
expense which
standard
you
deduction on rental income?
There is a 30% standard deduction given by the government because you do some repairs on your rental home. If you have you give some money to the broker, you pay the maintenance bill of that property. So you have certain expenses while maintaining that property.
And how do you claim all of this?
So you don't claim all of these. You can only claim a standard deduction of 30%.
Okay,
so
understood.
if I'm getting 100 rupees, I'll claim standard 30 rupees.
So no, say that again. So you have rental income. Suppose you have rental income of 12 lakh rupees, 1 lakh rupees per month.
Yes.
What are the deductions that you can claim from that? This is a new tax regime.
Old also, new also. Okay. In both you can claim.
Standard deduction 30%.
30% standard deduction.
Yeah.
So my 4 lakhs will go roughly about.
Yeah.
Then whatever property tax I have paid, that will also get minus. Then whatever interest I have paid, that will also get minus.
Interest on that, okay.
On that property.
Only on that property.
Only on that property. You cannot claim interest which you have paid on your self-occupied property for the rental income. So whenever anybody is investing with the purpose of earning rental income, they should or they can take a home loan.
Interesting.
Because that interest will get set off.
Okay.
Against that interest income.
That is certainly interesting. Let's talk about what else there is in the list.
So.
And there you go. It's fine. These are it's important for you to look at the list because these are sections, right? So what's next?
So HUF is very important. It is the most underrated, I guess, tax structure which Indians have been using.
I must state that we've had a conversation, multiple conversations on this show and others on HUFs.
Yes.
And before we go further in this from a tax lens, it might be incredibly attractive.
Yes.
But to everybody tuning in, bear in mind that there are factors beyond taxes that you need to consider. And we've had a conversation on this, but do look up the complications that could emerge with inheritance and transference of property down the road. So there are advantages, but there are disadvantages. Weigh the pros and cons before you take a decision. We're talking about the advantages now.
Yes. So HUF basically is an Hindu undivided family.
Yes.
So any Hindu, Jain, Sikh, Buddhist can create an HUF.
Yeah.
What HUF will help you to do is, it will create a separate PAN card. A separate entity will be created.
Right.
The benefit of that will be, you will get a slab rates on all your income. So what I usually do is, all my investments are usually done, financial investments are done through an HUF.
Okay.
Because I can claim all the exemptions, basically all the slab rates
on a different PAN.
On the different PAN, because I come under surcharge.
Sure.
So I pay a lot of 10-20% surcharge on whatever income I generate, my wife generate.
Right.
So all my investments, financial investments, are done through the HUF.
Okay.
I can claim 1,25,000 rupees exemption which the long-term capital gain tax gives under 112A. I can claim 80C. I can claim 80D.
So all the benefits that accrue to you as an individual accrue to the HUF as well. So it's basically splitting off your assets and using one more additional structure to, to transfer your assets.
Yes. So all your dividend income, your interest income, your debt mutual funds, your capital gains on the mutual funds, if you are under surcharge, can be parked with the HUF. Coming on the disadvantage, that is why I'm again and again saying your financial assets should be parked, because those are very easy to liquidate at any point of time.
So not your physical assets.
Not your physical assets, because then those complications comes with, inheritance, transmission and all those things. But all your financial assets can easily be parked with an HUF and you can claim the slab rates. If you have, suppose I made an FD of 25 lakhs or probably 30 lakhs. What is the interest income I'll earn? 2.5 lakh. The entire interest income is tax free.
So fascinating. And interestingly, I was having a conversation with a gentleman the other day and I was complaining about certain aspects of how much tax I pay. And he said, you should do an HUF. I said, sir, my name is Alex.
Yes, so it's Hindu, Jain, Sikh, Buddhist. Only these 4 people can create an HUF and, they can do their financial investments in that account.
We both laughed for some time. But having said that, let's talk about the others in your list.
Yes. So one thing is, if your children are now 18 plus, earlier mutual fund unit gifting was very difficult. Now government has really simplified. You can gift your mutual funds to your children. So if you are planning to redeem probably today or in the near future, you can claim 1,25,000 as exemption. You can gift some of your mutual funds to your children's and redeem it there.
Right.
So what will happen? The capital gain will accrue to your children.
So if you intended to transfer it to them anyway, you can actually gift it to them, in that if I am the transferer or the gifter, then I don't pay capital gains.
No.
And if my child is receiving it, when the child sells that, they will then have to pay capital gains.
Right. So relatives receiving any gift is completely tax free.
Is there a limit?
No, there's no limit. Even 1,000 crore can be gifted, and the relatives doesn't need to pay any tax on that. And whenever they will sell that, probably property, mutual fund, stocks, the tax will be on them.
Sure.
So they can claim that 1,25,000 exemption, and probably if you are under surcharge, again there will be no surcharge. And you can save your taxes.
How do you gift mutual fund units?
So basically you have to go to MF Central website, or you can go to AMCs also, and you can fill up a form for transferring of units under gift. And now it is very easy and very digitally possible through the MF Central website, which NSDL, CDSL and CAMS, we all have come together and made it.
So very interesting. All right. There's one other thing, and this is from the perspective of people leaving the country and becoming NRIs, right?
Yes.
We were discussing just before the start of this program. There is an interesting available option for them to not pay tax on investments. How does that work?
So before we talk about NRI, let's just what is NRI? Okay, people usually get confused with citizenship and NRI. See, citizenship is different. You, me, we are Indian citizens. India doesn't allow dual citizenship. So if I become a citizen of America, I have to drop my India citizenship and take an OCI card. So concept of citizenship is different. Concept of NRI, the resident and non-resident, is different. How does a person becomes an NRI, which is a non-resident? If he stays in India for less than 182 days, he becomes an NRI. So lot of rich people, they are sending their kids to Middle East. Lot of people who are earning money from their consulting income, they were earning money through their YouTube and all, are moving to Middle East or other countries where India has signed DTAA with
What is a DTAA?
DTAA is basically a double taxation avoidance agreement.
Sure. So
that the tax should not be paid in both the countries.
Sure, fair enough.
So what people are doing is, they are moving to Dubai or other countries where Singapore, where DTAA is signed. Now what happens, DTAA says that the taxation will be taxed in the country in which you are residing.
Domicile, yeah.
So if I am staying in Dubai, I will pay Dubai taxation.
Which there is no tax in Dubai.
And there is no tax. So if I am a Dubai resident, I have invested into Indian mutual funds, there will be no tax on me.
Even if you sell those units?
Even if I sell those units.
In that particular year, if you have if you're non-resident Indian,
Yes.
and you're domiciled in the Gulf,
Yes.
Which is effectively the UAE,
Yes.
You will not pay tax.
Right.
Very interesting.
And obviously, because you are an NRI, your entire global taxation is not taxed in India. So if I'm earning anything in Dubai, I have done some investments from Dubai. So all those are tax free. Along with that, whatever mutual funds, stocks, money I'm earning, that is also tax free.
Interesting.
So that is why a lot of people, rich people are, sending their one kid to UAE or other countries to get this tax
and
benefit.
even people, I think, who can work from anywhere are contemplating doing this. It's quite interesting.
Mostly YouTube creators, because they get money from US. They get from a US entity. So they can get the money anywhere.
Yeah.
So they move to Dubai and earn for free. You would have heard so many football players, because they go and play across various countries. They go to countries where the taxation is zero.
Sure. Yeah.
So that is
so we've talked about several options, and I think it's been an interesting conversation. Thank you so much, Abhishek, for giving me and my viewers a few ideas to think about.
Thank you so much.
All right, well, that brings us to the end of this edition of MoneyWise. Let us know what you think and stay tuned. This is NDTV Profit.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit. The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it. So that
IHCL in focus. It's set to acquire a 51% stake in Bridge Hospitality, bringing the boutique luxury Bridge brand into its portfolio as it accelerates expansion in the experiential leisure segment. This deal follows IHCL's recent controlling stakes in Ank Hotels and Pride Hospitality, significantly strengthening its mid-scale and leisure segments. To understand more about it, I'm joined by Puneet Chhatwal, MD and CEO at IHCL. Thank you so much for this conversation with us. Let's start by understanding why Bridge Hotels, why this controlling stake, what's the strategy there?
Good morning. Thank you for having me. I think this is a natural consequence of the partnership that we had formed with Ank and Pride. And we had the Bridge portfolio already on our distribution platform. And given the way the mid-market is expected to grow in India because of the rising middle class as well as the disposable income connected to it, which we've all seen with the rise in domestic tourism, I think it helps us to take a leading position both on the mid-market segment in leisure, in business, as well as in upscale segment through the Bridge brand.
What is the kind of addition to the top line you're seeing, Mr. Chhatwal, as a result of this acquisition and the other two that you mentioned as well?
You see, at the moment we have done the acquisition, which will be complemented with asset management efforts. So the Bridge acquisition should give an addition next year itself of 100 crore on the top line. Currently, the portfolio performs at an EBITDA margin of around 38%. We expect that with the operational synergies to go up to 40%. And I think given our distribution network, given the synergies in similar markets that we have, we should be able to drive higher value both at a brand level as well as at a revenue level. I can give you an example. In a city of Banaras, where we have the Taj Nadeswar Palace, we are doubling the Taj Ganges inventory, adding another 100 rooms, should come online by the next 10 days or 15 days. Now we have the Bridge Rama. Few days ago, we announced the opening of Avantika, also on the Ganges, also on the Ghats. Then we have the Tree of Life, and we have a Gateway and a Ginger under development. So how we go into the depth of each of the important top upcoming micro markets in India has been a part of our strategy, and covering and addressing all customers in all segments is playing out very well for us.
Puneet, Neeraj here, I just wonder if this will become the template wherein large behemoths like your group will get enough opportunities to acquire either vertical specific or region specific brands at a good IRR price for you to expand while incurring lower costs.
Absolutely right. I don't know how you got insight into it, but maybe because you've been following us closely, Neeraj. I think important for us was to get our strategy right, number one. Number two was the capital structure needed for it. Then eliminating debt, building a good cash position, and then as and when good opportunities come up for inorganic growth, to deploy that cash cleverly so that you are not actually diluting the current margins or the growth in the top line.
And would it be fair to assume, I mean, because these acquisitions per se, when I look at the numbers relative to your size, are not very large. So is this a string of pearl strategy, and do you believe that there is more in the offing over the course of the next 12 months, 2026 for example?
Yes, for sure. I think it's a very interesting question. The one we did earlier with the Ank and Pride was to convert 90% of that portfolio, or 85 to 90, whatever the number would be at the end of this calendar year or the next financial year, to Ginger brand. That would have given, or that will give Ginger a scale of 200 plus operational hotel in a 250 hotels portfolio. So we took 20 years to maybe get to our first 50. And then within 1 year, we just scale up. So scaling up a brand in this kind of segment is fundamental to the long-term success of the brand. And some of that may not add so much to the top line or bottom line, and some will. Then you try to use asset management initiatives to reposition that product within the same market. Then add, our F&B offerings like Cumin. Take the F&B offerings that the partners have done, and then you synergize to get the brand on a very fast track growth, so that 250 plus then goes on to become 500 or 700 in the next 5 to 10 years.
What is the kind of fundraise that will be required, if at all, for this kind of growth that we're talking about? I know the name of the game is asset light, but nevertheless, is there any fundraise on the anvil?
Not at the moment. We are sitting on a very healthy cash reserve. So I don't think we would need any kind of fundraise. We are still doing capital heavy growth also. We just opened 2 hotels in Ekta Nagar, which have been built with our own 100% investment without debt. We are doing a lot of other projects in Ranchi, the Taj, or in the Northeast. We'll be doing Kaziranga. With our own capital. We are building the 2 islands in Lakshadweep. We are opening in a hybrid model the Taj in Frankfurt in a couple of months from now. So I think the combination is the key. Finding the right sweet spot between the capital heavy and capital light. We've been guiding the market on that. We started with 50-50. Today we are at 35-65. 35 being capital heavy.
And that continues in that vein as well?
That continues in that way, because I do believe in order to build strong brands, you have to do some kind of brand enhancing and flagship hotels. And we have often spoken about it on your channel. Look at what Ginger Mumbai Airport has done for the Ginger brand.
Yeah. Just wondering if the expansion plans now include a global footprint as well. Are we back at that place right now? Or the focus will be domestic?
Back at that place. So, Tamanna, on the 21st of December, we signed a very large 300-room hotel in Cairo, which will be a flagship Taj. So we'll keep doing selective Taj development in key gateway locations across the globe. And Cairo is a great addition for us in that part of the world. We opened last week the Taj Paro in Bhutan, which will be followed in the next week with Taj in Phobjikha in Bhutan. So I think having that dominance in the Indian subcontinent and selective presence in international markets with a capital light model or a hybrid is the way forward. We are definitely not going into some kind of acquisition of single assets like we had done 20-25 years ago. That's not a part of our strategy.
Puneet, I'm just taking a leaf out of that. I'm tempted to ask you. You've now maintained that post-COVID, the sector has moved from being cyclical to structural. Does this structural nature of the India business give the group and you the ability to reimagine a really large global Taj brand over the course of the next 10-15 years? I mean, we have the Marriotts, we have IHCs, we have various other brands. None of them are from India. Is your brand set to become this over the next 10 years, wherein you will not be just in gateway locations, but in multiple other locations?
Thank you, Neeraj, for that question, because it's a very interesting take. Till 7-8 years ago, from a valuation perspective, we did not feature even in the top 100. And I would say it would be fair to say we did not even feature in the top 150. But since the last 2 years, we have been consistently being rated between number 4 to number 7 from the real true hospitality companies if we take out the casino driven companies. And I think it would be fair to assume that if we continue in a very disciplined way, like we have done in the last several years, in communicating our strategy and walking the talk, with that follow-ups, despite all the headwinds that come, there is no reason why we should not get into and become stable at the number 1 to 5 position in the world. 1 or 2 from a valuation point of view maybe unrealistic, but I think if we get to stabilization between 3 to 5, it would be a very big step. And as you said, 10 years down the road, or 50, if we could go further up, why not?
Just, since we have you in the middle of January in this conversation, what is the outlook for 2026 that you're seeing, the kind of appetite you're seeing for luxury and the expansion plans?
Our guidance has always been depending on what your base level is. So like for bridge, the average yield is around 27,000 rupees. So you cannot have 20% growth on very high levels. So I think a double-digit growth on the top line remains very realistic for 2026, 27, and maybe even 28, as far as we can see it based on our like-for-like and not like-for-like growth. And that double-digit with the right amount of flow-through and conversion should keep adding to attractive EBITDA and PAT and free cash flow growth. So all in all, I've always sounded optimistic. The same is today. More I cannot say because we're in the silent period. But the sector outlook for hospitality remains positive as demand continues to outpace supply despite all possible headwinds one could have had, from an airline accident to Operation Sindoor to the flooding to the landslides that we have witnessed in the first 9 months of this financial year.
Thank you so much for that, and good luck for the rest of the year. Puneet Chatwal there speaking about what the year is looking like, and of course complete controlling stake in Bridge Hotels as well.
Hello and welcome to NDTV Profit, and now joining us from Union Bank's company's management, MD and CEO Ashish Pandey, who is joining with us. The first question is, of course, on the earnings front. The loan growth, that's been around 7% growth coming in, but earlier the guidance was between 9 to 10%. What specific strategies is the bank implementing to get these numbers up going ahead?
Yeah, thank you so much, Sharadji. Good morning to you, and good morning to all the viewers, as well as the happy festivities to all. Coming to your question, actually, yes, I agree. The growth which you are seeing from the quarter. But let me share with you some of the data points. So if we take the RAM, it is sequentially quarter to quarter, it is 4.1%, which is very robust. Now coming to the corporate book, you must be seeing there is a good, the increase in the corporate book in the last quarter. Now, let me share with you some of the insights. We had actually 20,000 crore of IBPC, actually 23,000, but one is maturing in the month of January. So around 20,000 we have shed it off, which was at the lower yield in this quarter. Point number one. Point number two, we had around 10,000 crore of short-term loans, which we have converted to long-term loans. Now, if you take, the around 30,000 crore and you add it to the growth which we have shown, because it is, reshuffle between the corporate book itself. So I think with that, you will be seeing the double digit. So I believe that the growth which we have shown quarter to quarter, and I believe it is sustainable, and we'll be going forward in similar lines only.
All right.
Still in the corporate book, we have around 24,000 crore of undisbursed, which is going to take place in the current quarter.
And Ashish ji, have you seen the CASA deposits? That has risen very sharply in the month of December, the quarter I'm talking about. What contributed to this?
Yeah, I think, it is a very key point as of today. And on the deposit, we had a very specific strategy within the senior management. And certainly it was, conveyed down to the branch level. So specifically, if you take the deposit around 40 to 45,000 crores, which was on the high cost, which we have shed it off. Now, coming to the CASA, it was 15,000 crore of increase in the quarter. And if we take the retail term deposit, which was our focus area, which we have grown by 9,100 crore. We had taken, some product we have launched during this quarter. We had some specific structure we have created in our bank, along with some 1,600 people and with a separate department. And we had some MOU with various corporates, various private as well as PSU corporations and all, and we could accrue good salary accounts. So I believe this is only as an example I am sharing with you a few. But we had a very, very specific strategy, very specific pockets for increasing the CASA, and we are of the firm belief that going forward, you will be seeing the growth in the CASA, even the ratio as well as in the absolute terms.
All right, and Ashish ji, there are different segments, the retail, MSME and corporate. Which of these segments would be the primary drivers going ahead?
Yeah, I think the ramp, typically we are growing very well since beginning. The more of the issue was, on the corporate side, but then corporate side is fully in track, and the figures which we have already shown, I think it is well placed for the next quarters and other further also. But coming to the RAM, you are very, actually very specifically you have asked. So like, retail, agriculture and MSME. Now we have made certain schemes in all the three, and certainly, it has to be activation of our branches, and we have subsidiary which is UBI Securities Limited. So that is actually also helping us in building the retail portfolio. They are our the marketing arm for the bank. Sure. So I think the retail and MSME, we are going with a cluster approach on various specific areas which are very good, and there is hardly the NPS in those regions, and we are going competitively, which is in the market scenario. Sure. So I think that is on agriculture. You must be seeing around 108 crore profit we have booked in SBLC, which shows on the small and marginal farmers and others, we have grown better in this last quarter.
Yes, Ashish ji, apart from that, what is the projected impact from the ECL norms, which is being implemented from April 1st on the ongoing credit cost, given the estimated transition impact would be roughly 4,200 crores?
Yeah, I think we have worked upon, and we do have a software in place, and we regular intervals we calculate and see our position, keeping in view the draft guidelines. So the overall, the requirement as well as the provisions which we have made across our loan book, the gap is hardly 4,300 to 4,500 crores range, and which is in much comfortable. This is actually I am talking about on the migration side. On the dynamic, regular basis, certainly the other part also you must be observing from our investor presentation that the SMA position above 5 crore is hardly 4,285. The slippages ratio has decreased, and also the credit cost. So I think that is not a much issue, and there is already a guideline for phasing it out for the 5 years. I believe that is sufficient, but the gap itself is not very high for us.
All right, and Ashish ji, what's the sustainability when it comes to the NIMs? Are you expecting the compression going ahead?
See, two scenarios I will say. The one is, the present scenario, because the economy is behaving very well, the GDP growth is coming very well, and there is a low inflation, so all conducive environment. So in case, there is a further rate cut, because our MCLR book is 48% and the repo and T-bill linked benchmark, it is around 52%. Now, there was a rate cut if you take from December 24 onwards. After that, in the current financial year, there is a 1.25 basis point rate cut, which has already been transmitted to the customers. Now, even then, the December 24 NIM was 2.91, which is right now 2.76. So there is reduction of hardly 15 basis point on that. Coming to quarter, we could improve by 9 basis point. I think this is a very good signal because of the various efficiency, measures taken by the senior management of the bank, and certainly drill down to our branches level. Now, going forward, as you asked, NIM on the both scenarios, I think we are confident to defend at least this, and but have an aspiration to move it forward, because when we aspire for a better CASA going forward, and if you take roughly I am saying the 1,000 crore of CASA, it amounts to around 35 to 40 crore of a net profit. So I think all these scenarios, and the loan book, which is now increasing on the RAM side as well as on the corporate book, we are sure that defend. Yes, we are very sure of defending it, but then going forward we will aspire to be better, improve upon that.
Thank you very much, Ashish ji, for giving your time and also giving the entire perspective for Union Bank, current and the future as well. Thank you very much for joining with NDTV Profit.
Thank you so much, Richard. Thank you.
Welcome to NDTV Profit's budget exclusive. I am Sharad Dubey and I am at Indore in Madhya Pradesh. I will be decoding the soya industry, and to give us more perspective, we are joined by Shrey Mittal. He's the director at Mittal Proteins. Giving you a very warm afternoon to you, Shrey. But the soya industry as a whole, this is the important product. This is a soya product, right?
Yes. This is a soya milk cake, we can say it, and it is play important role in Madhya Pradesh as well in India. It contain maximum number of protein right now in vegetarian. Only this product have maximum number of protein, we can say.
So the soya industry, why it is so important in Madhya Pradesh, and this important ingredient you see all across the factory, we are seeing that these are all the soya chunks or the granules which you are talking about, right?
Yes, definitely. Because in Madhya Pradesh and Maharashtra, there is a maximum agriculture land for soybean only. So that's why in Madhya Pradesh, maximum factories for soya solvent industries in MP.
मैं आपसे जानना चाहता हूँ कि ये प्रोटीन्स कितना रेलेवेंट है और भारत का प्रोटीन क्या सोया है?
Yes, definitely. You can say it contains maximum number of protein. After the COVID corona, we can say everyone conscious about their health conscious.
Right.
So basically सब जनों को ये लगने लग गया कि हमको हमारी हेल्थ कॉन्शियस पे रहना है, हम कैसे अपनी डाइट को प्रोटीन को इंटेक फुल करें.
द सोया प्रोटीन दिस द ओजी प्रोटीन्स हमारे दादा दादी भी बनाते खाते थे, पापा भी खाते थे. तो राइट नाउ द जनरेशन, व्हाट डू दे नीड टू नो अबाउट the soya?
These are natural kind of protein. We can say protein powders भी आता है, न्यूट्रिशन पाउडर भी आता है, पर उसमें कहीं ना कहीं अडल्ट्रेशन रहता है, मिक्सिंग रहती है. ये जो है ये नेचुरल प्रोटीन अपन इसको बोल सकते हैं. ये डायरेक्ट फार्मर से आता है. मैं आपको लेके चलता हूँ अपने नेक्स्ट पार्ट में जहाँ अपना रॉ मटेरियल इंटेक हो रहा है हमारा.
एंड Shrey, which is this part? यहाँ पे क्या होता है? What is happening here?
This is a raw material of soybean. तो उसी का ये हस्क है. जब हम रॉ मटेरियल वहाँ देखेंगे, वहाँ से हम ओपन करते हैं, तो उसी के जो छोटे छोटे पार्ट्स निकल जाते हैं, उसको हम यहाँ पर स्टोर करते हैं. तो थोड़ी दिन बाद इसको भी हम यूज़ में कंटेन कर लेते हैं, पर अभी ये यहाँ पे टेम्परेरी स्टोर करके हम रखते हैं इसको यहाँ पर.
All right. But the entire Madhya Pradesh government, Shrey, over the last 5 to 7 years, there has been a lot of support coming in the agriculture space. तो आपको क्या चेंजेस देखने मिला है?
मोहन यादव जी जब से यहाँ के मध्य प्रदेश की सीएम बने हैं, उनका फार्मर्स की तरफ तो सपोर्ट है ही सही, पैरेलली उन्होंने इंडस्ट्री को भी एक बहुत बड़ा सपोर्ट दे रहे हैं. आप लॉ में देख लीजिए, लेबर में देख लीजिए, इंडस्ट्री सब्सिडी में देख लीजिए, वो बहुत एक्टिवली, बहुत अट्रैक्टिव तरीके से बहुत काम कर रहे हैं.
We saw the two processes there. What is this process?
This is we can say soya refine, जहाँ पे क्रूड ऑयल निकलता है जो कि सोया रिफाइन ऑयल होता है, जो कि बाद में ह्यूमन कंजम्पशन जो कि हम देखते हैं मध्य प्रदेश, राजस्थान, सब जगह जो कुकिंग ऑयल में यूज़ होता है, वो ये ऑयल है. यहाँ से वो निकल के प्रोसेस होकर पूरे हम सबके घर में जाता है.
And the US government, they were planning to get in their exports to India. Soya industry also raised some issues. ये माजरा क्या है? What is the issue here?
Okay, so basically ये ऐसा है कि US गवर्नमेंट चाह रही है कि वहाँ का जो सोया मिल्क केक है वो इंडिया में इंपोर्ट हो. बस वो अपना हमारी गवर्नमेंट के लिए और हमारे लिए अच्छा नहीं है, बिकॉज क्योंकि जो इंडिया में आता है, जो हमारे इंडिया में खुद में होता है, वो होता है नॉन GMO. उनका आता है GMO. नॉन जीएमओ इज नॉन जेनेटिकल मॉडिफिकेशन, उनका केमिकल मॉडिफाइड रहता है। अगर वो इंडिया में आता तो हमारे इंडिया के लिए अच्छा नहीं है, क्योंकि दोनों चीज़ मिक्स हो जाएगी। प्लस जो हमारे लोकल प्लेयर्स है उनको बहुत बड़ा डिसएडवांटेज मिलेगा, फार्मर्स को डिसएडवांटेज मिलेगा। रॉ मटेरियल जो है ये मेडिसिन में लगता है, सेकेंडरी कॉस्मेटिक में लगता है, चॉकलेट्स में लगता है, तो उन सभी जगहों पर ये लगता है। तो ये कि रिफाइनरी का बायो प्रोडक्ट्स अपन बोल सकते हैं इसको।
एंड श्रेय, बट द वेरी इंपॉर्टेंट थिंग इज योर बजट एक्सपेक्टेशंस। बजट 2026 में इंडस्ट्री की क्या एक्सपेक्टेशंस है? व्हाट आर यू थिंकिंग एज ए इंडस्ट्री पर्सन हियर?
आई एम थिंकिंग कि सेंट्रल गवर्नमेंट को थोड़ा एक्सपोर्ट इंसेंटिव पे इनको फोकस करना चाहिए। हमारा आज भी एक्सपोर्ट जो है बहुत कम है एज़ कम्पेयर टू यूएस, ब्राज़ील, अर्जेंटीना, क्योंकि हम उनकी प्राइस कॉम्पीट नहीं कर पाते। डेफिनेटली इंडियन की प्राइस थोड़ी ज़्यादा है, हायर है एज़ कम्पेयर टू यूएस, ब्राज़ील, अर्जेंटीना।
सोया इंडस्ट्री 2026 या 2027 इसका आउटलुक क्या रहेगा? ये बहुत वॉलेटाइल मार्केट रहता है, बट बताएं व्हाट्स द व्यू?
डेफिनेटली एक बहुत वॉलेटाइल मार्केट है, बट अगर हम इंडिया में देखें, वर्ल्ड वाइड देखें, तो प्रोटीन की कंटेंट कहीं ना कहीं बहुत इंक्रीज हो रही डे बाय डे। तो उसके लिए एक सोर्स हमारे पास ये सोयाबीन ही है, जो कि सबसे ज़्यादा हाई मैक्सिमम वॉल्यूम में प्रोटीन देता है। तो इसकी इंडस्ट्री बढ़ना ही है डे बाय डे। प्लस हर चीज़ में हमको गवर्नमेंट सपोर्ट मिल रहा है, प्लस एग्रीकल्चर की तरफ से सपोर्ट है, तो कहीं ना कहीं बढ़ना ही है। इसका इंडस्ट्री का आउटलुक कम नहीं होना अगर हम देखते हैं।
Thank you very much, Ray, for giving the entire view of the soya industry, and best of luck for the future.
Thank you so much.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra, and we are in the midst of a solar field, and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets old industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I'm spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles, and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards.
You can get everything at the click of a button. But the moment you want someone to help you clean your home or wash your dishes, it seems like the most unimaginable task.
The idea of trying to organize help through an app. Why and where has that idea come from?
I personally grappled with it to the point where I literally had to call my mom. And as a matter of fact, she flew down from Calcutta. And
to help you find someone to clean your house.
Yes.
Everyone goes and speaks to the watchman. You know that, right?
Yes. I didn't know that channel existed.
You worked with Zepto.
Yeah.
And ending up your career with Zepto as chief of staff. You didn't do it for long.
I did it for 9 months. See, the company matured too fast. I think eventually the organization found a lot of structure and better people to do it, in fact.
Are we ensuring that the lives of those who are doing these jobs are also truly becoming better and are not exploitative?
Discounts that we introduce are actually funded by us and nothing that the expert has to bear the brunt of. So a lot of people think that the 10-minute value proposition is great for consumers, but it kind of puts pressure on the expert side. It's actually untrue. It's also great for the expert who just spent 5 minutes to reach you, which means they can actually do more jobs within their data period.
Thank you so much for joining in.
Thank you so much, Tamanna, for having me.
I believe you are the youngest company to have been featured on this show in the year or that we've been doing it.
Clearly, we're doing some things right.
Yeah. So I think the reason we're talking to you in what is possibly your infancy, as far as the life cycle of a company is concerned, is because of the pace and speed at which you have also grown and the space you're in.
Yeah.
And not that you're the only one, but the idea of trying to organize help, domestic help at home, these services through an app. Why and where has that idea come from?
So I think, obviously I've been doing a bunch of jobs before this, right? And the one problem I always grappled with as a bachelor living in Bangalore or in Bombay was that you can get everything at the click of a button. So you can get your food delivered, you can get groceries delivered, you could get a cab in a couple of minutes. But the moment you want someone to help you clean your home or wash your dishes, it seems like the most unimaginable task. And I personally grappled with it to the point where I literally had to call my mom and say that, look, I don't know how to get it done. I have tried everything digitally available because that's the fundamental and default way of doing things today. But that doesn't seem to work in this category. And as a matter of fact, she flew down from Calcutta and
to help you find someone to clean your house.
Yes.
Everyone goes and speaks to the watchman. You know that, right?
Yes. So I think I was just like, I didn't know that channel existed.
Wow.
That you can, for everything else, you try to download an app, but for this, you still need to go and talk to your watchman.
There are still some things that happen IRL.
Exactly why Snabbit is around now. So yeah, I think that whole experience left a very deep mark on me. So despite a lot of attempts that had been made previously to kind of regulate and organize this category, we took a very fresh approach, came up with this hyper-local on-demand concept after a bunch of trial and error, and finally that's what you see as Snabbit today.
Okay, we'll go into those trial and errors first, but let's rewind a little and start at the beginning. Early life, education, and then the first job.
Yeah, so I think I was born and brought up in Calcutta, and I lived there right up until my graduation. So was always a studious kid, deeply involved in extracurriculars. But I think somewhere along the way, lost my path and got really too relaxed about life. I think it was a great learning. It was a great experience to just like look at every other part of life and then get thrown into the part where you need to really build yourself up now. So that's how I found myself in IMT Ghaziabad, where I did my MBA. Right after
They didn't tell you how to find help and speak to the watchman?
Definitely not. That's not part of the MBA curriculum. Hopefully someday Snabbit will be a case study, but not as of now. So spent a couple of years over there, and then finally got posted in Bangalore at an investment bank, doing a back office job, which didn't excite me as much, and that drew me to the world of startups thereafter.
Yeah, and then you worked with Zepto.
Yeah.
And ending up your career with Zepto as chief of staff.
Yeah.
What does a chief of staff do?
The chief of staff basically does anything and everything in the company. So I think an organization defines what a chief of staff does. So it's not true for any two organizations. It's not the same. But I think at least at my time at Zepto, I had two key charters. Number one was solving problems, and trust me, there were a bunch of them in the early days because the company was growing really fast. So whether it was about going into a dark store and solving for inventory issues, whether it was about looking at a particular city that might have not been doing it very, very well, those problems which were deeply operational and also gave me a very on-ground understanding of how hyperlocal businesses are run and built. I think that was a fundamental part of what I did. And the second thing was just helping in raising capital, working very closely with the founders, and actually withering one of the toughest macro environments of the funding winter in a category that for long remained misunderstood. And I think coming out of it as a unicorn, I think those two things were charters that I predominantly helped with.
Yeah, so sounds like a position that's very, very crucial, important. You didn't do it for long, though.
Yeah, I think I did it for 9 months.
That's a blink in a career.
Yeah, I think the company matured too fast, and it grew very fast as well. So I think for a lot of things that I was initially doing, I think eventually the organization found a lot of structure and better people to do it, in fact. And as a restless person who wanted to do more, I just decided to start up.
But it gave you a great grounding on how
100%.
to, because you shadow the lead, right?
Yes.
In that sense, and it taught you how to build up a company. Would you have a chief of staff? Do you have a chief of staff?
Yes, I do. He's joined in very recently, but I do.
Yeah, so at least 9-10 months you have with him. No.
Until he starts his own company, which is great. But
No. On a lighter note, the reason I'm asking about it is because I think it's interesting that you've sort of had your first experience working in consumer internet in a company that delivers groceries in a very short time.
Yeah.
And then to some extent, you apply this to delivering services. But what gets tricky when it comes to services, and that to one which is not clearly defined, is then it's about people. And everyone's different.
Yeah, I think, the only constant actually, the fact is that 90% of it is different because you're traditionally dealing with a very different cohort. You're not dealing with a male-heavy cohort, you're dealing with a female-heavy cohort. The way you look at the network design, the way you plan everything, those playbooks have to be built from scratch. I think the only thing that really actually extends itself to any quick business is the density and the network economics, because how dense our micro markets are and how our neighborhoods are structured, those allow for such businesses to flourish. And I think that is the only part that I borrowed. And I think that was the innovation, that no one in services ever thought of being a truly hyperlocal model. But if you look at your traditional house help, if you look at your traditional cook, they're actually operating a hyperlocal model.
Yeah, they live there. That's why they can come every day.
They don't just live there. They actually work at the 4th floor, and then they probably work at the 6th floor after that. Then they go into the next building, and then they work in the 5th floor over there. So they're basically operating offline, but hyperlocally. And yet, no formal service model was created, which was hyperlocal in nature.
What is the sort of training or what is the attempt to make it more uniform so that you have a uniform service?
So let me give you an instance, right? So for example, we stay at hotels very often, and for prolonged stays, we get housekeeping done every day. You will mostly see a different person turn up every morning and to clean your room. Yet we don't seem to have a problem. And the fact is that they have been trained in the same way to do the same thing, right? So for as long as you're able to create a training curriculum which can condense all those learnings in a shorter format, which we've done for a span of 3 days, and you're able to solve for intent of the expert. So the entire training module that we have at Snabit is geared towards solving for intent of the expert, because we know that the skill level of the service that we provide is not very high. But if you have the right intent, there are actually very few ways of cleaning the house, which is why only 3% of our jobs are rated 1 on 5. And more than 90% of our jobs are rated 4 and 5. And we're talking about thousands of orders being delivered daily.
What is the average daily order volume?
Right now, it's 20,000 jobs.
20,000 jobs a day already, huh?
Yes.
And how long has the company been in existence?
Roughly around 7 quarters.
Wow. What is the scale of growth that you're seeing? I'm just trying to understand what is the appetite for this, because we are such a diverse and vast country, right? For a section of people watching this program, they must be thinking it's a no-brainer. Of course, I'd love this.
Yes.
For a section watching it, they would say, this makes no sense. You have a relationship with the person who comes and works in your house every day.
Yes. So I think, so there are two ways of looking at it. And I think it can draw parallels from any other consumer internet business. So there is a default and a primary way of using a platform. And then there is a backup way of using a platform. To think of it in the quick commerce context. A lot of people use quick commerce for their entire basket of monthly groceries.
Yeah.
A lot of them use it for top up, right? We have a bunch of young consumers who think that they want the flexibility of being able to call for a house help at the frequency and time that they need. Now, getting someone to come and clean your home is as simple as getting a cab, something that, I initially kept thinking about, right? But then you always also have those families that rely heavily on their house helps and
yeah, like I said, it's a relationship in a lot of cases. So, okay, the sampling that I have done and people I have spoken to, and I think you're right. For those emergency days,
yes,
I think you would be seeing a lot of people coming, and you advertise that way also,
Yes.
that if your regular help has suddenly not turned up, you don't have to fret, and you can just have someone
Yes.
come in. Then there are questions. How do I trust? Because this is also a relationship of trust. You're
Yes.
letting someone into your house.
Yeah. So I think Snabit is a very interesting and a very important use case whenever that relationship breaks, and it breaks at least 4-5 times a month when your house help just doesn't turn up, right? And for very fair reasons, something we don't empathize with fully, but I think having built Snabit, I now understand why these leaves
People
occur.
have other things to do. I know. And this is a segment of society which does not get the fair treatment it deserves.
Yes. I think when you're the secondary breadwinner of a family, you have to deal with everything else that happens at home. And we're primarily dealing with a lot of secondary breadwinners. So I think when Snabit steps in, the onus is on us to make sure that the trust is at the same level at which it exists for your traditional house help. So for example, we go through a very rigorous process of background checks and vetting. It's not just about ensuring that your Aadhaar card is legitimate. It's also about getting a very thorough background verification done. Your court and criminal records are checked. And we actually have physical training centers where these experts spend roughly around 25 hours across 3 days, and then eventually get certified to go out and service customers. And few of them don't make it. So I think the process that we've built on the supply chain side to ensure that it's not a low touch point model. We engage with these experts deeply.
Now let me come to, I think, the hot potato topic right now, which is that these are essentially gig workers. They would come under the overall overarching theme of or category of gig workers. And the question right now, which has become a national debate really, is in all of these models, which make the lives of people like us easier, get someone at a touch of a button. I'm sitting in my house. I don't have to stress. Are we ensuring that the lives of those who are doing these jobs are also truly becoming better and are not exploitative?
Yeah.
How aware and how big a part of your model is this to make sure that they're being paid well? Because some of the rates initially that you see are very, very low. It's as low as I think $100, $150 an hour. That truly, on the face of it, seems exploitative.
Whenever you're introducing a new category to the consumer, you want to, and typically this is how all consumer
this is acquisition cost.
This is an acquisition
You're heavily
cost.
subsidizing what
Yes.
people pay.
So we're basically saying that we want to make the first offering to a consumer so sweet from a pricing perspective that you get introduced to the concept. And once you understand and you take a feel of how disruptive it truly can be, you end up paying the full price. And that's how the pricing model is. So any discounts that we introduce are actually funded by us. And those are not intended to be perpetual in nature, but they're only short term because this category is being built from zero.
So how much cash are you burning right now?
Not much. I think it's becoming better. But I think we definitely burn a lot more when a consumer is purchasing the first 3 orders with us. But I think that burn significantly reduces.
Is there a metric you can share of what the customer acquisition cost is right now?
See, roughly our customer acquisition cost is around 500 to 600 rupees. And we're confident that if given the fact that we have best in class consumer retention and an average customer transacts with us 3 to 3.5 times a month, we're able to get a payback for that initial acquisition cost within 9 to 10 months, something that we're working very aggressively towards bringing down. So I think it's just I would say an incentive for consumers to get introduced to the category and nothing that the expert has to bear the brunt of. Talking about the expert, right? Think about this model. The way it works is that and this is one of the hardest pivots we did. The biggest pivot we made was from subscription to an on-demand service. The moment you're paying for 1 day of service, the propensity for the customer to pay or the elasticity of price significantly reduces. So people are relatively price inelastic when they're solving for an urgent ad hoc use case, which allows us to command almost 100% premium.
How much does an average help or expert who works with your company earn in a month?
An average expert who works with us 8 hours a day and 25 days a month, because we're very flexible with leaves, typically earns north of 20,000 rupees.
And you're saying that this is much more than they would otherwise earn.
Yes.
And how many jobs would
And they're not working for 8 hours. So
how many jobs would they do typically in a day?
They would typically be working for 5 hours.
5 hours a day.
So they're working for 5 hours and they're making somewhere around 23 to 24,000 rupees.
Okay. Do you think that this is a sustainable model? And the reason I ask this, that when we have seen the journey of a lot of businesses fueled by gig work, whether it's cab hailing, whether it's delivery, whether it's quick commerce, whatever it is, it starts off as a great proposition for those you bring in because you have to pull in supply and demand, right? Over time, that starts changing. At least that's what the trend has been so far. How will you ensure that doesn't happen while you still turn a profit?
So we have to, it's a very good question, right? And I think businesses like ours, consumer internet businesses like ours are either perceived to be burning a lot of money or they're perceived to be like, making some kind of exploitative change on the expert side. But I think the fundamental balancing factor over here is the system efficiency, which for us is measured in terms of utilization. So the way I look at and the way I would like for this category to be understood is that you have 8 hours of work that the expert is willing to do. Now, what part of it you're able to utilize is up to us, which means that at what frequency within that day can we actually provide jobs to that expert? Because what the expert is ultimately optimizing for is the take-home salary. And she is actually available to work for 3, 4, 5, 6 hours within that 8-hour period. Now, because we need to guarantee a certain amount of take-home salary for that expert, even if I'm not able to provide them for the 4 or 5 hours of work, and even if it's 2 hours, I still need to provide that.
Okay, so now let me understand this. You have a minimum guarantee of payments for someone doesn't get a single call?
Yes, we do.
Okay.
So the way it works is that as your system becomes more efficient, as your network becomes denser, you are able to provide more jobs to the expert. As your networks become denser, the experts spend less time traveling. So a lot of people think that the 10-minute value proposition is great for consumers, but it kind of puts pressure on the expert side. It's actually untrue. It's quite the opposite. Imagine someone traveling 5 minutes to deliver a 60-minute service. They're actually spending 15% of unmonetized time to earn for 100%. Imagine the same expert traveling 30 minutes and reaching you in 30 minutes to deliver a 60-minute service. Now they're spending 50% of the time as unmonetized, right? So actually reaching you in 5 minutes is not just great for you as a customer, it's also great for the expert who just spent 5 minutes to reach you, which means they can actually do more jobs within that 8-hour period.
What is the cap on the number of jobs per day?
It does not depend on, because a job could be a 4-hour job, it could be a 2-hour job. So the cap is not on the number of jobs.
The number of hours at one go, or it's 8 hours they need to be available.
They need to be available in 8 hours. It's like a shift that they're working in, very much like any other shift works. And how efficiently we're able to utilize their time, yet make sure that the conditions are very, very favorable, that's on us.
What perhaps is going to be a challenge is to continue to make sure you're also preserving the dignity of those who are working and how much they're making going forward as the volume grows.
So I think we're very clear on our fundamental principles that this model will become profitable, not because we will pay our experts less, but because we will be more efficient as a network. And that's a fundamental belief that we have, and that's how marketplaces are built. And as far as dignity is concerned, so see, the smallest changes drive the most meaningful outcomes. We don't call them maids. We don't call them house helps. We call them experts because we genuinely believe that the work that they do is extremely critical.
Do you think they care? Wouldn't it be more important if they're actually making proper money?
You will be surprised, but it's not. When they wear that uniform, when they accept a job and when they enter that OTP, and when someone calls them madam, they feel really happy. And I think that feeling, I don't think there's an amount of money that can solve for it.
Why the name Snabbit?
Snabbit actually means quickly in Swedish.
So you took a Swedish name of all things.
But it rhymes with a lot of English words which also talk about speed.
Rabbit.
Snap it.
Snap it. Okay.
So we were very clear that, there are two vectors that, you can build a consumer internet company on. One of them is quality and the other one is speed. So we wanted to occupy that mind space and say that we're not just great because we know you already think of us or we will just be out of business, but we also want you to know that we're very quick. So I traded through a few names before finally arriving at Snabbit.
Let's talk about the elephant in the room. You have a rival, which is loaded up right now after raising money from the capital markets, established since a longer time, knows how to work in the delivering service on a consumer internet technology platform. How are you going to deal with that?
Let's say we're already dealing with them. But look, I think firstly, I have massive respect for what Urban Companies built. I think they've built a phenomenal business and in a very complex category, right? And I think they've kind of been the only organized player that has really scaled and now it's listed. So I think the way I look at it is that having competition that has executed really well historically only pushes us. I don't think we would have been doing 20,000 orders a day if we didn't have competition. So in a lot of ways, I think competition has allowed this category to be built faster, and the very, very healthy rivalry or competition that we have with Urban Company in this particular category has landed them a category which is very high on frequency. And like as we can see, they're investing heavily in InstaHelp. As for us, we think this is a very, very different category. For example, it's a hyper-local, nano-market driven, non-inventory based, high-frequency category, which is charged by the hour. None of those things are true for any other category that UC has, right? So I think while it's in the service domain, there's a very distinct difference between...
No, but InstaHelp and Snappit have the same service.
They have the same service, right?
Yeah.
But all I'm saying is that InstaHelp actually came into being a year later. So we started in 2024. InstaHelp started in 2025.
Are you saying the idea came from you?
Yeah. That's like, that's not conjecture. So I think back in 2024, when we delivered our first order, there was nothing like this that was operational. And it's only after we raised Series A and I think we started getting meaningful traction. I think that's when people took notice about this category, which I think was validation for us. So we never saw it in negative light, and we don't see it in negative light today as well. So I think consumer internet categories, largely successful ones, have not been monopolies. They have been duopolies, right? So I think the fact that we're at a very early stage competing with a publicly listed player that has so many years of experience behind it actually makes us compete really hard, execute really well, and eventually get to a better outcome.
What would you say would be your goal for your company, for yourself 12 months from now?
Yeah, so I think this is a very deep category and a very large one. An average household, just to give you some numbers, spends roughly 50,000 rupees a year on services. And 98% of those spends are today offline. So this is typically, if you look at the top 50 million households, this is a $40 billion annual spend category that is growing at double-digit CAGR, expected to be roughly around $100 billion in 5 years. And 98.5% of that is still offline. So the scope to disrupt, not just in one category, but in multiple categories, is really large. I call it India's last major offline habit, right? Because everything else we're used to doing online now. And I think we're just getting started. So we're doing 20,000 orders. Just to give you some numbers, 40 pin codes only drive 80% of the orders we're doing, because the rest of the micro markets that we've launched are fairly young. It's just been launched 3 months back. So I think there's a lot of depth in this category. And we genuinely feel that there is going to be a point in time, I don't know exactly when, maybe like a couple of years out, maybe more, but 1 million jobs a day is actually going to be a reality for this category.
Wow. So a lot to unpack. Ayush, this sounds like an exciting journey. We wish you the best of luck.
Thank you so much.
And thank you so much for coming in today and taking our questions.
It's been my pleasure. Thank you.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards. An odyssey of creative brilliance, where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
New Year. New power panel. India
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets are fared today. So benchmarks have erased the Friday morning cheer in a late pullback with Nifty ending below 25,700 levels. Nifty has ended largely flat for the week while Sensex also managed minor gains for the week. And sectorally, if we talk about, so IT stocks have seen some strong buying there in trade today as the sentiment improved on the strong Infosys outlook, and on the losing side, pharma was the top sectoral drag today, followed by energy and metals. In fact, Infosys has raised its full-year revenue guidance to 3 to 3.5%, which is up from the earlier 2 to 3%. Now, after delivering a largely in-line Q3 performance, but profits are, taking a hit down nearly 10% sequentially as the company absorbed a one-time 1,289 crore impact from the new labor codes, dragging the bottom line. Despite the profit miss here, Infosys has reported strong deal momentum with large deal TCV jumping 56% quarter on quarter to $4.8 billion, which is one of its strongest quarters on this front. And Cipla has been hit by two major disruptions. First, that its subsidiary has paused production of lanreotide, which is a key peptide drug, and with manufacturing halted, the resupply is now pushed out to the first half of FY27, and this is creating a long supply gap. Second is Pharmatin's facility in Greece, which is a partner in Cipla's supply chain, has received an FDA Form of 483. So inspectors have flagged data integrity issues, and this is raising the compliance concerns. So together, these manufacturing and regulatory challenges pose near-term supply pressures and also a potential risk impact for Cipla. And viewers, AMC stocks are seeing some sort of strong traction today. This is boosted by robust Q3 numbers from both the HDFC AMC and ICICI Prudential AMC. So the stronger than expected earnings have triggered broad-based basket buying across the asset management space. Now, at the same time, domestic institutional investors are steadily increasing their positioning, and this is also signaling rising confidence in the sector stability and also the earnings visibility. Brokerages too, in fact, are turning firmly bullish, saying that the worst of the margin pressure is behind the industry, and importantly, the market believes that the impact of lower, tier norms is largely factored in. I beg your pardon. Viewers, Nalanda Capital has made a notable move in IndiaMart Intermesh. This is scooping up a 1.86% stake for 236 crores, and this is signaling renewed institutional confidence in the B2B marketplace. So the stock's valuations have sharply cooled, now at a P ratio of 22.5 times, which is compared with the peak of 90 times in 2021, making it far more reasonable for long-term investors. And IndiaMart continues to deliver strong return ratios with ROCE at 34% and also ROE at 29%. And this is backed by a solid 29% PAT CAGR over the last 5 years. And as the largest online B2B marketplace in India, the company remains well positioned. Let's look at some brokerage notes now. Morgan Stanley has maintained its equal weight stance on L&T Technology services while cutting the target price to 4,420 rupees. The brokerage has said that the company's recent strategic portfolio running is likely to moderate growth across FY26 and FY27 as the LTTs, recalibrate its mix of offerings. So, however, Morgan Stanley expects the pace of, margin improvement to pick up, and this is supported by operational discipline and also sharper execution. They have also highlighted that the company's medium-term margin aspirations remain intact despite the near-term growth headwinds. Next up, we have Federal Bank that has delivered a strong Q3 performance with robust NII driving a clear, earnings beat and also overall growth coming in better than expectations. Profitability, if we look at, remained healthy, and this was supported by strong, NIMs and also a solid uptick in the other income segment. And the net interest margins have improved, 12 basis points sequentially to 3.18%, while the other income has jumped 20% year on year. And this is giving meaningful push to the bottom line. So cost discipline has also showed through, with the cost to income ratio easing 12 basis points to 53.9%. And on the asset quality front, if we look at, provisions have declined 8% quarter on quarter to 330 crore rupees, and also slippages have been moderated. In fact, brokerages are turning increasingly upbeat on growth outlook, with both Citi and Jefferies maintaining their bullish stance. Now, Citi has a buy rating with a 195 rupees of target, and this is highlighting strong, traction in the MTF momentum, also improving the client activity and also steady progress in wealth and product scale up, while also retaining a clearly, constructive view on the platform. Jefferies is equally positive, and they've also, assigning a 195 target, and also pointing out that new ventures are ramping up faster than expected. They also believe that new businesses will be a major future growth drivers, and also they've noted that gross product velocity model mirrors Robinhood's approach. So Jefferies is also factoring in better operating leverage and raises FY26-28 EPS estimates as well. Viewers, Investec is staying firmly bullish on Angel One, maintaining its buy rating with a target price of 2,850 rupees. Now, the brokerage says that a strong quarterly performance should trigger earnings upgrades with better broking, realizations, driving a clear PAT beat here. Now, Angel One has also maintained its market share in the broking business, and they are underscoring the strength of its competitive positioning. Now, Investec is highlighting that the company's digital-first operating model is now delivering meaningful operating leverage, while new initiatives are also showing strongly early traction. Next up, we have Kernex Microsystems that has scored a big order win, bagging a contract worth 2,465 crores, and the order is for the supply and installation of 3,024 sets of onboard coverage equipment, also strengthening the company's presence in railway safety space. So the project will be executed within 12 months, and this is marking one of Kernex's, fastest rollouts for such large-scale deployments. And also, what makes this, even more significant is the company's scale. So Kernex market cap as of January 14 stands at 2,128 crores, meaning that the order size actually exceeds the company's valuation. And since we are talking about, the orders, let's also talk about a stock that was under pressure due to an order. Now, HPL Engineering has missed out in the latest round of locomotive Kavach tenders, losing the bid for 6,300 units. Now, the company was edged out due to the lower competitor pricing, which has tipped the balance in highly competitive round of evaluation. Now, following this outcome, HBL has now revised the total demand estimate for Kavach equipped locomotive units to 12,129 units, and this is reflecting the scale of opportunity still ahead in the nationwide deployment pipeline. Viewers, next up we have SW Solar that is soaring, after posting a strong Q3 performance there. Revenue has jumped 13.9%, which is nearly 14% to 2,092 crores versus 1,837 crores. Even though EBITDA has slipped, 4.8% to 66.9 crores, and this is pulling the margins down to 3.2% from 3.8%. The bottom line, however, showed stress, and the company has reported a net loss of 2.8 crores compared with the 14.8 crores of profit last year. But sequentially, if we look at, the numbers show sharp improvement, and this is backed by record order inflows and also the highest ever order book. Next up, we have Patel Engineering that is in focus after ace investor Vijay Kedia picked up a 1.01% stake, and this is also signaling renewed interest in the company's growth trajectory. Now, operationally, if we look at the numbers for H1 of FY26 show a mixed but improving picture. Revenue is up 7.2%. This is reflecting steady project execution. However, EBITDA has dipped 2.1%, and this is also indicating some pressure on the operating margins front. Now, on the positive side, if we look at profitability has strengthened meaningfully, with net profit rising 20.1% in the first half of the year. Next up, we have KPI Green that has secured a major solar order. Gujarat, bagging contracts for 534 megawatt solar power project. Now, the mandate covers both supply of goods and also comprehensive on-site services, reinforcing the company's execution capabilities in the large-scale renewable project. Now, the order strengthens KPI Green's position in the rapidly expanding solar energy space and also adds meaningful visibility to its project pipeline. Now, since we are talking about green energy, let's put the spotlight on a renewable energy counter. Waaree Renewable has delivered a strong Q3 driven firmly by robust execution, leading to its highest ever revenue. EBITDA and PAT, the company has maintained its EBITDA margin guidance at 18 to 19%, and this is supported by disciplined project delivery. The unexecuted order book stands at 2.92 GWP, giving strong visibility for future quarters, while the company has also expanded into BESS and data center solutions. Now, broadening its clean energy footprint. Financially, if we look at, revenue has surged 136% to 851 crores. EBITDA has jumped 121% to 159 crores, and net profit has risen 125% to 120 crores, even as margins have moderated slightly to 18.7% from 20%. Next up, we have ME Photovoltaic that has posted a strong Q3 performance with growth driven by its capacity expansion and also better utilization levels. Now, both of which have supported a sharp scale up in operations. The company is set to deliver 6.3 gigawatts over the next 12 to 18 months, giving strong visibility for future revenues. Financially, if we look at, it's been a standout quarter. Revenue is up 118% to 1,152 crores, while the EBITDA has risen 105% to 413 crores. Margins came in at 35.9% versus 38.2%, still very healthy despite a slight dip there. Now, Zydus Life Sciences has received a key approval from the US FDA for its Electrom Bopac tablets, now which is a drug used in the treatment of blood disorders, and the therapy works by stimulating the bone marrow cells, helping increase the platelet production in patients with low platelet counts. Now, the tablets will be manufactured at Zydus' facility in Ahmedabad, and this is strengthening the company's US portfolio. So the drug is a significant opportunity, and it also enjoys annual US sales of about $1.26 billion. And India and the European Union are edging closer to clinching a long-pending free trade agreement as top EU leaders are set to arrive in Delhi for Republic Day celebrations. The visit is not just symbolic, it's strategic. Negotiations on the India-EU trade deal have made significant progress with 20 out of 24 chapters already closed. Officials are saying that only a few tough issues remain and the final push could happen during the summit on January 27. Now, Commerce Minister Piyush Goyal's recent Brussels visit is also being seen as a decisive step. Now, if sealed, this could, reshape India's trade ties with its largest export destination. And with that, it's a wrap on this edition of Market Express, viewers. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics.
We've been doing more and more improvements.
We are the fastest growing amongst the major economies.
Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb. And this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I am spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV, bringing this subject forward, would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
IHCL in focus. It's set to acquire a 51% stake in Bridge Hospitality, bringing the boutique luxury Bridge brand into its portfolio as it accelerates expansion in the experiential leisure segment. This deal follows IHCL's recent controlling stakes in Ank Hotels and Pride Hospitality, significantly strengthening its mid-scale and leisure segments. To understand more about it, I'm joined by Puneet Chhatwal, MD and CEO at IHCL. Thank you so much for this conversation with us. Let's start by understanding why Bridge Hotels, why this controlling stake, what's the strategy there?
Good morning. Thank you for having me. I think this is a natural consequence of the partnership that we had formed with Ank and Pride. And we had the Bridge portfolio already on our distribution platform. And given the way the mid-market is expected to grow in India because of the rising middle class as well as the disposable income connected to it, which we've all seen with the rise in domestic tourism, I think it helps us to take a leading position both on the mid-market segment in leisure, in business, as well as in upscale segment through the Bridge brand.
What is the kind of addition to the top line you're seeing, Mr. Chhatwal, as a result of this acquisition and the other two that you mentioned as well?
You see, at the moment, we have done the acquisition, which will be complemented with asset management efforts. So the Bridge acquisition should give an addition next year itself of 100 crore on the top line. Currently, the portfolio performs at an EBITDA margin of around 38%. We expect that with the operational synergies to go up to 40%. And I think given our distribution network, given the synergies in similar markets that we have, we should be able to drive higher value both at a brand level as well as at a revenue level. I can give you an example. In a city of Banaras, where we have the Taj Nadeswar Palace, we're doubling the Taj Ganges inventory, adding another 100 rooms, should come online by the next 10 days or 15 days. Now we have the Bridge Rama. Few days ago, we announced the opening of Avantika, also on the Ganges, also on the Ghats. Then we have the Tree of Life, and we have a Gateway and a Ginger under development. So how we go into the depth of each of the important top upcoming micro markets in India has been a part of our strategy, and covering and addressing all customers in all segments is playing out very well for us.
Puneet, Neeraj here, I just wonder if this will become the template wherein large behemoths like your group will get enough opportunities to acquire either vertical specific or region specific brands at a good IRR price for you to expand while incurring lower costs.
Absolutely right. I don't know how you got insight into it, but maybe because you've been following us closely, Neeraj. I think important for us was to get our strategy right, number one. Number two was the capital structure needed for it. Then eliminating debt, building a good cash position, and then as and when good opportunities come up for inorganic growth, to deploy that cash cleverly so that you are not actually diluting the current margins or the growth in the top line.
And would it be fair to assume, I mean, because these acquisitions per se, when I look at the numbers relative to your size, are not very large. So is this a string of pearl strategy, and do you believe that there is more in the offing over the course of the next 12 months, 2026, for example?
Yes, for sure. I think it's a very interesting question. The one we did earlier with the Ank and Pride was to convert 90% of that portfolio, or 85 to 90, whatever the number would be at the end of this calendar year or the next financial year, to Ginger brand. That would have given, or that will give Ginger a scale of 200 plus operational hotel and a 250 hotels portfolio. So we took 20 years to maybe get to our first 50. And then within 1 year, we just scale up. So scaling up a brand in this kind of segment is fundamental to the long-term success of the brand. And some of that may not add so much to the top line or bottom line, and some will. Then you try to use asset management initiatives to reposition that product within the same market. Then add, our F&B offerings like Cumin. Take the F&B offerings that the partners have done, and then you synergize to get the brand on a very fast track growth, so that 250 plus then goes on to become 500 or 700 in the next 5 to 10 years.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
NDTV Golf Pro in partnership with PGTI returns for its much-awaited second leg. This time from the breathtaking Boulder Hills Golf and Country Club in Hyderabad. India's finest professional golfers meet Hyderabad's top corporate leaders for a day of precision, camaraderie and spirited competition on pristine fairways. Watch at these times.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. The first Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies. Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work.
NSE notifies it will remain open for a live trading session during Budget Day on the 1st of February, falling on a Sunday. Trading will be conducted as per standard market timings. BJP-led Mahayuti Alliance leads in 116 wards in the BMC. BJP has an edge in 88 seats, while Eknath Shinde's Shiv Sena is ahead in 28 wards, followed by Thackeray cousins with an edge in 82 wards, while Uddhav Thackeray's Shiv Sena is ahead in 74. Raj Thackeray's MNS is leading in 8 wards. Market ends the week in green with ONGC and Tech Mahindra as the top Nifty 50 gainers. PSU Bank emerges as the top sectoral gainer, followed by Metal Index gaining over 4.5% for the week. Wipro's Q3 numbers miss estimates and the margins drop by 140 basis points to 14.8%, but Tech Mahindra beats estimates in the third quarter despite the revenue decline. MEA spokesperson Randhir Jaiswal says India and European Union will meet for FTA negotiation on the 27th of January, a day after they attend the Republic Day celebrations. And as the world gears up for World Economic Forum's annual meet from the 19th to the 23rd of January, a special report on why it matters is coming up ahead on the show. Hello and welcome. A very good evening, viewers. This is Mallika Mishra on NDTV Profit, and you're watching Profit 360, a show that gets you deep insights into markets, national as well as international news. Let's start with an interesting story that's just come out. You might have to work on Sunday because in a rare move, India's stock exchanges, the BSE and NSE, will remain open for trading on Sunday, February 1st, 2026. Now, this is because Finance Minister Nirmala Sitharaman will present the Union Budget 2026 at 11 a.m. that day. Both exchanges have announced full regular trading sessions with standard timings. The pre-open session will run from 9 a.m. to 9:08 a.m. and normal trading in equity, derivatives and other segments will also take place from 9:15 a.m. to 3:30 p.m. So it's going to be business as usual. Now, this allows investors to react immediately to the budget announcements. Note that some special sessions like T+0 settlement won't happen on that particular Sunday. But let's now take a look at how the markets closed for the week. Now, in fact, markets closed a volatile day of trade with the Nifty snapping its 2-day losing streak today. The index, in fact, gave up most of its intraday gains to end just a point above 25,700. But zoom out and check the whole week, the Indian stock markets closed almost flat. The Nifty ended marginally higher, with ONGC and Tech Mahindra leading the gains. For the full week, ONGC and Tech Mahindra and Tata Steel each rose over 5%. The Nifty Mid-Cap 150 slipped slightly by 0.05%, with LTTS and Dixon Tech being the biggest losers, both down over 10%. The Nifty Small Cap 250 also closed flat, where Tejas Networks and Apar Industries fell over 9%, but IFCI and Angel One jumped more than 18% to top the list. Among sectors, Nifty PSU Bank and Nifty Metals were the strongest gainers, both gaining over about 4.5%, with PSU banks taking the top spot. Union Bank of India and Bank of India led the gains in the PSU Bank Index. But moving on, there is an important story as far as results are concerned, because Wipro's Q3 numbers found out and in fact emerged as a mixed bag. Net profit fell about 4.4% sequentially to 3,119 crore rupees, while EBIT declined over 5% and margins slipped to 14.8% from 16.2% in the previous quarter. Revenue, however, grew 3.8% to 23,556 crore rupees, and the company has announced an interim dividend as well. Clearly, growth is holding up, but profitability remains under pressure. Let's get in my colleague Jasmeet, who tracks the IT sector very closely, for a deeper dive into what these numbers really mean. Jasmeet, thanks so much for joining. Take us through the key metrics as far as Wipro is concerned.
Well, I'll quickly wrap up the entire Wipro earnings in top key 5 takeaways. If you look at the overall numbers, they have missed the estimates, and profit also is a downtick, while the margins are down about 140 basis points. In terms of the CC growth, we see a good growth coming in terms of the overall QOQ basis. It's up about 1.4% versus 0.3% in the previous quarter. If you look at the overall impact that is coming from the restructuring and labor costs, that's impacting the margins, and the bottom line is at about 565 odd crores. In terms of the overall guidance, we see a positive up move coming in here. Management guides for a better guidance in Q4 from negative 0.5 to 1.5. The management has raised the guidance for Q4 to 0.2%. In terms of the overall deal booking, they have come at 3.3 billion versus 4.6 billion in the previous quarter. We see a slight downtick in terms of deal booking coming for the particular quarter. If we look at the key numbers, the revenue is up by 3.78, showing a good momentum in terms of top line, but the EBIT, margins and net profits are down on the back of increased costs. While on the back of this missed estimates and mixed set of numbers, the Wipro's ADR in NYSE is down about 6 odd %, showing a negative sentiment in the market.
Right, Jasmeet, thanks so much for that. So a lot of it would be a mixed bag as far as Wipro is concerned, but let's listen to what the CFO Aparna Iyer had to say about the impact of new labor codes on the company's earnings.
First is an increase of 302 crores for gratuity expenses due to the implementation of the labor code. And second is regarding a restructuring exercise that was completed during the quarter, and the impact of this is about 263 crores. I would like to confirm that we've now completed the restructuring that we want to and do not anticipate any further charges.
Viewers, Tech Mahindra's Q3 numbers were also in focus as they reflect pressure on the bottom line as well. Net profit slipped over 6% sequentially to 1,122 crore rupees, largely on account of one-time impact from the new labor codes. Revenue, however, grew 2.8% to 14,393 crore rupees, pointing to steady demand conditions. I have my colleague Jasmeet back again. Jasmeet, take us through the key numbers on Tech Mahindra as well. And when we were talking before, you said this has done really well. What made you say that?
Well, in terms of the overall Tech Mahindra numbers, the numbers are beat in what the CEO was expecting in terms of overall margin growth, top line growth, as well as in terms of the overall EBIT growth. If you look at the miss comes on the back of the profits. The profits are down by 6 odd %, whereas CEO was expecting a profit uptake of 15 odd %. So we see a big miss coming on the back of the profits. If you look at the other details, this marks the 9th consecutive quarter of constant margin uptick by the management, where they stay in touch with their targeted goal of 15% by FY27. They stay on track. While in terms of the CC growth comes at 1.7%. It's slight uptake from 1.6 in the previous quarter, while this uptake comes on the back of a weaker quarter, that should be noted. Other deals, BFSI fell the most in this particular quarter, about 6.2 odd %, but the communication, being the biggest segment for the company, has seen an uptake of 2.8 odd %. If you look at the overall deal wins, if the deal wins shows a positive up move for the company, they are nearly up 34 odd % on QOQ basis and crosses that 1 billion mark. If you look at the key financials, the revenue revenue is up by 2.8% while the EBIT is up by 11.3%. The margin sees an expansion of 100 basis points and comes at 13.1%, on track to achieve the 15% goal. In terms of net profit, it's down about 6% while this downtick comes on the back of that additional cost we see coming from the new labor code. That's something to watch out for. Well, further, the management also quoted that they see a broad-based growth going forward and rest all the markets are doing well for the management.
Okay. So clearly, Tech Mahindra has shown some kind of sustainability on the margin front especially. But let's take a look at some other earnings as well. JSW Infrastructure has reported a steady set of Q3 numbers on a year-on-year basis. Consolidated revenue rose 14.2% to 1,350 crore rupees compared with 1,182 crore in the same quarter last year. EBITDA increased 9.8% to 644 crore rupees. All the margins softened to 47.7% from 49.6% earlier. Net profit grew 8.9% to 359 crore rupees versus 330 crore rupees from the period year ago. Now, overall, top line and profit growth remain healthy even as margins saw a marginal contraction. But let's take a look at Tata Technologies that posted weak Q3 performance, weighed down by one-time cost. The company incurred an exceptional expense of 164 crore rupees during the quarter gone by. Revenue rose 3.2% sequentially to 1,366 crore rupees, but profitability took a sharp hit. EBIT declined by 11% to 157 crore rupees, while margins slipped to 11.5% from 13.4% in the previous quarter. Net profit dropped sharply to just 6.6 crore rupees compared with 166 crore rupees in Q2, largely due to the one-off impact. So quite a sequential downturn as far as the bottom line is concerned. But let's go across to a big exclusive story now. According to sources, the IT department has launched a major crackdown on food adulteration. Target are companies involved in milk, ghee and edible oil production. As a part of this investigation, 12 food and drug firms are under the scanner. We have also learned that such operations are underway across Delhi, Rajasthan and Uttar Pradesh. The action follows FDA sharing adulteration data with pharma and fertilizer units next in line. My colleague Shrimi Chaudhary joins us to tell us all the exclusive details on this story.
Absolutely, in a significant move, the Income Tax Department has launched enforcement action against companies allegedly involved in food and drug adulteration and widening the government's crackdown on unsafe food practices. In fact, sources told NDTV Profit that at least 12 companies dealing in products such as milk, ghee, vegetable oil and whey protein have come under the tax department scanner. In fact, search and survey operation already been initiated across Delhi, Rajasthan and UP and will soon reach to multiple cities. Now, what makes this action notable is the close coordination between the several departments, especially Food and Drug Administration, which recently shared intelligence data with the Income Tax Department after flagging adulteration in certain products. Now, this data sharing is said to have provided the initial trigger for the tax probe, but the Income Tax Department, of course, is going beyond the adulteration and looking into the financial trail behind it. Now, investigator began spotting patterns that did not add up in the company's book, and one of the major red flag being is the timing of the transaction. Several bills actually were adjusted near the end of the financial year, especially around January 31st, February 28th and the March 31st of last year. That period is actually used to square off the accounts before the books are actually closed. Besides, the transaction exceeding 1 crore with a single party were allegedly completed in one or just two entries and often close to year end, raised further red flag. Books also showing use of a lot of round figures, especially in the high value transaction. Now, the department is also examining the TDS payment pattern. In some cases, all TDS was paid in a single month, and that were long gaps between the payment. So clearly, it's a developing story as we get to know more as investigation widen. But what we've been given to understand that the probe will soon reach to some of the companies in the fertilizer as well as pharma sector. So we will be, keeping track of the story and will bring you more as we get more information on the development.
Let's now focus on the BJP-led Mahayuti alliance heading for a strong victory in Maharashtra's municipal elections, with trends showing a clear lead across key civic bodies. Voting was held yesterday and counting began at 10 a.m. today. The spotlight is firmly on the Brihan Mumbai Municipal Corporation, India's richest civic body. Of the 227 wards in the BMC, the Mahayuti Alliance is currently leading in 116 seats, while the Shiv Sena UBT-led alliance is ahead in 85 wards. Maharashtra Chief Minister Devendra Fadnavis has congratulated State BJP Chief Ravindra Chavan on the alliance's performance. In a post on X, Fadnavis said the BJP has written history once again in the municipal elections. Counting is still underway and trends suggest a strong victory for BJP-led Mahayuti Alliance. Let's go across to my colleague Saurabh Gupta, who joins us right from the ground. Saurabh, what's the mood like? Mahayuti seems to be leading.
Yes, leads coming in at the moment. A final result, though, will take time because obviously this is what it seems like a very slow counting process, and these are not final results. We've only had final results to about half the number of seats that are counted. So in that sense, yes, it's still a long way to go before the final results are in. But yes, the BJP seems to have made advances. It clearly seems to be in the numero uno position as far as the trends are concerned. And what has also happened is that while the Thakres have lost power, at least by what the trends are saying, Uddhav Thackeray has still held ground amongst the Marathi-speaking population, the Marathi vote, and has, in a sense, retained some clout and ground in the Mumbai Municipal Corporation polls. So, no writing off the Thackeray's yet. That's something that definitely these results don't indicate. But the BJP seems to be on the verge of making history. It seems to be in a position to install its own mayor, even if it means having the support of its allies, which includes the Shiv Sena led by Eknath Shinde. But at this point, this seems to be another victory. And across the state, if you see, the BJP has done well in places like Pimpri Chinchwad, etc. For the Congress, though, there is some consolation. While it has managed to win some seats in Mumbai as well, what has also happened is that it's pulled off something in Latur, where, of course, there was a very strong contest, and the legacy of the late Vilasrao Deshmukh also, kind of delivering for the Congress party in Latur. But in Mumbai, the jury is still out. The BJP has a lead. The Shiv Sena UBT is still holding on to some of its ground, and the final results will take some time.
Right, Saurabh. Thanks so much for taking us through those key updates. As far as BMC elections are concerned, of course, as you said, that the results are not out yet, but BJP seems to be leading the race as of now. Let's now focus on another key development. The Ministry of External Affairs has confirmed that the next round of India-EU Free Trade Agreement discussions will take place on the 27th of this month, and said conversations are progressing steadily. The MEA also confirmed that the European Union leadership will be India's guest for Republic Day on January 26th, underlining the growing strategic and economic alignment between New Delhi and Brussels. Let's listen in to the remarks of the MEA spokesperson.
India-EU summit is to be held on 27th of January, and the leaders, the President of the EU Council and the President of EU Commission, they are visiting India. They are the chief guest for they'll be here on a state visit. They are a chief guest for Republic Day this time. On India-EU FTA, as I told you last time as well, that these negotiations are progressing.
As the world prepares for the annual meet of the World Economic Forum in Davos from January 19th to 23rd, we bring you a special explainer on why this global gathering matters. Why does the Swiss town become the epicenter of economic and policy conversations every year? Who are the power players attending? But before we go to that package, viewers, we have a breaking news coming in. We understand from sources in the CBDT that the tax department will revive assessment proceedings for Tiger Global post the Supreme Court verdict, and this will be done for assessment year 2019-2020. Let's go across to my colleague Shrimi Chaudhary joining us on the phone line. Shrimi, take us through this development that's come in. How exactly will this turn out?
Yeah, exactly. So responding a day after Supreme Court verdict, CBDT sources said that assessment proceeding in case of Tiger Global, which has been pending for long, especially for assessment year 1920, will now revive. What sources underline that the assessment proceeding against Tiger Global are going to be taken up by the tax department after clarity from the Supreme Court verdict, and they underline the fact that assessment had remained in abeyance due to the pendency of the matter before the Supreme Court, and with now Supreme Court settling the core issue, tax department is clear to move ahead with the final sort of calculation. Now, assessing officer will now complete the assessment strictly in line with the Supreme Court ruling. That's what the source is indicating. No final assessment could be framed earlier as the taxability of the transaction itself was under judicial scrutiny. So there were no kind of number they arrived at as far as, capital gains tax goes. A key issue which going to be under review as part of the assessment, since they are reviving now, will be the refund claim of around 1,000 odd crores, which was filed by the Tiger Global at that point of time. And now the amount had already been withheld under Section 241A in the Income Tax Act due to the ongoing proceedings. So sources indicating that the withheld sum, this 1,000 crores, is likely to be adjusted against the final tax demand subject to the outcome of the assessment. Now, this is very important and the key highlight of this Tiger Global case, because we've been wondering that what is the total quantum of the tax liability. So what tax department was saying, this 1,000 crore is going to be adjusted in the final tax demand. And of course, with Supreme Court decision, it's removing the legal uncertainty, as we've been reporting since yesterday that the case arising from the Tiger Global exit from Flipkart in 2018 as Walmart acquisition of controlling stake in the Flipkart. So, of course, this triggered the capital gains around 14,500 crore, and out of that 14,500 crore, the amount around 13,000 crore is received by Tiger Global International 2, Mauritius-based entity, then 1259 crore by another entity, and 58 crore by the third entity. So total three entities actually received the total amount of 14,500 crore.
Right. Thank you so much, Shrimi, for explaining us that. Viewers, just reiterating again, we understand from our sources in the CBDT that the tax department will revive assessment proceedings for Tiger Global post the Supreme Court verdict, and this will be done for assessment year 2019 and 2020. But moving on, as I was saying earlier, viewers, as the world prepares for the annual meet of the World Economic Forum in Davos from January 19 to 23rd, we bring you a special explainer on why this global gathering actually matters. Why does a Swiss town become the epicenter of economic and policy conversations every year? And who are the power players attending? And what themes will dominate conversations in 2026? We break it down all for you, setting the stage for the world's most influential meeting. Take a look at this very special report.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. Nestled in the Swiss Alps, nearly 150 kilometers from capital Zurich, Davos is Europe's highest town, and every year since 1971 has played host to the World Economic Forum's annual meeting. But why Davos? Why a quiet ski town for such a crucial conversation? Precisely for its isolation and security. It's also the place that inspired German writer and Nobel laureate Thomas Mann's classic novel, The Magic Mountain, a novel about introspection and transformation in a secluded mountain setting, a fitting parallel to WEF's mission of rethinking the world's future. And what exactly happens at these annual meetings? Well, it brings together leaders from business, politics, academia, and civil society. So think presidents, prime ministers, Fortune 500 CEOs, Nobel laureates, thought leaders, journalists, and even cultural influencers, all converging in Davos. This year, the event is taking place from the 19th of January to the 23rd of January under the theme A Spirit of Dialogue. Nearly 3,000 participants from close to 130 countries are expected, with US President Donald Trump among the headliners. And this is not just talk. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And the timing couldn't be more critical. Trade tensions continue. Markets are volatile. Wars continue to reshape alliances. Add to that the unpredictability of Trump's moves, and Davos becomes more than just a high-profile networking summit. It arrives at a critical inflection point for the world. As the world's most influential leaders gather in Davos, the stakes couldn't be higher. Because it isn't just about speeches and photo ops. It's where ideas collide, alliances form, and blueprints for the future take shape. And we will be on ground, bringing you insights from global investors, market veterans, and corporate titans. So keep tuning in to NDTV Profit as I decode the decisions that will echo far beyond these mountains.
And viewers, let's also take a look at the numbers, Q3 results of Reliance. Reliance just announced its Q3 results and it has come in below what was estimated. For example, its net profit has come in at 18,645 crore rupees, as you can see on your screen, versus the estimated figure of 19,271 crore rupees. Basically, the net profit, the bottom line of the company, has increased by 2.6% on a quarter-on-quarter basis. Revenue, the top line of the company, has again come in at 2.65 lakh crore rupees versus the estimated figure of 2.6 lakh crore rupees. So a tiny bit of a jump as far as the estimated figures are concerned, and revenue in terms of percentage has increased by 4% on a quarter-on-quarter basis. This is compared to 2.55 lakh crore rupees reported last quarter. My colleague Somit Sarkar is here to decode the numbers. Somit, could you take us to the segmental performance as well and through the key financial metrics on Reliance?
Well, for the weakest set of numbers that the Bank and Nifty has reported, the numbers are below what but
there seems to be some audio issue. As we fix that, I'd like to take you through the key segmental numbers that have come in, and also keep an eye on the data that's reflecting on your screens at the moment. As far as segmental revenue is concerned, I'm currently having access to the main official sheet, and I can see that the O2C segment has increased by 1%. Oil and gas has taken a rather tough beating, that has decreased by 4% on a quarter-on-quarter basis. Retail has done extremely well. In fact, the best segmental performance reported from the retail segment with an 8% sequential growth. Digital has done moderately well at 2%. And others show a decrease of about 100. As far as EBITDA, I just read out the segmental performance in terms of revenue. As far as EBITDA is concerned, that reflects the operational performance. We have digital that has done about 2% higher, and O2C segment in terms of EBITDA has reported the strongest performance with a 10% uptick on a quarter-on-quarter basis. But that was it. We will, of course, decode this further. But thank you so much, ladies and gentlemen, for joining us on Profit 360. We'll continue bringing you a lot more news and updates. This is Malika Mishra. Thanks so much for watching and keeping up the patience.
First Indian news channel at the World Economic Forum at Davos. 21 years at the heart of the world's most influential dialogue.
Continuing to make sure that the poorest are not forgotten.
Big enough, brave enough, bold enough to face the critics. We've been doing more and more improvements.
We are the fastest growing amongst the major economies. Both of us are interested in these.
Young girls aren't in school because they're scavenging for water for the family.
We need to get out of the way and into the work of breaking open access for each and everyone.
Now, India's most trusted news network returns to the Alps with its most formidable editorial voices. NDTV Ignite at Davos.
Well, we are on this budget yatra and we are in the midst of a solar field and we are at the KP Group's facility in Sudi in Gujarat.
At the Biswa Bangla Gate, New Kolkata meets Old Industry. From Century Ply to Titagarh and Berger Paints, the message ahead of the budget is clear. Growth needs clear policy support.
NDTV Profit is in Indore, India's cleanest city. But in store, we are going to look after Indore's nightlife, what are the industries, and of course, the industry's budget expectations.
NDTV Profit has travelled all the way to Lucknow. This city is known for its delicious Awadhi food. This city is known for its tehzeeb, and this city is known to be one of the top 5 GDP contributors to India's development.
Budget for Bharat travels to the city of Bengaluru, a city which has given us so many innovators, so many startups. I'm spending time in a startup hub to get a pulse of the city and to find out what the startup founders want from the finance minister.
Coimbatore, a pretty big city in Tamil Nadu, known for industry, known for its textiles and also filter coffee. It's been called the Manchester of South India for a reason, and that's because of spinning and because of textiles. I've got Saurabh Mukherjee as well as Nandita, who is the economist at Marcellus, and we're actually going to be going to a few places over the course of the day.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Now let's start the show, but before that, we play a lot of guesswork with you to identify which company we are getting at KYC today. Also, let's give in the hints before you guess the company. It's a solar cell manufacturer. A lot of larger names have come up in the last 2 to 3 years. I'm just giving you one more hint on that, and it's one of them. The second one is they are beneficiary of China's cutting of the export incentives. Recently, there was a news flow also on this, and a lot of these power related companies were rallying on the trade. Also, the third hint would be that the earnings is coming on January 22nd. Now, just to put it in perspective, in our KYC show, because of the SEBI's non-disclosure rules, and it's a silent period, we will not be asking the management about the overall numbers, but we will ask something on the industry as well. But remember to track this stock. In some days, the earnings will also be coming in. Also, the company, let's make it the big reveal for the company, and that one is going to be especially the solar related company, and technical charts have also suggested that last 2 to 3 trading sessions, the deliveries have also going up. That means some value buying is happening. The company in focus is Premier Energies. That's what we are talking about, and we'll discuss more details about it. But let's just understand why we are actually getting this company in KYC. Of course, the numbers won't be discussed, but we'll discuss the industry dynamics. The first one is, what are the benefits coming in the China cutting in export rebates? Is the tide going to turn for the industry? That's one of the main questions to be asked. The second one, we are asking why Premier Energy is there in our show, is that the industry perspective would be there. Which side are the global solar prices going? Is it the going up or is it going down? Is going to be a consolidation? A lot of questions are there, and a lot of viewers on KYC keep writing to me, and we will be getting these answers from the management. The second question is the raw material dependency on China. Will this come down, or will we still depend on China and our industry will suffer? That's a very big question to be asked. A lot of stakeholders ask us. That's what we'll be asking. Also, the fourth one, why we want to call Premier Energies, is what are the supply chain constraints? Have they improved, or is there still a problem or not? That's what we'll be asking. And also, the last one being is that the expansion plans. There is a US market, there is a non-US market. Are the Indian solar companies looking at other places? Just because there's a lot of tariff issues which are coming with US market, clarity has not come in, just to put that in perspective. So the non-US markets, what would be the expansion plans? And on the show, we'll have Vinay Rustagi. He's the Chief Business Officer of Premier Energies, where he'll talk about the business growth opportunities which is there in the industry, as well as largely we can say for the company as a whole. But let's understand more about this company. And solar industries is a very technical aspect, it's having it. But let's just break it down what the company actually does. Company manufactures solar cells and solar modules as well. EPC and operation maintenance solutions, it's there. It's India's one of the first large players on this segment. There is the EPC segment and this operation and maintenance segment. And largely you will say that company has made a first mover advantage when it comes to manufacturing these cells. Also going ahead, apart from this, is that the company is having a healthy domestic leg order book, and I'll give you the breakup also of what this entire domestic order book stands for. But going ahead, the total order book, look at that number, that's around 1,33,000 crore almost orders coming in the month of September. Of course, these numbers will be on the higher side when we get the December update coming in. So order book visibility is very strong. We can have a like 5 to 7 year as per what the street analysts and industry experts told me. And the cell orders, they form roughly 59% of the order book value. So that is considerable. See, almost you can say 60% of that is coming in. So that's the order book visibility. But the module orders, that's roughly around 40% odd. And then of course the minor segments are also there which would be in focus. Remember, the company also has operations and maintenance in their business. Right now 100% domestic orders book exposure is there, but a lot of its peers already have business abroad as well, and that's why they're getting impacted more. And of course we'll talk about that. That's especially Wari I'm talking about, and out here we talk about it, 99% of revenue just comes from domestic. So indirectly company is insulated as of now, and whatever global issues are happening from US markets, it seems like Premier Energies is insulated. So it's working in their favor. Call it luck or call it business placement, whatever it is. The Mission 2028, that's what the company is talking about. Just look at that. This is an important portion to look at. What's the future going ahead? And they are trying for an integrated clean tech platform, and we'll get into more details of this. This is a 10 gigawatt of integrated capacity coming across the value chain, and I talk about it includes all the segments where the company is operating. Full backward integration from ingots to module, and whenever this backward integration happens of a solar company, you get your margins benefit also, and also economies of scale picks up. That means the industry has not peaked yet, and as and when the demand of solar panels increase in India, we might see these numbers going up and up. But yes, industry will definitely give cycles to it. It's the allied businesses, they are expected to contribute 25% of the revenue. And when I speak about the allied business, remember there is always an incremental margins chance in these businesses as well. This can also include your operation maintenance, asset management control services, etc. So this is a very important point. This is the Mission 2028. And of course, see, the result comes in higher margins and scale. So all of these features actually come in from Mission 2028. So we have, I think, 3 more years until the company comes with their numbers. But of course, during that time, we'll have a significant changes in the financials of the company. China recently cancelled the export VAT on the solar products, and this will be applicable on April 1st. To put in perspective, this benefits the company, and this export VAT rebate on the battery products would be cut to 6%. So there's an impact happening, and the Chinese exports, they are set to become more expensive. That means the pricing which was coming from China to India, it's not that attractive anymore. That means what happens is the domestic players, that's where they start gaining in, and the scope is much wider than the solar and the batteries. So you can imagine this is just not the company itself, but the entire ecosystem which is getting benefit, and 250 plus products are there across chemical, battery and electronics. Just to give that you perspective that this is just not there for solar industry but for other industries as well, especially the agrochemical segment. This includes the battery raw materials, industrial and the specialty chemical as well. So this is the important export VAT cut which is important, and China, remember, dominates this segment. So whenever we talk about the solar industry, China always comes up because of the cheaper products which are being imported in India, and now that pricing might benefit the Indian players. And remember, they supply most of the raw materials to the world. So the moment Indian solar players start reducing their dependence on that, it will start benefiting these companies. And remember, if these become less competitive, the domestic people start winning. And that is why I have focused my analysis on premier energies. Global prices, that's where they're expected to go up, and maybe it helps a lot for the Indian industry. And the three beneficiaries are there, and I'll be giving a detailed peer analysis also between them. There is Premier Energies, Vari Energies and Vikram Solar to focus on. But let's understand more apart from these beneficiaries, how we are going to give the ratings to the company, and let's just pull out how the ratings will be coming in. And remember, in KYC we have 8 rating schedules which come in. Of course, it includes income statement, balance sheet, cash flow, return ratio, but apart from that also you include other key ratings also. This includes your street holding and shareholding. But income statement, that's the first one I'd like to point out, and the company has done really well. Just let's look at the revenue, how it's going up. The top line has been significant. Last 3 years CAGR is 106%. That's a big amount. But even the EBITDA numbers, that's also been very strong. That's around 290% of the 3 year CAGR coming in. I was just looking at how the numbers are panning out. Numbers are also decent. It's turned profitable in the last 2 years. You see 289 crore, and then almost a 4 to 5x jump at 1240 crore rupees. Of course, we'll be checking the H1 numbers also. If you could just show the H1 numbers where the movement is there. Sequentially, there is a kind of a lumpiness, but year on year basis, look at this number. This has been really strong. 20%, 47% and 71% growth in the PAT numbers. Of course, concerns are there on the industry and the pricing front and the China impact, but net, the margin front is good. It's above the 31% mark. Can that sustain over the 30% mark? That's the question. But yes, Q3 numbers are coming in some days, so we'll understand how the entire thing plays out. But net, as of now, it's a very strong thumbs up when I talk about the income statement. Also, apart from the income statement, let's talk about how the balance sheet is panning out. That's the second parameter where we judge the company. Largely, the book values have gone up a bit, but the borrowing, that has come down actually from 1900 odd crore rupees. It's down to 1500 crores. It's even Stevens if you compare the debt equity ratio. The cash balance is very strong, 1343 odd crore rupees. That means working capital, or if any expansion comes in this asset heavy business, then the balance sheet will be decent enough. But net, I will be giving this a neutral rating. So we have spoken about 2 rating parameters going ahead. The third one is the cash flow segment. How's the cash flows coming up? Remember, this is a high gestation business model, but the promoters, especially, we need to understand how much is the government and the private players payment schedule, and that is what determines the liquidity ratios also. Our net cash flow from operations and PAT has significantly gone up from FY23 to FY25, a very strong momentum, and cash flow to PAT conversion is also more than 100%. This is a very decent number coming in if you just compare that as a solar player. Net cash flows also have improved. In FY25 it's around 546 odd crore rupees. That means the payment issues are definitely not there. The working capital ratio seems good. So for that cash flow segment, I have given a strong thumbs up. Apart from the cash flow segment, we'll talk about the return on ratios. Generally, you need around 15% to be happy as an investor. ROC, ROE numbers 15 to 20, itna to banna chahiye. Isme dekho, FY21 to FY23, it has been single digit as it was expanding. But now FY24, it has sustained that 25% mark. going past the 41% mark. Let's just show apart from the ROC, ROE numbers what it is, and largely the ROE numbers will also be mirroring these numbers. So the return ratios as of now is a very, very strong thumbs up when it comes to Premier Energies. Also from the return ratios, let's point out to other important ratios, and that one is of course the shareholding. Shareholding is very much important when you judge a company, especially to check the institutional holding of the company. So I've taken FIs and DIs. Have a look. March 2025 it was 3% and now it has been increased. It's just 4%. Remember, this is just a small data set because it was recently listed. If you're a long-term investor, you'll understand. DIs also, it's gone up from 9% to 13%. No stress, even if the retail portion has gone, the institutional ownership has gone up despite the stock taking some correction as well, and that's a very healthy sign going ahead. That means the institutions are betting on the stock to go up going ahead, and a lot of inflection points are there in this industry as well as the company, and that is why, although the shareholding pattern, I have given a strong thumbs up. Let's see what the street cred is. Street cred is nothing but the stock price movement which has happened, and let's look at it in the last 1 month. There is a significant correction coming in. Stock is down 20%, but let's see other momentums also, other times also. In the last 6 months, stock is down 30%. That's where the concern comes. If you have newly entered after the listing, it's year-to-date basis. That's just January month, 11% down. Also 36% down in the last 1 year. So of course concerns are definitely there, and because of that no major returns have come in. I have given this a strong thumbs down. But also apart from this, let's look at how the valuations against peers work, and there are 3 peers who would be in focus. Remember, most of the peers have seen a correction from their peak levels. Vari Energies, that's around 28 times the peak number was there, and now the 12-month forward P is at 17 times. Premier Energy, we talk about, it went up to 53 times, and see the significant correction coming in. So the valuations of these players, be it the industry or the company, have turned very attractive. And the technical charts, if you study them, you'll understand some bounce is definitely happening from the cuts which they had seen. So maybe for a short-term basis, as analysts talk to me, they say there is good chances for all 3 of them. But even if the valuations as a long-term investor, if you see, it is very attractive to its peak levels and also to its peers level. So it's a very strong thumbs up when it comes to the valuations. Apart from valuations, let's see the outlook, especially the 2028 vision outlook which was there. Now they have created an integrated clean tech platform. That's what they'll be focusing at. A 10 gigawatt integrated capacity would be there across the value chain. The third one is a full backward integration setup coming in, and when that comes in, margins and your scale